job. What's kind of the vibe in the scientific community? Is there as much fear as there is in other industries that AI could take their jobs?
I mean, I don't think it'll happen anytime soon, and maybe never, because humans are such creative beings, right? We're always thinking of the, next unknown question, right? There's so many deep mysteries of the universe. There's so much we still need to understand. And AI is a tool. This will enable lab scientists to rule out a lot in simulation before they can go and do their experiments. So they only need to do a few. But then I feel like there'll be always things that'll be still unknown and to be conquered.
There's a lot of, I don't want to use an unpleasant word, but there are a lot of people who don't believe in things like climate change. And there are a lot of skeptics who believe that science is out to get them, or that, we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we're doing will help towards this, because, this is not some model that's in some supercomputing facility, right? Not available to the public. I mean, you can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
If you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now. Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you.
Thank
It's been
you,
fascinating.
Yeah.
Thank you for taking the time.
Yeah.
हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। कमोडिटी मार्केट जस्ट ओपन ही होने वाला है। लास्ट ट्रेडिंग सेशन फॉर दिस वीक 12:30 लंदन सेशन ओपन होगा, एंड देन 5:30 न्यूयॉर्क सेशन, 7 पीएम यूएस मार्केट ओपन और 7:30 पे कंज्यूमर सेंटीमेंट और इन्फ्लेशन एक्सपेक्टेशन का डेटा इंपॉर्टेंट रहेगा। कल क्लोजिंग होते होते क्रूड ऑयल और नेचुरल गैस सडनली फॉल किए थे बिकॉज ऑफ द यूएस प्रेसिडेंट डोनाल्ड ट्रम्प स्टेटमेंट। उनका एक स्टेटमेंट आया था कि ईरान और यूएस एक ट्रेड डील साइन करने वाले बहुत ही जल्द, जिसकी वजह से क्रूड ऑयल सडनली गिरा था बट नीचे सपोर्ट पे होल्ड कर गया था। फॉरेक्स में भी होल्ड किया है, नेचुरल गैस भी और क्रूड ऑयल दोनों ही। Yesterday, Trump claims that Iran deal reached. Tehran says no final decision yet. ठीक है, तो कॉन्ट्राडिक्शन है इसलिए ज़्यादा गिरा नहीं है। देख पा रहे होगे ओपन होते ही एक लिक्विडिटी ले ली है मार्केट ने फिर से। रीज़न इज़ वेरी सिंपल, कॉन्ट्राडिक्शन क्लेम इज देयर, नो करंट क्लियर व्यू कि क्या होने वाला है। मुझे लग रहा बिल्कुल ट्रेडिंग को ही इन लोगों ने कोई ना कोई ट्वीट करके ऊपर नीचे प्राइस को लेके जा रहे हैं, नथिंग एल्स। President Trump announced that he cancelled planned strike against Iran on Thursday and claimed Iran leadership approved a draft agreement that would extend the ceasefire, reopen the Strait of Hormuz, and launch 60 days of negotiation on Iran nuclear program. But on the other side, Fars news agency, which is a semi-official news agency affiliated with Iran Revolutionary Guard (IRGC), quoted an informed sources close to Iran, a negotiation team, as saying that no text for a preliminary memorandum of understanding with the United States has been approved. टू मच कॉन्ट्राडिक्शन जिसकी वजह से प्राइस कुछ खास मोमेंटम तो कर नहीं रहा है, मुझे लग रहा है वॉलेटिलिटी है। देखते हैं एक बार इंडियन मार्केट ओपन हो जाए। भाई कल न्यूज़ भी आई थी कि ईरान ने कंप्लीट ब्लॉकआउट लगा दिया है फिर से स्टेट ऑफ हॉर्मोज का। बट अगेन ट्रम्प की एक न्यूज़ आती है और प्राइस वापस फॉल कर जाता है। गिफ्ट निफ्टी भी अपसाइड गया था बट कुछ खास नहीं। फिलहाल नेचुरल गैस इज आल्सो साइडवेज। लेवल एक बार रिफ्रेश कर देते हैं, अब इन लेवल्स पे ट्रेड मत करना, थोड़ा सा वी नीड टू वेट फॉर द फ्रेश लेवल नाउ। ठीक है, बहुत ही ज़्यादा वॉलेटिलिटी हो रही है न्यूज़ की वजह से, सडनली कभी अपसाइड जा रहा है फिर सडनली नीचे आ रहा है, इसका मतलब अनसर्टेनिटी इज़ वेरी हाई राइट नाउ। कल गोल्ड भी न्यूज़ के बाद अपसाइड गया था। यूएस डॉलर फॉल सडनली $100 से ऑलमोस्ट $99 पहुंच गया था। वापस से रिकवर किया यूएस डॉलर कल, बट ट्रेड कर रहा था कल 100.300 डॉलर के आसपास, नाउ ट्रेडिंग एट 99.75। सो volatility is very high over there. Silver भी yesterday fall recovery आई $62 से नाउ $67 के आसपास ट्रेड करता हुआ। Bitcoin, it also react yesterday. कल रिकवर किया था बिटकॉइन भी 60,000 से 63,000, नाउ ट्रेडिंग एट द सेम लेवल। गिफ्ट निफ्टी की बात करें, कल हमारा मार्केट क्लोज हुआ था, उसके बाद गिर तो रहा था बट जब न्यूज़ आई तो वापस रिकवरी दी है मार्केट ने। कल गिफ्ट निफ्टी ने हमारा जो मार्केट क्लोज हुआ है एनएससी में, वहां से चेक करोगे तो एक गैप अप लग रहा है, अभी होने ही वाला है ऑलमोस्ट। हमारा जो मार्केट कल क्लोज हुआ था गिफ्ट निफ्टी में, उसके अकॉर्डिंग तो एक गैप अप ओपनिंग है। लेट्स सी कितने पॉइंट की गैप अप ओपनिंग होती है। फिलहाल गिफ्ट निफ्टी लगभग 218 पॉइंट का पॉजिटिव मूव दिखाता हुआ गिफ्ट निफ्टी में। आज थोड़ा सा एक्सपेक्टेड है कि उतना वॉलेटिलिटी ना रहे, बिकॉज लास्ट ट्रेडिंग सेशन है। कुछ बड़ा मूव अगर करना होगा प्लेयर्स को, न्यूज़ बेस्ड किसी न्यूज़ के लिए ही कह सकते हैं। सो कल सैटरडे संडे है, परसों को मुझे लग रहा है शायद हो सकता है उस वजह से कुछ बड़ा गैप अप गैप डाउन, तो आज पोजीशन बनेंगी मोस्टली फॉर यू नो फॉर मंडे। आई थिंक मंडे के लिए सा कॉशियस होकर ट्रेड करना। देखते हैं क्या प्लान कर सकते हैं। देखो नेचुरल गैस में जहाँ तक बात करें तो ये नीचे वाला सपोर्ट तो अब मैं एक्सपेक्ट नहीं कर रहा हूँ, अभी भी हो सकता है पुल बैक आए। इसने सपोर्ट वैसे ब्रेक किया नहीं है अगर लेवल देखोगे, ठीक है। दोनों ही जगह पे अभी लेवल अभी भी इंटैक्ट ही है, ब्रेक हुए नहीं है, बट अब इस लेवल पे इतना ट्रेड करना मुझे थोड़ा सा रिस्की लग रहा है। तो मैं इस लेवल को ना थोड़ा सा एक्सपेक्ट करूंगा कि ये होल्ड ना करे, स्पेशली नेचुरल गैस तो ना ही करे। थोड़ा पुल बैक दे तो वापस सेलिंग का ही प्लान करेंगे। तो लेट्स सी, इन लेवल्स को अब रिमूव कर देते हैं, काफ़ी टाइम से इसी लेवल पे रुके हुए हैं। कोई फ्रेश लेवल बनाता है तो वी विल सी दैट। नेचुरल गैस डाउन साइड कहाँ तक गिर सकता है, देखो इसमें नीचे स्पेस है, करंट लेवल से अगर फॉल भी करता है तो लगभग 3% गिर सकता है। अपसाइड की बात करें तो अपसाइड भी अप्रॉक्सीमेटली अभी के हिसाब से देखोगे तो 3% ऊपर जा सकता है। तो दोनों साइड नेचुरल गैस में 3% का अपसाइड एंड 3% का डाउन साइड एक जोन बना हुआ है जहां तक प्राइस जा सकता है, उसके बीच में अभी कुछ नहीं कर सकते। इवन दो अगेन आई एम सेइंग दैट इज अ सपोर्ट फ्रॉम यस्टरडेज, ब्रेक नहीं हुआ है, बट अगेन फिर से उसी लेवल पे बाय करना थोड़ा सा रिस्की है कंपेयर टू ट्रेड ऑन द न्यू लेवल्स। सो थोड़ा सा वेट करेंगे। 3% अपसाइड, 3% डाउन साइड approximately expected today from the current level in natural gas, ठीक है, both in MCX as well as in फॉरेक्स चार्ट में देखोगे तो लगभग अभी चल रहा है न्यूयॉर्क मर्सल्टाइज एक्सचेंज में नेचुरल गैस 3.078 एक्सपेक्टेड, अपसाइड 3.183 अप्रॉक्सीमेटली, लगभग 3% से थोड़ा सा ज़्यादा है। डाउन साइड पे देखोगे तो 2.980। फॉरेक्स में भी देखो तो कुछ ज़्यादा ही कंसोलिडेशन में फंसा हुआ है, तो मुझे लग रहा है एक मूव ज़्यादा पॉसिबल है कंपेयर टू क्रूड। वहाँ तो मोमेंटम ही चल रहा है कंटिन्यूएशन का। लेवल्स पे डायरेक्टली मत लेना, थोड़ा सा मुझे लग रहा है लेवल अलग दिख रहे हैं फॉरेक्स चार्ट में, वहाँ पर प्राइस एक्शन अलग ही चल रहा है। प्राइस मोमेंटम के पॉइंट ऑफ व्यू से देखें तो थोड़ा सा फॉरेक्स में जब आएगा लेवल पे तभी लेंगे, अदरवाइज हो सकता है एक्स पे सपोर्ट पे दिखा रहा हो बट एग्जैक्टली रिसीव ना हुआ हो सपोर्ट पे प्राइस, सो थोड़ा वेट करेंगे, ठीक है उस केस में। इंडियन मार्केट ओपन नाउ। एज एक्सपेक्टेड गैप अप ओपन हुआ है ठीक ठाक दोनों ही जगह, निफ्टी बैंक निफ्टी सेंसेक्स एवरीवेयर। निफ्टी फ्यूचर 229 पॉइंट, निफ्टी स्पॉट 250 पॉइंट ओपन होते ही सेलिंग आना शुरू हो गई है फिर से। इसकी कैंडल इंपॉर्टेंट रहेगी 23,000, फ्यूचर की बात कर रहा हूँ, निफ्टी फ्यूचर 23,370 के ऊपर अगर आज डेली टाइम फ्रेम की कैंडल क्लोज आती है तो फिर थोड़ा सा निफ्टी बुलिश टेरिटरी में चला जाएगा। कल गैप डाउन हुआ था, रिकवरी काफ़ी अच्छी आई थी, ऊपर से वापस सेलिंग आ गई थी, इन्वर्टेड हैमर बनाया, बट आज उसके ऊपर ही मार्केट ओपन हुआ है तो सारे सेलर ट्रैप हो जाएंगे आज के आज ही, अगर मार्केट कल के हाई के ऊपर क्लोज देता है, विच अप्रॉक्सीमेटली फ्यूचर में 23,365 के आसपास का लेवल है, तो 370 हम राउंड नंबर लेके चलते हैं, तो इसके नीचे अब तक अब जाता नहीं है प्राइस, इट इज बुलिश कंप्लीटली। पॉसिबल है प्राइस कैन गो टुवर्ड्स फ्यूचर में 24,160 एज वेल इमीडिएटली, बट वहां तक पॉसिबल रहेगा। फिलहाल अगर देखोगे निफ्टी फ्यूचर में ये पहला कल परसों का जो हाई था हमारे पास 23,456, यही पहला रेजिस्टेंस है, अगर इसके ऊपर मार्केट सस्टेन कर गया आज फिलहाल के लिए, अभी तो ओपन ही हुआ है जस्ट, पहली 15 मिनट की कैंडल का क्लोज का वेट करेंगे, अगर इसके ऊपर मार्केट सस्टेन करता है, अगर रिजेक्शन ले लिया तो बात ही अलग है, फिर तो प्राइस वापस डाउन साइड 23,380 की ओर आ जाएगा, रिजेक्शन ले रहा है वहां से। बट अगर 23,456 के ऊपर आज डेली टाइम फ्रेम पे सस्टेन कर case next target will be 23,670 approximately. लगभग 220 पॉइंट और अपसाइड है उस केस में। अगर रिजेक्शन लेता है तो वापस हम 23,380 तक जाएंगे। डेली टाइम फ्रेम यही शो कर रहा है। इसी इंट्राडे में कहाँ रिजेक्शन मिल सकता है या फिर ये कंटिन्यूएशन में जाएगा। SEBI group to expand 24 into 7 trading for WTI crude oil and gold. Wow, that will be a remarkable if this happen, like Bitcoin की तरह ट्रेड होगा फिर तो गोल्ड और क्रूड ऑयल। CME group currently holding COMEX and न्यूयॉर्क मर्सल्टाइज एक्सचेंज। दोनों ही जो एक्सचेंज है, न्यूयॉर्क का जो मर्सल्टाइज एक्सचेंज है जहां पर करंटली अगर आप चेकआउट करोगे तो जो एनर्जी कमोडिटीज हैं लाइक नेचुरल गैस, क्रूड ऑयल, ये ट्रेड होते हैं। और जो कॉमेक्स है जहाँ पर करंटली जो प्रीसियस मेटल्स हैं लाइक सिल्वर, गोल्ड, वो ट्रेड होते हैं। पहले ये दोनों अलग अलग थे एंटिटी, अलग अलग कंपनीज की। अब ये दोनों ही 2000 आई थिंक 8 में दोनों को परचेज कर लिया था सीएमई ग्रुप ने। इवन दो दोनों के ऑपरेशंस अभी भी अलग अलग हैं, बट अगर ऐसा होता है दैट अगर सीएमई ग्रुप 24/7 ट्रेडिंग अलाउ करता है डब्ल्यूटीआई क्रूड ऑयल और गोल्ड की, ठीक है, और गोल्ड में एमसीएक्स की बात नहीं कर रहा हूँ, आई एम टॉकिंग अबाउट लाइक सी लाइक सारे कॉन्ट्रैक्ट, गोल्ड का जो प्राइस है, नेचुरल गैस का प्राइस, सिल्वर का प्राइस एंड क्रूड ऑयल का प्राइस, इन सब का प्राइस, ठीक है, डिसाइड यही यहीं से होता है। प्राइस डिस्कवरी यहीं से होती है, या तो न्यूयॉर्क मर्सल्टाइज एक्सचेंज से होती है नेचुरल गैस क्रूड ऑयल की प्राइस की, और गोल्ड और सिल्वर की कॉमेक्स से होती है। तो अगर यहाँ 24/7 ट्रेडिंग हो गई तो मैनिपुलेशन करना तो थोड़ा मुश्किल हो जाएगा, बिकॉज सैटरडे संडे को नॉर्मली भी मार्केट बंद रहता है। वो नहीं होगा 24/7, जस्ट लाइक बिटकॉइन। जो फॉरेक्स में ट्रेड करते हैं उनके लिए काफ़ी अच्छी न्यूज़ है। लेट्स सी क्या एमसीएक्स भी ऐसा करता है क्या, या फिर हम अभी भी बस अटके रहते हैं 330 ट्रेडिंग तक। मेरे अकॉर्डिंग तो इक्विटी ठीक है, इक्विटी में तो शायद ज़्यादा कुछ करना नहीं चाहिए, इक्विटी इज स्टिल गुड। मॉर्निंग 9:15 से 3:30 क्लोज होता है, एक्सपायरी होती है, तो इतना टाइम काफ़ी है। ज़्यादा होगा तो फिर 3:30 के भी कम होगा, बट आई थिंक मेरे अकॉर्डिंग क्रूड ऑयल, नेचुरल गैस, गोल्ड, सिल्वर के लिए 24/7 कर देना चाहिए एमसीएक्स में भी। दैट विल बी बेस्ट थिंग, मैनिपुलेशन से बच जाएंगे। सर की पहली कैंडल बन रही है ना निफ्टी में, फ्यूचर में इट्स लुक्स लाइक बायर सेलर बैठ गए ऊपर और नीचे पहली कैंडल के हाई और लो पे मुझे लग रहा है. Almost kind of a doji candle is forming in 15 minute in future. मतलब ऊपर रेजिस्टेंस है वही, और डेली टाइम फ्रेम का मुझे लग रहा है मार्केट रेजिस्टेंस लेने की कोशिश कर रहा है उस एरिया पे. वही हाँ 23,475 आई थिंक इट विल टेकिंग द रिजेक्शन फ्यूचर में. अब हुआ जरूर है बट मुझे लग रहा है रिजेक्शन ले रहा है, गिरता है तो फिर यहाँ से सेलिंग भी अच्छी आ जाएगी. 23,472 day high will act as a resistance now. Till then it is not breaking properly. ओके, ओपन इक्वल टू हाई बनी है दोनों जगह, क्रूड और नेचुरल गैस कैंडल्स बोथ ओपन इक्वल टू हाई. तो अगर निकलता है फ्यूचर 23,474-75 के ऊपर, नेक्स्ट इंट्राडे टारगेट और रेजिस्टेंस यू कैन से 23,600.
in the stock market, with the MSCI Asia here up more than 3%, and the gains, of course, led by South Korea's Kospi index up more than 8%. Now, I have to say that this is the third time this week that we are seeing Kospi moving more than 8% in a day. So showing you how volatile and how momentous this market has become. Now, following that, you have Nikkei 225 up more than 3% and Taiwan's TAIEX index up more than 2%. And lots of optimism also building ahead of the SpaceX listing, as it is expected to also remove that liquidity overhang in the markets. Back to you, Abir.
All right. Well, Winnie Sue with those staggering moves. Now back to our top story today. Oil is extending declines after President Donald Trump insisted a deal with Iran is close. Trump once again pulled back on a threat of more military strikes on the Islamic Republic. And the stark reversal came just hours after vowing to hit the country, quote, very hard, and threatening to seize its oil infrastructure.
We just made a great settlement of the war with Iran, and we're going to be subject to finalization of documents, which should get done over the next few days. We'll probably have a signing maybe in Europe.
Tehran has not yet confirmed that a deal has been made. Let's discuss this story further with Anise Basiri Tabrizi, Associate Fellow for MENA at Chatham House. Anise, thank you so much for joining us this morning. Well, look, a stark reversal overnight from President Trump. Is this traditional coercive diplomacy, or is President Trump risking undermining Washington's stance when it comes to reaching this MOU?
Well, we know that this is not the first time that President Trump has issued statements about a threat of severe military strikes to then announce, detente or a deal with Iran. This is exactly what happened also when the ceasefire was announced on the 8th of April, the night before this similar threat was made by President Trump. So we know this is the approach that the White House is using in this war with Iran. But we also know that this seems, while promising, it's still not conclusive. I think, the fact that the Iranian side has not fully confirmed an agreement and that nothing has yet been signed, it demonstrates that while we might be closer than a few days ago, nothing is agreed until everything is agreed. And we know that there are spoilers on both sides that will want whatever MOU might be close to be unraveling. So I think the next few hours, few days, even if we are close to a deal, will be critical.
And Iran has not yet responded officially to the latest remarks from President Trump. What do you think the response from the Iranian side would be this time around, especially that we haven't really heard a lot about some of the sticking points that have been on the table over the past couple of months?
This is the key issue. We don't know what has changed in the respective position that might have led to a deal. And that's why I said we don't know if this is definitive, conclusive. We know that the main sticking points on each side have been the lifting of sanctions and the economic concession asked by the Iranian side, and on the other side, the nuclear demands from the US. We know also that this will be a first step for a final agreement. So while this might be an MOU, there is a long road ahead for a final deal, which would include several other issues. Allegedly, that could include also Iran's missile program and support for proxies. This is what has been listed. But I think from saying that the final deal will include this to actually agreeing to all these issues, it's very different. So that's why I'm saying I think it's too soon to celebrate. We are probably closer to what we were, but I think the sticking points remain from each side, and that's why the Iranians have not fully confirmed the story. And I think from each side, we will try to portray this as face-saving, as a victory. So that is where the rhetoric will be challenging for each side, for the US to depict the deal as a win, and for the Iranian side also to depict whatever deal comes out as a win. This will be the challenge.
So speaking of wins, what do you think Iran, from the Iranian perspective, what do you think Iran will get out of this, thinking this is a strategic win? Would it be the opening of the Strait of Hormuz, keeping the regime that was a big part of what the initial strikes wanted to lead up to from the U.S. side, toppling the regime? Or would it be the highly enriched uranium? What would be considered a strategic win for the Iranian regime this time around?
It's not one or two things. I think it's a list of demands that the Iranian side will want and will try to portray as a win. Obviously, the security guarantee that we are not going to go again back to strikes anytime soon or ever actually is going to be a key demand, because there is no point from the Iranian side to agree to something to then have to face another war. We have to remember that there was a war back in June, 12-day war with Israel. So just a few months after the US and Israel resumed their strikes against Iran. So what Iran will want primarily is that this is not a cycle that is going to reiterate, right? That this is done and dusted. It's not something that is going to resume. Yeah. Obviously, the survival of the regime is also a key demand, but that's incorporated in this, like the non-resumption of strikes. And we know for a fact that despite the initial assessment, the regime is actually stable, despite the transition and the decapitation campaign that has taken place, especially in the first phase of the war. The nuclear component of it is obviously important, and the economic component is as well. They will want some economic incentive, key economic incentive, to make this a win and, to ensure the survival of the regime. We know how critical the economic situation is internally and how that led to the uprising.
And just speaking about Israel.
Yes.
Speaking about Israel, because you alluded to that as well, it's another part of this conflict. How do you think President Trump reconciles with Israel and its incursion in Lebanon, but also the fact that Israel will probably not agree to an end to this without removing the uranium out of Iran?
I think that is a very important question. I think when it comes to the nuclear component, I think the U.S. assessment is that taking out the uranium from the country physically is not feasible. It would be costly. It would lead to ground troops and all of that. But I think it will try to sell the dilution of the highly enriched uranium and the commitment of Iran not to have a nuclear weapon, and so as some sort of a win. I don't think that's going to be enough of a guarantee for the Israeli side, personally. So I think that is where, the key question about how and whether President Trump will be able to rein in Israel is going to be critical with Iran, but also especially also with Lebanon, where we know that the ceasefire also has been, jeopardized and endangered multiple times over the past few days.
All right. Well, we'll have to wait and see what the Iranian response looks like over the next 24, 48 hours, as you mentioned. Anissa Bassiri Tabrizi, Associate Fellow for MENA at Chatham House. Now, for the tech story, SpaceX has made history with the biggest ever IPO, sending it into the top ranks of the largest public companies. Bloomberg Tech co-anchor Ed Ludlow reports from New York.
The biggest IPO of all time, $135 a share, 555.6 million shares, raising $75 billion, the valuation almost $1.8 trillion. But it was like atypical. It was unusual how SpaceX went about this, setting that price of $135 before the roadshow had even kicked off and maintaining it throughout. And my understanding in speaking to a lot of people on all sides of the table was that it was Elon Musk and other SpaceX C-suite and management that were controlling this process, in part setting that price to kind of remove the leverage that the big institutions might have if there were to be a range and like coming in and trying to bid it up too much. There is massive oversubscription either way, right? Somewhere on Wall Street, some institution will be disappointed with the allocation they'll get, which plays out overnight into Friday morning. And on the retail side, $100 billion worth of orders, according to sources, but where that nets out on a percentage basis, it's going to leave many disappointed. And that makes the dynamic trade when trade starts, or whatever time Friday, super interesting. it's been very informative to speak to lots of people that are already on the cap table and those that will participate in this IPO, because actually lots of them are more bullish on the timeline for SpaceX to do some of this kind of science fiction type business plan that they set out in the prospectus. They see it happening in 2027 on orbital data center as opposed to as early as 2028 as SpaceX set out in the S1. But the bottom line is SpaceX needs capital. And the other big part of this story is the IPO will be a big moment in time, but there are all these indications that the thing that happens next is SpaceX goes back to the capital markets, be that equity or debt. Part of why it was so important that we broke the news that it goes into this IPO with IG rating from the main agencies, with the financials it has, but even before it's a public company. So buckle up. It's going to be an out of this world 24 hours. It's going to read like a Christopher Nolan sci-fi script, but actually for lots of people this is very real and they believe the story that SpaceX told on the roadshow, even if it didn't move the needle on the share price in the biggest IPO of all time. This is Ed Ludlow for Bloomberg News in New York City.
Well, coming up, more reaction to the SpaceX IPO and market insights with Macrovisor co-founder Ayesha Tariq. That is coming up next. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
SpaceX is the biggest rising star of all time.
Anyone that's owning SpaceX, you're buying it for the Musk factor. And many that bet against Tesla and Musk going back a decade ago, that was proven historically wrong.
Elon Musk has appointed himself CEO for life. He has all the voting control. He has basically built a moat with alligators around himself, and that's not good for shareholders.
This feels like a milestone moment. This was an investment thesis that was unthinkable a decade ago for most investors. And I think now people are coming to grips with the fact that space technology is really here. What would have been science fiction to us maybe 10 years ago is now science fact.
Well, there you have it. Some views on the SpaceX IPO ahead of the stock's trading debut later today. Now, the company has officially made history with its $75 billion IPO. Demand was soaring 4 times of the available shares, with massive interest from retail buyers. Joining us now to discuss more about this story is Ayesha Tariq, Macrovisor co-founder. Aisha, you saw the levels of enthusiasm leading up to this massive IPO, the biggest ever. What do you make of the pricing, the valuation, and the number of orders, the interest through the numbers of orders in SpaceX's IPO?
Good morning, Abir. Thank you for having me. Very difficult questions, really, because when we're looking at the valuation, when we're looking at the numbers, when you really actually drill down to it, it's a scary proposition, right? Because the company is not making profits, it's actually losing quite a lot of money. But I do understand the hype factor around this. I think quite a few people have talked about, this is the future, this is how, we're supposed to look at things. And I think we are going to see quite a successful IPO today. The reason being the Musk factor, obviously. And then the second thing is buying into innovation, buying into what everybody is terming the future. This may not actually prove very well for the market, though, because I think this will cause a big supply overhang. And part of the reason that we're seeing the market go down over the past 1 week has been all this, anticipation of supply coming into the market.
So, SpaceX is obviously the star child of this AI story over the past few weeks or so, but we're seeing a lot of enthusiasm for AI names generally. Now, I want to connect another question here, and that is about the hawkish tilt that we're seeing out of central banks. Do you think that that is going to start challenging those lofty valuations and those big AI names going forward?
So to a large extent, yes, because, for example, we've been seeing, earnings rise for these AI companies. We're seeing some of what they're doing, play out. It has largely been a hedge for the geopolitical situation and the macro, indicators as well. But inflation is now starting to become a little entrenched. The energy shock is sort of spreading, and we're sort of understanding that this is not going away as soon as we thought it would, right? And so therefore we are seeing this hawkish tilt. The ECB already raised rates. The Bank of Japan will do so next week, most likely. And so therefore this will start to weigh on equities, even though the earnings story remains strong.
So you mentioned the BOJ, you mentioned the ECB, 25 basis points hike yesterday. We also have the Fed, we also have the BOE coming up. What is your expectation there? And do you think those central banks are starting to worry about these surgences in inflationary risks as opposed to an economic downturn, and that is why we're seeing this hawkish tilt?
So, yes, of course, because when we look at, say, for example, the Fed, right? So we're looking at the U.S. economy and we're seeing, jobs are holding in there. We're seeing the economy more or less resilient thus far. And then we look at inflation, and it's been running above the 2% target for almost 5 years now. And now we're reaccelerating, right? So yes, core inflation came in a bit softer, but there's still that risk that we'll see inflation, take off again. We're seeing crude draws, and that could push up pricing. And where the Bank of England is concerned, I think we're going to expect a hold this time. Inflation has channeled through there, but not as much as we're seeing in the US and the ECB and Japan, of course.
Yeah. So, look, if the situation in the Middle East remains elevated when it comes to those tensions, what asset class is going to be affected the most, in your opinion? Is it going to be equities, credit, bonds across the world?
So I think the first victim is always the bond market. Transmission is always quick, as is equities. But the equity story obviously has that AI factor holding things up. We are seeing some, positioning risks over here because everybody's been very, very long, very optimistic on the equity market. So I think, we'll see the first hit to treasuries, and then we're seeing, that hit to equities as well.
So by the end of this year, 6 to 12 months from now, what do you think investors will be thinking, we wish we had paid more attention to that story? Would it be energy? Would it be AI? There's a lot of demand when it comes to that story, or would it be central banks tightening their monetary policy?
So that's a very interesting question. I think at the end of the day, we're still very skeptical about, what the central banks would do. Yes, we have the ECB and the BOJ in the bag, but the Fed is still, a surprise for us because, yes, we're saying that, cuts have been pushed back. So for sure, we're not probably getting cuts. But, a hike is something that would come as a major surprise.
All right. Well, that was Aisha Tariq, Macrovisor co-founder. Thank you. Now, still ahead, despite rising fuel costs, 6 Eastern African nations have ambitious spending plans for 2027. We'll have the details later this hour. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Adobe says its chief financial officer, Dan Durn, is departing, leaving the company without a top tier of leadership after CEO Shantanu Narayan announced in March that he would step aside. Chipmaker Marvell says Durn will be joining its staff. The announcement overshadowed Adobe's quarterly results and an outlook for the current period that surpassed analyst expectation. 5 companies, including CoreWeave and Rocket Lab, will join the Nasdaq 100 index later this month as the index provider completes its quarterly rebalance. The additions will see companies including Charter Communications and Cognizant Technology Solutions removed from the index. The rebalancing will become effective prior to market open on June 22nd. And let's just turn to take a quick look at equity futures before we head into the break. Everything is in the green. Oil is dropping because of the Middle East. Now, coming up, SpaceX pulls off the biggest IPO in history. We'll discuss that next. This is Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Oil is extending declines as President Trump insists a deal with Iran is close after scrapping new strikes. Stocks extend gains on optimism diplomacy will prevail, lifting risk sentiment and shifting focus to the tech sector. And SpaceX makes history with the biggest ever IPO, raising $75 billion, putting founder Elon Musk on track to becoming the world's first trillionaire. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Amr in Dubai. A quick look at markets this morning. U.S. futures 0.2 higher. Still, the sense of euphoria out of the Middle East and some positivity when it comes to President Trump saying a deal is as imminent as this weekend in Europe with Iran. We'll have to wait and see. Iran has not responded yet, so that is something to keep in mind. But Asian equities are shrugging off the lack of response. They are turning higher by the second, 3.5% for the MSCI Asia Pacific. The Kospi in South Korea, a bellwether for the AI trade, was rising as much as 8.5% earlier. And Brent crude prices are dropping 1.9%. They are at $88.6 a barrel this morning. Again, waiting and seeing what the Iranian response will look like and whether the Strait of Hormuz will finally be reopened. The yield on the 10-year Treasury notes, less than a basis point gain this morning, not really doing much. We're standing at 4.465%. Now, for a look on how markets in Asia are doing, Winnie Su is yet again in our Hong Kong studio. Winnie?
Yes, Abir, as you mentioned, it is a very much risk-on day for Asia, with geopolitical headlines again driving markets, especially after President Trump said that Iran war is pretty much over, although we really haven't heard from the confirmation from Iranian side. That's why this weekend will be very much in focus. And that's why actually I wanted to point out that despite MSCI Asia here up 3.5%, when we look at the weekly moves, I would say the gauge is actually little moved. So you can see that still a lot of jittery in the market. But in terms of today, we can see that South Korea's Kospi index again leading gains up more than 8%. The third day that it's moving beyond 8% in an intraday move so far this week. So very volatile market. And following that, we have Japan's Nikkei 225 and the Taiwanese index both moving more than 2%. Now, flip the board, I want to take a look at the tech stocks because, again, that is the sector moving the most today. Of course, it is that better risk-on sentiment, but also worth pointing out, like for the likes of SK Hynix, for example, jumping more than 7%. But it's also coming as this stock in South Korea becoming very leveraged. We're talking about how our reporting pointing to 60 to 70% of the trading of this stock pretty much is driven by these leveraged ETFs. So you can see that these momentous moves can really drive up big moves in the stock. But adding to that, we also have the optimism around the SpaceX IPO. Remember, heading into this week, lots of sell-off in these stocks as investors try to secure capital for SpaceX. However, now that this liquidity overhang is being lifted, we can expect more sentiment for these stocks that have been sold off lately. Back to you, Abir.
Winnie Su in Hong Kong with those market details. Now let's turn back to SpaceX, which has made history with the largest IPO ever, raising $75 billion and debuting with a market value of $1.7 trillion. The blockbuster listing underscores investor appetite for AI and future technologies, while putting Elon Musk on the verge of becoming the world's first trillionaire. Joining us now to discuss is Maribel Lopez, founder and enterprise AI lead at Lopez Research. Maribel, thank you for joining us this morning. SpaceX, big, massive debut today, later today. But look, you mentioned that investors are looking to capitalize on this AI wave, have frightfully less options to go to. And look, everyone is talking about AI these days and the hype there that we have been speaking about over the past 6 months or so. Where do you think investors can look for opportunities and returns in their AI investments?
I think right now the challenge that investors have been having is they've turned to the hyperscalers. We've seen that run. They've turned to the chip companies, NVIDIA, TSMC, Samsung. We've seen that run. So they're looking for the next run, and the next run is really looking like things like SpaceX or Anthropic or OpenAI. So there's a lot of enthusiasm over how do we get into that next wave of what's going to be the next big thing in technology.
And when we talk about the spending that has been placed in AI infrastructure, for example, billions of dollars, hundreds of billions of dollars that are going to be spent on that, do you think the market is getting ahead of itself, or do you think that those expenditures are justified?
The market in some ways has been ahead of itself for some while as far as AI is considered. But what we are seeing legitimately is just tremendous demand for this technology, tremendous demand for compute power. And this is why we've seen such a big run up in the chip companies and hyperscalers and big iron companies that provide infrastructure for the data centers. And I think what we're really trying to figure out now is what's after that? What's after the infrastructure build? We've already had SaaS apocalypse where there's been a big discussion about the existing SaaS providers may in fact be disrupted by AI. And this is why I think we saw some of the optimism that we saw over SpaceX. It's like, what's going to be next? We've talked a lot about robotics, and NVIDIA talked a lot about physical AI. So there definitely is that wave that's coming up, but is that a short-term wave or a longer-term wave? And I think that's what we're trying to figure out right now. And certainly in the robotics section, I believe there's tremendous opportunity, but that's not necessarily a 2026 or 2027 opportunity. That's a little farther down the road, actually.
So that actually brings me to my next question, and that is about the next breakthrough that we'll see in artificial intelligence. You mentioned robotics. Could it be something within that field? Would it be AI agents? Do you think it would be something else entirely?
So I think the next big wave that's actually legitimately on the horizon, you can really see it right now, is around agentic AI, those AI agents that we've spoken about. And this is where a lot of the enthusiasm has happened around companies like NVIDIA, because we realize that there's going to be a lot of what they call tokens, considered these units of compute power that are going to be used by these agents. So we definitely know that that's going to continue to grow as we move into agentic AI. So that will be what we see enterprise people adopting over the next, say, year and a half, 2 years. There's also a big cybersecurity wave around AI. You know, for example, we have AI that can be used for good, but we also have AI that can be used for bad. So we're starting to see this emerging market around cyber and AI, and how do we actually work with that to make sure that we can stay ahead of it. In the future, we were also talking about quantum computing. Realistically, we've been talking about quantum computing for quite a few years. We've moved it from a 10-year horizon closer to, say, a 3-year horizon. So what probably happens in between that is we spend a lot of time talking about agentic AI and cybersecurity.
Yeah, it's an interesting take on the good versus the bad. But look, I want to come back to the SpaceX story, because that's going to be the biggest story of the day, essentially. And that question has been asked quite a few times in the lead up to the IPO. But how much do you think SpaceX is getting all this attention purely due to its owner, Elon Musk?
Well, arguably, Elon Musk has been a tremendous force in the industry, and we can point to many successful use cases. So I think that when you think about AI investments, a lot of organizations think that this investment may be less risky as a result of the Elon Musk connection. And it's actually hard to deny his success rate with rocket launches. If you look at SpaceX versus the global populace of rocket launches, the only company that comes close is CASC from China, because they are actually the only other ones that are coming anywhere near that amount of rocket launch. So they definitely have a lead there. If you look at the telecom environment, telecom is actually going to be buying satellite services. And if they're going to be buying satellite services, right now they're going to be buying them from Elon Musk. Blue Origin has a long way to go, as we know. So even if we look at some of the very established providers, they've struggled to have this type of success. So I think if we look at sort of the short-term market of just even satellite services, they're going to do very well in that. And then the question is, what other thing can they layer on over time?
All right. Well, Maribel, thank you for joining us today. That was Maribel Lopez, founder and enterprise AI lead at Lopez Research. Now, Bloomberg has learned that the United Arab Emirates and Iran held their first face-to-face meeting since the start of the war, signaling a potential shift towards de-escalation after months of conflict. This week's meeting marked a stark turnaround for both sides and comes amid the growing acknowledgement of the importance of calmer bilateral ties. For more, we're now joined by Paul Wallace, Bloomberg's Middle East and Africa EcoGov Managing Editor. Paul, what prompted this meeting? How significant is it between Iran and the UAE?
Hi, Abir. It is quite significant because it signals quite a shift from the United Arab Emirates. Of the GCC states, when the war started in late February, it was the most aggressive with its rhetoric towards Iran. It actually tried to get the likes of Saudi Arabia and other GCC states to coordinate attacks against the Islamic Republic. It failed in that. It did carry out some of its own strikes, and so did the Saudis, but separately. And you know, if you had said back then that the UAE would be trying to, go down the diplomatic route and ease tensions with Iran that way, I think a lot of people would have dismissed that argument because of how angry the UAE was. It's been attacked by more aggressively than any other country, including Israel, since this war started. It suffered thousands of drone and missile attacks from Iran. Most of them have been intercepted, but at least 13 people have been killed, and there's been billions of dollars worth of damage. So I think the fact that it is trying to ease tensions diplomatically shows a lot of things. I mean, the bigger picture is that Iran is a massive neighbor of 90 million people just across the Persian Gulf. I think the UAE realizes that one way or another, it needs stable, calm relations with Iran, even if it's never, or almost certainly never going to see the Islamic Republic as an ally, and will always see it as an adversary. So I think this is a realization for the UAE that this is the best way to go, and it's the best thing for its economy too, and its huge, AI ambitions and ambitions to boost oil production.
Yeah, and so speaking of that, how much is this meeting, how much is driven by the UAE's economic concerns, particularly on the impact on trade and investment and its AI ambitions?
I think it's come to the realization that, those ambitions were in jeopardy, at least to some extent. The various business sectors in the UAE, as you well know, have taken a big hit. It's, obviously hospitality and things like tourism and aviation, but other sectors too. And there are growing worries that the billions and billions of dollars of investment in things like data centers that the UAE wants to attract and, to partake in itself, would be much harder without stable relations with Iran. I mean, you take data centers alone, some of them in the Gulf did come under attack and did suffer some damage. So I think the realization now was that, for the long-term economic prospects of the UAE, it was best to go down this route with Iran. Yeah. We don't know how successful it's been, but I think it is worth noting that the UAE hasn't suffered an attack from Iran since about 2.5 weeks ago, when its nuclear power plant of Baraka near the Saudi Arabian border was targeted. Since then, there's been nothing, even in the past week with these heavy skirmishes.
All right. Well, Paul Wallace, Bloomberg Middle East and Africa Economy and Government Managing Editor. Thank you. Now, India's government has strongly condemned U.S. strikes on 3 ships with Indian crews in the Gulf of Oman, which killed at least 3 people. India summoned a top U.S. diplomat to register its displeasure and reiterate its position that the fighting should end. The U.S. has been enforcing a blockade on ships traveling to and from Iranian ports since mid-April as part of a broader effort to pressure Tehran. Now, coming up, Eastern African countries have ambitious spending plans for 2027, despite budgetary pressures. Details on that next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abir Abomar in Dubai. Eastern African nations have presented ambitious spending plans for the upcoming fiscal year. That is despite higher fuel costs and trade disruptions weighing on their economies. For more on the story, we're joined by Bloomberg's David Herbling. David, good to have you on. How significant are those budgetary pressures?
Thank you. These countries are preparing their budgets at a time when the conflict in the Middle East is fanning inflation in the region, and that means that the growth outlook for basically all these countries have been cut. If you look at the latest, growth projections by the World Bank, by the IMF, we're looking at slower growth. So these countries will definitely face pressure to raise the revenue that's required to implement these budgets, potentially looking at the trade disruptions, their exports, could be impacted. You're looking at a slowdown, in key sectors, transport, manufacturing, wholesale, trade, just because of the higher fuel costs that's seeping through inflation and the secondary effects, reaching on to costs of food and all other basic services. So it's really, really tough for these economies.
So talk to us about the spending plans, the broader spending plans. What does that look like?
These countries are facing a lot of debt pressures. So a significant amount of their budgets will be going towards debt servicing. If you also look at those plans, you see that there's, a lot of emphasis on infrastructure. So we're talking railways, highways, power plants, water dams, the kind of, big ticket investments that are needed to spur growth in the region. So it will be very, delicate balance to pay off debt and to also, fund critical infrastructure.
All right. Well, Bloomberg's David Herbling with the latest on those budgetary concerns. Now, for a look at some of the other stories we're following, lawmakers in Nigeria's House of Representatives have passed a bill allowing states to set up their own police units in a bid to tackle rising insecurity. The West African nation hopes a more decentralized police force will help it confront mounting insecurity, including an Islamic insurgency. The bill still needs to be passed by the nation's Senate and approved by 2/3 of Nigeria's state assemblies before going to the president for assent. U.S. oil refiners are increasing diesel and gasoline shipments to Africa as the continent struggles to cope with supply disruptions from the wars in Iran and Ukraine. A surge in supplies from Texas and Louisiana means the U.S. has become one of South Africa's top sources of gasoline and diesel. And coming up, SpaceX's IPO has captured Wall Street's attention. We'll hear from Marathon Asset Management Chairman and CEO Bruce Richards next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a Big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Marathon Asset Management says SpaceX is clearly an investment-grade rated company when it comes to credit. Chairman and CEO Bruce Richards told us the tech giant is very well positioned across the board.
SpaceX is the biggest rising star of all time. You see what's happening in the equity market, pricing a $1.77 billion IPO, the biggest IPO ever being 2012 when Facebook came to market with $104 billion. And so it just is an order of magnitudes greater than anything we've seen. In the credit markets, $17.5 billion as recently as last year, pricing a 12.5% coupon last June. And here they are taking the full debt stack, 10, 11, 12% coupons, repricing it down to a 460, the 10-year note today being a 453. So, it's definitely an IG rating because when you look at $20 billion of debt that they just priced in a 460, and rising star is a term that we use when a non-IG or high-yield issuer, and they weren't rated non-IG by the rating agencies. They were non-rated, but they had 10, 11, 12% coupons that are now a 4.6% coupon. So they reissued, as you said, $20 billion to refinance the $17.5 billion outstanding. And when you think about a market cap of $1.77 trillion, or call it rounded up, end of trading day tomorrow, say $2 trillion, and only $20 billion of debt, that's only 1% of the entire enterprise value is in debt. In fact, with all the cash that they have, which will be in excess of $80 billion of cash, they have no net debt. Right. So it's clearly an IG-rated company as we stand today.
No net debt now.
As the markets view it.
I have to ask, Bruce, you're one of the most well-traveled, well-connected guys in the credit industry. What are you hearing about their plans to raise further debt capital?
Well, certainly they'll have capital needs, and they'll use the debt markets to tap into, those capital needs as companies, obviously do that. And so for SpaceX to have $30 billion or $50 billion of debt is completely within the realm of a strong BBB credit.
At a $2 trillion equity market capitalization, it really is nothing.
And with the cash flow they're going to generate as a business, and you see what they've done, with their data centers as of recent, and all the cash flow is going to be gushing, and the returns that they're making off of that investment. And so the company's very well positioned across the board.
That was Marathon Asset Management Chairman and CEO Bruce Richards about the IG status of SpaceX. Now, before we head towards the end of the show and the weekend, a quick markets check. All in the green when it comes to equities. S&P futures 0.2 higher. NASDAQ and Dow Jones also turning up this morning. Euro Stoxx 50 futures 1.8% gain this morning. Again, the Middle East events are leading to oil declining this morning. But that is it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg.
Live from Frankfurt, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. Brent sinks below $90 a barrel as President Trump says a deal with Iran is close and cancels planned strikes. The markets are buying it, but we have been here before. The relief rally goes global. Asian stocks are on track for their biggest jump in 2 months, and futures move higher on both sides of the Atlantic. And countdown to liftoff. SpaceX raises $75 billion in the biggest IPO ever. As trading gets underway a little bit later today, will Elon Musk become the world's first trillionaire? Let's get straight to the markets this morning, because if you look at the Asia Pacific MSCI average there this morning, an absolutely breathtaking rally, up about 3.5%. That on the optimism that we're hearing on the possibility of a deal in Iran. Of course, the AI trade very firmly back in focus and back in action. The European stock futures also up higher, almost 2%, 1.8% this morning is what we're seeing for futures. And of course, the S&P up by 0.1% this morning, as you can see in the futures market. Taking it over to some of the other markets. In the commodity market, of course, oil very much in focus this morning. Brent coming down below $90 a barrel. 88.49 is where you find it this morning, down by 2%. And of course, the dollar index basically dead flat, along with U.S. Treasury yields also dead flat this morning. In terms of the risk events that we are watching a little bit later today at 7 a.m. UK time, we will get UK April GDP. 3 p.m. it's going to be the UMich survey of consumer sentiment a little bit later today. And of course, another historic day here for us. Trading begins of SpaceX a little bit later today. Again, will Elon Musk become the world's first trillionaire? All that and much more on this show today. Well, we begin the morning with a little bit of breaking news this morning out of the ECB after that rate decision yesterday from the European Central Bank, the first of the major central banks to raise interest rates in response to that Iran shock by 25 basis points. We are hearing now from the Bundesbank President Nagel saying that the ECB is ready to hike rates again in July if necessary. This is after that meeting that we got yesterday, trying to establish what the forward guidance looked like, how the ECB is thinking about this rate hike. Is it a one and done? Is it something incremental? Is it the beginning of a cycle? So everything will be watched very closely this morning. As you can see, euro dollar this morning basically unfazed by those headlines. We'll be watching them very closely. What else we're watching very closely this morning is Brent crude, which has fallen below $90 a barrel after President Trump said a deal to end the war in Iran could be signed as soon as this weekend. The president says he's pulled back plans for a third day of military strikes on Iran after the supreme leader agreed to a deal. But Iran's semi-official Fars news agency says nothing has yet to be approved.
We just made a great settlement of the war with Iran, and we're going to be subject to finalization of documents, which should get done over the next few days. We'll probably have a signing maybe in Europe.
Let's get more from Bloomberg's Abir Abu Omar this morning from Dubai. Again, we're getting some mixed messages from the president, from the Iranians. We've been here before. The market is buying it this time. Are things different this time?
Good morning, Ollie. Yeah, a whirlwind over the past 24 hours or so. We went from the president threatening to strike Iran for a third day and also strike the Kharg Island, which is its main oil export hub. And then overnight, our time, he came out and said, actually, a deal is now getting signed as soon as this weekend in Europe with Vice President J.D. Vance attending. So the president said that the supreme leader of Iran, Mujtaba Khamenei, has agreed to the highly enriched uranium clause that was a big part in the MOU, and that the Strait of Hormuz will be opened immediately upon the reaching of this deal. Now, key here is that the Iranian side has not responded to this. As a matter of fact, yesterday, on Thursday, Iranian state media reported that nothing has been confirmed, that the progress has not been reached. But you're right, you mentioned that investors are buying into this time around, and there is some positivity around the president's remarks because it just seems like the deal has been reached. You heard him speaking earlier, and he was saying that the deal is settled. We're there. It's getting signed. But look, we still have to wait and see what the Iranian side has to say. And a big sticking point here is still Lebanon. Israel, the third party in this war, is still very much involved in the southern part of Lebanon. The incursion there is still the deepest in 25 years. And Israel is never going to agree to Iran keeping its highly enriched uranium. So if that clause is not ticked off, we just don't know how this MOU would be signed. Meanwhile, the Strait of Hormuz is still effectively closed. Ollie, President Trump says it will be opened immediately upon the signing of this interim deal. And then more clauses, Axios reported, including Iran's nuclear program, will be discussed during this interim period of 60 days, of which the ceasefire would be extended.
Well, thanks very much to Bloomberg's Abir Abu Omar over in Dubai, reminding us that, of course, the devil is always in the details, and there are a great many details still to get through on this possible deal with Iran. But meanwhile, that is not dissuading markets across the world, Asian markets in particular, on track for their best day in 2 months on optimism around that possible deal. Let's get into some of this sort of remarkable action over in Asia with Winnie Su in Hong Kong.
Good morning, Audie. A very happy Friday from Asia. As you can see that the risk sentiment here is really strong after President Trump said that we are pretty much close to the end of the Iran war. However, not much of a confirmation from the Iranian side. So this weekend will still remain very busy for many of us. Now, in terms of the market moves, market is really taking this cross asset. You have oil lower, and that is supporting Asian stocks, of course, and also currencies in the region, as well as yields in Japan, Australia, both falling as well. Now, when it comes to the big moves in the stock market, of course, it still is South Korea's Kospi index here up about 8%, leading gains. Now, I have to say that we are seeing the third day of Kospi index moving more than 8% in a single day over this past week. So it really goes to show how volatile and momentous this market has been. And also supporting that South Korea's Kospi index up today is also the stronger South Korean won. Very interestingly, we are finally seeing foreign investors buying Korean stocks, and that is also supporting its currency, leading the gains within the Asia peers as well. Following that, you have Japan's Nikkei 225 and Taiwan's TAIEX index, both up more than 2%. Now, you flip the board and take a look at some of the technology shares, because the tech sector today is still driving gains in Asian stocks. And of course, there is that overall positive sentiment when it comes to the macro environment, supporting the gains in growth stocks. But also worth flagging that, for example, the names like SK Hynix and Samsung are now very leveraged. Our reporting showing that about 60-70% of the moves in SK Hynix being driven by these leveraged ETFs. Now, also worth mentioning is that these tech stocks have been sold off in the past few sessions, a lot being driven by investors pulling capital away to secure their investment into the SpaceX IPO. And now that this liquidity overhang is also being lifted ahead of the actual listing, that is also adding more momentum into the tech sector. Back to you, Ali.
Winnie Su, in Hong Kong, they're going through some of these spectacular moves we've seen across some of these indices across there in Asia. The Kospi up by almost 8% this morning. A huge amount of optimism being priced into this market, despite, the politics being a little bit less clear. Let's bring in Ven Ram, our MLive market strategist, to sort of break this down for us. Ven, I'm going to go to you not to give us an analysis of the politics, but an analysis of the markets. Why so much euphoria now? Why is the market buying this so aggressively?
The market is going to be buying this aggressively because, it's a short-term relief for the markets. Remember, the markets have been wobbly in the past few days, and I think those nerves are showing. I think beyond the short-term, Oliver, I think you need to look at the medium-term perspective. And what is it that you see? What you see is a market that's very skittish. We have seen a turning point in the markets after the disappointing Broadcom's earnings guidance. And then we saw yesterday that Oracle outlined outsized capital spending plans, and the markets didn't welcome it. So I think that the markets may heave a sigh of relief on politics, but I think that this is a market that is also acutely aware that, look, AI valuations are beginning to be stretched, beginning to get frothy, and I think that the markets will muddle through. We've got the SpaceX IPO, of course, that's a very big thing for the markets, so investors are likely to rotate out of some of the earlier favorites and move into SpaceX, and I think that that's going to be a liquidity event for the markets. But I think that, beyond SpaceX, you've got Anthropic and OpenAI IPOs coming through later in the year, and I think that the markets will kind of feel supported through those events. But after that, I think I wouldn't be surprised if the market sold off big time.
All right. And Ven, once upon a time, it was the central banks that really governed most of where asset prices went. We got a rate hike from the ECB yesterday. Are we underpricing the risk of, inflation and basically these central banks having to move higher and higher and higher in the rate story across the world?
Well, I think that the ECB sent a pretty hawkish message yesterday, and after raising rates, I think that the markets are pricing another 50 basis points of tightening in the remainder of the year, which I think is in order. I mean, especially if you see what the German central bank governor said this morning, I think that he is saying that, we probably need another hike in July. That's pretty hawkish, and I think that, that hawkishness is going to kind of make itself ripple through to the other central banks and other major regions. We've already had RBA raise rates aggressively this year. I think with the ECB also joining the act, I think that the Bank of England and the Reserve Bank of New Zealand will also feel the heat to raise rates, and that is the only way to keep inflation under control for the moment.
Yeah, well, Ven Ram, thank you so much, our Bloomberg MLive strategist there. And of course, we'll be watching the other central bank critically next week, which is the Federal Reserve under Kevin Warsh. But coming up on this program, as we head to the first day of trading for SpaceX, we speak to one of the pension funds blacklisting the company due to, quote, catastrophic governance concerns. But first, all of the details you need to watch the day ahead for the blockbuster listing. We'll go into that into great detail. And of course, the big question today, will Elon Musk become the world's first trillionaire? That's next. And this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
SpaceX is the biggest rising star of all time.
Anyone that's owning SpaceX, you're buying it for the Musk factor. And many that bet against Tesla and Musk going back a decade ago, that was proven historically wrong.
Elon Musk has appointed himself CEO for life. He has all the voting control. He has basically built a moat with alligators around himself, and that's not good for shareholders.
Feels like a milestone moment. This was an investment thesis that was unthinkable a decade ago for most investors. And I think now people are coming to grips with the fact that space technology is really here. What would have been science fiction to us maybe 10 years ago is now science fact.
Some of the commentary from our guests on Bloomberg Television ahead of the highly anticipated SpaceX IPO. The space and AI firm has officially made history on its $75 billion IPO, debuting with a market value of $1.7 trillion ahead of its first day of trading a little bit later today. The blockbuster listing underscores investor appetite for AI and future technologies while putting Elon Musk on the verge of becoming the world's first trillionaire. We're joined now by Bloomberg Intelligence senior analyst Matthew Bloxham. Matt, so much to talk about in this story, and just getting to the sort of headline for you. What stands out for you today in terms of the first day of trade for SpaceX?
Yeah, the IPO has been unconventional in so many ways. I think the investment pitch we heard there in terms of this kind of blurring of science fiction and science facts, the fact that big index firms like NASDAQ have kind of shifted their inclusion rules to kind of accommodate these kind of businesses. The governance issues that were flagged there in the VT. So just so many things. Just the sheer size of it, just everything about it is completely unique and unconventional.
And thinking about where these stock orders actually came from, is there anything sort of exceptional there that you were paying attention to?
Yeah, obviously there was a big allocation ring fence for consumer or retail investors, between 20 and 30%. And I think what we've heard is that there's over $100 billion of orders coming from the retail market, compared to a total raise of $75 billion. So that the kind of the appetite and interest in Elon Musk is as big as ever. And obviously, there were some kind of blips on that, within the last year or two, given his foray into politics. But it seems like the kind of Musk story is very much back in favor. And obviously, there's been a huge amount of institutional demand too. People really kind of buying into that kind of long-term vision that he's set out in terms of AI and the move into space.
And let's get into some of the details of that long-term vision, the actual sort of it's not just a sort of faith in Musk that is entirely blind. There is some actual, very large ambitions associated with this plan.
Yeah, that's right. They've got a lot to live up to. If you look at the kind of broker forecasts for SpaceX, they're talking about increasing sales by over $400 billion over the next 5 years, which is unprecedented. There's no company that's ever done that before. So there's going to be a lot of pressure on SpaceX to deliver. I think some near-term things that we're looking at, we'll see the next launch of their Starship rocket platform, probably in late June, early July, if everything goes according to plan. Starship is incredibly important to all these kind of future aspirations they have across the whole range of revenue opportunities that they're aiming for. Another thing that's going to be in focus for people is what happens with Tesla. There's a lot of talk already that maybe they'll look to merge Tesla and SpaceX together. They're already partnering on the big chip venture called Terafab. So I think that's probably where a lot of investor focus is going to shift now. If and when, and it's probably more a when, is Elon Musk going to look to crunch SpaceX together with Tesla?
Well, Matt Bloxham from Bloomberg Intelligence, thank you so much for getting us ready for really the big event of the day, this first trade of SpaceX a little bit later. And then later in this program, we'll be speaking to the CIO of the Danish pension fund that is actually blacklisting SpaceX, saying that there are catastrophic governance concerns. That will be at 6:30 a.m. UK time. But here on Earth, we are concerned about inflation and the ECB warning that inflation is spreading outside of the sort of energy sector. We'll have more on that next. And this is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Well, European central bank officials say there could be another rate hike as soon as next month after the central bank raised interest rates for the first time since 2023. Yesterday, President Christine Lagarde warned that inflation is widening to just beyond energy.
We are beginning to see a broadening of inflation throughout the economy. And that is obviously in terms of direct effect, but also in terms of indirect effect. Not yet at this point in the front of the second round effects.
And the governor of the Bank of Slovenia, a governing council member over the ECB, says the hike is just enough for now and that any further hikes this year will be driven by the data. I spoke exclusively with Primož Delens.
It will be data dependent, and we will see what's going on in the next couple of weeks, months.
And so while there was unanimity at the ECB, there were a lot of economists, some of whom we spoke to here at Bloomberg, that saying that basically, the ECB is kind of fearing the 2022 scenario of moving too slowly, but there's actually a greater risk potentially of moving too early, that the impact on growth could be very substantial, the 2011 sort of scenario. How much of a concern is that to you? We spoke to one analyst this week, for example, who said that if you hike this week, you're going to be cutting again in the fourth quarter.
Well, as I said, I cannot comment on what we will do in the future. But we had really a robust set of data on the table, our projections and all the scenarios. And the most of scenarios show that economic growth this year and for next 2 years will be lower than initially anticipated in December, and that inflation will be higher. So, but for now, we do not, let's say, predict any rate cuts in the next meetings.
And how concerned are you about sort of government action potentially to try to offset some of the impact of the energy shock that might be sort of inflationary? We've also seen the EU sort of loosen, giving a little bit more budget leeway. Debt levels are already very high in Europe. How concerned are you about that?
Yeah, we are concerned about general picture in Europe and also for the fiscal policy. We know that some countries are really on the limits, and we would follow the main recommendation that fiscal policy needs to be robust, it needs to be focused on the things that's important, and all the necessary measures should be temporary.
I'd like to also get your thinking and the Governing Council's thinking more broadly about kind of the tail, how long the tail is on this war in Iran and the effect it's going to be. Let's imagine a scenario in which the war ends tomorrow, there's a ceasefire, the Strait of Hormuz reopens, oil comes down to $60 a barrel. What does that mean for inflation? Is this something that is going to actually stay with us a little longer, even if the war ends?
Yeah, as I said, one of the scenarios that you alluded to was also on our table. So this is something between a mild scenario and basic baseline scenario that we had. So this would mean that oil prices will go down pretty fast, but still we have to think about that. Not only the price matters, also the quantity. So even if Hormuz is opened tomorrow, all the oil will not come to Europe or to China or wherever. So it will be some kind of effect for longer. But even in the baseline scenario, the inflation this year will be higher than initially anticipated, and in fact even in the mild scenario.
And also think about some of these sort of economic dynamics. We were looking at the PMI data that was coming out, and actually for once manufacturing seems to be holding up better than services. How concerned are you about that weakness that we're seeing there in services, or does that actually help you with the kind of inflation fight because it's sort of bringing down sort of demand for some of the services?
I would say quite the opposite, because what we see from the data is that services inflation is still stubborn at 3.5%. So this is one of the inflation part that it's really hard to fight. So what we have seen is that on the data is that services inflation is one of the most important structural part of our inflation.
And so obviously price stability is your main concern, but important to price stability is market stability. And there are a lot of ingredients right now in the market that I think might make some people uncomfortable. Obviously there are the wars, the impact on inflation, and energy access. There is, stretched fiscal budgets, high debt for European nations may not be able to react if something happens. And meanwhile, the market seems unshockable. Ever since Liberation Day, the market keeps climbing, despite some sort of erratic things we've been seeing in politics. And we're minting kind of trillion-dollar companies, it seems, now every kind of month. That seems to be driven a bit by FOMO for our investors. Those seem like the ingredients for something that could go quite wrong quite quickly in terms of a sharp repricing. How much does that concern you? How much is that a conversation at the ECB?
Yeah, this is one of the conversations that we do have. So alongside with monetary policy analysis, we also have the analysis of financial markets, financial sector, banking sector, and so on and so on. And we also assess how our decision would affect other parts of the economy, especially financial markets. So we do see that markets are quite robust, especially in Europe, but not only in Europe, also elsewhere, which is in a way okay, because with this robust financial market we can expect a firm transmission of monetary policy. But of course we have to be vigilant if something goes wrong or if something moves too fast.
That our exclusive conversation with the Bank of Slovenia governor and ECB governing council member Primož Dolenz yesterday after that ECB decision. But coming up on this program, as investors gear up for the biggest IPO on record, we'll be speaking to the CIO that's blacklisted SpaceX. We'll get more on his catastrophic governance concerns. We should say it is not the only pension fund and the only investor that has signaled this. And that'll be after the break. And this is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything.
Live from Frankfurt, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. Brent sinks below $90 a barrel as President Trump says a deal with Iran is close and cancels planned strikes. But we have been here before. The relief rally goes global. Asian stocks are on track for their biggest jump in 2 months, and futures move higher on both sides of the Atlantic. And countdown to liftoff. SpaceX raises $75 billion in the biggest IPO ever. As trading gets underway a little later today, will Elon Musk become the world's first trillionaire? Let's get straight into the market action this morning, because really the standout this morning is the MSCI Asia Pacific market this morning, up 3.2%. You can see it there. The rally across Asian equities, the Kospi was up almost 8% at the index level. Absolutely remarkable. Looking at the Stocks 50 futures this morning, up 1.7%. Another rally here in Europe. And of course, futures in the United States after that rally yesterday, up by about 0.1% this morning. S&P futures 74.09 is where you will find that index. Looking at the other sort of markets, thinking about oil and Brent, of course, Brent sort of breaking below $90 a barrel, so a significant level for, of course, the President of the United States and the rest of the world. Brent down 2% this morning. The U.S. dollar index up just a touch there by about 0.1%, and U.S. Treasuries, the 10-year yield, really basically dead flat this morning as we try to evaluate what we are getting from the President of the United States and the prospect of that deal with Iran. Time now for your front pages across the world. The Wall Street Journal leading this morning with Iran and President Trump's comments suggesting that a peace deal could be signed in the coming days. President Trump said that could be signed even here in Europe. The Financial Times focuses on SpaceX as the Elon Musk-led company raises $75 billion on its record IPO. And of course, in the United Kingdom, we're also keeping an eye out there. The Times leading with the latest political turmoil for Prime Minister Keir Starmer as 2 defense ministers quit over a long-awaited investment plan. And that's a roundup of today's stories on across the world. For those across Bloomberg, for terminal subscribers, you can go to DAYBGO for Daybreak and all of the main stories that we are tracking this morning. Well, with a raise of $75 billion, SpaceX is the biggest IPO of all time, sending institutions and retail investors scrambling to get a piece of the action. One Danish pension fund, however, has decided to sit it out. The $25 billion Akademiker pension cites catastrophic governance structures at the space company as one of the main reasons, and we're very pleased to be joined by the CEO, Anders Schelde, right now to discuss some of his investment thesis and some of his concerns around SpaceX. Anders, thank you so much for joining us this morning. Of course, one of the main conversations, and you're not the only person to highlight some of the governance concerns over at SpaceX. Is this just down to the full control that Elon Musk has of the company? Can you detail for us some of the governance concerns that you have?
Well, first of all, let me say that I think, SpaceX is a fantastic technology company, and what they achieved is truly remarkable. And it's really a very interesting IPO from many aspects. But it's also a very risky endeavor there on, and I think over the coming years many things can and will go wrong, and in that setting, governance structure may seem good governance standards may seem unnecessary when the company is performing well, but it becomes critically important in adverse scenarios, and that's why we've really placed significant emphasis on governance along with valuation strategy and financial performance and so on when we evaluate companies. And in this case, we simply feel that governance standards are too weak considering the risk picture that we're looking at.
So, of course, the sort of control that Elon Musk has over the company and the sort of, infinity sort of structure that he has placed there to have control of the company is something that you've detailed as a concern. It's something others have detailed as a concern. But, of course, many of the people that are buying SpaceX are buying it just exactly for that Elon Musk factor. And you've seen that represented in the market. Some would argue that no company could have done this unless it was run by Elon Musk, because, of course, no one has. What do you say to those investors who are so excited about it, who have not been dissuaded at all by the concerns you're highlighting?
Yeah, I think you're absolutely right. I think that what's really driving this devaluation is very much the combination of Mr. Musk's personal brand and also the extraordinary achievements of SpaceX, and add to that probably a certain degree of fear of missing out among retail investors. So that's also what makes this company so very difficult to put a price on, because it's not only are there these enormous risks around the revenue or margin or future capital requirements, but you also have to see, understand the multiples through the lens of the Musk brand and even AI also added to that. So it's truly difficult to put a price on this on SpaceX, I believe. But in our assessment is that we are the IPO price that's on the table is very, very far away from what we can actually come up with when we do our sum of parts analysis.
Yeah, and so for you, we know 1.8 trillion is obviously too rich a valuation for you. What do you think is a more reasonable valuation? Admittedly, there are all these issues about black box and maybe not fully understood, but what for you would be a comfortable price for getting the governance concerns to buy SpaceX at?
Well, in a case like this, we do the same as we always do, and we do our own internal analysis. So we try to do sum of parts analysis and come with our own opinion about future revenues and margins and what have you. And for us, it's simply hard to get above $1 trillion, I have to say. We might be too conservative. I certainly hope so, because a lot of investors around the world will be piling into this. A lot of retail investors will be piling into this. So I hope I'm wrong. I hope they have success. But for us, the conclusion was pretty clear. This is not something for us to participate in. The price is too high, and that implies obvious financial risk. The governance standards are too weak. That further amplifies the financial risk. So, yeah, we won't be participating.
Yeah, and I'm thinking about a sort of chief, investment officer who's looking at SpaceX, but also looking at what SpaceX tells us about the market more broadly. There's a sensation, I think, for many people that in many ways, not just on SpaceX, but on many of these companies, it's really a FOMO-driven rally. People don't want to lose out on this sort of technology that is incredibly hard to price. Does that bring up concerns for you in terms of market stability? It's something I bring up with government officials, ECB governing council members. This is a market that seems entirely unshockable. There are a lot of ingredients of instability. Is it something that you are concerned about, that you get a very sharp repricing with very large consequences?
I think that risk is definitely on the table in the case of SpaceX. I think it's on the table in regard to tech valuations in general. Our view is that there is a certain amount of hype there, but we also think that this would probably continue for quite a while. I think, some people make parallels to the dot-com area 20 years ago, and I think if you use that parallel, we probably think that we are in the early days of 1998 yet. So things can get pretty much more extreme, I think.
And what do you think the sort of obligation is to by institutional investors and pension funds such as yourself? Your example, you also made headlines earlier this year by selling out of U.S. Treasuries, citing sort of debt levels there. It also came quite conspicuously around the concerns around Greenland, obviously your Danish fund. What role do you think that institutional investors and pension funds have in the context of what we're seeing, particularly also in global geopolitics, particularly in the United States, where you're seeing a much more statist approach? Do the Europeans need to be more concerned about the United States, and should investments in Europe, be more we're looking in Europe at more buy Europe? Is that something that sort of institutional investors need to be thinking about in terms of risk?
It's certainly something that we think about, but first of all, I think it's important for me to say that the U.S. market, and we're strong believers in the U.S. economy and U.S. markets, and we've always been heavily invested in U.S. equities and credit bonds and what have you. That being said, we feel that as a responsible European investor, we also have an obligation to support increased European autonomy in the coming years. So we're looking to find more investment opportunities in Europe. We do be do a greater effort to do that going forward, and obviously that implies that we need to find the funds somewhere. Some of them will come from investing less in the US.
And obviously, and obviously you've got high considerations on ESG, as we know, in the United States and to a degree in the United Kingdom. There's a sort of backlash against ESG. How does that factor into kind of the viability going forward of the American market? Of course, it's a conversation here in Europe that maybe Europe is a little bit too risk averse and should be thinking about ways in which it can take on more risk in order to get higher returns.
Well, I think to us, ESG and responsible investments remain as important as ever, and probably even more as important. As you mentioned, there seems to be a certain pushback against it in some markets, and particularly in the US. And in this regard, we're talking about SpaceX today. We're talking about the G in ESG. For us, governance is really a critical factor for us as an institutional long-term minority shareholder in these large companies. And now the pendulum seems to be swinging a bit in the other direction, but I think that means that it's even more important for us to try and pull it in the other direction, so to speak. So that's also why we excluded Tesla last year, and really the core reason also, talking about ESG, why we excluded SpaceX, it's a lack of governance standards.
And I'd like to also get your perspective on some of the sort of rule bending we've seen by the NASDAQ to sort of include SpaceX and sort of fast track certain things. Are you having conversations with index builders to build alternative index that sort of are like SpaceX in order to sort of limit that exposure for you?
Well, for us, it's not really relevant because we have a pretty long exclusion list. So actually, we build our own customized indices to take out the companies that we excluded. But of course, it's a concern in the sense that it will affect the markets through the increased passive investment and so on and so forth. And to my mind, I think it was a big mistake by NASDAQ to include SpaceX already now. I think you need a certain period of company reporting and market scrutiny before you see any IPO price settle at a price that's more sort of in line with company fundamentals. And that this is generally true, and it's particularly true in the case of SpaceX, because not only will it enter the indices with an unprecedented rate for an IPO, we also have this unprecedented uncertainty about future revenues and margins and so forth. And then we have the multiple uncertainty, being tied into the Elon Musk brand. I think it would have been much better to wait a while and see the stock settle and find the real price, so to speak.
Yeah. Well, Anders Schelde, thank you so much for your time. That is the Chief Investment Officer at Akademiker Pension, the sort of Danish pension fund that, of course, is staying away from SpaceX over those great governance concerns. Well, coming up on this program, Switzerland will vote on whether to cap its population. We'll look ahead at the weekend's unprecedented referendum. That's next, and this is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. The UK's Defence Secretary John Healey has resigned after a spending row with the Treasury over a £20 billion funding shortfall. The move dramatically dents Prime Minister Keir Starmer's authority, just as rivals are lining up to challenge him for his job. Bloomberg's Lizzie Burden broke the news to the UK Business Secretary Peter Kyle at the Founders Forum yesterday.
We are in a moment in time when we are investing enormously into our defence. Not only have we invested consistently since we came into office, so building 13 new ships, which we commissioned when we first came in, all the way through. I don't know the circumstances of John's resignation because I've just heard at the same time you've read it out there. So I am not going to leap to any conclusions as to why he did not go. We are right at the moment when we're about to announce the next wave of very significant investment into defence.
Joining us now for a bit more is Bloomberg opinion columnist Rosa Prince. Listen, so it can't be a good sign whenever you're sort of out and talking and you're learning about the sort of resignations of other members of your government. How damaging is this now for Keir Starmer?
Yeah, and I think it would have been a shock there to Peter Kyle, just because John Healey is seen as a very loyal, a very sensible minister, not one who kind of flounces out in a huff. And that highlights how concerned he is about the level of defence spending. And in turn, it's hard to think of anything more damaging to a prime minister than your defence secretary saying to you, you are failing to keep the country safe. You are not putting enough money into this. He even said there could be a risk of invasion from Russia within the next couple of years, and you are not putting the money money there to defend our country. I think the only reason this isn't fatal immediately for Keir Starmer is because he's kind of a lame duck already at this stage. He's already so fatally wounded by earlier resignations, and his MPs are so unhappy with him that it looks like he probably isn't going to survive anyway. So it's just another kind of painful stage in the end game of his premiership.
Well, let's put this sort of concern around UK defence spending in the broader context of European defence. I suspect the United Kingdom is not going to be the only fiscally stretched European country that's going to have difficulty living up to something that's easy to promise, which is 5% defence spending, and actually delivering it. Where does this leave European defence?
Yeah, well, as you say, it highlights the problems. You know, all of our economies are going through a tough time. Here in the UK, things are very tight. But what the defence spending plan, which was due to be published this week, and what this row was about, highlights is that Britain is now towards the bottom of the league of defence spending within NATO. A few countries are getting close to those targets that they had set to kind of please Donald Trump, to suggest that Europe was taking on more of the burden of defending itself. And not just for Keir Starmer, it shows that how difficult this is going to be for anyone who wants to replace Keir Starmer. Where is that money to come from? Now, Starmer's riposte to Healey is, well, look, we couldn't just push up borrowing because that would create difficulties within the markets. It would make borrowing for the UK already very expensive, even more expensive. And so I think that's a question that kind of reverberates around Europe. We've seen some who are going to borrowing, say Germany, but they have a very different context for UK, where, as I said, borrowing costs are already so high.
Yeah, well, Rosa Prince, thank you so much from Bloomberg Opinion there on the latest developments in UK politics. Never a dull moment there. And never a dull moment, actually, in Swiss politics. So Switzerland is set for a nail-biter referendum on Sunday, a proposal to cap the population at 10 million people. It's an unprecedented proposal, which has never been tried by a modern economy. Bloomberg's Bastian Benrath-Wright joins us now from Zurich. Bastian, first of all, set us up. Why are we having this conversation? Why is Switzerland voting on this on Sunday?
There's two parts to the answer for this. One part is Switzerland's population has just been growing quite rapidly. We're looking at 5 decades of almost ongoing population growth. So Switzerland has just really outpaced all the other European countries in growth. But then again, there's also just a populist. It's also just a populist thing, because it is driven by the right-wing Swiss People's Party, the referendum, and they are essentially just looking for something to bring in front of voters to make sure that they have a reason to curb immigration and to sever ties with the EU, essentially, or at least severely restrict them. There are two goals, and this thing that the population has been growing is just essentially the new thing which they take at the base of their campaign.
Yeah, so those are the reasons why this may be going to the population. What are the risks associated here? They are across the relationship with the European Union. They are for the business community. I believe we have the Justice Minister saying that this would be worse than Brexit.
Yeah, exactly. You have the entire government who is against it. You also have many business leaders who have spoken out against it. Quick reminder, Switzerland is the home of quite big companies. We have Roche and Novartis here, we have Nestle here, we have UBS here, and a couple of others. And they have all said, let's not do this. This is really going to hurt us, because Switzerland is really dependent on recruiting staff abroad. There are worker shortages in the country, and this is where the immigration is coming from. These are not people who are coming here to get any sort of welfare. These are people who are coming here to work. So this is why the business community and the government are against it.
Well, Bloomberg's Bastian Benrath-Wright, I'm sure a very sort of exciting and busy weekend ahead. We'll be watching it very closely and probably speaking to you on Monday morning. So we'll be watching that going into the weekend. Of course, much more coming up on the program. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Well, welcome back to Bloomberg Daybreak Europe. Heading into the weekend, let's take a couple look at some of the charts that we are watching, monitoring this Friday morning, obviously ahead of the SpaceX IPO. This chart that has got Bloomberg data crunching the net worth of Elon Musk, as you can see there, with the pricing of the IPO yesterday and the first trade expected a little later today. Elon Musk is very, very, very close to becoming a trillionaire. If we get any kind of bid for SpaceX in this opening trade, which is, not at all improbable, it is very likely that Elon Musk becomes the first trillionaire on the planet Earth, and indeed perhaps beyond the planet Earth, if he has his ambitions satisfied. The other thing we're watching, of course, this morning is the possible deal between the United States and Iran. And now we're looking at the prediction markets, poly market odds of whether or not there is going to be the blockade lifted by the end of June. As you can see, there's been a big rally in the market. There's been a big rally on the front end of the sort of oil pricing. However, the prediction markets are seeing basically only a 60% chance of that blockade being lifted before June the 30th. And of course, the other thing we're watching going into the weekend is a conversation we just had, a very peculiar referendum in a way of dealing with immigration from Switzerland. They are trying to cap their population at 10 million people. And here you have a chart of the Swiss population over the last couple of years. You can see we're almost there at 10 million. We're at 9.1 or so million people. And of course, that referendum will be held over the weekend. We'll have big ramifications, not just for Switzerland, but of course, its relationship to the European Union. We have some members of the Swiss government saying that this referendum could, in fact, for the Swiss population, the Swiss economy, be worse than Brexit. So something we'll be watching very closely going into the weekend. Some sort of new forms of political risk and things that we have not seen very much in the past. To access, search, and save all of the Bloomberg terminal charts used on this show and across Bloomberg TV, terminal subscribers can go to use the function Chart TV Go. Let's get a quick check on the markets before we close out the hour this morning. Of course, the big story is across the equity market. You can see it there. MSCI Asia Pacific actually giving back some of the sort of more extreme gains we saw a little bit earlier this morning. We were north of 3% gains on Asian equities. That has come down a little bit. Still a fairly healthy bid there. 2.6% higher going into this Friday session and closing out. Of course, the European stocks 50 futures up by 1.5%. Another rally there in Europe. And S&P futures actually turning around, being down ever so slightly, as you can see there. But again, the big question will be, as we go into this trading day, what will we hear from the President of the United States? And is it really realistic to think there could be a deal signed between Iran and the United States this weekend?
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. It is Friday, June the 12th. Here's what's on the agenda. SpaceX predicted to surge at the open on its history-making $75 billion IPO. Trump halts attacks on Iran and again claims a deal is close. Oil drops and stocks rally hard.
OK, let's talk about that oil drop. We're down by circa 2% on Brent right now. We're sub 90. That's the trade right now. Stocks, as Tom says, they are a rocket ship today. The Cosby is off its earlier highs. As you can see, we're still up by nearly 5%. We were up 8% earlier on in the session. And Euro Stoxx 50 futures right now up by 1.6%. OK, pre-flight checks are complete. The countdown to the opening trade starts right now.
4, 3, 2, 1, ignition. And liftoff. Go SpaceX, go Starlink.
Welcome to the program, everybody. Friday the 12th. Happy SpaceX Day. Perhaps that's what it should go down as. It's a seemingly small step for many companies, or at least from a macro perspective, when you take a company to market, when you do an IPO. But this feels much more like a giant leap. But which of the giant leaps are we most interested in today? Is it the giant leap in retail interest? Is it the giant leap from a scientific perspective and the AI journey that we're on, which sounds pretty exciting? Is it the giant leap expected in Elon Musk's personal fortune? Because that's certainly worth discussing. A giant leap in a new direction on governance? Or do we think investors are taking a giant leap of faith when they get behind the untested science that goes behind this valuation? And you can pick all of them. Yeah, tick all.
Tick all.
A $28.5 trillion total addressable market, which is about the size of the entire US economy. The bull case is that they dominate in terms of their launches, they dominate in terms of Starlink, and they build data centres in space. The bear case, of course, is that there's a regulatory challenge here, is that there's physics involved in terms of getting those data centres in space. Bottom line is, this is a massive market moment, huge amounts of capital returned to employees and early investors, and venture capital world as well, being given significant liquidity that then is going to be churned into the broader tech ecosystem. So that's on the tech side as well. Massive returns coming through.
And are the market impacts of this going to be amplified by all of the ETFs that have suddenly been set up to take advantage of this moment? Because not everybody can get involved in the SpaceX IPO, but we now have more than 20 SpaceX listed ETFs filed. Some of them are leveraged, 2 times leverage on some of them, 2 times the daily move. Some of them are reverse funds, so they take the opposite of whatever the SpaceX trade is doing. But this is set to amplify whatever the moves are on day one, and however rich that makes Elon Musk, whether that makes him a trillionaire, the world's first trillionaire.
Could be a trillionaire, out of this world number. What is also interesting is that we are seeing an end of an era in some ways. The US equity market has shrunk dramatically over the last few years. Buybacks, all these kinds of stories have driven that narrative. we're now getting an expansion in the amount of equity that is out there. And that is, I think, quite a significant moment. Are we about to see a pivot there? And what does that mean? How much has the multiple story been driven by that narrative of buybacks and a shrinking market? We're about to see that tested as well, because SpaceX isn't the only one.
Yeah, there's CapEx all over the place.
There's CapEx all over the place, there's IPOs all over the place, and big IPOs all over the place as well. Is that what is driving markets this morning? Actually, probably no. It will drive markets later on, and we are pre-positioned for that SpaceX IPO, obviously, to be a big story later on. But overnight, the news has been on oil. Brent is sub 90. We are moving lower. We are down by circa 2%. We're off our earlier lows, but we're in a position now where we have to once again question whether or not we are going to get a deal, as the president suggests. The indications are from Axios, and this is based on, I think, an unnamed US official and a diplomat, so let's kind of just have a quick look at that kind of sourcing story. But basically, a 60-day extension. We've heard this story before. You are going to get a Strait of Hormuz opened immediately. Apparently, you're going to get some sort of sanction story for Iran that is going to work. I feel like I've been here before.
There's also reporting that C-17 planes are on their way to Europe for a potential signing ceremony in Geneva. That suggests that maybe there's a bit more work that's been done in terms of the negotiations. But we have seen this story before. We've seen it on Fridays. We've seen it leading up to the weekends. We've seen it being reported by Axios. The Vice President, if things move forward, as they've suggested, could be there in Europe next week signing this memorandum of understanding. The hard stuff is going to be left for after that 60-day period. That's when the negotiations around the nuclear component apparently come in. And, of course, for the markets, the key part is the Strait of Hormuz reopening, which should, according to the MOU, start to happen within that 60-day period.
And that will be important. And what kind of downdraft in oil prices is there still to be seen if we do get that signing? But how quickly do we then pivot to a conversation that says, even if we get this, which is, to your point, not guaranteed, but even if we get this, how quickly do we get there and say, well, hang on, this is just 60 days, and there are so many things still left to be discussed?
Across the wider markets, so oil is clearly a factor, and we continue to tie in what's happening in terms of the potential Iran deal. Really interesting. And Guy, you pointed out that the Kospi kind of rallied hard. At one point this morning was up 8%. Now it's up just a mere 5%. There was a story around some of the banks out there. This is a Bloomberg story talking about the banks in terms of reducing some of the leverage that they want to be providing to hedge funds that have exposure to some of those chip names in Korea. So that seems to be a factor there. The bottom line is that you're seeing a rally across equities. You're seeing Treasuries relatively stable. The dollar is pretty stable, and oil is down. So it seems to be we're setting ourselves up. The Kospi is back to close to near record highs at this point. European futures pointing high by 1.7%. And, of course, a lot of strength in the US session yesterday, led by the semiconductor space and the chip names. Once again, double-digit gains for some of those names.
Are we feeling cynical this morning, or are we not feeling cynical this morning?
It's Friday. Does that change the answer to that question?
I think it probably increases my cynicism. We're going into SpaceX. Let's tie this all together. SpaceX IPO is about to happen. Really strong inflation prints, CPI then PPI. Market starts to get nervous. Yields start to move higher. Market begins to roll over. Big IPO coming.
Big birthday celebration.
Big birthday.
Over in the
UFC fighting
it's going to be a
about
big
to happen.
weekend.
The stars have aligned?
Do we want... the stars have been made to align. Do we want to make sure that we have a pop into the weekend? I don't know. There's a lot of people out there that would suggest that. I possibly...
One of those giant leaps.
I couldn't. Yes. OK, let's talk to you about what is coming up on the show. We're going to be talking about what business wants out of the G7. Fabrice Lassache, MEDEF's vice president, is going to be joining us in Paris. Max Kettner is going to be here. How bullish is he feeling this morning? Alexander Koch, a Raiffeisen Group economist, is going to be talking to us about what is happening in Switzerland and the ECB. And Camille de Cossel, BNP Paribas Markets 360, head of developed market rate strategy and economics for Europe, also in on that conversation, Tom.
Let's look ahead to what else we are watching throughout this Friday. EU finance ministers will be meeting in Luxembourg. Canada's Prime Minister, Mark Carney, meets with French President Emmanuel Macron, of course. That is ahead of the G7 Leaders Summit next week. We're watching that for you, and, of course, we'll be on the ground at that event next week at 3 p.m. UK time when you get the University of Michigan Sentiment Survey, and the ECB's Joachim Nagel speaking in Berlin. A report suggesting that he is pushing or making the case for a further rate hike from the ECB, possibly as soon as July. SpaceX, of course, to debut on the NASDAQ, and some of the early trading suggests that there could be a pop of around 30 to 35%. That's in the shadow markets. That's the indication on SpaceX.
Yeah, interesting that Joachim Nagel has already been speaking this morning, so we've already heard from him, and the suggestion there being that the ECB is ready to hike again in July if necessary. That seems to fit with the narrative that came out after hours from our reporting that suggested that the ECB, sources telling Bloomberg that the ECB is not ruling out moving again in July. But then you wonder, if we do get a signing, if we do get a 60-day ceasefire, does that push that expectation out a little bit? Or not. These things take time to normalise, even if we do get a signing on.
I love the fact that we always get this kind of just the finesse on the press conference that Lagarde delivered.
The message you should have taken away.
Yeah, but it's kind of a bit like that, isn't it? If you didn't understand me. This is the message, basically. We can go in July. Why can't she say that in the press conference? I don't know. I do wonder whether or not she just doesn't want to be quite so direct in her communication. But nevertheless, we have the message that July is a live meeting as well. We could have two more. I find the comparison between the Fed and the ECB fascinating at the moment. The ECB doesn't face the same sort of narrative on inflation, but feels that it needs to act act earlier.
And that's why you get some, like Jeffrey Yu, who suggested to us that this could be a policy mistake from the ECB if they go with 2 or 3
or maybe the Fed's making
hikes.
a policy mistake.
Yeah.
By not going early enough.
Nagel saying this morning, we can't look through the shock. So there seems to be the thinking over at the ECB right now. 7:09 here in London. Coming up, Switzerland is due to vote this weekend on a controversial proposal to cap the population at 10 million. We will discuss why Swiss executives are so worried. What is this vote all about? We'll get to that analysis later in the programme. Plus, President Trump is set to face off with allies at the G7 summit in France. That's on Monday. We'll break down what's at stake for Ukraine and for the wider European story. Up next, we'll be joined by Camille de Courcelles from BNP Paribas Markets 360. What does the conversation look like around interest rates right now, post the ECB, with all of these lines coming through from ECB policy makers? If you have questions, if you want to get involved in any of these conversations, Friday the 12th of June, we'd love to hear from you. IB plus BBTV Go. That is the function on the Bloomberg terminal. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. rates, risk, and the cost of capital on Bloomberg Real Yield, and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
We just made a great settlement of the war with Iran, and we're going to be subject to finalization of documents. We should get done over the next few days. We'll probably have a signing maybe in Europe.
That was President Trump speaking to reporters in the Oval Office, of course. He added that Vice President J.D. Vance will attend that signing if it materialises. Oil dropped on those comments and is extending declines this morning after President Trump scrapped planned military strikes on the Islamic Republic. For more, let's bring in Bloomberg's Paul Wallace, who's in Dubai for us. So a lot of messaging happening over the last 24 hours. First, the notification that big strikes were coming for a third day, and then the pullback from that as President Trump said that a deal was close. He said before that a deal is close, so we go into another weekend with some level of expectation, I guess, as indicated by an oil price that's below $90.
Hi, Anna. Yes, I think markets are certainly more optimistic now than they were even, at the start of the week. I think in the last 2 weeks, oil markets in particular have felt that a deal is close, and we've seen, Brent dropping now below $90 a barrel, as you just said, from highs of over 125 in late April. It is important to note that Iran is putting out some pushback to Trump's comments. So the foreign ministry said this morning that there hasn't been a deal agreed yet. It didn't sort of totally deny Trump's claim that, a memorandum of understanding is all but done and dusted, but it did say it still needs to make a final decision. So we could still be waiting for a few more days. I'd be a bit surprised if anything happened quickly enough for there to be a signing this weekend. I think next week is more likely. One thing we don't know is where exactly the two sides have shifted, because there were lots of key sticking points. Lebanon was one of them. Of course, Israel is fighting Hezbollah in Lebanon, a key ally of Iran. But there are also others, such as what happens to Iran's stockpile of highly enriched uranium, what happens with Iran's tens of billions of dollars worth of frozen funds. It wants this interim deal that they're talking about, this MOU, to essentially state that $24 billion of frozen funds will be unfrozen quickly. We just don't know whether the U.S. has shifted on that demand, or whether Iran has, or whether they both have and have decided to meet halfway. So those kinds of details are crucial. I think it's fair to say something seems to have changed for the better in terms of getting a deal. But from what Iran is saying, we're not there yet. There's still a bit of a way to go.
Paul, we will watch with interest. Thank you very much indeed. Bloomberg's Paul Wallace updating us on the situation in the Gulf. Clearly, that takes us to the inflation narrative via oil. On Thursday, the ECB became the first major central bank to raise interest rates since the outbreak of the Iran war. President Christine Lagarde warning that inflation triggered by the conflict is widening beyond just energy.
We are beginning to see a broadening of inflation throughout the economy. And that is obviously in terms of direct effect, but also in terms of indirect effect. Not yet at this point in the front of the second round effects.
President Lagarde speaking yesterday at the press conference. The messaging overnight has maybe taken us a step further forward, i.e. that July is now a live meeting as well. The market was expecting maybe later this year to see the second rate hike coming through from the ECB this year. Kamita Korsell is the head of developed market rate strategy and European economics at BNP Paribas Markets 360. And she joins us this morning. Good morning.
Good morning.
Do you think July's live?
It is live, for sure, but we think they will go in September. For them to go in July, we think we need to move to the away from the intermediate scenario that Lagarde characterized yesterday to the persistent one. So in other words, you would probably need to have energy prices a lot higher compared to where we are. You would probably need to have a very important shock for the ECB to have to deviate from what they've just told us yesterday. So I think as long as we are in this intermediate scenario where the ECB thinks that it's a very large but not too persistent shock, they will want to remain measured in their response, and so quarterly hikes looks fair.
A policy mistake?
That's interesting. I think Lagarde yesterday really tried to push against that notion when she said that this was not an insurance hike and that it was adequate across all scenarios.
So she's trying to defend against the suggestion that it would be a mistake. Yes.
She's already trying to defend that. But I think if you look at the console, like what Schnabel said last week was very interesting. It feels like she's deviating already a little bit more toward the more extreme scenario. She said that she already characterized the shock as being very large and very persistent. So when you listen to her, you feel that the ECB might already be moving in this direction. So I think some in the council are more like Lagarde, some are more like Schnabel.
Yes.
But when you see how big the ECB was on the economy yesterday, and Schnabel saying that at the end of the day, it's the strength of the economy that will really say how much tightening needs to be delivered, and that the stronger the economy will be, the more tightening will need to be delivered. Put that plus a very upbeat ECB on growth, you can tell that the risks are definitely skewed towards more than 2 hikes being delivered.
Okay.
Or if we put it a bit more extreme, towards it being a start of a proper tightening cycle.
Okay, and so tie that into what we're seeing or not seeing from the Fed, because US inflation actually running hotter than Eurozone inflation right now, and the economy doing better than the Eurozone right now, and yet the conversation is very different.
The conversation has been very different, but at the same time we are shifting from one government to the next. So I think Powell was certainly did not want to lean the Fed in a certain direction before the new government takes place. So next week will be very interesting in that regard, because Wash will really set the scene, and it's particularly relevant in a market which for a very long time has been convinced that Wash would arrive and deliver cuts. We think the Fed will already move to a symmetric bias next week. And so if he leans in a slightly more hawkish direction, we think that the market could start to price a lot more high.
So your base case is symmetry, so neither hawkish nor dovish?
Correct.
Right, but so if he is a bit hawkish, then that's new. Okay.
So Camille, where is on that view then? Where is the mispricing? Is there mispricing across the Treasury curve that you see right now?
So I would say we see risks on both the front end and the long end. So front end, we certainly see scope for more hikes, but on that we need to listen from Wash and see what he has to say, confirm the move to a symmetric bias. We expect the Fed will deliver 3 hikes starting from December. So that's not yet fully priced. So we still see risk to the upside at the front end. And then at the long end, I would say, but it's also more broadly across G4. June, we still have a lot of supply that needs to come through, that the market will need to absorb before the summer lull really starts. It's the heaviest month of the year in terms of supply across G4. And yet, term premium have been compressing back to very low levels back at the end of May. So from that regard, we feel that the asymmetry is still skewed to the upside.
So there's a flattening of the yield curve then in that scenario.
Sorry?
Rates up at the front end, less of a sell-off at the back end. What is the shape of the curve in that scenario?
I would say we have more conviction on the direction of yields than we have on the curve, especially in the US right now.
Just on that, 3 hikes from the Fed, what's the read across? Can the BOE be on hold if the Fed is hiking 3 times?
So next week, we expect the BOE still to remain on hold, but we expect them to deliver 2 hikes ultimately, and we think the next move will be July for the BOE.
What is a proper rate hiking cycle to you? So 2 from the ECB is not. 3 from the Fed is. Where do you get into the point where actually we get some sort of cyclicality here?
I guess the starting point matters because for some central banks like the BOEs are still in restrictive territory, so you don't need much really to go back to fairly high levels and to a very large degree of restrictiveness. But especially for the ECB, 2 to 3 hikes, I would say for me would not be seen as a proper tightening cycle.
Okay.
This time next week, we'll have the results of the by-election in England, which usually wouldn't get international investors' attention. Do you think whoever wins that, the risk is more volatility in bond yields?
Yes, to the extent that, again, term premium across the board have been coming off their highs. And in the UK, if we look at our indicator of risk premium, it's back to the lows. So we are at very low levels right now. So if Andy Burnham wins that election, and I think he's leading by 10 points in some latest polls, I think it will put back the focus on fiscal in the UK and the risk around the next governor, whether they will meet the fiscal rules and so forth. So I think there's certainly room for more volatility compared to where we are.
OK, more volatility. We'll brace for that ahead of the politics of the UK next week. Camille de Cossel, BNP Paribas Markets 360's head of developed market rate strategy and European economics. Thank you and have a great weekend.
Friday the 12th, let's talk about what else you need to know this morning. The UK Defence Secretary staying in the UK, John Healey, has resigned in a move that dramatically dents Prime Minister Keir Starmer's authority. Healey, who was seen as a loyal ally of Starmer, quit after a row with the Treasury over defence spending. Starmer is widely expected to face, as we've just been discussing, a leadership challenge from Greater Manchester Mayor Andy Burnham if Burnham triumphs in next week's parliamentary by-election. Infineon is preparing to open a €5 billion semiconductor factory built with the help of EU subsidies. The Power Chip Fab, which opens on July the 2nd, is an extension of the company's campus in Dresden and is the largest single investment. Its largest single investment. The project is a major recipient of funds under the EU Chips Act, which represents a rare success for the bloc's flagship semiconductor law. And the biggest sporting show on earth is now officially underway. Mexico winning the first of a record 104 matches, which is set to be played at this year's FIFA World Cup. The co-hosts defeated South Africa 2-0 in a game that saw 3 players sent off, 3 red cards. Yeah. The expanded 48-team tournament will be played across 39 days in Mexico, Canada and the United States. We had 4 in the last 2 tournaments. 4 the last one, 4 the one before that, red cards. We had 3 last night.
3. So two of the South African players were red carded. So they were left with 9 men, and then one of the Mexican players was red carded towards the end.
So I missed all of this because, as will be a feature of the World Cup, I only watched the first half because it's all too late.
Yes, there is that.
You won't be alone on that.
Highlights. They're going to be highlights. Watched.
Okay, yeah, that's what I should have done. Should have watched some highlights.
Yeah, amazing. So is that refs getting tighter and tougher, and is that going to be something that we're going to have to deal with throughout the entire tournament?
England are playing Croatia.
Yep.
Ooh. That's been a tough one in the past, hasn't it? Coming up, President Trump set to face off with G7. We'll bring you the latest. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
30 minutes ago, this is the picture. We have futures in Europe sharply higher, to be honest, as you can see, pretty much across the piece. Euro Stoxx 50 futures are up by 1.7%. CAC futures are up by 1.6%. FTSE feels like something of a laggard this morning, only up by a mere 0.8%. Stateside, things are looking a little different. We are flat to negative on Wall Street right now. Is that because this is where we were yesterday? We were negative yesterday, but Wall Street was positive. Today, it's the exact reverse. Europe delivered a much more positive open than we thought it would, and you do therefore question maybe the numbers in front of you.
Right, so we need to factor in some of the Iran news. That's what's happening in the stock story, isn't it? And with oil prices continuing to drop, 88.50 is where we trade on the Brent price right now, so that's down another 2%, and so all of that is adding up to a weaker yield story. So we are seeing some buying of bonds. We're decreasingly worried about oil prices and inflation in the Straits of Hormuz, it would seem. So French yields down by 6-7 basis points. Italian yields down by 7 or 8 basis points this morning as we track the latest on Iran. But this is the travelling. We haven't necessarily arrived on that story yet, so we'll wait to see if we get any concrete news flow around the weekend.
Will we get any closer to arrival? And certainly geopolitics will be front and centre as the G7 gets underway. Sources telling Bloomberg that European leaders will use the G7 summit in France to get Donald Trump on board. At least that's the aspiration, with a push for new peace talks between Russia and Ukraine. Global politicians and tech leaders will meet in Evian, France, early next week. Let's bring in Fabrice Lesache, Vice President of MEDEF, the French business lobby group. Fabrice, good morning. What is the business community of France hoping to get from these meetings? To what extent is the business momentum and the business appetite, particularly around capex, being held back by the geopolitics, whether it's Ukraine or Iran?
First of all, thanks for having me, and thanks for showing me a nice CAC 40 before I start. So, yes, yesterday we gathered with our counterparts from US, Canada, Japan, Italy, Germany, and UK. Because it's very important before the G7 that the business community meets, and not only meets, but have some proposals on the very topics that we face at corporate level, which are obviously the tariffs, the energy costs, the artificial intelligence disruptions, the environmental transition, all these things that you know very well. But we needed to take a fresh look on it because the international situation, as you know, obviously, is tensed, and also our governments are not always aligned on everything. And it was very important to come up and show that the business community is united. In fact, we want the same thing for 95% of the topics. And this is important. We are raising the flags on the non-tariff barriers and tariff barriers. It's a lose-lose game, and we see the result already in the United States. We see the results everywhere when tariffs and non-tariff barriers are being erected. And so these are the kind of things we discussed and also where we agreed.
What is the current level of anxiety in terms of Iran and the continued closure of the Strait of Hormuz? Are we getting to panic stations on this yet in terms of physical oil on the markets? What are you hearing from the business community about that aspect?
No, it was not a panic mode, but it's a very serious concern, and of course nobody knows how long it will be, and also how deep it can go, and that are the fundamental aspects that we don't masterize. But we have some hedging opportunities, and also the situation is different. Asia is more impacted than Europe, for instance, and within Europe, Italy is more, or Germany is more impacted than France, because we have the nuclear energy for electricity. And if you see the spot price on the electricity market in France, it's not the same than Germany and Italy. So, I mean, it's a bit different. And you have lots of corporates that are hedged with multi-year contracts for their supply of gas. So it depends if you are energy intensive industry, if you are hedged or not, in what country you are. So it's not a kind of black or white answer. It's vary deeply, but of course it's some concerns. But it's not new. You have Hormuz today, but the tensions, the global tensions were before. And we have some critical raw materials were a big part of the discussion yesterday and before yesterday, because you have the weaponization and you see the restriction on exports from China, and the overcapacity also, where a big part, the overcapacity in China was a big part of the discussion. But this is not only for the G7 countries, the issue is for everyone. If you have overcapacity in China producing in 15 years half of the industrial goods of the world, you will have a problem in Brazil, in Egypt, in Indonesia, in Turkey, in US, in Europe, everywhere. So the imbalances were at the heart of the conversation.
Imbalances are likely to only get worse. That feels like it's the narrative. Barriers are being erected. Supply chains are becoming harder. Fabrice, the only way to deal with this for a bloc like Europe, for the United States, for anywhere, is to deliver supply-side reform. Governments, particularly in Europe, have been very bad at delivering supply-side reform over the last few decades. Do you get any sense that that page is being turned, that there is a sense that actually we need to deliver on Draghi, that we need to deliver on this supply-side story? Do you get any feeling that actually we are, centimetre by centimetre, beginning to make progress in that direction?
You know, you are touching really the sensitive point, because you can say whatever you want about China. You can say there is sometimes rigged competition, but there is also lots of innovation, hard work behind this trajectory. And we did not do our homeworks properly. And it was also with the US, when we discussed with them, they say, guys, we told you, you cry about tariffs today, but we told you that you have many regulations that for us are problems, are non-tariff barriers, the CS3 triple D, the CSRD, all the CBAM, all the green kind of regulation, the digital tax, and so on and so forth. And also, you have a very complex market, 27 countries, it's a nonsense. Even the UK for the reset is having a very hard time to discuss with the European Union. And we did not do competitiveness, we did not do innovation investment. When you see Draghi, it's not executed, and later as well, the integration of the single market. And this is a problem. Mario Draghi himself explained very clearly, you cry about tariffs in US, but it's 50% inside the European Union for goods, and it's more than 110% for the services, because there are some protectionism, there are also some consumption protection of consumers, there is environmental, health regulations that are non-stop coming in. And it's a constant fight to decrease that flow. And Europe is very complex, we all know this, but they cannot cope to simplify it. They try to do it, they do it a little bit, but it's so small. It's not at the speed of corporate life.
Fabrice, your frustration is evident. So these are the things that Europe could do to help itself. What about the transatlantic relationship, Fabrice? The tension between the US and Europe has been very different to earlier years and earlier meetings of the G7. Did that cloud the mood for the business group that met? Do you think it will cloud the mood for the G7 itself?
First of all, US is very important partner for the European Union. You know all the data. I will not recall them here on investment, on trade, and so on and so forth. But US is not the only son of Europe. 80% of our global trade is outside US. Even if US is a big market, 80% of our exports are outside US. That's why we are rushing to sign with Australia, with Mercosur, with India, with United Arab Emirates, with Mexico. And as far as US is concerned, of course, we want to deepen the ties. And I think we constantly had a very productive dialogue with Susan Clark and with the US Chamber of Commerce that are more or less aligned with us. Less barriers in trades, more interconnection. I think the G7 countries have a really important role to play at a time where multilateralism is at stake, because we share, I know that it's common, blah, blah, but at the end of the day, we really share an appetite for freedom, for markets, for rule of law. And this common value creates a state of trust. Of course, maybe the act of some politicians are doing the contrary. But between businesses, we have some trust. And we can build on this, because we see the world the same way, and we face the same challenges, whatever on China or on artificial intelligence. We face the same bets. So we want to work more with the US, and I think the US as well, the business community.
Okay.
And in the media, the narrative is always a bit negative, but honestly, the tone of the discussion was positive.
Okay, Fabrice, we try not to be too negative, but thank you for that update. What the priorities are for the business community, the G7 business community then ahead of that summit next week. Fabrice Lesage-Medef, Vice President. He touched on AI there. We've been talking a lot, of course, about global tech leaders at the G7. One former UK Chancellor who now works for OpenAI believes some governments are worried they are missing out when it comes to artificial intelligence.
Most governments have a sense of FOMO, we want AI adopted. And at the same time, obviously, there are very legitimate policy questions about how AI is going to change the world, what control individual countries have over that technology. So although each country is different and the conversations I have with the various governments are different, there are similarities. And I'm not surprised, coming from that world, that those are the questions.
Former UK Chancellor George Osborne, who now works for OpenAI as head of country, speaking to me at Founders Forum, the conference yesterday. More on the AI story next. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
SpaceX is the biggest rising star of all time.
Anyone that's owning SpaceX, you're buying it for the Musk factor. And many that bet against Tesla and Musk going back a decade ago, that was proven historically wrong.
Elon Musk has appointed himself CEO for life. He has all the voting control. He has basically built a moat with alligators around himself, and that's not good for shareholders.
This feels like a milestone moment. This was an investment thesis that was unthinkable a decade ago for most investors. And I think now people are coming to grips with the fact that space technology is really here. What would have been science fiction to us maybe 10 years ago is now science fact.
Okay, some of our guests giving their take on the SpaceX IPO. What was Dan Ives wearing? We'll talk about that maybe a completely different day. Man's got a strange taste in jackets.
That's his thing.
It is his thing. I know. He's got that pink one, which is anyway. That was a new one on me. Haven't seen that one before. The IPO, of course, is record-setting, $75 billion. It's going to send SpaceX flying up the ranks of the largest public companies when it debuts on the NASDAQ later today. It also puts Elon Musk on the verge of becoming the world's first trillionaire. Joined now by Bloomberg Intelligence analyst Matt Bloxham to talk about this. What's a win today?
Yeah, we talked about this just now, didn't we? I think, 20% plus would be, I think, a big win. Given this is coming to market at a $1.8 trillion valuation, with 100 times trailing sales multiple, I think you could argue that even a small amount of upside is a win. But it looks from like the prediction and futures markets, we could be maybe looking at 30 to 35% up, which would be, I think, more than just a win. It would be a kind of a triumph, I think.
That takes us to what, 2.4 trillion?
Yeah, exactly.
Market valuation, if we get that 35%.
Takes Musk to a trillionaire, doesn't it?
It does.
Easily,
He's there, isn't he?
Yeah.
Potentially by the end of today, then. Where have the orders been coming from so far? Retail, institutional?
Yeah, a mix of two. Obviously, I think the standout, and where we had some reporting on this yesterday, that over $100 billion of demand from the retail market, which I think they were talking about 20 to 30% allocation. So there's going to be a lot of disappointed retail investors when they get kind of pared back. So that is probably going to create quite a bit of technical demand. But obviously, institutional orders have been coming in. There was some talk yesterday about a big order from BlackRock, amongst others. So, I think it's come from a lot of different sources.
I'm looking at a suggested question here, Matt, that says, what is SpaceX and Musk's roadmap ahead, which should obviously be flight plan? not roadmap.
Yes.
But so what do we get? What does happen next?
Yeah. Okay. I mean, sticking with the kind of flight plan story, very near term, we're looking for the next test launch for Starship, which is their next generation rocket, which is critical to a huge part of
These are
this
the big
story.
ones.
They're really big ones.
And they can carry more satellites.
Yes, like so 100
and
tons.
Data centers.
Yeah, 100 tons plus of payload versus about 20 tons for the Falcon 9, which is their current workhorse. So that could be late June or early July, and so that's going to be the 13th test mission. So that's really critical to show that that's on a good path to becoming a real kind of reusable commercial proposition.
And those become now market events, don't they? Become macro events.
They do, absolutely.
Which is a big change.
It really is, yeah. Beyond that, a lot of talk about what's going to happen with the relationship with Tesla. And I think the expectation is that it's more a question of when is he going to crunch SpaceX and Tesla together rather than if. Now, they're already partnering on TerraFab, which is this chip joint venture. But, yeah, I think that's going to be a big discussion point now for the next 6-9 months until it happens, you know.
Okay.
Yeah.
Matt, thank you very much. Matt Bloxham from Bloomberg Intelligence with the latest themes around the SpaceX IPO. So let's turn to the markets in a broader sense in 3 minutes on the opening trade with Markets Live Executive Editor for Asia Markets, Paul Dobson. So, Paul, it's tempting going into the weekend to feel full of cheer. I note that US futures are a little negative, actually, but we've priced the SpaceX IPO, the Iran deal, according to President Trump, at least, is making progress. How do things feel over in Asia?
Yeah, good morning, Anna. Asia had a pretty good session, all things considered, with pretty decent gains across stock markets, across the tech space as well. And I think that, you know, even in the last 24 hours, the negative reaction that we had when Donald Trump was talking about how hard he was going to hit Iran was not really that excessive. The market is a little bit weary of this, but nonetheless, it seems that there's enough for people to hang on to going into the weekend, the prospects of some kind of a peace deal, and so people are taking some optimism and cheer from that again. You know, we know that we've seen this story and we've been through this, you know, plenty of times before. I saw a funny tweet that was saying this has got more endings than the Tolkien's The Return of the King novel. But at some point, you know, we are getting closer to some sort of a resolution. And in any case, more of the energy is coming out of the Gulf and feeding markets. And so with the lower crude oil prices, that does give investors some sense of reassurance.
OK, so we're 88.47 right now on Brent. Does that price a peace deal? Kind of, what does Brent do if we get a deal? Does it go down further from here? Are we in the 70s? Are we in the 60s? Or do we just stay in the 80s?
Yeah, I'd be dubious about prices coming down too far too fast from here. I think that, you know, it's going to take a long time to get all of the energy products flowing again. And I think for the economies around the world and markets as well, it may be too late for us to get an immediate kind of bounce back as well. I feel like certainly in our parts of the world, there's going to be an inflationary impact for longer. There's going to be an impact on the economy and jobs for longer as well. So the bounce back, given we had more than 100 days of this sort of curtailed supplies, is going to be a little bit more tricky than the idea that we can price back in a return to normality right away.
You're in India, Paul. What sense are you getting there? I mean, India has been very vulnerable, of course, to the energy shock. What is the sentiment in that part of the world right now?
Yes, Tom. So I think that across Asia, actually, we've really seen major pushback over the last week or 10 days. There'd been an awful lot of pressure, particularly on currency markets, for the energy importers right across the region. We've seen different approaches. So, for example, in Indonesia, they're more determined to use interest rates to stabilize the currency. Here in India, they've gone a different route. They're trying to lure in a large amount of foreign inflows leveraged up in order to boost the rupee by sucking in cash from abroad. And that seems to have gained a lot of favor, at least with the domestic market, where people are welcoming this as the RBI getting to grips with things and also not using interest rates, which might not be the best strategy for India, but finding a different route in order to stabilize the currency.
OK, Bloomberg Markets Live, Executive Editor for Asia Markets, Paul Dobson. Paul, thank you for that take on these markets. Let's get your individual stocks to watch now with Alex Morgan this Friday. Alex, what are you watching?
Thank you, Tom. Yep, happy Friday, folks. Let's start with Infineon diving into the news here that they are looking to open their largest single investment, $5 billion chip plant, extension of their Dresden campus. All of this, of course, as demand for those power chips in Europe surges. Major recipient of EU chip funds. Year to date, you can see really more than doubling their stock value. Keeping an eye on Infineon there. Let's turn over the board then and look, keeping on the theme of AI, with energy. And Siemens saying that they are, well, a quote from the CEO saying that customers in Europe are now so interested, so needing the gas turbines, they're willing to pay reservation fees. That is a practice that started in the United States, has expanded now to Europe. You can see they're up around 22% year to date. And because it's Friday, let's, now have something completely different, turn to luxury yachts. We're looking here at news that Ferretti is looking to purchase its troubled rival, the Italian Sea Group. You can see here two very different journeys, choppy seas for the Italian Sea Group. Broadly speaking, though, these discussions are said to be at an early stage. There are headwinds for the global yachting industry. There's been the geopolitical tensions and also a slowdown in the ultra-wealthy purchasing these yachts after many boom years. We'll be keeping an eye on whether there's any uptick for the Italian Sea Group this morning when trading gets underway very shortly.
Alex, thank you. Not enough luxury yachting on this programme, I think we take away from that. Alex Morgan with the stocks that we will be watching. Broadly then, it's a catch-up story, isn't it, for European stocks, catching up with the trading day on Wall Street and in Asia. The Iran lines, despite everybody having travelled this journey before, the Iran lines do seem as if they're going to have something of an impact because they're impacting, to some degree, oil prices.
Yeah, oil prices are down quite sharply.
Bond yields are down.
That does have an impact. Bond yields are down. You kind of extend that. You can price equities at a more favourable rating.
Yeah, so banks, financial services in focus on the yield story. We've got the oil majors in focus on lower oil prices. Interestingly, gold and silver both down in the session as well, so we can watch miners and then some of those individual names. Interesting, Novo Nordisk apparently has been given some approval from the UK for Wegovy, so that stock could be a stock to watch as well.
On the newer pill form. Just for completeness, though, we'll mention that E-minis and Nasdaq futures are weaker. So we'll see how long it lasts, but we're down by 0.4% on Nasdaq futures right now. Coming up, though, that's for later. What is coming up is the opening trade here in Europe, which does look positive. Futures pointing decidedly to the upside, very much in the green. We'll be back with the market open for this Friday, the 12th of June. Stay with us, everybody. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Friday morning, good morning. You want to know why Europe is ticking higher, why Tom's about to show you a sea of green? Let me show you this chart before we get to Tom. We went out there, US went up there, we finished up there, and that is why Tom has a futures picture that looks like it does this morning.
Yes, bright green, to your point. Relative underperformance for the FTSE 100, but still called higher by 0.7% here in the UK. Across the benchmark, we're looking at a very strong session then, called higher by 1.4% on the European Stocks 50 futures. Two main catalysts. It's the potential, again, of that Iran deal, but it's also the fact we cleared the hurdle on the SpaceX IPO, which will, of course, start trading later today in the US. DAX futures called higher by 328 points. We are set for a very strong European equity session, Anna.
We are. Not so for energy stocks, perhaps. I'm mindful of the fact that energy was the best performing sector yesterday, and we have oil prices now down by 2%, so we'll watch for some weakness there. What else are we watching? We're watching Infineon. This is an interesting story. The technology business preparing to open its largest single investment, a €5 billion semiconductor factory. This is part of the EU's push to boost chip production, to try and be more resilient on that front. We're watching Flutter as well. They have announced, is this a surprise? Maybe we saw this coming. They're delisting their ordinary shares from the London Stock Exchange. That's effective August the 3rd, but they're keeping their listing in the United States. That was a new development in the last couple of years or so. And we're watching the yacht maker. We said earlier on there's not enough luxury yachts on the programme, so let's have another pass at this story. Ferretti weighing an offer to purchase all or part of the troubled rival called the Italian Sea Group. So that's seen as strengthening Ferretti's position in its home country. Guy?
I agree. More luxury yachts. OK, let's talk about this market open. Europe is expected to do well. London's going to underperform. Oil prices are going to be a factor, but broadly we're expected to go higher at an index level. That's going to be the narrative. It's basically a legacy story from yesterday out of the United States. But look at what is happening on Wall Street right now, and you see a more negative picture. So how far do we actually go? Because yesterday we thought we were going to be quite negative, but US futures were higher. So actually, we ended up with a positive open. FTSE's up by 0.4%. We're expected to be 0.7% to the upside. Oil's going to be a drag there. Stock 600, we haven't got a full picture yet. Let's see how the CAC opens this morning. It's expected to open fairly strongly. The DAX, obviously very exposed to the energy story. It's expected to be fairly positive. CAC's up by 1.4. IBEX is up by 1.7. AEX is only up by 0.6%, which I think is interesting as well. We'll wait for the Germans. They'll be along in a minute, Tom.
They will indeed. They will indeed. Top of your list across the sectors right now. Banks. So you've got the bond story, of course. Bonds are rallying, yields are down. Tie that to oil. Travel and leisure gaining as well. That is not unexpected given the optimism around the Iran story with oil prices lower. So travel and leisure amongst the top gainers. 2.4% right now for that sector. Similar picture for banks. Basic resources also rallying hard. Every single sector bar essentially three in positive territory. It is energy that is the biggest loser right now, and again that is fully expected. Currently down that sector 2.6%. What are some of the individual names that stand out to you, Anna?
Yeah, well, within the travel and leisure space, it is those airlines that are moving higher, so they like the lower oil price. 88.55 is where we are on Brent, and Ryanair is up by 4.6%. So that's a sector that we're certainly not surprised to see on the move, and you were talking about the energy space as well, Tom. Banks doing pretty well, up by 2.4%. There we've got SocGen up by more than 4%, Banco Santander up by 3.6%. The bond story is interesting. We're down 5-6 basis points on the 10-year yields on some of these parts of the European government bond space. So that's something that's in focus. And basic resources you've mentioned, I think, but that is also doing pretty well this morning as a sector.
Energy's lower. Total, Shell, BP, Eni, Equinor. Points losses, that's the top five. So basically it's the energy sector that is adding as a drag, but you've got 454 stocks, 455 stocks up, 90 are down.
Yep.
So there's a definite bias to the upside.
That tells you about the bias this morning. Let's talk to Max Kettner, Chief Multi-Asset Strategist over at HSBC. And a pleasure to speak to you this Friday, Max. So last time we spoke to you, you were extremely positive about stocks. Are you even more positive about stocks?
Well, I can't be more bullish because I already was maximum bullish. So, obviously, days like the last 5-6 trading sessions, I'm sort of itching to put out a note that says buy the dip, but I have no money left to buy the dip. So it's a bit... But I think we are probably in an environment again in the last 2 weeks where the narrative has shifted a little bit, where particularly sentiment has taken a hit. We see that in survey-based sentiment, right? Survey-based sentiment hasn't got really stretched in the last 3-4 weeks, but it's gone a little bit above average. Just the last week of setback was enough to just make that pop down again, right? So we see across most of the big surveys, particularly also among retail, that actually, survey-based sentiment has deteriorated quite a lot once again. That's pretty good. And I genuinely think, we've got all the macro guys now being worried about IPOs. So we have loads of IPO experts now. I suspect we're going to be experts on something else this time next week. And then we're all worried about Kevin Walsh being super hawkish next week. I suspect that the Fed is going to be super boring compared to what we've priced and how much the pricing has shifted over the last 5.5 weeks. If you get a sort of boring-ish Fed next week, plus the IPO today actually going well, I think, honestly, I'm going to invite myself back to this time next week, because that's what I do. And sadly, then we'll probably be a couple % higher and be like, shoot, that was the dip that I should have bought.
Seems to be max long leveraged. 2 times max. That's the way we go.
Is there an ETF for that? Is what I wonder. We need to. Maybe somebody wants to channel you into an ETF, Max. I think that would be to somebody's advantage. What about? So do you think the market then, on the other side of digesting SpaceX, will it look more positive? Is that part of?
I don't think it's actually about digesting. So we talk so much about, what's this equity supply going to do? And it's totally different from the 2010s, and it's going to bring the share count up and all this. I think we forget about a couple of things. Number one, when you look at, who's going to buy all this? Look at just ETFs. Just look at the passive space in the US. And just in the US, we've raked in almost already $400 billion of inflows, right? So when we say, how's that going to be absorbed? I mean, we're talking about 75 billion supply today, and we have 80 billion inflows into passive per month, right? That's already something where I'm like, look,
it's digested.
Why are we talking about?
Is that inflows from cash? Or
okay. I think it's mostly from cash. I think it's also a lot of times we are underestimating, I think, particularly in the US, the wealth effect, right? We talk so much about, I'm sure you guys were talking about it at some point in the last couple of weeks, about how the savings rate has gone down. That's entirely wrong. That's a flow variable, right? That's how much they're saving from income. The US, being so K-shaped, is no longer that susceptible actually to changes in income. It is much more driven by the higher end of the K, right? We know these things. Like Moody's had that paper, which I get it, the methodology was maybe a little bit off, but, it is, they said the top 10% are driving 50% of consumption. It's probably a bit much, but at least you can say the lower 20%, you're driving something like 5-6% of consumption. It just doesn't really matter that much, whereas the wealth effect matters. Look at last year. Yeah. The household wealth effect, the change in US household wealth, was $1.6 trillion. That's almost the entire fiscal deficit this year.
So what happens if you get a 10% drawdown, 20% drawdown?
I think it depends. Obviously, I'm going to say it depends, because that's what strategists do. It depends whether you get a 20% drawdown and you stick there, right? So let's say, if you get a 20% drawdown because of tech and AI and suddenly, no V, right? Nothing like we had this year or with Liberation Day, I think then you have an issue. And to be honest, I think there's no coincidence that in 2022, when we did have that, and the buy the dips were shallower than the previous highs, we did have negative wealth effects, and that did lead to lower consumption quite quickly, right? Yep. The issue is, are we going to have that? Are we really going to have 20% down in equities? We're sticking down there, and the Fed says, by the way, no Fed put. Let's say next week, what's the incentive for Kevin Walsh to say, I am even more hawkish than my predecessor, because you know what? Until there's a 2.0 on CPI, I am not going to yield. Why? You look at this, I'm like, you know what? 6 weeks ago, front end, if you look 1 year ahead, was pricing -20. We've come off now a bit, right, with what's happened on oil. But you've moved from -20 to +30. Yeah, sure. Right? That's probably enough. I don't need to fuel that fire.
All the chips feel like they're in the middle of the table right now. Everybody's gone max long.
Really?
So, okay.
Do we think that? I mean,
okay, that's the question I'm asking, really, is what juice is the next bit? Where does this...
I don't think, but guys, I don't think positioning is that long. You look at least our stuff, systematic, CTA, risk parity, vol target, momentum signals. All of that is like 50th percentile. Again, survey-based sentiment. It took a tiny bit of a drop. I mean, we're 2.5% off the all-time highs in the S&P. And if you look at things like AAII, maybe you guys can show it afterwards, like AAII, if you look at the bull-bear spread, it's almost as low as it was in the doldrums of 2022, right? So it's not like everyone's super long, right? We've seen that even in our sort of aggregate, systematic, and discretionary indicators. It's neither really
Let me ask that question in a slightly different way then. What is the catalyst to get the market going higher from here?
I don't think there needs to be a catalyst because we're in an environment where inflation structurally, particularly in the US, is higher. What that means is your revenues, and I'm talking more structural now, right? Not the next 3 months. What that means is you're in a structurally higher nominal growth world. You're in a structurally higher revenue growth world. If your margins don't change, your earnings are perpetually growing faster. You're on a, you know what I mean? Like you're
perpetually.
Yeah, slightly dangerous now. I'm putting myself in slightly dangerous territory. But, at least for now, shall we say it like that, that means you're in a structurally higher growth trend. What that means to me is if you want to go neutral equities, right, or neutral risk assets overall, it probably is not if you're between 1 and 10, it's not a 5. It's a 6. You have to be always slightly overweight because it costs you so much to shift into cash, right? So I think it needs to have a catalyst to be properly bearish. But to be bullish, honestly, just an absence of bearish catalyst is probably enough.
Max, what's your bullish sentiment around Europe? A high rate environment, low growth environment. Where does Europe sit in your thesis right now?
Tough. Really tough. I mean, when I say I'm max long, I'm really long the wings, right? I'm long the US and Asia, and I'm sort of ignoring Europe at the moment because the problem is in Europe is we need Iran to go away, right?
Don't you want to position for that now?
To go away.
Why not position for that now? Get the upside on travel. Travel and leisure's soaring today.
I think those are the sorts of things you can do.
That rally.
No, I think those are the sorts of things that you can do, right? But again, the problem is you're making if you buy European travel and leisure, you're basically making a call on one thing, right? On one thing around geopolitics. If I buy Asia, if I buy Japan, I still have sensitivity to the Middle East conflict, hopefully receding in the next couple of weeks or months, right? But I have the domestic fiscal story. I have the AI story, right? More AI exposure. I've got the defense names in there, right? I've got the currency story there. I've got loads of other drivers as well. If I buy things like Taiwan and Korea, I've got the AI story, the tech story. I also have a potential beta a little bit from, hey, Hormuz is reopening, Middle East conflict hopefully is receding soon. But it's not just a call on this one factor like you have in Europe right now.
For strategists, cross-asset strategists, Max, it certainly dawned on me this morning that we have to start watching SpaceX launches from a different perspective. It's not just sort of new science. This is now market-relevant information. Do these launches, we're going to see, many by the end of the year, I'm sure. But does that start to become a new thing that the markets have to keep an eye on?
I don't know. I think the
because
single
without
launches...
them, we don't necessarily get all the energy we need for this AI build-out.
Yeah, I think the single launches, no. I think what we'll be probably more interested, particularly around the space economics, is how much do the costs really come down? Month after month or quarter after quarter, how much do the costs come down? Because that can then really justify some of those valuations, which now do seem lofty, right? If you're saying price to sales, if you take those measures at current sales, I mean, it doesn't really make sense, right? If you say, hey, you know what, my costs are coming down so dramatically over the next couple of years. So I don't think it's the single launches. It's probably more is that cost or the efficiency gains there, do they really come true? It's what we're seeing also in AI and the chip usage, right? That is maybe a downside risk. Google wrote a paper called Turbo Quant about 2.5 months ago, where they're saying we found a new method that could reduce chip usage by 6 times, that could increase efficiency by 8 times. If you do have that, that may at some point call the memory trade a bit in question, right? But it's more the aggregate things that we need to take into account, and particularly the aggregate efficiency gains.
Max Kettner, 2 times leveraged. HSBC's Chief Multi-Asset Strategist. Thank you very much indeed. Core 6 looks like this. Let me show you some numbers, give you an idea of what is going on. As you can see, there's only one stock in negative territory. Defence names are under a little bit of pressure this morning. Chips are up. We are seeing energy names coming a little softer this morning, but we are in a very buoyant mood this morning here in Europe. Let's get more. Actually, let's start with the negativity and then we'll get back to the positivity. Alex wants to start with oil majors.
I mean, wonderful introduction there. Yeah, I'll start with the negativity when we're coming to what's on the move this morning. In the red, the oil majors. Now, of course, we had that slump in the oil price. Brent trimming some of those losses now, but that was after Donald Trump talking up the possibility of a peace deal with Iran and calling off those strikes. We can see here Total down around 3%. You've got BP as well down around 3%. So red across there for some of the oil majors this morning. Turning that board over, though, to look at where that's putting things into the green. We're looking at airlines and travel. They are very much in the green this morning off the back of that slight dip in the price of oil. We're seeing Ryanair up there around 6% as well. You've got TUI at the bottom there, 2%. IAG, of course, operator of British Airways, up around 4%. Let's turn then to Infineon. Of course, we're talking about their single biggest investment, this $5 billion power chip fabrication plant they're extending in Dresden. They're up around 1% this morning. Of course, AI very much in the news, dominating the news today. And given we've been talking about how important it is to have more yachts on the programme, let's look at Siemens first very quickly there. They were in the news this morning talking up the gas turbine demand. European customers are very much wanting those, up around 3% this morning. Now let's bring in the yachts, getting excited by the yachts. Here we go. Looking at Ferretti, they, of course, were eyeing a potential part or entire takeover of the troubled rival, the Italian C Group. We can see Ferretti up around 2% this morning, Italian C Group down around 3%. Now, we talked about the global headwinds facing the yachting industry. It can be interesting to see where that goes. And finally, there's been, we're talking to French miners, the French miner Emirates. Now, they are in the green this morning. There's news that a consortium is approaching them, the potential view to take over a share there. So they're up around 6% this morning. So from AI to yachts to mining, a bit of a mix for you there. Those are on the move out of the gate this morning.
OK, Alex Morgan on some of the stocks on the move this Friday. Thank you. Coming up, Switzerland faces a knife-edge vote on whether to cap its population. Alexander Koch from Raiffeisen Group joins us next. This is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
Welcome back. This is the opening trade. Looking back to Wall Street yesterday, we saw green on the screen. Stocks were higher. That on the back of a weaker oil price because of what President Trump had been saying about the Middle East. So we see that replicated here in Europe with travel and leisure stocks going higher, energy stocks on the downside. But Guy, US futures actually worsening. NASDAQ futures down by 0.6% right now.
How long does this last is the question. OK, let's talk about what's happening this weekend in Switzerland. The country is going to vote on a proposal to cap the Swiss population at 10 million. We're not at 10 million yet, but we're getting there. The Swiss People's Party argue it's a solution to housing affordability and so many other issues that the country feels like it's facing right now. Critics say the move would threaten investment and growth. To discuss what is at stake, let's bring in Alexander Koch, macro and fixed income research head at Raiffeisen Group. Good morning, Alexander. How important is this weekend for the future of the Swiss economy?
Yeah, good morning. So, of course, it's a unique and important vote. Switzerland is a direct democracy, and popular votes, they are not really special. We have 4 times a year usually votes on different topics, and we had votes on immigration on a regular basis in the past, but the unique thing about the upcoming vote is that they want to cap the size of the population with a binding cap of 10 million, and this of course can affect the economy negatively in various ways in the long term.
The Swiss economy is not growing that quickly. Like, it's growing, but it's not growing that quickly. If you were to limit immigration, is it possible to quantify what that growth rate would be if you were to remove that driver that we've seen pushing the number incrementally a little bit higher over the last few years?
Yeah, so you can do an approximation. We had population or immigration growth, driven population growth over the last years of about 0.8% per year. And this, of course, pushes incomes and consumption and growth overall, also employment. Therefore, if you have a absolute standstill of population and immigration growth, you can translate it maybe even one-to-one in the impact on growth. So we would have much lower growth, much more close to the already ailing economies, neighboring economies, because if you compare actual productivity growth, you don't have such a big advantage in Switzerland.
Alexander, not a lot of countries have the direct democracy in action that we see in Switzerland, but a lot of countries have seen immigration drift to the top of their domestic agendas, or at least somewhere near it. And I wonder where this goes next in the Swiss case. Does technology feature as part of this conversation? Might we see an interesting experiment if this is approved, this change, in asking what AI can do in place of more headcounts. Is that part of the narrative in Switzerland?
Yeah, indirectly that's the case, because if the initiative is approved, so directly, immediately there will happen nothing. But the government is then asked to think about measures to dampen the need for immigration and also immigration directly over the coming years in order to prevent the size of the population to reach the cap. And therefore, of course, like in the past, they should at first concentrate on soft measures like increasing the retirement age and also trying to bring more women into the workspace, so higher participation of women, which is, however, already high in Switzerland. And of course, also productivity enhancing measures with more capital investment, and also the use of AI can in certain sectors definitely in the coming years and decades help to reduce the need for more employment.
Okay, Alexander, so those are some of the measures that you might advocate instead of necessarily a population cap. There are some real issues here that the population have been debating around housing and around infrastructure. What specifically would you advocate to address the pressures on housing, the pressures on infrastructure?
Yeah, we have similar pressures as in many other countries, and it's very high on the top of the list in household service. So the initiative really hits a nerve here. And we have already some action plans in order to increase the production of new homes, but it's also similar to other countries that you have the sense of not in my backyard. You have very high increasing regulation, ever higher building costs, so it's a long and difficult way in order to increase the production and the supply of housing here.
If the population cap was to come into force, what would that mean, do you think, for Switzerland's relationship with Europe, particularly when it comes to free movement of people? How much of that is a concern amongst the business community there?
Yeah, it's in the long term, it's a big concern. So as I said before, so immediately nothing will change. And they have time to prepare, implement measures. You know, currently the population size is 9.1 million, so we have still a long way to go. At the current rate of net immigration, it will take until the end of the next decade until we reach at the earliest point in time the cap, and therefore we have much time. But if we reach it, they are required to terminate international agreements, maybe also the agreement with the EU of free movement of persons, and this is very a big integral part of the treaties with the EU, and it could put further strain on relations already in the shorter term, because currently a new framework of treaties is discussed, and with this topic in the spotlight, it gets more difficult to reach conclusions.
Alexander, thanks for the update. It's going to be fascinating to watch. We'll work this one out again on Monday. Alexander Koch, Raiffeisen Group, Head of Macro and Fixed Income Research. That's it. We're done. Breakfast?
Yes, excellent idea. Tom has another half hour because of the tech show. But we have time to think about the weekend ahead of that.
What's the match? So Brazil are playing.
Yes, Brazil-Morocco.
So Brazil-Morocco, that should be good. That's tomorrow.
It's late. Brazil is a sea of yellow at the moment as everybody gets ready for the World Cup.
You were there a couple of days ago.
Yeah, definitely.
Yes, of course.
Harry Styles?
Right, yes, that's at Wembley, yes.
Anna's desperately pretending she hasn't logged this one and she's not going.
Yes, that's at Wembley. I was trying to make the football connection, but I was too slow. But yes, that's happening. There's a Grand Prix, there's Le Mans, there's an NBA Finals. There's
Game 5, that's Sunday, isn't it?
There's a lot of sport.
So, yeah, Spurs are going to make a comeback.
Yeah.
I don't know. Could be a massive weekend for New York. Like Monday morning, New York.
Isn't there some fighting going on in the US? Is that what's happening on Sunday? Is that UFC?
You're talking about regulated fights, right?
Regulated, yes.
People arguing with each other.
regulated fights. Before we get to that, there's a battle going on, talking of fights, around AI. London is quite well placed, and we have a show on that coming up on Bloomberg Tech just in the next couple of minutes. London Tech is on a tear. Britain leading the AI wave in Europe. Yes, that is demonstrably true.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
You are watching Bloomberg Tech Europe. Coming up, while the world is watching, Beijing and Washington slug it out for AI dominance. London has been quietly asserting itself as Europe's tech champion. With investment in artificial intelligence surging, is the UK's tech sector benefiting, now valued at £1.2 trillion? We speak to the founder of the UK's most valuable AI startup, who says London's AI moment is real.
I feel like the energy in the ecosystem has never been greater. I'm now had the pleasure of being part of London Tech Week, of being during this energy that is building out in London.
We speak to Matti Staniszewski of 11 Labs, Atlantic Capital's Matt Miller, James Wise, chair of the UK's Sovereign AI Unit, and Liz Kendall, UK Secretary of State of Science, Innovation and Technology. So, welcome to Bloomberg Tech Europe. London Tech is on a tear, with Britain leading the AI wave in Europe. So what is behind the explosive growth, and how did the UK capital become a global centre for artificial intelligence? At the core of this boom is a world-class human infrastructure. In the centre of London, around King's Cross train station, the Knowledge Quarter, as it's been come to known, is a one-mile cluster of universities, labs and tech firms.
For decades, King's Cross meant one thing: somewhere you passed through, not somewhere you stayed. Centred around a railway station, it was grimy, crime-ridden and derelict. A multi-year £3 billion redevelopment changed that, transforming a huge area of decaying rail yards into a global model for urban regeneration. Its success helped the tech industry to notice what the UK has to offer.
UK has one of the richest AI communities anywhere on the planet. The deepest thinkers, the best universities, Oxford, Cambridge, Imperial College, amazing startups.
Today, this area, dubbed the Knowledge Quarter, is fast becoming one of Europe's most important hubs for artificial intelligence. Google's billion-pound headquarters is here. OpenAI is setting up its largest research base outside San Francisco, and Anthropic is expanding to house up to 800 staff, all within walking distance of each other and of the Alan Turing Institute, the UK's national centre for AI research. The attraction isn't just geography. The UK government has launched a £500 million sovereign AI fund, along with a national strategy and lighter regulation than the European Union. And the early signs suggest that bet is paying off. In total, the UK's tech sector now has a combined market valuation of $1.6 trillion, with AI companies accounting for a third of that, according to a recent report by Tech Nation. Globally, the UK ranks third for AI talent, boasting an AI workforce of 56,000. By 2033, AI firms are expected to take up 4 million square feet of office space in London, roughly the equivalent of 8 Gherkin towers.
Meanwhile, across the UK this month, a packed calendar of buzzing tech events is and has been drawing founders, investors, government and engineers. It's a sign really of just how much momentum the sector has right now. London Mayor Sadiq Khan says the UK's capital city can turn this confidence and the energy into lasting global leadership.
In the first quarter of this year, London-based startups are off to a flying start, pulling in over a third of European equity and over half of all funding for AI. This just goes to show that here in London, we're not waiting for the future to arrive, we're busy writing it.
London's return to the top spot is driven then by record AI investment, rising from less than $4 billion in 2024 to $7 billion last year. And overall, London tech companies raised close to $18 billion US. That's up by 45% from 2024. The city is now home to 138 unicorns, including Wave, Granola, Olix, and 11 Labs. And founded in 2022, 11 Labs uses AI to create a variety of realistic voices. The company is valued at $11 billion, north of $11 billion in its most recent funding deal. The company is the UK's most valuable AI startup. I caught up with co-founder Matti Staniszewski at London Tech Week. He says a growing number of founders believe they can build global companies from Britain.
It is the moment. I feel like the energy in the ecosystem has never been greater. I'm now had the pleasure of being part of London Tech Week, of being during this energy that is building out in London and across Europe. And I feel now people realize the incredible talent we have, that you can really build a global company from here, from the start. And people want to do it. People want to work on ambitious projects, want to show what's possible. And the number of startups, the number of individuals and talent that is going after that couldn't be more real. And we feel that at 11 Labs, but we also see this across the wider ecosystem.
Do you feel like you've catalyzed that message to some extent? You've shown, you've demonstrated with 11 Labs, valued north of $11 billion US, that you can actually build a globally scalable AI company out of the UK.
We were proud that we could start here. Both my co-founder and I studied in UK. Most of our early team was here in London. And we, from the start, thought that you can build here, and you want to build globally. You want to compete with the biggest companies out there and show that you are leading on benchmarks, leading with customers, leading on outcomes. And that was always the ambition. And I hope that a number of people, of course, after that fallout, seen that effect as well. We are seeing now more, happily, more of the ecosystem building where some of the people that were early joiners will leave to start new companies. Some of our people will join companies here in UK to grow with them. But one thing that's very interesting that we are also seeing is a lot of people around the world want to come back here, whether that's senior talent joining 11 Labs, whether that's talent joining other companies, and build from here. And of course, we saw the Isomorphic Labs recently, the announcement, also an incredible story. So I feel this will just get more momentum.
That talent flow back to the UK, that's material, that's significant, and you're seeing that impact, and that's changed. Is that a this year story?
I think this last 12 months definitely a big effect. Another piece is, so like as I think about ecosystem, the talent part is changing, the risk approach is changing. More people are keen to start companies from here and just take that big swing, big bet. Third thing, I think in US, one of the big appeals of Silicon Valley is that the big companies buy from small companies. If you're an early company, you know the risk that you need to take. You are still going to take that risk. You'll give them the chance to prove the value, prove the outcome. And recently, we've seen that in UK and in Europe too. Of course, now we are a big company, but over last year, whether it was Revolut, Trainline, Deliveroo, all of those companies are taking those risks, are working with some of the frontier AI companies to elevate, and of course, together with us to bring that experience. And we too now give a lot more chances to young upcoming UK companies and European companies to give them ability to scale.
Have you ever come under pressure from your US investors to move to San Francisco?
Luckily, they are aligned that there's a huge advantage in us being in Europe as well. And that's one of this is talent. That the people we have in the team are some of the hardest working people across the company. We have majority of us across Europe. We have now almost 100 people here in UK, scaling to 200 over the next few months. And we think this is our big advantage to some of the companies from US, where people in Europe want to work for ambitious companies, frontier companies. And here they have the chance. They know that whether it's London, whether that's some of the other cities, you are part of the core team building for the world. And investors realize that too. Of course, we spend a lot of time in the US working with our customers there. We have some of the biggest customers like Meta in US, but we found a way to balance it out.
Matti Staniszewski, co-founder of 11 Labs, speaking to me at London Tech Week. So founders like Matti, of course, are optimistic. The figures show investors are also paying attention, and we've seen that global AI firms are expanding their presence here in London. But can government policy keep pace with the industry's ambitions? I caught up with the UK's Technology Secretary, Liz Kendall, about Britain's plan to become an AI powerhouse.
We're in a race for this AI future, and I want Britain to win. I'm not naive. I would count myself as an optimistic realist. I'm not running the same race as America or China, but I believe there are races that Britain will win on, which is why we've made this huge announcement this week about backing British AI hardware companies. Someone said today, whoever wins on compute wins the race. It's the absolute power engine of AI, and you're not going to get better biology or financial services or logistics services unless you have the very best chips. And we know that although some people think the market's sewn up, it's not. It's diversifying, and we have incredible potential there with our great British talent and great British innovators. And this government is going to bet on Britain because we believe in Britain and because we believe that we can win this race in these new chips. And that's why we've put this £1.1 billion investment into AI hardware during London Tech Week.
I spoke to an investor yesterday, and she said we need the most ambitious political agenda since the Second World War to ensure that we have a seat at the table when it comes to AI.
I think she's absolutely right. I mean, we're going to see the equivalent of the Industrial Revolution, but in a decade, and we are in this race for the future, and we're determined to win for Britain. And that point about having a seat at the table, I would go even further. if you want to have greater sovereign control over this increasingly powerful technology, that's not about isolationism or pulling up the drawbridge and attempting to go it alone. It's about becoming a kind of keystone in the global tech architecture. So you become an indispensable partner. I don't just want a seat at the table. I want Britain to be an indispensable partner. And I think this race on compute and the AI hardware of the future is absolutely critical to do that, which is why we've put such a focus on it.
What's the biggest impediment? Is it energy costs? Is it unpicking the regulatory network? Or
well, it's also just about turbocharging planning decisions, which is why we've put data centers further up the priority list. Because look, data is the engine of the economy now. We've got to treat it as much a part of the infrastructure as the roads and the railways. So we're making those planning decisions, driving that forward more quickly. We're combining it with the clean energy and big developments like nuclear. That is how we secure our position, because we need to build those data centers and quickly.
How do we ensure that the value of some of the startups that are starting to grow at rapid pace here in the UK accrue to the UK public? I think of companies like Revolut, most of that upside is going to go to their US investors, not to the UK public.
So that is why we have said we want a decisive shift to backing more British AI companies. It's why we've launched Sovereign AI, £500 million to back British AI companies, combined with action to unlock wider support from the state, whether that's super priority visa decisions, free R&D, free access to our supercomputers, or critically, unlocking access to government procurement. Don't forget the billions of pound government spends in the NHS, in defence, that we want to see invested in British companies. We want them not just to start up, but to scale up and stay in the UK, which is why our announcement on SovAI, on procuring the first large usable quantum computer. We've got a £1 billion quantum big bet on that, and our AI plan, all about investing in those companies, saying the government backs you, we'll unlock the talent, we'll unlock the wider support, because we want you to start up and scale up and stay in Britain.
UK Secretary of State for Science, Innovation and Technology, Liz Kendall. Coming up, how has London emerged as an AI innovation and frontier tech champion then? We're going to discuss with Matt Miller, founder and managing partner of Avantic Capital. That is next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Tech Europe. Now, it is clear then that London is on a winning streak when it comes to AI. But how does it sustain that momentum and, crucially, nurture companies to scale? I spoke to James Wise, General Partner at Balderson Capital and Chair of the UK Government's Sovereign AI Fund. He says policymakers must work with investors to help firms here grow.
Over £6 billion was invested into the UK alone in the last quarter. That's more than the whole of continental Europe combined. It's many magnitudes where we were 5 years ago. And if you look at the scale that companies are getting to, people often criticise the UK for having companies which sold out too early. They went to the US too early. But actually, you look at the scale now, we have companies raising at £1 billion valuations, £10 billion valuations. There may even be a £100 billion private company announced soon. So overall, it's really robust. The challenge, of course, with everything is keeping that momentum going in the right direction. And obviously, that's what we're doing at Balderson and what I've been doing with government as well.
What does the UK AI Sovereign Fund role in that? What is the role that that fund plays in that? £500 million. How significant is that really, given the huge amount of capital that we're seeing invested, particularly in the US?
Yeah, so I was brought in as chair to set up the Sovereign AI Fund over the last 6 months, and we've launched, and we've had incredible interest from industry. It's been really reassuring to see technologists, entrepreneurs, and investors give us huge amounts of support. Our goal is to help more UK AI successes scale globally, right? As mentioned, we're great at starting these companies. We're great at getting them going. We've struggled historically to scale them. That is starting to change, but there's 2 big levers we want to get right with sovereign AI, because we believe AI is a different industry compared to many other areas of technology. It's so significant and so general. One of those areas is making sure government is a supporter. And I think many entrepreneurs will say historically, government's provided more challenges than it has support. We're trying to change that. Partly we're trying to change that with capital. But to be honest with you, it isn't really about the capital. The capital is there to make sure the taxpayer has a stake and gets rewarded when these companies go well. It's really about the other things government can do to make companies a success. That's procurement, that's providing data, that's providing lots of different expertise of navigating the very large infrastructure that the government has here in the UK. And look, it is an ambitious project. It's taking risks, and that's something else we want to bring in to the heart of government. And I think, one of the things I have noticed is we get criticism. Anything you do in government rightly gets criticism. But we're here talking in a week where SpaceX is likely to go public. SpaceX's first contract was about 20 years ago from the US government. It was about $300 million contract, and that's resulted in huge capabilities. The US now has more launch capabilities than any other country in the world, and it was done by a great entrepreneur and a great team, but it was a government procurement contract that got that company going. At Sovereign AI, we hope we can replicate just a small part of the success that other countries have had in this kind of way.
OK, James Wise there, General Partner at Balderson Capital and Chair of the UK Government's Sovereign AI Fund. So how do you scale on this side of the Atlantic? We have the perfect voice to bring in at this point. Matt Miller is a former partner at Sequoia Capital, who last year founded the $400 million UK-based venture capital fund, Avantic Capital. The fund is an investor in London-based AI, including 11 Labs and Synthesia, with a global focus as well. But certainly you have exposure to the UK AI system and ecosystem, Matt. Fantastic to get you in the studio. Is the government doing the right thing by putting money to play around hardware and its sovereign fund? Is that the solution to getting companies that can scale?
Yes, so I think it's a wonderful effort, and I'm thrilled that they are doing it. But I think it's ignoring some of the bigger problems that we have that would allow a bigger unlock for us. And James just was on talking about SpaceX. I think SpaceX has had access to incredibly affordable energy, incredibly attractive policy in building its facilities in Texas in particular to do its launches, to operate its data centers, especially with XAI in Texas and in the southeast of the United States, that we just don't have here in the United Kingdom. And if we really want to bolster London's role as a global AI tech player and as the second best city in the world to build an AI company, we need to have access to cheaper power so that we can have many companies that are building data centers. And it's not just the government that's the only ones going and building it, but industry is able to come in here. And we don't want to have OpenAI announce plans to go build data centers in the UK and then pull out because they find that the regulatory is too complicated, that the cost of energy is too expensive. The dollars, I think, are better spent on providing more attractive energy for all of the citizens of the UK, for all of the businesses that want to conduct here, rather than targeting it at a few specific companies that already have lots of capital coming their way. And British taxpayers do get to participate in them because the British Business Bank is an investor in many of the best investors who are here in London. So it already is benefiting in the upside of the AI wave. But I think if there's more money to be put into the problem, it should be putting into making data centers and infrastructure more affordable.
So if that's the key roadblock, the most important roadblock is energy and regulation.
Yeah.
Then this money towards chips and supercomputers is a misallocation of resources.
It's positive, but I think that we're missing the bigger issue, which is the bigger issue is energy is so expensive in this company for people looking to pay for their power as individual consumers, then let alone these big supercompute farms that we hope to create here in the UK to have sovereign AI. I think this is the challenge that we should be addressing, is taking a step back and how can we have cheaper energy, more reliable and more available energy to the people and to the companies and to the AI boom in the United Kingdom.
What do you think the solution is on energy?
I think that we need to be investing more in building affordable power plants.
Yeah.
I don't hear all announcements about new power plants, new power initiatives. We should be addressing, should we be bringing nuclear back? Nuclear is a very efficient source of power in the United States and France and other countries. Can we not be using some of these great technologies here? I know we're investing in the future and fusion and things like that, but we should be investing in the things that can help us reduce the cost now.
And the kind of companies, we've got a graphic that shows the kind of companies that have raised significant amounts in the UK, and you've got exposure and you've invested in 11 Labs, which is one of the standouts, of course, but you also got Isomorphic Labs, Nscale, Wave AI, Multiverse, Ineffable coming through with, I think, one of the biggest seed round raises in Europe in history, more than 1 billion. These are the kind of numbers we're talking about, but what we're really talking about now with you, Matt, is how to drive that momentum and the physical unlock that has to come through. Yeah. I want to talk about incentives for employees as well. What do they need to do on tax and options?
Yeah, so I think that there's a tax question of making London, continuing to make London the most attractive place to come and to build and to live and to thrive. And so there's a tax component of, there's considerations of raising the capital gains tax. And I understand the need to address rent seekers and other issues who may be taking advantage of the capital gains tax regime here in the UK. But capital gains is the engine through which people get compensated to take the risk to go work for earlier stage companies and invest in the future. And they want to be able to participate in that upside. And by taxing that at higher and higher levels, it makes London a less attractive place to go and build relative to other places that you could be in Europe or in the United States. And so we need to think about ourselves as, from a tax policy, we need to be globally competitive in what we're asking people to contribute. Yes, this is an incredible place to live, be, and build, but we need to be competitive with the other places that are great to be and build as well. And we need to think about that. Go ahead.
No, I was going to say, let's see if the government is listening to that bit. I also want to get your take on what you're investing in right now. You've got this portfolio building out. You've got capital to put to play. What are you most excited about? Where are you seeing opportunity?
Look, over half of the dollars we've invested so far at Avantic are in the United Kingdom, in companies like 11 Labs, Synthesia, and Ineffable. And these companies are thriving and growing. But I'd say, as I work with these companies, their biggest challenge is actually not electricity, because they've got data centers that they use all over the world to grow their businesses. Their biggest challenge is actually not yet the tax policy, but it's labor. It's being able to hire people quickly enough. If you think about these new AI neo-labs, Ineffable being one of them, that are being funded and built here in the UK, and you talk to them, the biggest challenge they face is that when they want to go hire somebody great, they've got to wait 6 months until they can start because the UK enforces notice periods and non-competes. In California, we wiped out the enforceability of notice periods and non-competes. So you can have a job at OpenAI and you can quit and you can go work at Anthropic the next week. That's better for workers because it causes them to treat their people better, and it's better for the, if we had that here, it would be a more fluid labor market for our companies.
Visas, tax and energy. Matt Miller, thank you very much.
Thank you.
Indeed, founder and managing partner of Avantic Capital. That is it for Bloomberg Tech Europe today. We're going to look in the next episode towards the stars as SpaceX readies, of course, for that IPO. Europe's ambitions in space. That's the next episode, July the 10th, here on Bloomberg TV. Stay with us. The Pulse is next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
SpaceX makes history with the biggest ever IPO, raising $75 billion and putting Elon Musk on the verge of becoming the world's first trillionaire. In a moment, we'll speak to the Goldman Sachs president, John Waldron, about the mega IPO, M&A, and much, much more. Also this morning, President Trump sees an end to the Iran war, saying a deal could be signed as soon as this weekend. Plus, the Bundesbank president says the ECB is ready to hike again next month if necessary after it raised rates for the first time in almost 3 years. We'll have a good conversation also on inflation, of course, what happens next with Europe, with the Czech central bank governor, also live on the program. Now, look, if I look at the markets, look, we had a rally in stocks, and that seems to be stalling a little bit. The rally in stock, but also bonds paused, traders waiting for confirmation of a deal between the U.S. and Iran. Now, overall, the mood is maybe one of wariness, some expecting equity markets to muddle through for a while due to lingering anxieties and the upcoming Fed meeting. S&P futures pretty flat. So you can see Eurodollar 115.66 and Brent at 87.57, but also quite a lot of excitement
about SpaceX later this afternoon. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. Happy Friday and welcome to The Pulse. I'm Francine Lacqua here in London. So the world's most anticipated IPO is finally upon us. In just a few hours, SpaceX will go public in what will be the biggest listing ever. Goldman Sachs has a leading role in the initial public offering, and there's nothing quite like a bit of healthy competition. This week, President Trump praised Citi for its position as a top advisor on M&A, and that would have come as a surprise to Goldman Sachs, whose executives have been touting their major lead in M&A rankings. Now, just recently, the Goldman president said, "We have our largest lead ever at this point in the year." Hope I did not just jinx that. Now, welcome. Of course, I'm delighted to be joined exclusively by John Waldron, President and Chief Operating Officer of Goldman Sachs. John, it was a funny comment that we picked up on also because you were adjacent to the news because of that Citi comment. It's an exciting day. M&A is thriving. How are you doing in M&A overall?
Thanks for having me, Francine. It's always nice to be with you. We're doing exceptionally well in M&A, and the M&A market is doing exceptionally well. We're going to see a marketplace this year that I think will likely be a record year. The record year was 2021 with $4.6 trillion of volume. We're now at $2.5 trillion of volume for the marketplace as a whole. Goldman Sachs is approaching $1 trillion of volume in terms of the deals that we've been working on, so we're doing quite well in the overall scheme of the marketplace. We have a little over a $300 billion lead in the league tables, kind of any way you look at it. So we're the number one ranked M&A advisor in the world. That's a position we've held now for over 20 years in a row. Very important business for Goldman Sachs, and we feel terrific about our position, but also about the broader marketplace.
Okay, and we'll get back to that in a second, but the SpaceX roadshow has wrapped up. Shares, of course, pressed last night in New York. What are you focused on today on the first trading day? Well,
it's a momentous transaction, and I want to start by congratulating SpaceX, a company, Elon Musk, his management team, his employees, and it's an extraordinary day for the company. We were privileged to be the lead left book runner on the transaction. As you said at the outset, it's a $75 billion IPO, the largest in history. I think it presages the beginning of a pretty sizable wave of IPOs, which we're excited about. I also think it shows you that the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space, which is quite exciting.
Can the markets absorb two other big IPOs from here until the end of the year?
Well, a couple things to say about the IPO market. The IPO market historically has been a couple $100 billion of volume for the last 10 or so years. We had 1 year in 2021 where it spiked to $600 billion of volume, led by SPACs and other activities kind of in that COVID era that were not sustainable. But really, it's a marketplace that's been $150 to $250 billion for most of the last 10 or 15 years. Year to date, prior to today, the marketplace would be about $95 billion of global IPO volume. So we're now, with this IPO, moving towards $200 billion of volume. And my guess is if you think about what happens for the second half of the year, we could see global IPO volume approaching $300 billion, $250 to $300 billion, which is large, but it's not in the scheme of the historical precedents that large. And most importantly, because global market cap has grown so dramatically in the last 5 or so years, as a percentage of global market cap and global float, it's only 14 or 15 basis points of total global market cap, which actually in historical terms is not that large. So we've not been particularly concerned about the overall dynamics. Obviously, investors make their decisions on individual companies, but the overall dynamics, it feels, it should be very well supported. I mean, I think in the last 2 weeks, you've helped SpaceX, but also Alphabet put together plans to raise nearly $200 billion. We did.
That's really quite incredible.
Last week, we raised quite a lot of capital for Alphabet. This week, we raised quite a lot of capital for SpaceX. Our position in that marketplace continues to be very strong. But most importantly, the capital markets are demonstrating a willingness to finance these extraordinary companies as we build out this AI infrastructure. And I should call out our team. It's extraordinarily proud of our team, across our technology franchise, our equity capital markets franchise, our debt capital markets franchise. We're really executing well, and we're very proud of our team.
John, because today is such a big day, right, for SpaceX in New York, a lot of people, of course, kind of remember the Facebook IPO back in 2012, where there was just concerns about it working on the right day. Do you know of conversations with NASDAQ having happened so that today goes smoothly?
Well, I would say that many of us have been preparing for this for a long time. So I think you should assume that whether it's Goldman Sachs, NASDAQ, other underwriters, the broader marketplace, a lot of preparation has been put in place for what we expect and hope to be a very good day today.
How do you make sure that there are options for retail, I guess, investors on SpaceX?
Well, there are plenty of options being put in place for retail, and I think that I'm not overly worried about whether those options will be in place. I think you'll see plenty of opportunity for retail to invest.
Do you see exuberance in equity markets, and is that a concern going forward, given all the forces? It could be AI, but it's also everything that we're seeing in the Middle East with inflation creeping up.
Yeah, I think if you look at the global equity marketplace, we've obviously seen an explosion of valuations. The global equity capitalization is about $150 trillion now. Over half of that is in the United States. Yeah. So the U.S. has been the preponderance of that growth. Mm-hmm. Valuations, if you look at S&P multiples, are around 21, 22 times, depending on how you look. Obviously, they're higher for the more tech-centric part of the economy. On an equal cap-weighted basis, it's like 17 times, which is really historically a little on the high end, but not an extraordinary or demanding valuation. So, yes, they're high. On a price-earnings basis, they're also high, but not totally out of bounds. And so I think the fundamental premise is right now earnings growth is extraordinarily strong. Right. Q1 earnings growth for the S&P 500, 28%, well above any historical norms. So it's not as if the market is actually driving valuations materially higher right now. Right. They're according similar valuations on a much stronger base of earnings. We'll see if that continues. But right now, it looks as if the marketplace is reasonably rational about the earnings growth. And I think the bigger question is, how does the returns on capital invested in this AI infrastructure build transpire, and how do they transpire across the enterprise landscape?
When you look at these mega IPOs, does it make it more difficult for smaller IPOs to get in?
I think there's a risk that we have a crowding out effect. Yeah. I think there's a risk across the capital markets, not just in the IPO market, that those things that are more in the slipstream of AI and AI infrastructure and compute are going to aggregate more capital, and that those that are not in that slipstream have a little bit tougher time. I think we're still in the infrastructure build. I'm expecting at some point we get into the deployment phase and the application phase where you start to see it filter through a broader part of the economy. And the companies that do a really good job with that, I think, will attract enormous amounts of capital as they're proving the theory of the case that they're actually getting good returns on their own deployment of tokens and compute, and that probably will level things out.
I mean, speaking of tokens, as Goldman embraces AI, one thing that we're hearing from a lot of the banks is actually tokens are just getting more and more expensive. I think in some cases, employees, token costs are bigger than their annual salaries. Like, how do you think about that?
Well, I think that most enterprises right now are preferencing adoption, literacy, innovation, experimentation. Yeah. So we're all trying to find ways to have our employees better understand how these tools can be valuable for them. And that's a more expensive mechanism because you're not really micromanaging, the ROIC on every token that you're using at this phase of the development cycle. I think that will start to change over time as people get a little bit more rational about where they want to spend tokens and where they don't, and what kinds of models they want to use for what purposes. So I definitely think we're in the phase now where it's a little bit of roll it all out there and let it run a bit, which I think is rational. We have a lot of learning to do. Over time, there'll be a little bit more discerning behavior, I expect, on how you deploy those tokens and what returns you expect.
What does discerning look like? Is it possible caps on the amount spent, or is it?
I think every company will have its own approach to doing it, but I think fundamentally you look at use cases and you try to determine how much compute do I need to generate to have this use case go to what I expect it to go to, and what kind of returns on invested capital do I want to see, whether it's productivity unlock, more efficiency, more revenue growth because I build tools for clients. I mean, at Goldman Sachs, we're focused on probably 4 major vectors. One is literacy and adoption. One is software development life cycle. Use cases around process re-engineering in the firm in terms of things we do that are less automated that become more automated. And the 4th vector, which ultimately is probably the biggest and most exciting vector, is tooling that we can build for our clients to make our relationship with our clients stronger and our value proposition more significant. And if we can do that effectively, we will differentiate our firm. And I think that that all costs tokens. we will develop an ROIC metric across all vectors over time. Right now, we're not going to be myopically focused on every microeconomic of that.
I mean, does the rollout or implementation of AI actually, kill or affect jobs?
I think we don't know, is the honest answer. We've said publicly, and David Solomon wrote an op-ed that I think was a very effective op-ed, that the labor market is much more dynamic than is commonly understood. There's a lot of job creation and job loss in any given year, and certainly in the United States, and I'd say across the globe, although the U.S. tends to be a bit more dynamic in that regard. So I think when you look at the broad labor market, it's unclear to us that we're going to see significant job losses. This may be like every other innovation where you have a lot of new jobs created and you have some disruption along the way, but you actually end up with more employment over time and more productivity in the economy. And my guess is this probably moves in that direction. Okay. We're going to learn a lot in the next handful of years.
What's your take on Europe?
So I've been here now a couple days. I was actually at the Founders Forum yesterday. You and I were just talking about that off stage, which is a venture forum for entrepreneurial companies in Europe, extraordinary companies. I think that there's too much pessimism, in my view, about Europe. The default setting seems to be pessimism as opposed to optimism. There's a lot of great innovation happening here. There's an enormous intellect in this part of the world, just like there is in other parts of the world. There's no difference in the intellect here. I think risk capital is the single biggest question. Back to your questions on SpaceX and Alphabet. The amount of risk capital that permeates the American capital markets is extraordinary and really one of the secret sauces of America. And I think that Europe needs to find a way to generate more of that risk capital. And then I would say, from a competitive standpoint, operate more as a single market. The promise of Europe was always this great single market that would be equivalent in size to America and China. And it hasn't really come to fruition, largely because I don't think it's really operated in a way to allow it to be a single market.
Europe is changing, right? The margins because of the extra spend from Germany. I mean, again, it's a complicated region, like many regions at the moment. When you speak to CEOs, what do they need?
Less regulation, less bureaucracy, more of an ability to tap into all these markets on a more unified fashion, and more risk capital.
When you look at, so we're talking about M&A. I mean, do you still have appetite at Goldman Sachs to do, are you on the prowl for some big M&A?
Well, if you look at what we've done over the last year, I would call out 3 transactions, 2 of which were acquisitions. One was a partnership. We bought a business called Innovator, which was an ETF platform. We bought a business called Industry Ventures, which is a venture capital private asset company. And we partnered with T. Rowe Price to build multi-asset solutions primarily geared towards U.S. retirement and U.S. wealth. All 3 of those transactions, not extraordinarily big in their own right, add to our product and solutions capabilities across our asset and wealth management business, add to our distribution capabilities. We want to do more of those. If we can find more situations that look like what you've seen us do thus far, we would like to find more of those.
I mean, is it fair to say they were capped at like $5 billion?
Well, I'd say the acquisitions were, kind of plus minus $1 to $2 billion.
Okay.
So in total, between that and however you want to value the partnership, these are not in the scheme of a $325 or $30 billion market cap. These are not large transactions, but they add to our capability set. They add to our growth. They make our value proposition with our clients stronger, and we'd like to find more opportunities to do more of the same.
When you look at the U.S. economy, I mean, you sit just on so much data. Is there anything that looks unhealthy? Is the consumer worried? Do you see any defaults? Is there something that, the Fed should be looking at?
I see employment, maybe surprising to some, continuing to be pretty strong and fairly tight. I see a lot of nominal growth. Obviously, the AI infrastructure build is a significant stimulus to that. I see U.S. consumers continuing to behave in the traditional U.S. consumer way, which is to spend, a reasonable bit of their household income. I see an enormous amount of household wealth that's been created, $180 trillion of household wealth in the United States, which is a little over 8 times the household income. That's at an all-time high. So you're seeing a significant amount of wealth created in the stock market and other financial assets. And I see a fairly healthy amount of inflation. So I think you're going to see more nominal growth and probably more inflation for some time to come, but the consumer continues to be pretty strong, and I think that's fundamentally important to the U.S. economy.
Okay, John Waldron, thank you so much for joining us. Don't be a stranger. Every time you're in London, we're expecting you now on the set. John Waldron, President and Chief Operating Officer of Goldman Sachs. Now, let's also go back to one of our top stories and bring you more on the SpaceX IPO, as the initial share price of the rocket and AI firm could jump 35% higher from shadow markets. Now, I'm joined by Matt Bloxham, intelligence analyst at Bloomberg. So, Matt, what can we actually expect today, the first day of trading?
Yeah, I mean, I think a lot of excitement, and I think certainly the talk that there was over $100 billion of retail demand for this IPO suggests that we are going to see upside in the share price. And the prediction markets and the futures markets and the crypto markets all pointing to that kind of 30-35% upside. So it's going to be interesting to watch for sure. And obviously, Elon Musk, if that happens, on paper at least, becoming the first ever trillionaire. So quite an incredible day, really. It is quite an incredible day. What's the path ahead then for Elon Musk and SpaceX? Yeah, so I think very near term, what I'm really focused on is the SpaceX Starship next launch. So that's due late June, early July. Starship is incredibly important to so many of SpaceX plans. So that's the next test launch where people will be looking to see if that goes well and it takes on more commercial and fundamental significance. Beyond that, there's a lot of focus on what's going to happen with Tesla and the relationship with SpaceX, with a lot of people now thinking it's a question of when, not if, Elon Musk moves to merge those two businesses. Right now, they're kind of quite tied by TerraFab, which is the new chip joint venture, and people expecting that there's going to be some kind of tie-up between SpaceX and Tesla, maybe within the next 12 months. Matt, thank you so much. Matt Bloxham, there, tech analyst at Bloomberg Intelligence. Now, coming up, the European Central Bank delivers its first rate hike in 3 years. We'll discuss the path ahead as policymakers across the world grapple with inflation pressures. That's coming up next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back, everyone. Now, we are getting a little bit of breaking news out of the U.S. and Iran. Now, earlier this morning, President Trump was insisting that the Iran deal was close after scrapping some of the new strikes that he had said. And now we're just getting a little bit, I guess, of a readout from the semi-national news agency of Iran, MER. And they're basically saying that the U.S. and Iran Memorandum of Understanding stipulates that the Strait of Hormuz will reopen within 30 days. They're also also saying that the U.S. will withdraw forces from the area surrounding Iran under this new memorandum of understanding. Now, again, we've seen this in the past. It's almost a little bit of a pattern. Things quieten down, it gets a little bit better, and then they flare up again. I'm not suggesting they flare up this time, but just wait and see what happens over the next couple of days. The MER agency, again, this is a semi-official news agency of Iran, actually citing sources close to the negotiation team. Now, Bundesbank President Joachim Nagel says the ECB is ready to raise rates for a second straight meeting if the shock from the war in Iran requires it. We also understand that other policymakers are also open to a move higher as soon as July. Now, we're joined by Konstantin Veit, European Rates Portfolio Manager at PIMCO. Konstantin, thank you for joining us. I mean, there's a little bit of a pattern that if you hike once, maybe it just makes sense to go a little bit more cautiously, but instead of doing one and done. What's your take?
In our baseline, we have 2 rate hikes. I think whether it's 1 or 3 or 2, the important message is this is not 2022, right? The backdrop is very, very different. The negative supply shock is not matched by a positive demand shock. So in pretty much most of the scenarios, there's not that much for the ECB to do. And it's also important to highlight the different starting conditions of the central bank. So if you look at where they are versus their neutral posture in terms of policy rates, then with the Fed and Bank of England being above, the BOJ being below, the ECB roughly at neutral. So, you know, for the ECB to do something now means hiking rates, while for the Fed and the Bank of England, for example, doing something now means probably staying on hold.
Yeah, but Konstantin, I mean, overall, again, does it mean if there is another hike or another 2 hikes, would that be a policy mistake? Because they have one mandate is inflation. If you're a small, medium-sized company in Europe, maybe you're really feeling some of the pain.
Yes, I agree. I was a bit surprised that there was not much discussion around the growth outlook yesterday. So I think the growth outlook that the ECB portrays is a bit too optimistic. But if you look at their neutral range, they've updated their neutral range, which is 175, 250. So if you hike twice, you would be at the upper end of the neutral range. And also keep in mind that core inflation or domestic services inflation hasn't really normalized even before the conflict and was still above target. So I think the ECB called it a robust decision, and I think 1 or 2 hikes should indeed be robust across a range of scenarios. And I think that's also not something that you then would have potentially to reverse quickly.
Do you worry about GDP? First quarter was a bit softer than expected. What does second quarter look like?
Yes, first quarter was soft. The second quarter doesn't look great either. So if you look at the PMIs, they point to marginally negative growth. So you could technically get a recession in the euro area in the first half of the year. So it's quite interesting that the ECB still projects 0.8 in terms of GDP for this year. That's probably a bit on the optimistic side. So we probably see more like 0.5% or even lower.
Konstantin, what are you buying right now? So you're a PIMCO. You know, what's the one thing that you'd be buying right now? Shopping up.
I think the focus for us is on quality, simply speaking, because this is an environment where you don't have to take much risk, which is beautiful for us here in Europe. We have been 8 years in a negative yield environment where you had to stretch a lot. You had to take a lot of interest rate risk, a lot of credit risk to earn a decent return on your investment. And that's not the case anymore. You can stay short in interest rate risk. You can stay up in quality when it comes to credit risk and earn a pretty good return on your investment. So that's our focus right now. So we're more careful on the economically sensitive parts of the market, lower quality credit, and these type of areas.
I mean, there seems to be a difference, for example, between German bonds and Italian BTPs. Do you load up on one of them?
We remain constructive on the so-called periphery. The spread is around 77 right now. We have been around 60 before the crisis, and we think over time there is room for spreads to compress. Also, given that obviously there has been a change in the fiscal stance in Germany, so you could see over time a conversion in the fundamental positions there, which would argue for more spread compression. So overall, we remain constructive on the periphery.
Konstantin, I mean, the bond market has always been just incredible to watch, but now is really the time where there's such a big difference between what we're seeing in equities and what the bond market, especially the Treasury market, is telling the Fed to do. I mean, does this kind of also play out in the Bank of England and ECB?
Yeah, I think the bond markets are doing their job right now, and you see that across jurisdiction, actually, that the bond markets are now, given that central banks retreat and not involved anymore in the bond markets, that the fundamentals come into sharper relief again. And you see occasionally repricing and a reassessment of the fundamental positions. We have seen this in France, we've seen this in Germany, where the debt brake was basically abolished, and you had a 50 basis points repricing on the 10-year bond in 2 days. So, and yields are very attractive right now. So, policy rates are reasonable levels. The 10-year rates are at reasonable levels, pretty much around the globe. And if you compare that compared to where equity market valuations are, then to us, fixed income looks very attractive.
Okay, Konstantin, thank you so much for joining us on the day after, of course, the ECB with a lot going on the markets. Konstantin Veit, their European rates portfolio manager at PIMCO. Now, let's look at the markets. Traders do remain very wary of a potential deal with Iran, between the U.S. and Iran. Some expecting equity markets maybe to muddle through a little bit due to lingering anxieties. And, of course, the upcoming Fed meeting. If you look at markets elsewhere, they're also trying to catch up with Wall Street's chip maker fueled gains from Thursday. Now, what do they really want to see? Look, traders want to see the end of more than a 100-day war that has caused the biggest oil supply shock in history and roiled global markets. Coming up, we'll look to how the Czech Republic is handling the economic pressures Europe is facing with Alice Michel, the governor of the Czech Central Bank. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. SpaceX makes history with the biggest ever IPO, raising $75 billion and putting Elon Musk on the verge of becoming the world's first trillionaire. Iran's semi-official Mehr news agency releases details of a memorandum of understanding to end the war with the U.S. President Trump says a deal could be signed as soon as this weekend. Plus, the Bundesbank president says the ECB is ready to hike again next month, if necessary, after it raised rates for the first time in almost 3 years. So more on, one of our top stories in a few minutes. In the last few minutes, reports have emerged of details of this memorandum of understanding to end the war with the U.S. That's after President Trump said a deal to end the war could be signed as soon as this weekend. Well, Abir Abu Omar joins us in Dubai. So, Abir, what more do we know about what this semi-official Iranian news agency is telling us?
Good morning, Francine. So yes, over the past few minutes, these are some of the headlines that have emerged from the semi-official Iranian state media Mehr, suggesting that the document, essentially, or the MOU is under consideration. These are some of the headlines. It will stipulate the reopening of the Strait of Hormuz within 30 days. It will unfreeze those $24 billion of frozen assets and lift oil sanctions. Now, just a very important caveat here. Mehr is saying that this MOU or these concessions are pending the approval by Iranian authorities. They cite a source that is close to the negotiating team. It is still unclear whether the text matches the text by Tehran or that was cited by this semi-official media matches the one that President Trump was referencing and was saying that it will be signed in Europe by this weekend. So still some murky details there for us to watch out for, but this time around feels a little bit different because we're getting from this back and forth some positive responses from the Iranian side. Again, if we were to go with what Mehr is saying, but we still await an official response from the Iranian government. Until now, we cannot definitively say that those are the same concessions that will be met by President Trump. Lebanon, a very sticking point in all of this. Iran says that the cessation of the war is including Lebanon through this Mehr news that we're getting. Israel has said earlier that it wasn't part of this MOU. So again, some conflict that we're still seeing in those back and forth statements. We will definitely be monitoring the situation and filling in. Oil prices dropping to around $86 a barrel. So that is something that markets are taking very positively this morning, Francine.
Abir, thank you so much. It always is, I think, encouraging when you have a little bit of detail, but then you're absolutely right. We just need to check whether both sides agree on what detail was put out. Abir Abu Omar in Dubai. Now, the chief of the Czech Central Bank, Aleš Michel, has said that he sees a strong argument to raise interest rates to contain inflation. Now, a potential rate increase could put the central bank on a collision course with the Czech prime minister, who's urged policymakers to lower borrowing costs. Well, the governor, Aleš Michel, joins us now for an exclusive conversation. Governor, thank you so much for joining us. Now, first, this is a big week because the ECB yesterday raised interest rates. Now, what kind of impact does that have on your country?
So good morning, Francine, and thank you very much for having me. So our next decision, which will be next week, will be based on our own risk assessment. So the ECB decision will not affect our next step. Our key rate has been 3.50 for more than a year. So we have not cut rates below inflation in this cycle, which is very important. So for us, all is not the problem. The real problem is that there is too much money in the economy. It was created by years of zero rates and negative real rates before COVID. And it was supported by fiscal deficits. So this is still pushing core inflation higher. So we have to stay hawkish forever.
So talk to me a little bit about, we're trying to analyze what's happening in the Middle East. And frankly, it's unclear because every couple of days there's negotiations. We're not sure where it ends. Sometimes it changes. How much real inflationary pressure do you see from the price of oil?
So wars tend to increase inflation, definitely. So they bring more spending, bigger deficits, and more pressures on prices.
Is that, could that be short-lived? Again, there's many questions on whether, if Iran gets resolved, which, we don't know at this point, but if it gets resolved quite quickly, does it really help with inflation on the short side?
With the cost inflation, yes, but when I became governor of the Czech National Bank, it was in mid-2022, the inflation was close to 20%. 20%. So we reduced it to around 2%. And for more than 2 years from now, inflation has been close to our target.
Yeah.
So we restored price stability and we will protect it. But current inflation right now in the Czech Republic is 2.1 year on year. Rates 3.5. Yeah. So which is our big advantage. So our policy is already tight.
Yeah.
But we have to decide, or right now it's about to decide whether to switch to a tight policy. Yeah. And core inflation is 2.9%, and we are fighting with this core inflation right now.
But so, Governor, are you ready to support a rate increase as soon as next week when you meet?
I think June move is now a real possibility. The case for a rate hike has strengthened, and forever hawkish, I would say.
Governor, I mean, one of the other things I want to talk about was Bitcoin, because in November 2025, of course, the Czech National Bank made its first ever purchase of crypto assets, mainly Bitcoin. Yeah. What have you learned so far from running this test fund?
Okay. So a central bank and Bitcoin, it's a strange combination, isn't it? Yeah. So most people do not put these two things together. Yeah. I do. So my logic or my philosophy is that in monetary policy, a central bank must be conservative. For me, that means hawkish forever, higher rates for longer, no quantitative easing, no currency devaluation. That's conservative monetary policy. But a central bank must also think ahead. And in operation, we must innovate. We must try to understand the future. That's why we created a test portfolio. Yeah. It's a test portfolio, not a revolution, not a political statement, a test. It's a $1 million test. Our FX reserves are 180 billion of US dollar. So we will run this test for 2 years, and experience, as you ask, I see only 2 possible outcomes for Bitcoin: very high value or zero.
Yes, but I mean, is this a surprise? Do you think that you're holding? I understand it's a test and it's only for 2 years, but what portion of the reserve could you imagine holding in Bitcoin in the future?
We will decide it after the test, after 2 years. Yeah. Right now, I would like to say that I'm not a crypto governor, definitely, yeah, because I expect hard shakeout in crypto, definitely. Yeah. There may be a wave of failures, yeah. But on the other hand, there will be strong companies and strong technologies which survive, definitely. So there will be some process of creative destruction in this part of economy, but let's understand the future. Let's create the future. I'm there for the future.
Governor, you are quite innovative. I mean, what you've done is very innovative. Also, on the change in reserve management, it is a shift to basically increase a portion of equities and gold.
Yes.
Right? And that's happened. What results is this new approach delivering?
So our investment horizon is infinite.
Okay.
So that's why we provide 2 long-term moves, increase equity allocation from 8 to 26% of our FX reserve, and we increase our gold from almost 0 to 6.5%, I would say, of our reserves. And results last year, return was 10%. Same as Warren Buffett result. So far, so good, I would say. But 1 year is not enough, I would say, to judge a portfolio. Warren Buffett built his his reputation, I would say, over more than 50 years. So ask me again in 50 years.
Yeah, I mean, I hope to ask you next year. I hope this is not in 50 years. But the portion of stocks, as I understand it, will also increase to about 30% of the total reserves by 2029. And a lot of that chunk is U.S. stock market. So what is, I guess, your strategy for U.S. equities, especially at a time where everything's changing because of SpaceX today?
So with the investment horizon, which is infinite, so we do not focus on short-term bubbles. So we stay with our strategy. So we have built the portfolio for the long-term future. We have a high expected return because of the stocks and because of the U.S. stocks. So the portfolio is for maybe for the next 50 years. So that's it.
Okay. I mean, do you worry about valuations in AI and tech in the U.S.?
No, I'm not focusing on short-term bubbles.
Okay.
Right now, it's a long-term portfolio for our kids.
Governor, really great to speak to you. Very refreshing view. Thank you so much for joining us here in London, in our studio. That was Alex Michel, the governor of the Czech Central Bank. Now, coming up, we'll speak to the chief executive of the AI drug discovery firm, of course, working to use artificial intelligence to extend human life. We'll speak to the chief executive of In Silico Medicine. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield, and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Welcome back, everyone. Now, AI drug discovery firm In Silico Medicine is stepping up the quest to harness artificial intelligence to extend human life. Now, the company is really working with partners to develop what they expect to be among the first AI foundation models dedicated to human longevity science. Well, In Silico went public in Hong Kong last December amid an investor frenzy over China's biotech and AI boom. Well, I'm delighted to be joined by Alex Zavaronkov, the founder and chief executive of In Silico Medicine. Alex, thank you so much for joining us. I mean, this is a booming space that people are really trying to figure out, understand, and possibly invest in. How does your approach, for example, differ from the likes of Isomorphic Labs and Xaira?
Sure. So In Silico has been around for a number of years, and it took us a while to build an AI platform that constantly delivers ultra-high quality therapeutic assets that have dual purpose. So we usually go after what we call pipeline in a product. So imagine a drug that can be purposed towards multiple indications, not just one. Then we try to get it approved for the indication with the highest probability of success, where we are more likely to outperform the standard of care. And then we try to take it as far as possible into the clinic or license it out and try to repurpose the drug into aging.
Right.
Because the core of our discovery engine is human aging. That's the problem that every one of us has, and everybody who is listening has. It's my biggest problem in my life. And if you can target aging at its core, get a drug approved for the indication, and then repurpose it towards more indications and get the maximum longevity benefit and even preventative therapeutic benefit, that would be the ultimate goal. Like, think about GLP-1s. GLP-1 as a target has been discovered more than 40 years ago. It became a drug very recently and became a $1 trillion opportunity. So I am on it right now.
Yeah.
I love it. So I want to develop the next one.
It's so interesting. So when you look at, AI, we often talk about AI and productivity in your space, in your world. But this could touch, of course, drug discovery, preclinical drug development, clinical drug development, regulatory filing, marketing, or finding the right patients. What do you think number 1, 2, and 3 benefits are?
So the number one benefit of AI is, of course, speed. So at the preclinical level, we now can beat the traditional approaches at least by 4 times. And it's not only AI, it's also the infrastructure that we usually use around the world. That's why deglobalization is very bad for us, because we need to use the labs around the world, distribute the workload, get the data back, and see if AI was right or wrong. So now I managed to get the time from 0 to developmental candidate, 1 step before clinical trials, to 12 to 18 months. My record was 9. Typical traditional approaches is 4.5 years. So it's faster, cheaper, higher probability of success, higher novelty, and then again, our unique property is aging. We have the performance metrics here on the
How convenient.
On the label.
This is a great marketing
So you can
tool.
see that, not marketing, productivity tool. So usually companies that you've named, they don't have a single one. Here I've got 30 developmental candidates, 3 are in phase 2. 1 phase 2 complete, planning to go phase 3, and everybody in the company wears one.
I mean, you should do that actually also, the World Cup should do it when they add a star, if you win the World Cup. It'd be easier than having to buy a new football shirt every time. I mean, when you talk about a particular area of human health, I guess, that you want to focus on, and you say aging, I mean, is this to combat diseases? It's like, it's so wide. I wonder whether you have to approach it from a more kind of targeted clinical level.
Well, I have my personal philosophy and the company philosophy, and very rarely they properly convolute into a strategy that aligns with my vision, because my vision is to keep people productive as long as possible at their peak, so extending peak span. So imagine that you get to your ultimate performance level in a lifetime, and then you do not decline. You actually are either flat or even advancing.
Is that an age? Is that an age, or does it really depend on biometrics?
So currently it is your chronological age, which pretty much defines how long you're going to function.
No.
And there are stats for that. No. In the ideal world, you should be able to reverse some of the age-associated damage, or most of it, and continue at your peak. Continuous improvement. Otherwise, life is very unfair. And but the therapeutic process, the development of drugs, is very different from our ideal world. So you have to target a disease first to get the drug approved. And the drug that is targeting aging must be powerful enough to modulate the disease so that you outperform the standard of care. That is incredibly difficult, because you are not trying to fix something that is dramatically broken at like hitting it directly. But this indirect benefit must be outperforming standard of care. And that is very difficult. And then to be able to repurpose the drug after it gets approved into aging So that's kind of one of my dreams, to be able to take my own drugs regularly to reverse some of the aging.
Alex, I mean, this is so interesting, and I wonder how you think about, you're basically talking about longevity and healthy aging, but I don't know whether there's a contradiction with also job availability and the fact that if you stay in your job for too long, then the youth can't come up the ladder.
Well, right now, people are actually not reproducing as they used to. So the population of developed nations is collapsing. If you can extend the life and productive life of as many people as possible, you're going to have very productive labor. Also, with AI, you have massive opportunities for enabling people who are retiring or even retired to go back into the labor force. So their skills, their intent, their work ethic, their values may be contributing to the society in a much more profound way than people who may come into the labor force later.
Do you think we'll really have some kind of big breakthrough on what your hope and dream is in our lifetime?
I think in our lifetime, we're going to have many breakthroughs. On the immediate horizon, I don't see a single drug that can extend your life by more than 5 years as a healthy individual who is already optimizing, sleeping, not overeating. However, I think that within the next 10, 15 years, we have the chance for massive breakthroughs. Okay. I run a conference in this area. Everybody is coming there every year from all over the world to discuss the recent advances. And we usually look at the horizon of 10, 15 years for drug discovery and development. And many of the discoveries that have been made last 10 years may actually get you more than 10 years. So it might be at the longevity escape velocity right now. We just need to execute.
Alex, thank you so much. What a great conversation. I'm also a little bit jealous. I might do the same for the Pulse team with a number of newsmakers and update that every couple of months.
Stats are good.
Stats are good, and Bloomberg's a big believer in data. Alex, thank you so much for joining us. Alex Zavaronkov, founder and chief executive of In Silico Medicine. Now, Switzerland is set for a nail-biter referendum on Sunday on a proposal to cap the population at 10 million. It's an unprecedented proposal which has never been tried by a modern economy. Rudolf Minch, chief economist at Économie Suisse, which represents the interests of thousands of Swiss companies, joins me. So, Rudolf, first of all, how do you see it? I mean, this is tight. It's a tight referendum, but it could really change the composition of the Swiss economy for a lifetime, for years and years to come. How are people thinking about this?
The initiative wants to cap the population at the size of 10 millions, but this threshold will be reached only in the early of the 40s or in the late 30s. So it takes quite a long time until the threshold is reached. So for that, we do not expect initial consequences, merely planning uncertainty, what happens in the future, but no initial consequences, because the population size at the moment is around 9.1 million, so it takes quite a long time until the Swiss population will reach this 10 million threshold.
I mean, Économie Suisse is Switzerland's largest business lobby. So what are the contingency plans for your organization if voters back the 10 million cap?
So obviously, it's not a good idea to cap the population at the 10 million threshold. We need flexibility, and the Swiss economy depends heavily on foreign workforce, say in the labor-intensive sectors like restaurants, construction, or the whole healthcare system, but also on innovation. Switzerland is an innovative country, so we need to have foreign talents, and up to now we have the privilege to be attractive for foreign talents coming from all over the world to Switzerland to join the workforce here, to create new patents, to doing some research and developing new products and services. And this openness is under threat.
Swiss companies have been quite vocal that the cap would severely restrict their ability to recruit the talent they need. Which companies, or will companies, leave Switzerland if voters back this cap?
I said before, we have these labor-intensive sectors. They fear they do not be able to hire enough foreigners to maintain the level of services or producing products in Switzerland. So that, To add a word, it's the main issue about the initiative is planning and certainty. We have time in Switzerland to develop proper measures, to implement proper measures, but there's some planning uncertainty also. What will be the reaction of the European Union if there would be a yes? So we have to explain that initially nothing will happen, and we continue with the bilateral agreement with the European Union.
I mean, nothing will happen initially, but do you see, I mean, if companies were to leave, what sectors would leave first?
Probably it's not that easy because we live with such initiatives over decades. And in Switzerland, we have a saying that the soup is not eaten that hot that it is cooked. And therefore, the enterprises do expect that Swiss policymakers do not going to implement this initiative in a really strict way, as it is written in the text. So there will be some in the future some pragmatic solution and finding some ways that the openness of the Swiss economy maintain and the ability to attract foreign workers will remain.
Rudolf Minch, thank you so much for joining us. That was, of course, Rudolf, the chief economist at Économie Suisse. Up next, it's Bloomberg Brief, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers, and it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just it's hard to call it because the technology trend and the investment is real.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day.
Deal hopes. Iran's semi-official news agency Mehr reports details of a draft agreement being discussed with the United States. Stocks extending their gains, oil sliding on optimism over that potential deal. And the Wall Street debut of the biggest ever IPO, SpaceX, set to begin trading after raising $75 billion. So let's get a check on these markets now around the world. We'll start in Asia with Winnie Su. Winnie.
Good morning, Bonnie. A very happy Friday from our region. Now, you can see that the risk sentiment is very strong, especially after the U.S. signaled the end to the Iran war. And also with these headlines coming through around the details of that potential deal. Now, that is really supporting the MSCI Asia here up almost 3%, with gains also supported by the lower oil prices and that optimism ahead of SpaceX listing later today. Now, you flip the board and take a look at the South Korea market. We have Kospi here leading gains again, but we did see these gains pairing a bit in the afternoon after our report that global banks are curbing the hedge funds leverage bets on SK Hynix and Samsung on the concerns around the potential pullback after such a blistering rally. However, the Korean won here also leading gains among its Asian peers as investors, foreign investors, finally turned into net buyers of Korean stocks today.
All right, Winnie, thank you so much. Now let's get over to London for a check on markets with Justina Lee. Justina.
Good morning, Bonnie. Now, it's a day of hopes and dreams all across markets, even though we don't have that SpaceX IPO. We're seeing the Stocks Europe 600 up 1.7% and a rally all across short end bonds here in Europe, thanks to hopes for that U.S.-Iran peace deal and potentially a lower energy price. Now, what I find really interesting is, yesterday we got that ECB decision, and actually officials have been projecting potentially another rate hike coming in July. But we flip the board here, we can see that actually expectations for another rate hike have been falling precipitously over the past few days. And now actually traders are just seeing one more rate hike this year. And that explains that bond rally too, Bonnie.
Justina, thank you so much. Justina Lee in London. Okay, so just a few moments ago, we got details from the semi-official Mehr news agency of this 14-point plan. It includes things like lifting some sanctioned money for reconstruction. The U.S. would end the blockade within 30 days. Iran would reopen the Strait of Hormuz under Iranian arrangements within 30 days. And then there would be a period of further discussion. So around the details that we had been hearing coming out, but it seems a lot more concrete now. Bear in mind, this does need to be reviewed by Iranian authorities and agreed to, according to Mehr. But we have seen a reaction this morning in oil markets and across the board, which already started yesterday when the president said very firmly that there was an agreement in the works. Mind you, we had heard that several dozen times before, but this time it seemed a lot more for real, if you like. So we're seeing New York crude trading below $84 a barrel, Brent crude 86 and change. The December contract is actually trading at $82. It's also down more than 4%. We're seeing gas future is down more than 7% in Europe. If you look at stocks, we already had that rally towards the close. In particular, yesterday, semis up 12% as a group. Well, that looks to continue today, potentially with the Nasdaq 100 pointing to more gains, as is the S&P 500 futures complex and Russell 2000. We're also seeing a massive move lower in yields today. We'll have a look at treasuries in just a moment. Let's get to some individual market movers now with Chloe Melly.
Good morning, Bonnie. Of course, space stocks are in focus today ahead of this much-anticipated SpaceX IPO, and the market is expecting a blockbuster debut from SpaceX, and so this enthusiasm is feeding through into that broader sector, with all of those names up here on the board in the green, and Rocket Lab in particular up about 7% in pre-market trading. Moving on to Adobe, which is feeling a little bit of management uncertainty and is down on the back of that today. There's an announcement that the CFO will be leaving later this month, and this comes just a few months after the company also announced the CEO would be leaving soon, and so this overshadowed actually what has been strong results and a strong outlook for the company, and we're down about 4% there. And finally, let's go over to Europe, where European airlines are reacting to this potential peace deal with Iran. Of course, even if we do get a deal over the weekend, fuel costs will not come down overnight, but we are still seeing a lot of optimism around that travel industry, that travel sector, and we're seeing Ryanair, Lufthansa and IAG, which owns British Airways, all in the green in Europe this morning.
Chloe, thank you so much. Chloe Melly there in London. Coming up this hour, Laura Cooper of Nuveen and Rebecca Walser, president of Walser Wealth Management. Turning back now to this May report, Iranian media reporting that a deal with the US, including lifting oil sanctions, reopening the Strait of Hormuz, and US forces withdrawing from Iran's borders, is in the works and very close to getting signed. Let's get the latest with Bloomberg's Abir Abu Omar in Dubai. Abir, can you give us the latest that we've heard from Iranian media now?
Yeah, good morning, Vonnie. So over the past 30 minutes or so, we're getting these reports from state-affiliated media. Semi-official Mer is reporting this statement, a 14-provision statement that includes some of the demands that Iran has in this MOU. Now, two caveats that are important here. One, we do not know if this 14-provision statement matches the one that President Trump has touted yesterday when he said that a deal is imminent and will be signed as soon as this weekend in Europe with the attendance of Vice President J.D. Vance. The second thing that is caveated is even with those 14 provisions that Iran has put through reportedly, it still needs to go through to the negotiating team and the government to finally be approved. So it's still subject to those final approvals. Some of the things that are mentioned in this statement include unblocking $24 billion of frozen assets, lifting oil sanctions, the unblocking of the Strait of Hormuz, and the removal of the U.S. blockade or the naval blockade in the Strait of Hormuz, along with some other things that we have talked about multiple times over the past couple of months. But the final stage of this deal would include discussing the highly enriched uranium in Iran, as well as what Iran has put through, again, reportedly, is the sanctions relief and the economic reconstruction program of Iran due to the damage that it has suffered because of the U.S. and Israel attacks. One other thing that has emerged as a sticking point over the past couple of weeks, Fani, is Lebanon and Iran in this MOU that it says, that Mer says has put through, the government has put through. It says that the cessation of hostilities by the U.S. would include Lebanon. Now, Israel came out earlier today and said that it was not privy to the MOU that President Trump had mentioned. So we still have to wait and see. Murky details still in the picture. But what it looks like is that markets are reacting positively across the board. We're seeing Brent crude prices at around $83 a barrel. Those are levels that we haven't seen recently. And so the market is behaving quite positively when it comes to this news. But the important caveats still persist. We have to await final confirmation through the official channels that we have monitored in the past, Fani.
Exactly, and there will still need to be more discussed as well, Abir. But I do want to point out the VIX also trading lower today, below 19 now. That's Bloomberg's Abir Abu Omar. SpaceX making history with a record-breaking $75 billion IPO, valuing it at almost $1.8 trillion. As shares debut today, Elon Musk is on the verge of becoming the world's first trillionaire. For more, we're joined by Matt Bloxham of Bloomberg Intelligence. So, Matt, I mean, we're looking at something that is trading at more than 90 times revenue. And in fact, it was loss-making in the last years that we have information for. Will that matter to traders?
Not at all. I mean, I think it's going to be loss-making and incrementally loss-making for quite a few years to come. I think clearly, the market's pricing this on the future opportunity, but as you said, on a 90 times trailing sales multiple, it has a lot of valuation to grow into, and so there's going to be a lot of focus going forward here on the execution. A number of kind of key catalysts coming up. For example, the next Starship rocket launch, perhaps in late June, early July, takes on incremental significance because that's a really critical platform for a lot of the plans that they have for the future of the business.
We also have with us JP Barnard, Bloomberg senior strategist. JP, what signals are pre-IPO trading in Europe and also on the crypto platform Hyperliquid telling us?
Well, it's amazing, and it looks like that the stock is going to be up there between like 30 and 50%. And I mean, like it's open to debate how reliable those prices are on gray market that is notoriously thin in volume and mostly driven by retail traders. So just a couple of millions can move the price a big deal there. But still, like the sentiment towards that stock seems to be extremely bullish. People want to have it in the portfolio. Space is an exciting technology. It could be the future connecting point between data centers and AI on Earth. And people seem to anticipate that, and so valuations and all the talk doesn't really matter. It's the story that matters and the idea going forward.
Matt, the company says it can pull in $28.5 trillion in the future, the vast majority of that from AI and some from Starlink satellites. It seems a huge number, but then again, as the FT pointed out today, no one thought people would buy clothes online at one point, and look at Amazon now.
Yeah, it is a huge number. You know, we just saw some of those kind of broker forecasts actually, and there were more optimistic broker forecasts out there, even on top of the Morgan Stanley ones. You know, I think that there's a massive amount of execution challenge here. You know, they've got to execute incredibly well across a whole range of sectors. They've got to displace the likes of Anthropic, Claude, OpenAI, ChatGPT to be a genuine market leader in the enterprise AI space. And, you know, they're coming from, you know, a long way back with the kind of Grok platform, you know, which has stumbled a bit in the recent past. So, you know, definitely there's a massive opportunity there for all these companies to kind of take hold of. But, you know, it's really down to execution now, and, you know, there are a lot of challenges ahead.
JP, when it comes to IPOs, the calendar often plays a role. Is that the case at all this time, though, given that it's Elon Musk and everything about Elon Musk seems to be unique?
That's a tough question. You're absolutely right. I mean, like the name itself, it like pulls in a lot of fan base and a lot of people that have a lot of faith in his ability to make even the most outrageous calls happening. And I guess Tesla is proof to that. To that sentiment. I mean, still, like, we are now in a very long bull run, and not just like in terms of length, but also like in terms of strength. And we have seen some really abnormal moves in the AI trade going upward, and SpaceX could just prove to be the latest one doing so. So in the short term, I guess like the bullish sentiment will prevail. The question, however, is like that whole AI trade is embedded in a bit of a shaky economic environment. I mean, like we have the geopolitical issue. We have a new debate about like if rates are potentially going up when inflation goes higher or proves sticky. So it remains to be seen if the timing, maybe looking backwards, was like misplaced in a market that it was like at the top. Or at the other hand, I wouldn't be surprised if AI proves to go even higher, and if this is just like if we are just in the middle or even the beginning of the whole trade.
JP, just briefly, what are the implications for market liquidity? There's been speculation that some of the Bitcoin selling, for example, was in order to get into this IPO. What are you hearing?
Well, that's a debate that some people are making room for that IPO. And so cryptocurrencies, the Magnificent Seven weakness there could be something that is being sold to make room. Like overall, the AI trade has proven over again that it's a winner-takes-all market, and that money is very happy to move very fast into the things that works, and is very happy to punish those things that don't work. So I'm not surprised if we see more of that brutal rotation.
All right, Jan-Patrick Barnard and Matt Bloxham, thank you both indeed. Coming up, we're going to be speaking with Laura Cooper of Nuveen. She says mega IPOs have minimal return potential in the first year. She joins us next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Futures pointed higher, oil lower now on US-Iran hopes. Of course, traders also bracing for the impact of SpaceX's IPO and what it might have on AI sentiment. Joining us now is Laura Cooper, Global Investment Strategist, Head of Macro Credit at Nuveen. Now, she says mega IPOs have minimal return potential for the first 12 months. Laura, before we get into the details, do macro traders care about the SpaceX IPO today? Is there a frisson of excitement? Will it make a difference to outlooks, for example?
Well, I think we're seeing a combination of FOMO and this embedded dip buying behavior that is really driving this robust retail demand. And it does matter, I would say, for macro watchers in the sense that these mega IPOs will be seen as a good barometer more broadly for risk sentiment.
You point out that the S&P 500, with all of these additions this year, potentially is likely to be more than 50% technology by the end of 2027. I mean, it's one thing if you're invested in the NASDAQ, but if you're in the S&P 500, would you hope to be a little bit less concentrated in tech than that?
I think it's just the nature of what we're seeing because AI is the dominant theme and we are going to see this tech concentration increase even further. And I think the challenge for broader equity exposures is that even if we start to see, okay, this diversification, this broadening away from those tech sectors over time, then that's going to still leave the broader headline index, fairly sideways. Lots of churn under the surface, but these small cap companies, as they increase, won't necessarily have the same impact in terms of driving those headline gains to record highs that we have seen.
All right, Laura, as I navigate you through the alarm that we are testing here in the US, can I also point to some headlines just crossing now that the US and Iran are nearing a peace deal around the G7 meeting next week. Now, this is according to senior officials. The US and Iran edging closer to signing an agreement to reopen the Strait of Hormuz, and it would be a memorandum of understanding. We already heard from Mayor this morning some details of the proposal, which include 14 points that would need to be agreed upon before all of the sides are in agreement. Laura, what would an actual memorandum of understanding mean with the potential reopening of the strait within 30 days? Not immediately, but within 30 days.
I feel like we've been here before in terms of these headlines, but I think from a market's perspective, probably a limited relief rally on the back of this. We would need to see clear confirmation that a deal is coming through, but as well, we would need to see a normalization of flows through the Strait of Hormuz. We would need to see signs that supply chain disruptions are going to be, alleviated over time. But if we look at the oil futures curve, it's already about $85, $90 a barrel through the end of the year. I struggle to see that coming off quite materially, particularly given this 30-day time frame. And so that suggests we are still going to live with this persistent oil pressures through the end of the year.
I want to ask you one question about the Fed and the economic environment as well, Laura. You say that the next move from the Fed is more likely to be a cut than a hike in spite of the inflation overshoot that we continued to see yesterday with the PPI.
And it is a bit of a controversial call, certainly given the rates repricing that we have seen with markets tilting more towards hikes. But I think at this juncture, yes, we are seeing those upward inflation pressures that is being driven in part by the oil persistence, this tech inflation with software price pressures really coming in more materially. And as well, we are seeing signs of labor market resilience, which does leave wage pressures to the upside. But But we think if this oil shock starts to fade, we will see that come off headline price pressures. And as well, we expect tariff effects to come off as well. So given that policy rates are already in restrictive territory, we think that we are going to see the Fed on an extended policy pause through the end of the year. We would really need to see a material de-anchoring of inflation expectations or some signs of wage inflation coming in more strongly, which is not our base case, really for us to have the view that the Fed will tighten into this energy shock.
All right, Laura, we have to leave it there, but thank you so much for joining us today. That is Laura Cooper of Nuveen. This is Bloomberg.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The World Cup is underway with Mexico beating South Africa 2-0 in the opening match. But as Wall Street Week found out, this year's tournament is raising questions whether the commercialization of sports has gone too far.
Manchester local Andy Milne arrived in Miami ready to cheer on England.
I can't wait for that first match. When the national anthem strikes up, and I know that kickoff is 2 minutes away, and it's England against Croatia, and our World Cup is going to start, there's nothing like that feeling in the world.
This World Cup, it feels a little different, to say the least, because I don't think it's accessible. This is the world's game. This should be a platform for everybody that loves the game all around the world to be able to come, to afford to come, as they've done in all of the previous World Cups, and I've been fortunate to attend 6 World Cups. But we've got the issues of dynamic pricing, the secondary market, and basically, I think FIFA has decided that this World Cup is where they're going to make a stated $11 billion and make this a very exclusive World Cup rather than what it should be, which is an incredibly inclusive World Cup.
we're a capitalist economy, and we subscribe to the adage of supply and demand. I do believe that we will see many kids and many families that will still be able to go. I think it'll be through different routes. But by the same token, there is a market in this country for events. There's a market in this country to buy premium, and I'd say we're seeing what the actual ceiling on that might be as a result of this World Cup.
For more, we're joined now by Bloomberg's Simon Hampton. Simon, you can go to a soccer match, your local club in England, all of the major matches that happen relatively cheaply, right? I mean, Champions League even. Why is it so expensive to go to these World Cup games?
Well, I think FIFA's taken one look at the American market and said we can make as much money as we can over here. And they've stated they're going to make, or try and make, around $11 billion, which would dwarf what they've made in any other World Cup. And you look at the American market, you look at the Knicks tickets for the NBA finals at the moment, and they're astronomical as well. You look at Super Bowl tickets, they're astronomical. And I think FIFA looks at that and think we can have a slice of that pie.
Is it resellers or is it FIFA?
Well, it's a bit of both. So FIFA did price the tickets far higher than they usually do. Around, I think the group stages, the cheapest tickets are still double what they were at previous World Cups. But then they've also brought in their own resale market, and the tickets are going far higher on that as well, and FIFA takes a cut.
Is there any regulator, because it feels like you'd almost want to boycott the games for this reason, and yet if you've been waiting all your life to go to a World Cup game, you can't do that, can you?
Not in America. So if you've got the money, you can go, but if not, you've got to pay a princely sum to get there.
All right, Bloomberg's Simon Hampton, thank you. Tune into Wall Street Week with David Weston tonight at 6 p.m. New York time.
But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank it's super important to have trust, and then public companies are trusted more compared to private companies.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Deal hopes the US and Iran edge closer to signing an agreement to reopen the Strait of Hormuz as G7 leaders meet next week. Stocks extending gains, oil sliding on optimism over that deal. And the Wall Street debut of the biggest ever IPO, SpaceX, set to begin trading after raising $75 billion. Let's get straight to these markets then, though, because this morning we got word from MER, the semi-official news agency of Iran, that there is a negotiation underway and it does still need to be reviewed and finalized by authorities in Tehran, but the draft has 14 provisions, including things like a permanent and immediate ceasefire of hostilities, full lifting of the naval blockade within 30 days, a reopening of the strait within 30 days. Now, again, we have heard much of this before, but it does seem to be taking shape in a more concrete way right now, particularly with the president coming out yesterday full of hope towards the end of the market session that this was going to happen. We're also getting word from officials that it all might get signed next week at the G7 meeting, which we know the president is attending. So you see this market reaction. Down more than 4.5% on Brent and WTI. Also down for the December contract, trading around now $82 a barrel in December. You've gas futures also much lower in Europe. Futures pointed higher this after a nice gain yesterday, particularly towards the end of the session. And adding to those gains now, we had semiconductor stocks up 12% by the end of the session yesterday. Space stocks also were clambering up the ladder before the IPO of SpaceX today. And if you look at bonds, we saw those yields drop pretty precipitously, trading now at 4.94 on the 30-year yield. That's an 8 basis point drop from yesterday, and 4.0232 on the 2-year yield. So pricing out about half that interest rate hike. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Vonnie. Today is, of course, SpaceX IPO day, and so we are looking at all of those space stocks that are very much in focus today. We are seeing the likes of Rocket Lab, Redwire, and AST Space Mobile moving much higher, and of course, it's because SpaceX is expected to be this blockbuster debut, and so we are seeing all of this enthusiasm around that industry feeding through into those companies. Moving on to Adobe, which is seeing some changes at the top. So the CFO is set to be leaving later this month, and this comes a few months after an announcement that the CEO would also be soon stepping down. And so we are seeing some weakness in the stock this morning and overshadowing what were otherwise actually strong results and a raised outlook actually from Adobe. And finally, let's go over to Europe, where European airlines are very much in the green this morning because of this potential peace deal with Iran. Of course, even if the Strait of Hormuz reopens soon, it will take quite a while for those fuel costs to normalize. But we are still seeing all of that optimism around the travel industry feeding through into the stocks, with Ryanair, Lufthansa and IAG all in the green this morning in Europe.
Sighs of relief in airline executive boardrooms today, I'm sure. Chloe, thank you so much. SpaceX set to trade on the Nasdaq later today. Grey markets predict the stock will pop at the open. Pre-IPO trading in derivatives linked to SpaceX, for example, indicates a gain of anything between 30% and 50%. For more, Bloomberg senior market strategist Neil Campling joins us now. Well, that would follow the pattern that we see, right, Neil? So as soon as retail can get in, there's a pop, but it doesn't always mean that that pop holds. Is it a 50-50 chance that the stock ends up holding its first print price today?
Yeah, so it's a great point, Vonnie. I mean, I think if we look back, we did some analysis of 66 of the biggest US tech IPOs since 2012. And we found that on day one, 86% of those listings finished up on the day. So the first day pop is pretty well set for most tech IPOs. How they fare thereafter, of course, is a different thing. Dispersion comes into effect. And about 1/3 of the IPOs have actually ended up lower than their IPO price a year later. So the first day pop isn't necessarily indicative of where the path of travel will take, but clearly the encouraging signs are that in those grey markets, as you mentioned, it's looking higher. And given this is such a massive deal, yeah, that in itself is certainly an encouraging sign at this venture.
Jim Chanos calling this a hope and a dream IPO. Obviously, the company has no tangible profits, he says. Will he be proven right eventually? I mean, you know, the loss last year was $4.9 billion, and we had almost that in the first 3 months of this year alone, but that hasn't stopped people before.
Very true. Elon Musk has had a history of very, very big plans. So clearly, if you look at the infrastructure that's in place, clearly they've done a great job in terms of the space side of things. But to build out data centers in space, which is one of the main tenets of this, is going to be extremely expensive. So it's going to take a long time for this to come to fruition in terms of profitability. That is for sure. But the path to get there is going to require probably more of these deals like the one they've signed with some of the other frontier AI markets. You've got at the moment, you've got OpenAI and Anthropic that are leading that race. But really to build out infrastructure, XAI as the key part of their total addressable market is going to probably likely need to raise more capital because, yes, they have said they are going to burn through a lot of cash to try and bring this to fruition over the course of the next decade.
Neil, Elon is obviously going to become a trillionaire today, but he's not the only one who benefits, right? Peter Thiel's Founders Fund has a roughly 3% stake. Sequoia Capital are going to reap billions. Google has a $6 billion stake and also is renting in an arrangement with the company. So it's going to mint a lot of capital that will presumably cycle back into the market somewhere. Where do people think that'll go?
Yeah, it's an interesting point, actually. We've just been looking at some data that's come out this morning from Bank of America and from EPFR. That's actually saying that we've got record tech inflows into the cash market. We've got record equity issuance and record equity inflows at the same time. So the liquidity is still in the market, which is a really encouraging sign. And it probably will help fund those other massive IPOs we've discussed before that are coming down the pipe. And with people expecting Anthropic to be one of the next ones. And don't forget, back in the day, Google actually bought 10% of Anthropic for just $300 million. So they've had a good capability of spotting the new tech trends for sure.
Neil, thank you so much. Bloomberg's Neil Campling there. Sticking with SpaceX then, Walser Wealth CIO Rebecca Walser says, we're participating come hell or high water, but our view is common sense. IPOs are often 85% emotion and hype, and SpaceX is all of that times 100. We suggest waiting roughly 6 months for insider lockups to expire and for the raw emotion to settle. Joining us at the desk now is Rebecca Walser, president of Walser Wealth Management. Did you have to fight your clients on this one, Rebecca?
Yes, obviously. I mean, I said, listen, token amount, great, participate all day today, but please let's just wait because I think that this is so much emotion, so much hype. Space, are you kidding? Elon Musk, are you kidding? 555 million.5 shares at a set price. I mean, it's just unbelievable.
Do you own Tesla, or what do you think of the sort of the Musk empire generally?
I think that the man is a modern-day Nikola Tesla. He's a genius. He is, his ability. I mean, let's be honest, Bonnie, when you are pricing in bonuses, if you can get a sustainable 1 million inhabitants on Mars, and that's priced into your pay package for SpaceX, I think that we're talking about an innovator who's charting uncharted territory.
So would you be concerned about Tesla? Does it thrive or strive if Elon Musk is further divided?
That's a great question, and I obviously do be concerned about any CEO who's got that much going on that's so disparate. I mean, Tesla is a data company. I mean, yes, it's robotics, but it really is a data company, all of the things that it's gathering. So there's going to continue to be a need for what Tesla does, separate and apart from SpaceX. But this is a new frontier, and I think that Elon Musk is a pioneer in it, frankly.
So what about the rest of the AI stack then? If you're interested in SpaceX, you're going to get in, but not for a while. Do you continue to invest in, memory chip makers and, other chip makers until then?
It's really interesting. It's almost like cannibalization if you think about it. So what we saw last year is the hyperscalers that are typically writing a little less than 30 billion in bonds actually wrote 121 billion in bonds last year because they saw, oh my gosh, this investment, this CapEx need is so high. We can't do traditional routes. It's something that we have to think outside the box we're going to have to do. So you saw that last year in the hyperscalers. Then you saw Google front run, new basically stocks shares, which has some dilution effects, but it was oversubscribed. It was supposed to be 80 billion, ended up almost being between 85 billion. So they're trying to front run all of this liquidity evaporation that's going to happen today with SpaceX and then Anthropic and OpenAI. So I think on the one hand, we need the CapEx from the hyperscalers to continue. You're seeing Micron, you're seeing the traditional legacy, memory, storage, all of these things that are being affected, swept up because they still are required on the infrastructure, on the compute, on all of the things that require to run data centers. So those, legacies are coming back into play, but they are demanding the CapEx to keep that valuation high.
Well, there you go. So then when you see a day where, a Broadcom just takes a tumble, or, a day where Korea is lower, does that start getting you a little nervous, or are you very, very confident in your thesis?
I'm extremely confident that we are at the very beginning stages of monetization, and that when we look back in even 60 months, we'll be like, wow, we were probably overall undervalued for the actual implications. This is going to change everything about everything. And that is not hyperbolic. That is the absolute truth. But it is going to take time to transition. So I am concerned that people don't have the wherewithal and the grit to withstand the volatility that happens when you're monetizing a new frontier that you don't really know a true valuation.
Do you have clients that come to you and say, I want to be short this, all of it? I don't want any part of it. In fact, I want to be betting the other way.
Yeah, of course. I mean, we deal with a lot of clients that are looking for cash flow guarantees because they're close to retirement and they're saying, hey, I don't need all this volatility. But then the problem is, Bonnie, as much as someone says, I don't need to be, I can be on the sidelines, I just need to, have my planning done. They see these outsized returns. They see the fourth industrial revolution, this frontier, and they just feel FOMO. Like, I can't live in this day and age and miss out. So what the solution is and to the amount of risk you can tolerate, participate. Otherwise, stay on the sidelines and just let's wait for the transition and monetization valuation to be more solidified.
And what do you do for those who want to hedge just a little bit? Hedging has become so much more complicated in this environment.
Yeah, so the fact is that we are tokenization of everything is the new wave, as we know. We are literally moving to digital crypto blockchain-based currencies, whether it's stablecoin, whether it's a mixture of all these things. That's the future. So what I would say is we must tether to hard assets. And so we will always be a believer in some kind of gold and silver position to hedge the risk that we're taking with the monetization, and we don't know where that value is going to come in.
Which is funny because gold, of all things, was staring at $44,000, just $4,300 just a couple of days ago. So, and I know you worry as well about the resurgence of inflation.
Absolutely.
So what do you do if you don't want inflation to eat away all your gold holdings?
So interestingly enough, gold is actually long-term a great inflation hedge. Obviously, if you go back in the history of time, anytime we've had any kind of Middle East war around energy, it has act as a risk on asset because central banks use it for liquidity raise. So they literally will, even as they're buying, central bank policy is to buy, they will literally go and liquidate because they need liquidity to deal with the energy crisis and how they're going to deal with all of these other supply chain issues that they have. So it is usually a risk on asset in the middle of war that deals with energy. But beyond that, if you look over time, obviously we got up to a high of 5,400. It's obviously retrenched back, but we're way off the 2,500, the 3,000, where it didn't go anywhere for decades. And it's really keeping up with the fact that the world is tokenizing and derivatizing all financial assets.
All right, Rebecca, good luck today. I know you'll be watching it, even if you're not participating until things settle down a bit. That is Rebecca Walser, President of Walser Wealth Management. Now to other top stories trending on the terminal this morning. European Central Bank Governing Council member Joachim Nagel says that the central bank is ready to hike again when it meets in July, if necessary. He says the fallout from the Iran war is proving too strong to ignore. High energy costs are having repercussions for other prices and are affecting core inflation. Global banks are curbing hedge funds' leveraged bets on Asia's top chip makers after a blistering rally this year, raising concerns of a pullback. Citi, JP Morgan and Goldman Sachs have raised the financing cost to take bullish wagers on SK Hynix and Samsung Electronics shares via swaps. Société Générale expanding into cash prime brokerage for the first time. The French bank has added around 20 people to its prime brokerage unit, mainly in New York. SocGen is likely to add more traders and salespeople as it seeks to widen the push across other geographies. Coming up, the US and Iran appear much closer to signing an agreement that would end up reopening the Strait of Hormuz. Details next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Iran local media is reporting that the U.S. will lift oil sanctions and the Strait of Hormuz will reopen this part of a memorandum of understanding. Officials tell Bloomberg that a deal could be signed during the G7 summit as soon as this Sunday. Bloomberg's Abir Abu Omar joins me from Dubai. All right, take us back, Abir. We got word from MER, the semi-official Iran news agency. What did it say?
Yeah, good morning, Vonnie. So look, a whirlwind over the past hour or so, but what we're getting out of this semi-state related agency in Iran is this 14 provision statement. They're citing a person that is close to the negotiating team, and essentially parts of those provisions include what we've been discussing over the past couple of months or so. That includes the unblocking of the $24 billion of frozen assets, lifting oil sanctions, the unblocking of the Strait of Hormuz, the removal of the naval blockade within 30 days, and ending all hostilities. That includes also on Lebanon. And remember, Lebanon has emerged in recent weeks as a main sticking part for Iran, where Iran said it refuses to go back to the negotiating table unless hostilities by Israel on the southern part of Lebanon, where where the backed militia by Iran, Hezbollah, is present. So Iran has refused to go back to the table unless those hostilities cease. And then Iran goes ahead and says, through, again, reportedly, this is not confirmed yet, it goes through and it says that the final agreement would include negotiations about the highly enriched uranium and a program to reconstruct Iran economically after the damages that it had suffered due to this war. So a few caveats to bear in mind here. One, this is not confirmed by official sources that we would have normally resorted to, like the foreign minister, the Speaker of the Parliament, or the president. And then the second caveat is that the MOU that is presented by MER is not, we don't know essentially if it is the same one that President Trump has touted yesterday when he said that a deal is imminent as soon as this weekend in Europe.
Right, because a few of those provisions had been red lines for the United States, for example, Abir. I mean, the permanent cessation of hostilities, which is something that Iran wanted, was never something that the U.S. was really willing to agree to. I also wonder about this $300 billion in reconstruction, not just from the United States, but also its allies. Will everybody agree? Perhaps that's why we're hearing about a potential signing at the G7. Do you think there's room for maneuver here still, that Iran would agree to something maybe a little less than this?
That is a very good question. And look, the other question is whether the U.S. would agree to this, because this 14 provision statement that Iran reportedly has put through includes a lot of concessions that would be in the favor of Iran. Now, a lot of the points that are addressed there go against what President Trump has said are his red lines. So he has been playing the highly enriched uranium being sent out and the halting of Iran's nuclear program very heavily over the past couple of weeks. And that is something he addressed that Iran is willing to accept. But some of the other things mentioned in these 14 provisions, for example, the unblocking of the $24 billion of frozen assets, that is something that President Trump and the Iran hawks in Washington have disagreed to settle to. But we also have the scoop that you have mentioned as well about the possible deal being signed on Sunday. Now, we know that the G7 meeting is happening in Evian later next week from the 15th to the 17th. Our sources tell us that a deal could actually happen. Those are European sources that have spoken to people on the Iranian negotiating team. But Vonnie, just something that is very important to keep in mind here that markets are not factoring in as of now is that this is heavily caveated because the official Iranian stance as of now is that the deal has not come through yet. So we'll have to see into the weekend and into what our Bloomberg Scoop tells us next week's G7 meeting. Switzerland was also played as a possible place where this deal could take place. So at least that factors into what President Trump had suggested about the signing taking place in Europe. So the puzzle pieces are falling into place a little bit, but we have to wait and see over the next 24, 48 hours.
Yeah, the market started to turn yesterday when the president said he had called off what would have been a third night of strikes against Iran. And then with this mayor draft today, it does appear that things are at least gaining steam. Bloomberg's Abir Abu Omar, thank you so much. Coming up, we're going to get you set up for your trading day. It's going to be a big one. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Apart from the obvious, we have University of Michigan sentiment data out at 10 a.m. Eastern, a view on what the consumer is expecting and whether inflation expectations are staying anchored. Plus, we also get Energy Secretary Chris Wright speaking at the Bloomberg Energy Security Executive Briefing today. And the world's biggest ever IPO, SpaceX, starts trading at some point today, probably around lunchtime. We'll have full coverage here on Bloomberg. And we saw some of those space stocks rocket higher yesterday as we approached it. Now, they had been selling off earlier in the week, but for example, Rocket Lab was up 7%. It was just one of the space-related stocks that moved higher. Many of them were up double digits, Satellogic and so on. Adobe came out with earnings, and even though it beat and raised, it fell after the CFO is departing the company June 15th. The CEO also announced he would resign earlier this year, and just generally, investors have been punishing beat and raise companies quite often in this market. And ExxonMobil, well, you can imagine it's falling after reports of a draft deal under discussion with the US. Let's take a look at the macro picture, because in fact, energy was really the only sector lower yesterday, consumer staples to a certain extent as well. But you can imagine that'll be the same story today with oil. Not just the prompt month contract, but also out as far as December and beyond, down more than 4%. Gas futures down more than 7%. And this is your picture for futures, higher after we had that massive rally, particularly towards the end of the day yesterday. The Nasdaq 100 was up 3.3% by the end of the session. Semis as a group were up 12%. You can see that looks like it might continue today, particularly if we get more details around this Mayer report and whether it jibes with what the US thinks is going to be that memorandum of understanding. We have the 2-year yield well down from this time yesterday, a good 8 basis points lower, in fact, pricing out a little bit of that rate hike. And the VIX, while not calm, is trading with an 18 handle. All right, good luck, everybody, today. That's it for Bloomberg Brief. Surveillance is next.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them. You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's a test for the market in terms of not just SpaceX, but the ripple effect across the rest of tech.
Everybody's investing in it. They've really hyped it.
The majority of the opportunity here, as laid out by the company, is really in the AI compute space.
Portfolio managers are now struggling on how to allocate these new offerings.
Just because something is a very hot IPO doesn't mean that in the 1 or 3 months that the returns are always as incredible as the trading on the first day.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, preparing for launch.
3, 2, 1, ignition. And liftoff.
We've got to get the IPO, SpaceX IPO going pretty soon, I think.
This feels like a milestone moment.
This is a war for capital.
Anyone that's owning SpaceX, you're buying it for the Musk factor.
The SpaceX IPO raising a record-breaking $75 billion. Shares indicated higher by more than 35% in shadow trading, putting Elon Musk on the brink of becoming the world's first trillionaire. The stock begins trading later on today.
By any measure, this was an incredible success, and it sets the stage for the other IPOs that are coming down the pike with Anthropic, OpenAI, and others. A lot of questions still swirling. A lot of people are going to be skeptical, wondering if people are buying to get ahead of index inclusion, which is going to be rapid. The idea of retail investor participation, which was far beyond what people expected, whether that's a positive sign or just a sign of the cult of Elon Musk. Once again, people will have different opinions about this. But what it highlights is people believe that the idea of missing out on this type of opportunity is more punitive than potentially getting in.
This is such a polarizing stock, and it will be for a long, long time. And through the next 3 hours, there will be two opinions that dominate the conversation, the polar opposite of each other. One opinion will sound like this: it's a bullish bet on the future, led by a CEO that you should never bet against. And the other opinion will sound like this: it's an unprofitable company, trading at 90 times sales plus, the promise of tech that doesn't exist yet, and maybe never will. And they're the two opinions that will dominate the next 3 hours.
And when you look under the hood, what actually is the moneymaker, right? What is this company? Is it selling space or is it selling connectivity? Is this Starlink with a space wrapper? And essentially, if you take a look at where the revenues come from, it is entirely from Starlink. I mean, you're looking at the actual $4.42 billion of profit coming from there. Everything else is a loss leader. The AI hopes and dreams, the CapEx is $12.7 billion versus a loss of $6.4 billion. I mean, you start looking at these numbers, and you can see the skepticism. But is there an alternative? At a time that is inflationary, where cash is not an alternative, that is part of the reason why people are saying maybe it's worth it. Maybe it's worth it to potentially go into this.
You're worth it, Bramo.
Thank you.
The IPO getting an assist this morning from the White House in a major way. Check out futures this morning, much, much higher. Check out crude, much, much lower. The president saying this yesterday: we've just made a great settlement of the war with Iran, and we're going to be subject to finalization of the documents, which we should get over the next few days. Probably have a signing maybe in Europe. The latest headlines coming out of the team in Europe and beyond is that US and Iran are nearing a peace deal around the G7 meeting next week. Look at crude this morning. WTI and Brent declining off the back of this.
What's fascinating is when there were initially headlines saying that the U.S. is going to strike even harder in Iran, the move was infinitesimal. And we said around this table, the market doesn't believe this. They don't believe that this is potentially going to be the re-escalation everybody was worried about. And sure enough, they were right. And frankly, the downside was nothing compared to the upside in markets on the announcement of some sort of ceasefire, even though we've been here before. So the idea, to me, the takeaway is the market action represents that people are more leverage to the upside of this, are more looking for the upside of this, and are ignoring some of the negative news that potentially could prolong this conflict.
Back in the 80s on Brent, I've been scarred. Keep going back to April 17th. Strait's going to reopen. Strait didn't reopen. At this point, I'll believe it when I see it, but I'm told we're getting closer, and we're getting closer.
Well, when you take a look at the state-linked media agency coming out of Iran, they were talking about the 16 points that Iran was agreeing on. One of them was an immediate reopening of the strait under Iranian guidelines. I mean, there are so many questions. If you want to look at the details, just don't. The less you know. Chris Verone, I am channeling you this morning. But if you look at the details, you think, what have we actually accomplished? Because ultimately, these are the same sticking points that we had maybe 2 months ago.
Stocks up by 0.5%, call it 0.6% higher on the S&P. Crude down by 4%. Coming up this hour, Steve Orth of Federated with SpaceX set for its record-breaking debut. Pierre Fadagou of New Street Research, the first analyst call on the stock, and Justice Palmer of Fortuna Investments as we test the so-called Elon premium. We begin this hour with stocks holding steady as SpaceX prepares to make the biggest market debut of all time. Bloomberg's Ed Ludlow is breaking down the numbers for us. Good morning, Ed.
Yeah, good morning, John. So steady, $135 a share, 555.6 million shares, the valuation 1.8 trillion. And this was atypical. This was unusual, right? There's still a lot that will come out in the wash and needs to be worked out on the allocations. But generally speaking, Elon Musk and the rest of the SpaceX C-suite controlled this. The bankers will get paid, but it's not clear to me how much work they did on it. Like, there was a lot of company control. And the idea on the retail allocation is that they believe, and the audience of Bloomberg Surveillance may not like this, but the retail investor understands the story much better than Wall Street does. It was really interesting to hear you and Lisa talk about this idea about the bull case and the bear case, or whether you believe the Elon Musk part of the story is a referendum on him, or you focus on the numbers, the lack of profit, and how distant this is. SpaceX has been pretty clear. Behind closed doors, yes, but that if you are investing in this IPO and participating, you are doing it on a very distant future and timeline. There's this idea that it presages other IPOs, Anthropic and OpenAI, but what I found very interesting in the last 7 days, and constantly being on the phone with everyone around the table, is that they see SpaceX as an asset one of one, right? A much more diversified company than people give it credit for, but very different to Anthropic and OpenAI. And the idea that capital markets will support all three, that there'll be some IPO window, actually, I don't think that is a widely held view as perhaps we previously believed.
So, Ed, it's a record-breaking IPO, without a doubt, but it's the second biggest equity capital raise of the month.
Exactly.
Alphabet with an upsized $85 billion in the last couple of weeks. And I just wonder how quickly Elon Musk and SpaceX will come back to the equity market to tap it once again.
Quickly, right? And one indication of that was the reporting we did that even prior to trading today, they'd already got IG status from the three main agencies, credit rating agencies. This is not a race to IPO, it's a race for capital. And everyone is very clear and very sort of comfortable with that idea that you have to make a decision. There's not infinite liquidity in the world. People will, and in part, that's why, when we were talking endlessly about the indices or indexes fast-tracking SpaceX inclusion, and the idea there'll be this massive passive rebalancing, like that is a factor, but also they'll come back to the capital markets very quickly in conjunction with Alphabet that's already gone, but probably also the reporting about Meta, Amazon across debt and equity. It's a really interesting time. But again, I was listening to what Lisa was saying. Every 8 days, somebody phones me, somebody already on the cap table at SpaceX, and says, I actually don't put too much on the software part of the prospectus and the 26.5 trillion TAM on enterprise AI. This is a much more diversified business currently. They've played a blinder, becoming a neo cloud by renting the capacity to Anthropic and Google, but they are putting themselves in the same capital race as those hyperscalers are. Raise money, deploy CapEx.
Ed, it's good to see you. Looking forward to your coverage throughout this morning. Ed Ludlow in New York. It's kind of nuts, isn't it? Biggest IPO we've ever seen, almost 3x the previous biggest, and it's only the second biggest capital raise, equity capital raise of the month so far.
As Ed and many others have said, this is a race to capital, and you got bigger ones in line that want to get in first. Congratulations, Alphabet. You managed to just front run absolutely everyone, and let's see if you can do it again.
Here's the view on Wall Street this morning. Steve Orth, the Federated, writing, a flood of supply is coming, starting with SpaceX today, but the gap between equity returns and their public market alternatives remains large and should continue to expand. Steve, welcome to the programme. Great to cover this record-breaking story with you. What does this market mean? What does this IPO mean to this bull market, Steve? Can you frame that for us this morning?
Well, we're at the beginning of a new frontier here, and it's very exciting. And it's quite likely real in our view. I mean, our guys have been down there, Starbase. This is a real company. It's got hard assets, which is something we think is coming back into favor now. and it's opening up a whole new world. It's hard to evaluate it entirely, but on a price to sales basis, it's actually not as crazy as some of the deals and some of the evaluations of things like the SaaS companies 5 or 6 years ago. So yeah, we think this is very real and is likely to be a pretty successful IPO.
Steve, what are you buying when you buy SpaceX? Are you buying the space shuttles that are going to take us to Mars? Are you buying data centers in space? Or are you buying Starlink and the promise of XAI?
Well, Starlink gives you a kind of base, Lisa, for sure. Kind of the cash cow. I mean, it's hard to call a business growing that quickly as a cash cow, but the rest of the business is potentially going to be revolutionary. I mean, if you can, and they have already just demonstrated, they can bring stuff back and forth to space. The cargo space that they've got there is pretty large, and it lowers the cost by thousands of multiple points to bring things back and forth to space. And we think data centers, I mean, okay, Elon is a little bit, optimistic, but data centers in space are not that far off. I mean, the biggest problem they've got to solve is the water, the cooling problem. But they've got ideas of how to do that. The cost of data centers is enormous right now, the energy flow, et cetera. If you can eliminate that, you change everything. So that's just one application, but could be pretty significant here. I'm not Elon Musk. I don't have the creativity to come up with this stuff, but I'm sure people thought Thomas Edison was nuts in his day as well.
Yeah, I'm looking up spacesuits, actually, that can take me to Mars. And they cost a ton of money, but they also weigh about 300 pounds. But extravehicular mobility unit, maybe I should invest in one. Steve, I wondered what this says, though, about the broader moment, not just investing in SpaceX and some of these other IPOs during a race to capital, but the alternative, which is cash in an inflationary environment. Is there a feeling that it is better to potentially jump on a train that could end up being a bit speculative, the remaining in cash that'll get blown out from inflation?
We think that one of the things that's happening here, Lisa, when people complain about the amount of capital raises going on in the U.S. right now, first of all, they're dwarfed in terms of the size of the U.S. equity market. So SpaceX, $75 billion. The U.S. equity market is $75 trillion. That's about 1,000 times higher. Cash, you mentioned, $7 trillion. Fixed income markets, 150 trillion. You've got 150 billion, sorry. And then you've got, foreign equity markets are about $55 trillion. So there's a lot of money outside the U.S. and outside of the U.S. equity market. And we wrote a piece a few weeks ago about this. Maybe equities don't have a bond problem. Maybe bonds have an equity problem. I mean, if you look at the returns on fixed income or cash relative to equities over the last 5 years, it's been really, really low. I mean, in fact, fixed income is flat over the last 5 years. And that included a big downdraft in 22, which was actually worse than the downdraft in equities. So we think what's happening here is the markets are starting to figure out that the U.S. equity market, the way it's structured, the kind of companies that we've got here, the productivity gains that are going on, the unprecedented margin expansion. As you know, we just raised our out-year earnings estimates again to 450. We think it's really quite realistic going out 2 or 3 years here. So, yeah, the equity market looks pretty good to us. We're not going to be shaken out. We've been telling our clients, look, there could be a pullback here. There's all these different reasons. You guys, are covering them really well, including the Fed chair new and the midterm elections and the Iran war is up, it's down, it's in between. And there could be a near-term correction, but we don't want to sell rallies here. We want to buy dips, and that's what you do in secular bull markets. And sometimes it's hard to recognize you're in a secular bull until you were in a secular bull, but we're in one right now.
Steve, can we wrap it up with a 12-month bet? No money involved. If you had to take a bet right now, your best guess, what's going to outperform in the next 12 months? The NASDAQ with those IPOs included or the S&P 500 without them?
S&P 500, we're expecting a broadening out here. In fact, we've already had a broadening out. Year to date, small caps are way ahead of the S&P 500. And we anticipate, that the broadening out is going to happen. The companies feeding SpaceX are going to do well. The whole infrastructure is growing out right now, and we think that's probably good for the broader market.
Okay, Steve, good to see you. It's great to catch
Likewise.
up, buddy, as always. Thank you. Steve Orth there, Federated, on this record-breaking SpaceX IPO.
I'm really getting into this NASA Z2 spacesuit. I'm thinking about investing in it for my sons because I think it could actually be really helpful when they're fixing the data centers in space.
This is the conversation we'll have throughout this morning. How do you value a company like this? If you took Elon Musk out of it, would it be worth $1.8 trillion?
Not this conversation. You're just going to ignore that. Move on.
I'm going to try and make it a little bit more sophisticated.
Good. Okay, carry on.
Are we valuing this on Starlink? Is it a comms company? Or is it XAI? Is it orbital data centers, etc.? Is it an AI infrastructure company? What is it? What will it be? What is it now and what will it be? And how do you value it with that in mind?
It seems like the overlay of the promise of space, which, as Steve was talking about, there are some really real prospects. And frankly, the reason why Elon Musk's SpaceX has done so well is because they can take satellites up to space for other countries and entities to create connectivity. If you can leverage that, that could be, a moonshot.
A moonshot? Going to get plenty of puns this morning, aren't we? Futures this morning positive by 0.5% on the S&P with an update on stories worldwide with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. President Donald Trump saying, quote, "We ended the war with Iran." The president saying a deal will be signed imminently. Iran's semi-official news agency MER saying the U.S. and Tehran are still negotiating a potential agreement. And it's officially the biggest initial public offering of all time. SpaceX raising $75 billion in its IPO, pricing more than 555 million shares at $135 each. At that price, Elon Musk's company has a market value of about $1.8 trillion. And of course, this historic IPO is set to make Elon Musk the world's first trillionaire. When combining his stake in SpaceX with his Tesla holdings and other investments and properties, his net worth tops $1 trillion, John. That's your Bloomberg brief. John?
Crazy. Absolutely crazy. Isabel, thank you. Appreciate it. Up next on the program, SpaceX preparing for launch.
Anyone that's owning SpaceX, you're buying it for the Musk factor.
I think there's plenty of money for these iconic IPOs.
This feels like a milestone moment.
Up next, we'll catch up with Pierre Ferragu of New Street Research, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
record-breaking IPO, an unbelievable amount of money, $75 billion raised. The previous record was about 29. That was Aramco. We have dwarfed that, absolutely dwarfed that with this one from Elon Musk and SpaceX. For the broader equity market, better than good this morning. We're up by about 0.5% on the S&P, on the Nasdaq up by a similar amount. Crude with a helping hand, an assist from the White House. Crude down by close to 4%. We're back in the 80s on Brent as we drift closer and closer to a signing ceremony, we're told, between Iran, the US and others.
Yeah, it's going to happen next week at the G7 meeting because now everything is fine after the momentary threat to potentially escalate quite significantly. The idea that we're seeing the lowest oil prices going back 4 months gives you a sense of just how much people have moved on. And ultimately, you can tell by the fact that the market didn't bid up prices of oil significantly yesterday and the threat of escalation.
Yep.
You can see where the bias is.
They moved on. A long time ago, they've moved on even more. Under surveillance this morning, SpaceX preparing for launch.
Anyone that's owning SpaceX, you're buying it for the Musk factor.
The majority of the opportunity here is really in the AI compute space.
Feels like a milestone moment.
I think this cycle is so powerful that you have to be involved in these. It's just a matter of how much and what the timing is.
I think there's plenty of money for these iconic IPOs.
This is a war for capital.
SpaceX making a historic public debut, raising a record-breaking $75 billion, the biggest IPO of all time, pushing Elon Musk closer to trillionaire status. Pierre Ferragu of New Street Research becoming the first analyst to initiate coverage of the stock with a buy rating and 165 price target, writing the space opportunity is large and diversified. Our $2.3 trillion valuation assumes they win 75% of this market. Pierre joins us for more. Pierre, good morning, sir. It's good to see you.
Morning, John.
We've got comms, launch, AI infrastructure. What's driving the valuation of this company?
It's an excellent question. When we looked at that, we figured out about half the valuation of SpaceX today comes actually from combining artificial intelligence and space. Because space today is a lot of cash flow. It's very cash generative. The telecom business is generating a lot of cash. And if you have access to your own cash flow in AI, you can buy your own infrastructure. That makes it much cheaper for you. You don't have to pay a margin to a cloud provider providing you your infrastructure. You have to imagine Anthropic and OpenAI are raising money in the market to pay the bill, but they can't buy their own data centers. And xAI is by building their own data center, massive competitive advantage. And then you look at that further down the line, in 5 years from now, SpaceX will be in a position to really put to orbit gigawatts of data centers.
Well, let's sit on that story, because that forms the valuation in a major way.
Yes.
Does the technology exist that forms the basis of that story? Or is this another full self-driving over a Tesla? That's what the critics will ask this morning. How do you address that question?
So you look at the technology roadmap of the industry today, which is about stuffing more and more compute power into bigger and bigger integrated packages. This is really what space needs in terms of compute. And this is in the roadmaps today, and it's like, it was in the roadmap before we looked really seriously at space. So I think there is no significant technology roadmap.
At this point, how much more money do they need to raise for CapEx? Because I'm looking at some of the CapEx expectations for the different units, whether it's AI, space, or connectivity. You're talking more than $20 billion. I mean, how much more are they going to tap the market for?
Yeah, it's a good question. So we have our own forecast. We are not in the syndicate. We are not like in the game of like pushing up the forecast as much as we have. To give you an idea, we think the company tops like $200 billion of revenues in 2030. At that level of growth, which is less than what the syndicate is pitching, we think the company can sustain itself without raising more money. If they want to grow faster, if they can grow faster, they could go back to the market to raise more capital. And it's mostly going to be about building out the data centers.
How much is SpaceX paving the way for OpenAI and Anthropic versus a completely different story that is hinged to the hopes and dreams of Elon Musk and the cult factor among retail investors?
It's a good question. I guess it's a very, very unique story, equity story. You see like 4 times oversubscribed. It's $250 billion interested in investing in SpaceX. Investors we speak to are more interested in understanding like the broader space opportunity than the specifics of of the AI story, but they come to realize and understand that actually it's combining space and AI that really creates the opportunity.
What is the Musk premium here? If you took him out of this story, what's the company worth?
Well, I guess that you wouldn't have rockets flying without him, right? So the Musk premium is extremely significant. It's critical simply because the timeline, only Musk can put up the timeline and say, oh, I'll have all these data centers in orbit in 3 years.
And people believe it too.
I don't know. I think people accept the idea that if Musk says, I'm going to do it in 3 years, people are like, there is a very high probability it's going to happen in 7 or 8 years. And then, it's a whole discounting game where the Musk factor is you accept a discounting on a much longer period of time, but that's because it's Musk. That's the way Tesla is trading today.
What happens if he leaves?
Is he going to leave? No.
Well, it's like... Thank you. I appreciate it.
It's a good question. He never left, so we don't have a precedent for that.
No. So the answer is just no.
Musk's talent is to attract talent. So like the density of talent at X, at SpaceX, at Tesla is incredible. So the days he leaves, he's not driving anymore. I mean, like we were wondering the same about Apple a decade ago with Steve Jobs, and so we will have to see.
I've only got 45 seconds left, so this is a few words, if you can. How quickly before we combine Tesla and SpaceX? We're talking months, years?
That's a good question. I think right now is not ideal because Tesla is spending anyway a lot of money on their own and on the Terafab. Some of that will help Tesla. And then once they do that, it's very interesting to have access to the free cash flow of Tesla. And then there is an element which is politics. Which is like it's probably easier to do it before the end of 2028 than later.
Pierre, it's good to see you. Thank you, buddy. Pierre Ferragut there of New Street. What an achievement by Elon Musk from New York City. You're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Futures positive this morning, up 1/3% on the S&P, back on track on the Nasdaq, up by 0.2%. The equity market rally fading just a little bit in the last 15 minutes. We'll get to the Iran factor in just a moment. Yes, we have to talk about it. I know that some of you don't want to talk about it. Some of you being Bramo, but we'll spend some time talking about it.
It's totally important. It's just an absolutely frustrating, it's a maddening story.
I agree with you. I totally agree with you.
Yeah, I think the market
You won't get pushback from me. I think everyone's absolutely exhausted by all of this. The equity market back on track and heading towards a 10th week of gains out of the last 11, which is crazy. Let's turn to the bond market. 2s, 10s and 30s. Yields looking like this morning. Things are quiet, unchanged. 2s at around 4%, 10s around 4.45, 30s a dip below 5%, 4.95. Helped out by this move in crude, which has been declining in the last 24 hours or so. Crude down about 3% to 87 on Brent, back in the 80s, which is crazy. 85 on WTI. Bear in mind that we were $10 higher Monday morning on Brent crude. Getting closer to a deal, I'm told. The contours of that deal, though, bit of pushback from Iran about what will and won't happen in the next few weeks.
The idea of the Strait of Hormuz going back to the way it was before the war, where there was free passageway, is not in their cards. They would like to have some control over the Strait of Hormuz, which makes sense given the fact that is a huge point of leverage. Again, we go back to how much has actually been settled with these negotiations. There has been, though, a change in the understanding of the supply-demand dynamic, and Dan Stroyven over at Goldman Sachs put out a note saying he's actually downgrading his expectation for the price in 2027 because you have some of the countries in the region increasing their output, and you have a structural decline in demand coming from places like China.
For now, at least.
For now.
They can change. You know, but I'm with you. The electrification of China, etc. We've seen demands drop. They've pulled back a lot.
Which is part of the reason why you haven't seen perhaps a bit of a spike upward in the face of some negative news.
Brent crude this morning down by about 3%. We'll spend some time on that in a moment. On our radar this morning, our top story, the SpaceX IPO raising $75 billion in the biggest market debut of all time. The record offering at $135 per share, putting Elon Musk on the verge of becoming the world's first trillionaire. BlackRock seeking to buy at least $5 billion worth of SpaceX shares. Sources telling us here at Bloomberg the firm joins Middle Eastern investment funds offering to place orders of $1 billion or more. Shares experiencing a surge in shadow trading and pre-listing markets. Derivatives from brokerages like IG indicated an expected opening price of $180 to $184, a 35% premium above the $135 IPO price.
Yes, this is going to be really important to watch because A, it sets the tone for the other IPOs that are coming to market. B, it raises questions about the way this was done. A price set before even the roadshow, which is notable. And C, it really highlights just how much demand was left on the table. You talked about skepticism about how far oversubscribed this deal was. That is always what people say because you put in a greater ask for the allocation because you know you're not going to get it. If you do see a rally like that, you might be able to conclude that that was actually real demand ahead of the inclusion in indexes and ahead of what a lot of people are expecting is a sea change in our understanding of our place in the universe.
In some ways, this is the Elon Musk IPO. In some ways, in fact, in many ways. We were just talking to Pierre Ferragut. Without that individual, this company isn't where it is this morning. This stock isn't where it would be this morning. There is only one man that could have really pulled this off. So it's difficult for me to look at this story and say, this is what it means for the broader market. I don't really know. This is what it means for everything that Elon Musk owns, because there are so many people that follow him and are willing to bet on him.
The idea, though, that they're willing to bet on him right now, given how much money he's raised in all of his companies, gives you a sense that people want dreamers right now. And I don't want to get too philosophical, but there is $8 trillion in money market funds right now. I was just looking at this. That's up from $3 trillion back in 2018. It has been a huge climb. If people want to put that money to work at a time that everyone is saying is an industrial revolution, well, why wouldn't they bet on feasible propositions that could potentially be game-changing. I mean, it's an infinite universe, literally, in terms of the market share if you do monopolize space.
It's a massive bet on the future. Elsewhere, we've got to talk about this story. The president insisting a deal with Iran is very close after reversing his threat of more military strikes.
We just made a great settlement of the war with Iran, and we're going to be subject to finalization of documents, which should get done over the next few days. We'll probably have a signing maybe in Europe.
Iran state media reporting Tehran and Washington are negotiating a potential deal. The details still not yet finalized. Tyler Kendall has the latest. Hey, Tyler.
Hey, John. Well, new this morning, senior G7 officials tell Bloomberg News that a senior Iranian official did indicate that a deal could be likely and signed as soon as this weekend in Geneva. Yesterday, President Trump indicated that Vice President J.D. Vance could take part in any such ceremony. The president himself isn't expected to land in Europe for the G7 summit until Monday. But our reporting does caution that at this point, Iran has not indicated that it is ready to sign and that previous diplomatic progress hasn't materialized. We're trying to figure out exactly what could be in this memorandum of understanding amid a flurry of reports from Iranian state media this morning that the two sides are working on apparently a 14-point agreement, but some headlines crossing that could risk derailing this progress, including this one from just moments ago, that Iran says that it will not restore the status in the Hormuz Strait to what it was to pre-war levels. Other contingencies that Iran has demanded in this agreement include seeing the U.S. unfreeze at least half of its frozen assets, and oil sanctions need to be lifted. Other than that, we also are learning that Iran is still demanding that a ceasefire needs to extend to Israel's front against the Iranian-backed militant group Hezbollah. These are all risks here that could stall the progress going forward, though at this point, the White House says that diplomacy is still viable.
Tyler, stay close. I have a feeling we'll have more headlines between now and the end of this programme. Tyler Kendall down in Washington, D.C. To build on the conversation, the former Deputy National Security Advisor Victoria Coates writes the following. President Trump has demonstrated that he can bomb what he wants, when he wants in Iran, and there's little or nothing the regime can do about it. Victoria joins us now for more. Victoria, welcome back to the programme. The US has demonstrated repeatedly that it has military superiority over Iran, both in the skies and intelligence and so on and so forth. How do they ensure, the US, that they translate that superiority into a superior deal that benefits the US?
Well, good morning, John. Yeah, I think we've actually seen that play out in real time over the last couple of days. And I admit I am a little nervous that Tyler's going to pop back up with another changing headline in this current news cycle. A lot of things are shifting. So take all this with a grain of salt. But it looks like what happened to my eye is that, everybody thought the president was done with kinetic action. He wasn't going to go back in. The Iranians were, as he says, tapping the Americans along. And he decided, you know what, we can go back in. We can go and bomb a bunch of these sites. And I've heard them described as blinding targets. So you're getting rid of their radars, their ability to see things, their ability to launch missiles. Did it for 2 nights and then threatened Karg Island. And I think the Iranians thought, wow, maybe this isn't what we've been dealing with for the last 45 years, and that we need to make a deal or else we're going to sustain damage that we can't recover from. So I do think that military superiority is a fact. We are the ones who are stopping ships in the Strait right now. They are threatening ships, but we're shooting down their drones. We're the ones who are actually disabling the tankers. So that's the reality the Iranians face. Hopefully it means they're going to start making some better decisions.
Victoria, with all due respect, I'm looking at what the market reaction was yesterday, and that was not the interpretation of the market. When the initial headlines came out in the Truth Social post from President Trump, the reaction in markets was, we don't believe you. You've talked about a potential escalation before. Why should this be any different? And essentially, if you take a look at what Maris is reporting, the semi-official news agency out of Iran, it's a 16-point deal or 14-point deal that includes some that are still very controversial and similar to what they were a couple of months ago. What gives you confidence that anything was accomplished?
Well, I mean, I don't actually get my news from there. They haven't proven terribly reliable in the past. What they tend to be is a messaging device actually to the Iranian people from the regime. They're trying to signal to the Iranians what they want to have in this deal. And so this is, and to my eye, a lot of wishful thinking out of the Iranian regime. I'm going to wait and see what's actually in the deal. before I just make up my mind about it. But obviously, Lisa, we're dealing with the Iranians. They have been obstreperous before. That is that's their brand, if you will. And they're going to try to continue the sort of stalemate we're in as long as we can. But I think the fact that the president has both been willing to do hugely more than any other American president to degrade that regime, to degrade their nuclear program, to demand his red lines, and then was willing this week, when in a situation where there is significant political pressure on him to, wrap this up, get to a deal, any deal, but he hasn't been doing that. He's been sticking to his red lines. So, as I said, I'm going to wait and see what's actually in the deal rather than believe Mayor. And, as for market reaction, I mean, the stock market went up 1,000 points yesterday. That's not a bad thing.
Well, Victoria, what gives you confidence that this time something has changed in the negotiating position from Iran?
Well, it looks to me like they are shifting, that they are realizing that the situation for them is one of diminishing returns. And so, they can demand to have control over the strait going forward. But the fact of the matter is that the rest of the region that they've so completely alienated is busily building infrastructure to make that completely irrelevant. So you have the Saudi Petroline pipeline that we've discussed. We've got UAE building the Fujairah pipeline around the strait, and talk of a natural gas pipeline that Qatar would have access to across the Arabian Peninsula. So the Iranians are in a position where they have fewer and fewer cards, even if they are if they are obstinate at the negotiating table, and eventually, they're just not going to have that much regional leverage.
Thank goodness the Saudis built the East-West pipeline, Bramo. Thank goodness they'd done that. We'd been in a very different position over the last 3 months.
Yeah, and everybody is saying that more pipelines like that will be built, but it's going to take a while, potentially years, especially as they're all trying to do it at the same time and materials are limited.
Victoria, always good to catch up. We'll keep tracking this. We'll get you back on if things change. Things will probably change. The former Deputy National Security Advisor, Victoria Coates there. The latest on energy a little bit later, the Bloomberg Energy Security Executive Briefing with Anne-Marie. That's where she is. She's on the road now.
Yeah,
and in
I know.
Houston, Texas, I believe.
Yeah, just want to make a quick note. Houston, I believe, is a short jump over to San Antonio.
Are you suggesting she's not there to catch up with the Energy Secretary and Mike Wirth of Chevron?
I think it's a very convenient kind of meeting, and Saturday night.
Stop.
I mean, that's her break to get refreshed before she goes to San Antonio for Saturday night's game.
To watch the basketball.
Exactly.
That's what this is all about. Dow Points. Did we just have Dow Points quoted on the programme a little bit ago? About a few minutes ago, Victoria Coates.
Yeah, I
quoting
think so.
Dow Points.
Yeah,
all right.
that was good.
Let's get a memo to the Heritage Foundation. We don't do Dow Points over here. All right.
Please, you can go do that.
To the control room. Let's fix that. OK, let's get you an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. The SpaceX IPO drawing demand for more than 4 times the available shares. Retail traders placing more than $100 billion in orders for the stock. The company is expected to allocate 20% of the available shares to retail investors, which means most orders won't be filled. And shares of Adobe trading lower in pre-market. The company announcing record second quarter results and announcing its CFO is leaving next week. Adobe's CEO said in March he would be stepping down once his successor has been appointed. And in sports news, the World Cup is officially underway. Mexico winning the first of 104 matches, the co-host defeating South Africa 2-0, and South Africa beating the Czech Republic 2-1. The United States is playing its first game against Paraguay at 9 p.m. tonight. That's your Bloomberg Brief. John?
Isabel, thank you for the update. What was that game about, the first game? The officiating of that game?
Well, yeah.
3 red cards?
Red cards, yes.
What are we
instead of
doing
yellow
here?
cards. Although, you can't just go and sock someone. You can't just go, if you don't like them, you can't just go punch them.
I didn't think it was that violent. I didn't. It was like reaching across. And
so you think that's acceptable?
I think it used to be.
Okay, but it's not anymore. Now we have rules.
Yeah, I get that.
Yeah,
We've got video replays.
We've got video replays. Some of them, though, I think were a little bit.
We have to leave an elbow in, Bremo.
Yeah, with like brass knuckles. Yeah, you played a different kind of.
I certainly did not.
Different kind of football.
I certainly did not play like that. Up next on the programme, a big test for capital markets.
It's a momentous transaction. It shows you the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space.
Up next, we'll catch up with Justice Palmer of Fortunate Investments from New York City this morning. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from New York City. Welcome to the program. Equity futures this morning positive by 0.4% on the Nasdaq, up by a third. I call it the supply monster. We have had so much equity supply, debt supply too, in the last few months. When we caught up with Ed Ludlow earlier on this morning, we were talking about the fact that this is the biggest IPO we've ever seen, almost by a factor of 3, more than 2 times the size of Aramco, and yet it's only the second biggest equity raise we've seen in just the last few weeks.
Alphabet came out earlier and dwarfed this before. It starts to raise a question. We've seen all of these debt raises that have been huge, right? We see Oracle with more than $100 billion of debt that they've raised in the past couple of years. And people just were talking about how that's big debt issuance. But now equity is getting into the game at actually a lesser value point. So how much does this distort valuations in equity markets, or equity markets expanding to include the opportunities in space and beyond?
Accommodating a record-breaking IPO. Under surveillance this morning, a big test for capital markets.
It's a momentous transaction. It presages the beginning of a pretty sizable wave of IPOs. It shows you that the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space.
Here's the latest this morning. SpaceX, a record IPO testing the Elon premium and igniting debate over the $1.8 trillion valuation. Fortuna Investment CEO and SpaceX shareholder Justice Palmer thinks the price is right, writing IPOs priced too high tend to pop briefly and then trade underwater. A valuation that leaves room for the stock to run is far better than one that sets it up to disappoint. Justice joins us now for more. Justice, welcome to the program. I've talked about the blind spot that I have. A blind spot that I have to imagine what these companies could be. And if this was not 2026 and it was 1997, I'd ask the following question. How is a bookseller priced at 28 times sales? How can this company do anything other than sell books? What will it be? I've got no idea. Are people asking similar questions about this company? And are they the right questions?
Yeah, good morning, John. Great to see you. And I absolutely unequivocally think that those are the right questions, right? Because, the valuation in any kind of conservative approach or pragmatic right now numbers probably don't line up the way that most fundamental and certainly most value investors see things, right? But to your point, you're always able to grow into something if you are a one of one, a very generational type of company. And so keep in mind, I just want to flag 2 things on what you said there, John. One, you were talking about, the Amazon IPO in the late 90s. So keep in mind, Amazon actually went out at about a $400 million valuation for whatever it's worth. Yes, the metrics were, kind of aggressive, but the value of that company is only around $400 million. You think of that, right? And I only flag that because What the retail and institutional investors were able to do in that situation was they were actually able to ride the stock over 20 years in the public markets. And so I just want to deviate that from what we're seeing this morning with SpaceX coming out at, let's say, $2 trillion. A lot of that growth has actually happened in the private markets versus the public markets, for whatever it's worth.
So that's the question I want to ask about this particular IPO. So here we are at 90 times trading sales, and this time we're raising $75 billion. And in many ways, we're talking about a future that doesn't exist yet by definition, and we don't necessarily have the technology to fulfill it. Why do you have the faith that we will in the not too distant future?
Well, I think if you look at the background of human civilization or American business, I mean we're always doing things that are impossible. I mean what seems very plausible and possible today wasn't the case 10 or 20 years ago. So we've got great world-class one-of-one generational entrepreneurs, folks like Elon Musk, folks like Jeff Bezos, who you mentioned before. And so these people are always going up to the plate to try and do the impossible. And that is, I think, the story, right? I mean, there was no reusable rockets before Elon Musk showed up. There's none of, there certainly wasn't the cadence of satellites going into outer space before Elon Musk showed up. And so I think that is the story. And so, obviously the bear case is 90 times sales doesn't make any sense. But the other side of that is if these entrepreneurs can continue to keep innovating, the capital markets can keep funding their dreams, magical stuff really happens. And I think what you probably will see, and again, the not too distant future is a relative term for a lot of different folks. So what I would say is the next 5 to 10 years, I think what's plausible is the company starts to double sales year over year. Let's say they're doing $20 billion this year. I think they can get to 40 next year. I think they can get to 80 the year behind that and start to really get that flywheel moving. And then from that perspective, I think the valuation backwards looking will tend to make a lot more sense.
Justice, magical things are happening in space and magical things are happening in your bank account because if you got in early, you are one of the lucky ones that we're all thinking about this morning and being incredibly envious of. What do you do with the new billions that you have? I mean, this is a real question as a stage agnostic investor as you are. Do you keep it in SpaceX or do you liquidate it and get in early on others that could be the next SpaceX?
Well, I mean, that's a great question, and thanks for kind of flagging that. And so, I mean, what I'll say, and I can only speak for myself, is, we at Fortuna, we're very long-term fundamental shareholders, and we wouldn't have had a chance or opportunity to let the market compound or SpaceX compound if we had just maybe purchased it today. We've owned this SpaceX for many, many, many years. We bought more of the IPO. And so the idea isn't to flip it. I know we're in an age of instant gratification and quick trading and trading strategies and things like that. But the most fundamental rule of investing is letting compounding work for you. And statistically speaking, when you have these great winners, you have to let them run. You really want to let them run and let compounding work itself out. And it's very difficult because there will be pullbacks, there'll be overvaluation, there'll be all sorts of stuff. But generally speaking, when you've got a winner, and I'm talking about world-class companies, I would unequivocally put SpaceX in that bucket. You want to let these things run.
Do you think that Anthropic and OpenAI will have a similar type of welcoming to the public world?
I think it's going to be an interesting, experiment of sorts. I think, look, you guys know this. It's never been done before. What I will say is you want to be out early. I think Elon's done a great job of really pushing his team and his crew to get this stock out early because you're cleaning a lot of money out of the market. And so as the IPOs continue to stack on, you start to inherently develop risk because if one of them starts to trade underwater, it's going to have a follow-over effect on the one preceding that one. And then obviously you've got market factors, you've got presidential cycles and geopolitics and things like that. So I think it's too early to say that, we'll have to have that conversation hopefully once they're at bat. But what I can say, all else equal, is being first is being pretty good.
You mentioned you participated, Justice. Did you get the equity that you wanted? Did you ask for more than actually you wanted? What did you get?
I didn't. I mean, look, you never get enough of the things that you want, right? So we didn't get what we wanted. That said, there was there's a couple of different banks that were on the file, so we were trying to get it from kind of a few different banks. But I can attest it was very heavily oversubscribed. So we look forward to the trading in the coming hours this morning.
Justice, appreciate your time. Thanks for being here. Thank you, sir.
Pleasure, John.
Justice Palmer there of Fortuna Investments on the future and the bet on Elon. and this company.
Justice is having a great day today. I mean,
without a doubt. Of
what
course.
do you think he's going to do for dinner tonight?
He looked pretty happy, didn't he?
I think that he
steak in a very expensive bottle.
At least, right? I mean, this is something that people have talked about. All of a sudden, there's an entire rank and file of SpaceX billionaires now coming to the fore. All these people, including a lot of the employees who own shares. And what are they going to do with all of that money? Are they going to take it to Mars with them? Are they going to spend it on mansions? But this actually goes to a point that you and I have talked about a lot, which is inflation. And I'm sorry, this is
We're turning to bonds again.
We have to kind of give a sense. There's a lot of money going into a lot of things, and you just have to wonder how much of that's going to trickle into the real economy.
I think on days like these, it's really easy to sit here and be the skeptical, smug journalist.
Because we're not in it?
I can do it with ease. It's a company that's losing money. The tech doesn't exist yet. We're trading at 90 times plus trailing sales. What are we doing here? It doesn't make any sense. That's the easy thing to do on a morning like this morning. You could have done that repeatedly in the 90s. As you sit here this morning, the harder thing to do is to try and imagine this working out. Imagine it working out in a positive way.
You can already see it. If you really want to be bullish on this, it's not that hard given how many rockets he's already gotten up there and satellites circling. And the promise of actually data centers in space and sort of the solar energy that could potentially power that, I mean, that's pretty ambitious.
You should clip these programs this morning on all these different networks, play them out in 5 to 10 years. We'll see how accurate the truth was, you know? How close we got to that moment.
Whether we're in bunkers.
Yeah, from New York City. You're watching Bloomberg TV.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
at the point where the stuff you generally see ahead of market peaks has happened.
The big companies that are already public are going to the capital markets and draining them.
AI policy is probably the biggest market event.
There's a lot of other things going on in this market.
This is going to be a marathon, not a sprint. That's a kind of multi-year phenomenon.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equities up by 0.4% on the S&P 500, up a third on the NASDAQ, off the back of this. As widely expected, widely anticipated, a record-breaking IPO from SpaceX, a $1.8 trillion market cap. We've raised $75 billion.
Yeah, and a lot of people are pointing to what the shadow pricing has for the pop that this will get on the first day of actual trading, which is indicated around 35%. This is interesting for a couple of reasons, most notably because the price was set before this IPO happened. Normally, it's a price discovery process, not this time. So if these shares do pop by 35% in the initial trading, it will indicate just how much demand there is to get a slice of Elon Musk.
From what we've heard so far, tremendous demand in that order book, particularly from retail. We'll spend some time on that in the next hour or so. We've already framed up the two arguments this morning, haven't we? The more skeptical view, it's 90 times trailing sales, it's unprofitable, the tech doesn't exist. And then just this idea that you should never bet against Elon Musk, because the same arguments made up against this company have been made against Tesla, and Tesla, for a lot of the time, has proven the doubters wrong. The stock price has proven the doubters wrong.
Yeah, and frankly, there's a lot of actual technology behind this that supports that even more than some of the previous arguments, including the fact that he already has rockets that have proven themselves. And that's no small feat, considering how many rockets people have to send up that explode, that have problems before they realize exactly how to do something. The fact that he has a head start on that at a time when the satellites in space are dictating a lot of our connectivity, are dictating our GPS systems, are dictating national security, is a reason why people see the profitability in certain slices of this business, see the diversified business, and are getting to say, look, as someone who grew up on science fiction, it wasn't my own desire, but sort of imposed on the family. I could just say, like, this is actually...
It's not therapy, Bramo.
This is actually kind of incredible. It's coming to... You know, it's like the Daleks coming out. You know, it's like you wonder what Mars will be like.
Yeah, that wasn't what I was thinking. I was thinking about a conversation we're about to have with Ed Ludlow about raising capital.
Well, please do.
But we can have the sci-fi conversation in the break if you want. When we asked him about how quickly they'd come back, and he almost immediately just said, really quickly. We'll catch up with Ed in a moment. That's what this is about. And I thought of that moment between Jamie Dimon and Elon Musk. And a JP Morgan boss asked Elon, the first question, why do you want to go public? And he just said, to raise capital. To raise capital. It's a capital event. It's about raising capital. And we're going to see more of that in the not-too-distant future.
It's a race for capital, as many people have said, but when you take a look at the different sections of the business, Starlink has an expected capex for last year of just $4.2 billion. It will probably increase. AI, the XAI and X, had a capex of about $12.7 billion. And you can see the capex for the space aspect had almost $4 billion of capex. You can probably multiply that given their ambitions for growth. Where is that money going to come from?
Do you want to talk about oil? Crude down this morning.
Desperately.
Brent, WTI. Lisa's favourite story. We're getting closer to a deal. Trading in the 80s on Brent this morning.
Yeah, well, the market believes we're closer to a deal. And ultimately, it seems like President Trump really wants to get a deal, which possibly is the key aspect here that markets are welcoming, because they didn't believe him when he said he was going to escalate based on the price action. They do believe that the idea of wanting a destination that's an easier one is a positive. Whether it comes to fruition, when you get into the details, just keep channeling Chris Verone. The less you know.
The less you know.
The less you know.
87 on Brent, 84 on WTI. Coming up this hour, Stuart Kaiser of Citi, as Wall Street gears up for the SpaceX trading debut. Brian Hamilton of Abrigo on why the stock is, in his words, extraordinarily overvalued. And Zach Griffiths of Credit Sites on the unprecedented credit landscape for the company. We begin this hour with stocks higher, heading into a record-breaking trading debut for SpaceX. Bloomberg's Ed Ludlow is back with us. Ed, what are you looking for throughout this morning?
Yeah, I still think it's really interesting where the allocations go. You know, we talk about this idea that the retail investors know better than Wall Street does on the story, but like a lot of the decision to make this unprecedented retail allocation was the belief that the retail core will just hold the stock for much longer. So yes, there'll be some crazy trading today when we get kick things off, and you know there is only the float that can be traded. But I think that's going to be very interesting because a lot of these guys, you know, on the institutional side, they kind of already on the cap table. My world's very different, John, like right now than it was, say, even 5 years ago, where we wrote the story of how big the windfall for the venture capitalists will be. But if you look at the private rounds, and this is definitely relevant to the idea of Anthropic and OpenAI following suit, the mutual funds and some of those long-only asset managers are already there in the private markets. So I think it's just so fascinating to see who ends up being holders, you know, when we go to the bar this evening.
A couple of headlines just crossing, just to share them with our audience. So, according to NASDAQ, the IPO of SpaceX will be released for quotation at 9:50 Eastern Time, eligible for trading at 10 a.m. Eastern Time. Ed, just give us the time frame here, the play-by-play over the next several hours.
Yeah, I mean, basically those institutional investors and the retail investors will be waking up to find out their allocations right now and in the coming hours. That 10 a.m. Eastern Time, you get an indication, you know, more solid than the grey or shadow markets would give you on opening price. When is trading going to start? You know, you can't say for certain, but 1 p.m. Eastern is possible, 2 p.m. Eastern. And what's so interesting is, like, that leaves you 3 hours left in the trading day on Friday for the biggest IPO in history. It'd be very interesting to see literally what happens minute by minute, because for lots of people, it's their first opportunity to get in if they didn't get an allocation. You know what I mean? So you buy very high and then sell even higher or sell lower. That's the fun of the markets, right?
Looking forward to it. Ed, thank you. Looking forward to your coverage, buddy, as always. Here's the view on Wall Street this morning. Stuart Kaiser of Citi writing, there hasn't been much market breadth lately on both sell-offs and rallies. The market has been mixed as people rotate instead of broad changes in risk. Stuart joins us now for more. Stu, good morning.
Hey, good morning. How are you?
I know you can't talk much about this IPO specifically, but the amount of IPOs that are coming to the market at the moment, do you see them as a red flag for the bull market or a green flag to deploy more capital?
I mean, ultimately, we'll have to see how they perform. And I think it's not just IPOs, right? You have secondary offerings from Meta, from Google, from Amazon. You have tremendous amount of convertible bond issuance, IG bond issuance. So this is a sort of broad-based demand for capital. And I think a lot of investors are looking at this as one of the largest construction and industrial production cycles the world has ever seen, right? And that needs to be financed. And what we're seeing, I think, the last couple of weeks is a little bit of a friction in the market as people digest just the enormous amount of capital that's going to need to be raised to get this done.
Pockets of pushback, Stu, that we've talked about, Meta, Oracle, maybe spending too much, thinking about raising more capital, stock markets pushback. Are all companies going to be treated the same, or are we just isolating the weak points?
I mean, I don't think all companies will be treated the same. You know, the winners are the winners in the big free cash flow companies, like we see from the Mag 7 the last couple of years, are going to be able to raise that capital, and companies that are maybe the tier 2 or the tier below that are going to see credit spreads rise and going to see some more pressure. I think what's gotten people's attention recently is last year was all about debt financing, right? This year it's been about equity financing. So that's gotten equity investors' attention. Like, wait, this applies to us as well? Like, this doesn't seem very fair. And much like Lisa, I was forced to watch Star Trek against my will. So, you know, I have some scar tissue that I'm working through as well related to this.
We can talk about that later. You know, this is actually something I think a lot of people on Wall Street probably are working through this morning. There is a sense, though, and you talked about this, John was talking about the rotating pool of capital and how it's going from different names and different pockets, and the breadth has been really bad. How much are people selling some of the previous winners to get in on the new hot and shiny thing?
You know, it's a tough situation right now because the winners is still where people want to be. And this year has been really defined by estimate revisions, earnings going higher, and that's driving stock returns. And frankly, that's been in a relatively narrow part of the market. So as much as people might want to rotate, when you say, OK, when you rotate, you have to sell this guy and buy that guy, the guy they have to buy is not something they want to own, right? So in some sense, it's like you're being forced to rotate against your will a little bit, and it's been a little bit tricky. So I think, look, some of the stuff is up so much. If you look at NASDAQ earnings are up 10% since the end of March. Semiconductors earnings have been revised up 17% since the end of March. So you kind of fade that at your own risk, right? Is that done? And I think a lot of investors do not think those revisions are done. They still want access to those positive earnings revisions. So I think people are playing a little bit of hopscotch amongst the AI winners. Oh, this looks a little overdone. Let me move here. But it's not, you know, I want to move down, you know, the quality spectrum or be really too far away from that AI trade.
Something you mentioned, that the debt markets have gotten used to being tapped again and again to build out the Industrial Revolution, and they certainly have been over the past 2 years. Now it's equity markets' turn. At the same time, is this being driven by the fact that equities look like a better risk-reward proposition at a time of earnings growth like the kind we've seen, given that inflation's going to be higher that, yes, bond yields are higher than they have been historically, but in some ways aren't necessarily even going to keep pace with inflation over the next couple of years.
And you also have the situation where the credit markets are going to start to look a lot more like the equity markets, right? Because large cap tech and the Mag 7 are issuing debt. All that debt's going to go into the credit indices. So the sort of sector concentration you have within equity actually is going to exist within credit. So you're not getting all the upside reward, but you're actually getting a lot of the risk and the concentration. So, we'll see ultimately how that plays out. I mean, I'm an equity guy. I'm going to tell you on equities not much.
But is there usually bond allocated money going into the equity space because of exactly this dynamic?
I mean, money's been coming into the equity space, kind of from all directions. The beauty of the bond market, though, is you're constantly recycling coupon payments and stuff like that. I mean, the bond market's healthy. Look where credit spreads are. There's not like an issue on the credit side. But to your point, you're making a decision there of, do you want your fixed payout or do you want access to that sort of upside earnings revision? And the revisions have been just like goofy powerful this year. So it's kind of hard to step away from that, I think, for most people.
So you're describing the changing characteristics of the U.S. credit market. Can we talk about the changing characteristics of the index, the NASDAQ? What that's going to look like as we introduce some loss-making companies with massive market caps, and we do so really quickly. How's the character of the NASDAQ going to change?
Well, I think what's interesting is the size of some of these IPOs is just so big historically because they IPO'd late, I guess would be a way to look at that.
Yeah.
And the other interesting thing with the indices is a lot of these things are going to be in NASDAQ pretty quick and not in the S&P for a while. So you kind of get a little bit of a divergence, between how the two things look. For NASDAQ specifically, we'll have to see how it all plays out. But it's not unusual to have sort of higher volatility, stocks with a lot of earnings.
Follow-up question. Does that just amplify the existing difference that already exists between the two indexes?
Look, the concentration in S&P has gotten pretty high as well. But yes, it will. I mean, you could be in a situation later this year where there are 2 or 3, new IPOs that people really want access to that are in one index or not, and not the other. And you will get a divergence there. Yeah, it will. I mean, just by definition, I think it'll kind of widen out the gap between the two.
Do you buy the argument that with increased supply, the dynamics of the equity market are changing enough to dilute some of the demand, that just the technicals alone should take away some of the heat that's been underpinning the equity markets?
You mean just like too much supply, not enough demand? That's what we've seen, I think, the last couple of weeks, right, is people are, looking at it a little more critically in terms of how much equity supply am I going to need to absorb over the next 6 to 9 months, and what does that mean for performance? From my perspective, I'm a good news guy, and if those earnings numbers are getting revised up in the way they are, there's only so long you can keep yourself away from that, right? I mean, you revised up NASDAQ earnings 1% in the last week. I mean, that's just like a stunning, rate of change. So, yes, perhaps, where there's a little bit of indigestion going on right now. And it's almost prospective indigestion because people are looking at the next 6 to 9 months and what is the total amount that gets issued. If you're jamming earnings as high as they are, there's only so long you can ignore it, in my opinion.
Let's ask it another way and down the technicals. You've had buybacks like up here, sky high, really reducing the amount of float, the amount of stock that's available for people to buy, the shrinkage that everybody's been talking about. As the spread starts to close, and I know it's still wide, but as it starts to close, does that dynamic matter? That's really what Lisa's asking.
Yeah, I mean, it can matter. I mean, there was some discussion that some of this CapEx spending was going to eat into buybacks and stuff like that, and now you're actually getting equity issuance. So to your point, you're kind of going other way. What's interesting, too, is a lot of these companies started issuing dividends less than 18 months ago and are now kind of committed to that. So, yeah, look, there is a little bit of a supply-demand dynamic, going on. But to your point, this has been a multi-decade issue of shrinking number of publicly traded companies, et cetera. So it's not something you're going to fix or reverse in 6 months, right? It would take longer than that, I think.
I remember the bull case being a scarcity of assets. Remember that?
I do.
Particularly coming out of the pandemic, and I think people are doing their best to change that.
Yeah, well, I wonder if we still have a scarcity of bonds. I remember Bob Michael talking about a scarcity of bonds, and I wonder if we have a scarcity of bonds and a scarcity of equity, or if we've maybe tipped the scales a little.
Based on the amount of demand, maybe not yet.
Yeah.
Right.
Take a look at the cash and money markets. $8 trillion. Pretty wild.
Stuart, it's good to see you.
Yeah, good to see you.
Thank you,
sir.
Thank you very much. Stuart Kaiser there of Citi. Let's give an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. It's officially the biggest initial public offering of all time. SpaceX raising $75 billion in its IPO, pricing more than 555 million shares at $135 each. The Nasdaq announcing moments ago SpaceX will be eligible for trading at 10 a.m. Eastern. And the ECB may raise rates for a second straight month in July. Governing Council member Joaquim Nagel saying that the fallout from the war is proving too strong to ignore. and high energy costs are affecting inflation. The ECB meets again on July 23. And oil extending its slide on optimism over a U.S.-Iran peace deal. The draft deal included a possible reopening of the Strait of Hormuz within 30 days. Coming up later today at the Bloomberg Energy Security Executive Briefing in Houston, Anne-Marie will be speaking with Energy Secretary Chris Wright and Chevron CEO Mike Wirth. That's your Bloomberg Brief. John?
Isabel, thank you. And if you watch TV on Saturday evening and look really carefully at the crowd, you might spot Anne-Marie somewhere.
I think she was looking for tickets here. San Antonio.
We need the mug bag just to sit there, right?
I mean, in lieu of her, because she goes to Houston for work.
The mug there for the bump outs.
Yeah, exactly.
We'll make it work. Up next on the program, justifying a sky-high valuation.
About half the valuation of SpaceX today comes actually from combining artificial intelligence and space, because space today is a lot of cash flow.
In just a moment, we'll catch up with Brian Hamilton of Abrigo, live from New York City this morning. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
You've heard the numbers 10 times over already this morning, maybe in just the last 30 minutes or so, raising $75 billion, a $1.8 trillion market cap, instantly a top 10 public company on the planet. Crazy numbers.
Well, we're talking about something beyond the planet, and the addressable market is potentially infinitive, especially as people look increasingly to space for very practical things, not only satellite connectivity, but also for data centers. And people might smile and say, well, that is pie in the sky. At the same time, a lot of people are saying we're that much closer to reality. And frankly, Elon Musk has done this before.
Futures positive this morning, higher by 0.4% on the S&P, and the Nasdaq higher by 0.44. Under surveillance this morning, justifying a sky-high valuation.
About half the valuation of SpaceX today comes actually from combining artificial intelligence and space, because space today is a lot of cash flow. And if you have access to your own cash flow in AI, you can buy your own infrastructure. That makes it much cheaper for you. You don't have to pay a margin to a cloud provider.
So here's the latest this morning. SpaceX boss Elon Musk is on the verge of becoming the world's first trillionaire, with Musk's retail trading fan base placing more than $100 billion in stock orders. Brian Hamilton, chair of software firm LiveSwitch, writing, people want to get wealthy with Elon Musk. SpaceX may be an extraordinary company, but it's also an extraordinarily overvalued stock. Brian joins us now for more. Brian, welcome to the programme, sir. 90 times plus trading sales. Clearly, that is a massive number. People are willing to pay up for growth. But I haven't heard people really talk about the growth of this company, Brian. Can you put some numbers on it? What is the growth of this company?
Well, first of all, we should go to Pluto, not Mars. This valuation, for perspective, if we build a company, I've been an entrepreneur my whole life. You know, you work hard, get customers, get profitable, hopefully. A lot of them don't. But basically, if you go out now, there's an average multiple of sales to price of about 10. So if you make, for every buck that you generate in sales, you get about $10 in valuation. These guys at SpaceX are at 99, the highest I've ever seen. A 2,000% premium for Elon Musk. Just unbelievable. So people need to know going in. And guys, look, I'm mostly concerned with the retail people. The professional people, they can do what they want. They're usually, you know, leveraged the right way. They have balanced portfolios. But the average retail investor is massively overpaying it. Your last guest, I get a kick out of that because remember, their business model is also all over the board as well. They're doing a lot of different things. And it's not just a matter of having satellites out there. They're all over the board. So you know, they're totally overvalued, and it's so obvious. I mean, way out. I've never seen anything like it.
What do you think will be the reality check that people will need to see before it is appropriately valued in markets?
That's a hard question. I don't know with Elon Musk. I mean, generally, as you guys know, he gets a premium because he's done some great things. And I don't want to take that away from him. And as an entrepreneur, I love that he invested in his own companies. But this premium is crazy. So for perspective, when a small company called Tesla went out public, they were about 20 times sales. This company is going to be about 100 times sales. Very, very high valuation. By the way, small footnote, they lost $5 billion last year. Look at companies out there now, NVIDIA, Microsoft, about a $3 trillion valuation. As soon as these guys go out, IPOs are supposed to be initial. It's supposed to be initially what you're worth. They're going out, as you guys mentioned in your break, as one of the top 10 largest companies in the world right off the get-go, as really a small company right now. So one thing, if you're a retail investor, look at the numbers. Interesting dude. By the way, I don't know why he's going to Mars. I've driven out to Wyoming and South Dakota. There's a lot of land out there. There's plenty of room. But on a serious note, it's unbelievably overvalued. My concern is the retail guy.
Well, my question to you, Brian, is SpaceX alone, or are OpenAI and Anthropic proposing similar sort of stratospheric valuations at a time when people are banking on a myth?
Yep, true. Great point. However, look at their multiples. They're going to be at about 30 times revenue, not 99 times revenue. And remember, SpaceX is not a direct competitor to those other companies. It's not. They've got Grok. That's a very small part of their revenue. So this is a really nice thing you got up here. But this is for all IPOs. These are businesses in different industries. And by the way, SpaceX only grew about 40% last year. They're not doubling and doubling and doubling. So I've been doing this, guys, for 20 years. I've been an entrepreneur. I ran a financial company. They're totally overvalued. Now, will it just keep going up because of the Elon factor? Who knows? But if you buy, you're buying high, period.
I think, Brian, that's the point. Didn't we say the same things about Tesla? What did we learn from that experience?
Yeah, what we learned is that he can defy gravity. He should be going out in space, you know. But remember, Tesla, again, their relative value was much lower when they went out public. Here's my beef. When you go out public, and I've been on both sides, I've been in finance, I've been an entrepreneur my whole life. When you go out, this is my problem. They're getting all their value at the IPO level. What we want a company to do is to prove something, and Tesla did. But Tesla's relative value was much lower at IPO.
Brian, it's good to see you, sir. We appreciate the skeptical view this morning. Thank you. Brian Hamilton of Live Switch with some pushback this morning to the valuation of this company at 90 times plus trading sales.
Based on the valuation alone and based on what he was talking about, he makes a really valid point. And a lot of people are saying, essentially, yes, we are buying into the myth of Elon Musk, and we want to do that because we have seen what he's been able to do in the past. You just have to wonder how much these high valuations can remain longer than some of the skeptics can remain skeptical. And ultimately, you know, it isn't about numbers, because how do you predict numbers that are increasing at the pace that they've seen? I mean, how many analysts have we seen upgrade their forecasts for tech companies that have come out with earnings?
Yeah.
They haven't been able to keep up. In a technological revolution, how do you value something? And ultimately, a lot of people are saying you can't. You have to just sort of close your eyes and buy. And that makes a lot of people deeply uncomfortable who have been through financial cycles. Nonetheless, you made a good point about Amazon.
This is not a normal IPO at all. This company is more than 20 years old. I mentioned Amazon earlier. Let's think about the Amazon IPO. They were raising 400 to 500, something like that, 400 to 500 million dollars. We were talking about those kind of numbers at the time. 28 times trailing sales. Sounds super expensive, right? Compared to this, we're talking about $75 billion, right? The market cap of this company, $1.8 trillion. We're dwarfing anything we were talking about in the late 90s. Dwarfing it with massive, massive numbers.
And in the late 90s, we were talking about the more even distribution of goods and services, the more effective kind of marketplace pricing dynamic. Here we're talking about whatever is out there. I mean, you talk about some of the discussions around sci-fi. It's essentially building into that and saying, you know, we're going to go to Mars.
I think to Brian's point, so much value has already been created in private markets.
But that's
we're coming to this so late.
But that's with everybody. I mean, that's the thing.
Yeah.
It's sort of a change in the dynamic market.
It's changed a lot. Coming up, Gregory Allen of Decision Tree Research on the first market test for SpaceX.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
We are making financial market history in real time. Just look at the numbers. $75 billion, market cap $1.8 trillion. Lisa and I were talking about Amazon. I mentioned the number 400 to 500 million. That was the market cap back in the IPO of 97. They raised a tenth of that. The numbers are just nowhere near comparable to the numbers we're talking about with this IPO.
Yeah, although our previous guest, and you picked up on this, was making a really good point, which is the structure of the market has fundamentally shifted, where more of the value is created in private markets before these companies go public. So it's hard to compare the moment we're in today to the late 1990s when it comes to either the technology or when it comes to exactly how capital is being raised.
Like we've said repeatedly through this morning so far in the last 90 minutes, easy to sit here and be super skeptical and say, how is this trading at 90 plus trading earnings? That seems absolutely crazy. That's not the bet with this IPO. The bet's the forward look. The bet is that the revenue number is going to change dramatically in the forward years. Now, that's the debate we've got to have. How quickly can the revenue story change without the technology necessary to achieve the kind of dreams, the hopes that are priced into that market cap?
The idea that people are looking for dreams right now gives you a sense of the dynamic in equity markets. And not to sound overly philosophical, but people want to see and have been had their belief suspended in terms of what's possible just based on the pace of earnings growth that we've seen, which has been absolutely bonkers so far this year. When you see what's being delivered at places like Google, at places like Amazon's AWS, people start thinking, wait a second, there is an entire world of new technology that can be capitalized on. Elon Musk would have a near monopoly on the space marketplace, which already has been really fruitful when it comes to connectivity and already has been really fruitful when it comes to national defense. So you put all of these things together and people are willing to give a lot of assumptions and give a lot of credibility to what he's putting out
You've
there.
got to understand how you're wired. I know how I'm wired. I know how you're wired. You're a bond person. I'm a bond person. You look at the numbers. Am I going to get paid? How much risk is here? I'm not a dreamer. I don't have the imagination to really think through what this could be. I know we've said this repeatedly. I've said it again this morning. I would have totally failed at imagining what Amazon would have been in the next 25, 30 years after the IPO in 97. I would have said exactly the same thing I said this morning. How is a bookseller worth 28 times trading sales? They just sell books. How big can this company be?
The difference this time around, as somebody who is wired to be a bond person, is that the bond market concerns me, and particularly the sovereign bond market at a time where there is so much investment going into an economy that is not used to actually investing in the physical world. And suddenly the physical assets are becoming bid up. And you have to imagine it's going to be a stickier inflation moment with greater growth. And in that moment, bonds don't look so great. So maybe this is not a moment where bonds can really offer that offset to the risk that you're taking with taking a chance. And I'm not making a call here, but that's kind of...
Sounds like a call, right?
But it's not. I don't know the answer to this. I don't think anybody does, but that is how the calculation has changed.
Your point on spending and experience, I think it's really important and very valid. That the hundreds of billions of dollars that are being raised in capital markets right now are being spent by companies that don't have much experience of spending that kind of money on physical things. I'm thinking of the hyperscalers and those kind of things. This is very new to them too.
Which is also why you see them partnering with a lot of private equity firms and a lot of the big private asset managers. But essentially, they're becoming the world's biggest portfolio managers. And you have to imagine that some of the people in those seats don't have a lot of experience in that space.
Chip players are becoming hedge funds with all the investments we're seeing at certain names.
I mean,
right?
yes. And the idea that Bitcoin traders are becoming energy providers for hyperscalers. I mean, the world is in flux.
Massive changes. Huge changes. Equity futures right now in the S&P up by a fifth, or call it 0.5%. On the Nasdaq 100 up by 0.5 also. On the Russell up nicely by 0.7. That's the price action this morning. On our radar, our top story, SpaceX drawing more than $100 billion in orders from retail investors, a sharp rise from the previous figure of 70. The company expected to allocate 20% of available shares to retail demand. Elsewhere, top AI leaders are slated to attend the upcoming G7 summit in France. Executives from OpenAI, Anthropic and Google will all be gathering in a rare joint appearance. And finally, Iran confirming talks are underway for a final peace deal with the US. State media claiming provisions include reopening the Strait of Hormuz within 30 days and affirming Tehran's commitment to not develop nuclear weapons in return for lifting sanctions.
Yeah, and coming out and saying that the framework text is nearly finalized. There's a lot of daylight, though, between what are the state-linked media outlets are putting out there and what the U.S. is demanding. And there still are a lot of sticking points in there. The key point for markets is get the Strait of Hormuz open, whatever form it's going to be, get oil moving once more, and then we can move on and you guys can hammer out the details. Hammering out the details is going to be difficult, and how many concessions are going to be made to get to the place where the Strait of Hormuz truly is operating even close to the way it was before this.
The headlines are always confusing. Some of it's for domestic consumption, to tell your people that this is what we're really trying to achieve, even though you're probably falling short of that. Some of the headlines are active negotiations in real time because we're not quite there yet. Think the market's decided we were getting closer a long time ago and is comfortable with the state of play?
To me, it's a huge tell that President Trump came out and said, oh, now we have a deal after threatening an escalation. The market didn't believe it, and the market was right. And essentially what we have seen is that this president, under a lot of political duress, with the midterms coming up, with oil prices already kind of eating into the budgets of so many different families, does not want to see this continue. The market is understanding that story. And so they're seeing the path of travel that can get us there, and they're not even focusing that much on the details right now.
Crude in the 80s, Brent 87 this morning, WTI around 84. The main event is on the Nasdaq a little bit later. The SpaceX trading debut following a record $75 billion IPO. Yahara on the floor, and she joins us now for more. Yahara, walk us through the play-by-play for the next few hours, how this one's going to play out.
Exactly, John. So it is relatively calm here at the Nasdaq. We just got our first headline from here that SpaceX will be eligible for trading at 10 a.m. Eastern. And at that time, this area will become the center of attention for investors, bankers, and traders watching what will be the biggest IPO Wall Street has ever seen. And what's striking about this IPO is that for years, Elon Musk argued SpaceX didn't need public markets, that the company had access to private capital and could fund its ambitions without the scrutiny that comes with being public. But SpaceX is entering a very different phase here. What was once a rockets and satellite story is increasingly becoming an AI infrastructure play. So, it has lofty goals, data centers in space, supplying AI computing power, already striking deals with the likes of Google and Anthropic. And what Elon Musk says is that will require dramatically more capital. So that is what's changed. SpaceX is now a fundamentally different company, and they are taking advantage of a moment when there is voracious appetite for AI in the market. So it will have huge repercussions for the broader market, and that's something we'll be seeing play out here today.
Yahara, looking forward to your coverage throughout this morning. Yahara Anand on the floor over at the Nasdaq. Today's trading for SpaceX offering a critical test for a near $2 trillion valuation. Gregory Allen of Decision Tree Research writing, this is not a rocket IPO. It's a venture capital style bet at index fund scale. Gregory joins us now for more. Gregory, welcome to the program. Let's get into it. Do you see the growth that justifies the hype?
Simply put, no. I think SpaceX is a collection of multiple businesses. You have the Starlink communications business, which is very profitable and growing very rapidly. You have the new AI infrastructure bet, in which SpaceX is actually selling to one of their competitors, Anthropic, which develops a competing model against Grok. And that's a run rate of $1.25 billion per month, a pretty nice business. The thing is, it reveals the fact that SpaceX is actually building AI infrastructure faster than their own AI models can actually consume it, and their AI models are falling out of the leaderboard. We'll have to see what the performance of Grok 5 looks like when it actually comes out. But if you look at that total addressable market that SpaceX is overwhelmingly hyping, it really rests upon the ability of, number one, SpaceX to develop not a temporary advantage in AI infrastructure, but an enduring advantage based on superior access to orbital infrastructure, and all of that feeding superior AI models. Both of those things are possible, but they're by no means guaranteed, and this valuation basically takes them as guaranteed.
Gregory, you went through the details of the company, launch services, Starlink, reusable starships, internet services. The hopes and dreams seem to be around the orbital compute, the data centers that we don't yet have in space. Gregory, do we have the technology, and how close are we to achieving that technological development that can deliver something that looks like that?
So there's a difference between what is possible in prototypes and testing, and SpaceX is validating GPUs in orbit. SpaceX is going to have some prototype satellites in orbit probably in 2028 looking into this sort of thing. But that's very different from thousands or tens of thousands of satellites being ready to go and being a better bet than what exists on the ground. The types of cooling infrastructure that you need for these data centers, NVIDIA GPUs, they routinely catch on fire. That's why cooling is such a huge part of the electricity bill of these hundreds of megawatts and gigawatt scale data centers. When you're out in space, there's no air and there's no water to cool, so you have to do it all by radiative cooling, which is in principle possible, but in practice extremely tricky from an engineering perspective. The other thing is these GPUs fail consistently, and once those satellites are in orbit, you're not going to repair them. You're not going to go up there and try and fix them the way you do when it's on the ground. When GPUs break, you swap them out with ones that work. So the issue here is this is in principle possible, but it's not technologically mature and it's not industrial scale mature. I think a helpful analogy here is Elon Musk's earlier idea of the Hyperloop, a rapid transit vacuum tube-based transition mechanism on maglev rails. That was in principle possible. It doesn't break the laws of physics when Elon Musk put it out in a white paper. But nobody's pension plan lost any money on Hyperloop. And SpaceX orbital AI infrastructure is going to go into people's index funds. It is a venture capital style bet that's being treated as index fund mature and certain.
One thing that you pointed out, Gregory, is how intertwined some of these companies are that are coming to market in the next couple of months as well. Anthropic being the biggest customer of SpaceX when it comes to XAI, the artificial intelligence aspect of it. How concerned are you about some of the circular financing that you're seeing under the hood, how closely connected all of these bets truly are?
So I think the circular financing is not an especially large risk here in the case of SpaceX. It's not like their valuation is being massively propped up by, for example, NVIDIA as a key supplier of GPUs, for example, which is some of the concern about companies like Anthropic or OpenAI. And the Anthropic deal is not so much interesting as a circular financing story as a who overbuilt and underbuilt AI computing infrastructure relative to how much people want to use their AI models. SpaceX and XAI, its subsidiary, has demonstrated that it is very fast at building ground infrastructure for AI computation. They're legitimately world class at that. Anthropic is renting from them because Anthropic models are superior, and so people want to use them compared to Grok. And so this is a case of where the company with the better model needs more infrastructure, the company with the worse model needs less infrastructure. But keep in mind, even though this is a 5-year deal, either company can cancel the agreement with 90 days notice. So if Grok 5 is amazing, you can imagine a scenario in which they say, actually, Anthropic, we want to keep that infrastructure for ourselves. And by the same token, Anthropic underbuilt for the year 2026, but that's why they're going public, because they want to start getting into the massive construction business too. So how much of this is an enduring, available partnership versus a marriage of convenience at the current moment?
Gregory, what would you have to see that would change your mind and make you think this valuation was justified?
Well, as I said, this is based on a lot of plans coming true. And I said specifically that they're coming true being almost a certainty. What do I mean by that? You mentioned that a lot of your experience is in the bond market. If you were to take SpaceX's valuation of $1.75 trillion and convert it into an annuity bond at the current risk-free treasury rate of 4.5%, that is the equivalent of an annuity that pays out $80 billion a year guaranteed forever. SpaceX, by contrast, lost $5 billion last year and is talking about having to write checks in the hundreds of billions or potentially trillions of dollars in future down payments on capital expenditures before a lot of these dreams come true. So again, this is being valued as the equivalent of certainty, $80 billion a year guaranteed in profit forever. And that's just not what this looks like right now. Now, there are going to be some near-term technical milestones that will tell us what this looks like. Elon Musk's plans for orbital AI infrastructure involve Starship launches going up by more than 100x per year. So where those Starship launches previously were about getting to Mars, now it really is about validating the possibility of building this orbital AI infrastructure.
Gregory, appreciate your time. As always, Gregory Allen there of Decision Tree Research. A range of views already this morning. And at the very start of the programme, we said it would be dominated by two particular views. One, don't bet against this guy, Elon Musk, hopes and dreams, all that stuff. He's been successful with Tesla. He's proven that. And the other one was exactly this, 90 times plus trading estimates, trading sales rather, and a very sceptical view of a company that's losing money and a promise of technology that doesn't exist yet and might not in the not-too-distant future.
Objectively, a lot of people have pointed to a lot of the scenarios that Elon Musk has painted and said that he is pricing in the absolute best-case scenario, kind of like what we were just hearing from Gregory. A lot of people are saying, yes, but he's actually fulfilled that when it comes to Tesla. And there are so many different levers that he could pull to get there that could potentially be huge gainers. So ultimately, this is a story of faith, and finance does not do well with faith in many different pockets.
Certainly not here to advocate for one view versus the other.
No.
It's up to you at home, and that's how you allocate capital in this equity market right now.
I don't have a
that's
sense.
A total judgment call for you.
Do you have a sense of which it is? I have absolutely no idea.
No
Genuinely.
idea. I'm sort of happy that I'm sitting on the sidelines, just sort of, navigating the current conversation.
I have to say I'm not, because I see people who actually were in on it initially, and they look very happy.
No, I'm
they
jealous
look a lot
of that.
happy.
Of course I'm jealous of that.
Yeah, exactly.
All the upside.
Yeah, not so happy on the
Without a
sidelines.
doubt, being a journalist can't do that,
Nope.
unfortunately. Equity futures right now in the S&P up by 0.6%. With an update on stories worldwide with your Bloomberg brief, Isabel Lee has more. Hey, Isabel.
Hi, John. We have the U.S. and Iran maybe nearing a deal to end the war and open the Strait of Hormuz. President Donald Trump saying a deal is imminent and could be signed in the next few days. An Iranian foreign ministry spokeswoman saying, quote, we have not yet reached conclusion on this matter. President Donald Trump tapping former SEC Chief Jay Clayton as the next director of national intelligence. The announcement follows backlash over his selection of housing regulator Bill Pulte to serve in the role on an acting basis. And in sports, the Carolina Hurricanes are one win away from the first Stanley Cup in 20 years. The Canes beating the Golden Knights 4-2 in Game 5. They look to close things out in Vegas on Sunday night. That's your Bloomberg Brief. John?
Thank you, Isabel. I'm going to sound like a total foreigner. Forgive me. I know I've lived here a decade plus, but ice hockey in the summer, I just can't get my head around.
I mean,
just doesn't make sense.
Hopes and dreams, John. You can play hockey even if you're in Florida. Miami, let's go.
Vegas.
June, Vegas.
Yes, right.
I mean, yeah,
In the
why
summer.
not? In the summer.
Yeah,
It's a big
apparently.
place.
Up next on the program, shooting for the stars.
SpaceX is the biggest rising star of all time. When you think about a market cap of $1.77 trillion, in fact, with all the cash that they have, which will be in excess of $80 billion of cash, they have no net debt. It's clearly an IG-rated company.
Up next, we'll catch up with Zach Griffiths of Credit Sites.
anything we do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Stocks positive going into the opening bell. A few hours away, we're up by 0.6% on the S&P, on the Nasdaq up by 0.6 also, and heading towards another week of gains. Under surveillance this morning, shooting for the stars.
SpaceX is the biggest rising star of all time. When you think about a market cap of $1.77 trillion and only $20 billion of debt, that's only 1% of the entire enterprise value is in debt. In fact, with all the cash that they have, which will be in excess of $80 billion of cash, they have no net debt. It's clearly an IG-rated company.
So here's the latest this morning. Some on Wall Street expecting SpaceX to tap the debt market shortly after a record-breaking IPO. Sources telling us here at Bloomberg the company has lined up investment-grade ratings from 3 major bond graders. Zach Griffiths, a CreditSights rating. I don't think there's any precedent to draw for a company like SpaceX to understand what their rating should be. Zach joins us now for more. Zach, welcome. You heard the words of our previous guest. It's clearly an IG-rated company. Do you see it differently?
No, we don't. And in terms of what drives that IG rating, John, you have the new or relatively recent Google and Anthropic deals. Those aren't captured in the LTM metrics. And when you think about the loan to value consideration that I think you were just highlighting from Bruce Richards there, it's 1 to 2% of the overall enterprise value. And so there's obviously a ton of equity valuation ahead of that credit. And so while that's not something that the ratings agencies tend to look at, we do think it plays a factor here. And so we are expecting an IG rating on SpaceX when they come to the market. And we think that'll be relatively quickly after the IPO today.
It's incredibly difficult to value a company like this. We've heard a lot of different opinions so far this morning and to evaluate whether it's investment grade or high yield. But does the bulk of equity being raised give you as a bond analyst comfort that the equity markets are sharing in some of this and are actually sharing the first loss piece and give you confidence that they can raise more debt at a better value?
Yeah, a lot of comfort, Lisa, when you think about what we were just going through. And if you think about the metrics from a last 12 months EBITDA perspective, looking at around 5 times leverage. And so that's more historically consistent with a high yield rating. Again, that doesn't capture some of the recent deals. And of course, having all of that equity ahead of the credit makes us very comfortable with that IG rating. And when you think about how much debt they're likely to come to market with in the near term, call it around 20 billion, that kind of pales in comparison in terms of what the market has been digesting with ease so far this year, with the big 5 hyperscalers coming with almost 175 billion split across US dollar and various other currencies. So we do think there is going to be demand for that debt out there without much of an issue, even after this huge equity raise.
That said, Zach, how much does it concern you, the just absolute consolidation of all risk in one bet right now, whether it's on the debt side or on the equity side?
Yeah, I think concentration risk is a fair concern to have. And I think the circular financing consideration that you were just discussing with the prior guest is something we're concerned about. When we think about where the rubber meets the road from that perspective and where there might really be risk in terms of some of these big players coming to market with IPOs, OpenAI seems to be the one that really needs the funding. And so if for some reason markets become less risk taking over the next couple of months when Anthropic and OpenAI need to come to market, that's a time frame that we think there could be a little bit more consternation. For now, we're certainly comfortable with the environment we're in. And when we talk to our clients from a fixed income perspective, they're very happy with all-in yield levels despite tight credit spreads really across the credit markets.
Zach, just finish up on SpaceX. So I understand they've got this massive ability right now to tap into the equity market and raise equity capital quite easily, and we've seen that. But how much that should be a factor in your credit rating when the company is losing money, and they're going to spend that money really quickly too? You mentioned some of the hyperscalers and debt issuance elsewhere. Let's take Alphabet. Alphabet made profit more than $100 billion last year, Zach. This company loses money. Why should that company have an IG rating?
Well, again, it comes down to companies rating, or the ratings companies rating through the cycle. And when you think about some of the deals recently inked, that certainly improves the position, and the net cash position after the IPO certainly looks very attractive. Now we're expecting cash burn to be around 20 to 30 billion per year as they lean in to that AI infrastructure business. And so there's a lot of metrics to consider, John, but we do think with the recent deals and projecting forward through the cycle and considering some of the upside scenario, that an IG rating will be justified, and that's kind of what we're hearing out there as well.
Interesting, Zach. Appreciate it, sir. As always, Zach Griffiths there of CreditSight. The race for capital, and they're clearly going to tap that debt market pretty quickly based on what we've heard so far this morning.
It's a structured investment, and if the equity piece is big enough and that tranche has the first loss, then essentially if you're taking off the top, then potentially you could have a AAA, just like some other structured vehicles.
Yeah. You sound skeptical.
It's essentially the argument for the top-tier rating without understanding how to analyze the actual valuation.
Again, you sound skeptical. Coming up, Sarah Hunt of Alpine Saxon Woods, Nick Owens of Morningstar, Matt Kennedy of Renaissance Capital, Dan Niles of Niles Investment Management.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg. Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Al Ula, Saudi Arabia, and this is Bloomberg.
It's a test for the market in terms of not just SpaceX, but the ripple effect across the rest of tech.
Everybody's investing in it. They've really hyped it.
The majority of the opportunity here, as laid out by the company, is really in the AI compute space.
Portfolio managers are now struggling on how to allocate these new offerings.
Just because something is a very hot IPO doesn't mean that in the 1 or 3 months that the returns are always as incredible as the trading on the first day.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action of scores look like this. Here's the bounce, up by 0.6% on the S&P. Enthusiasm this morning for a deal between Iran and the US, taking crude lower, pushing equities higher, while the Nasdaq up by 0.5%. Enthusiasm for a record-breaking IPO. Check out the numbers, $75 billion raised. Almost 3x what we got with Aramco, which was the previous record. A monster issue from Elon Musk and SpaceX.
Yeah, and it's being received really well, at least according to some of the shadow pricing that indicates about a 35% pop upside. We will see higher on and down at the NASDAQ, and we'll be tracking that when it does start pricing, I believe around 9:50, 10 a.m. Eastern time. Key question is, how does this set up OpenAI and Anthropic's IPOs? How does this set up the path of travel? Is there any early indication at a time when people are pointing to the fact that space has speculative promises? At the same time, Elon Musk has delivered and is a man of promise, and a lot of people, including a lot of retail investors, are getting behind him.
The lesson with Tesla, don't bet against Elon, right? And that might be the lesson with this. I would say for the others, for Anthropic, for OpenAI, so far, the window's still open. And we've put a lot of equity down the throats of equity markets in the last few weeks, not just with this, but with Alphabet as well. And a question we've asked repeatedly over the last few weeks, through June, is the window going to close? Going to get pushback? We've seen pushback, I would say, at the Oracle level, around Meta, that rumour they might be raising equity capital too, but minor margin pushback relative to the size of the overall market. And it feels like the window's still open for Anthropic to follow and OpenAI to come soon after.
Yeah, there's a feeling almost of smugness by bond investors saying, great, you guys could take some, because we've been taking it all down. And let me tell you, we have seen our index absolutely ballooned and concentrated with all of this AI-related assets. And now it's your turn. Over to you, equity folks. Concern, though, as we do this is the structure of the market. Yes, we are expanding the pool of assets that people are buying into, but also the correlations are going up, and significantly so. We're suddenly, what you're buying with bonds is what you're buying with stocks when it comes to the corporate credit and the AI bet. And at what point does that get people nervous? How do you diversify? How do you find safety at a time of higher inflation, higher growth, and higher concentration of AI-related bets?
You made 2 points there. I want to pick up on the first one, and we can get to the second one later this hour. The first one, the debt issuance that we've seen has been astronomical on the sovereign side, on the credit side, and they're clearly looking for options here. And that's the word I want to stress, options. Alphabet was going into different currencies here, there, and everywhere. We've seen it from other companies too.
Or we've.
Right? Going over to Europe.
Yeah.
Demand for that high yield debt, by the way, pretty decent from what I heard.
They're looking for a piece of the action.
Right? So you've seen a lot of this, and I want to keep going back to the word options. This is about really exploring the entire capital structure and having tremendous flexibility and having lots and lots of options. Not every company is going to get that. Only the bigger companies have got that right now, which is why they're in prime position to win this, because they can raise the most capital. It's about having options, raising capital and spending capital really, really quickly, which goes to the inflation question I think you were getting at a little bit earlier on this morning. That's a lot of money being raised, pushed into an economy that is supply constrained.
For decades, this was a market where financialization was on the front burner. People wanted to invest in the market, make money, and then sit there and have a 401k that expands. Now people are taking that money and putting it into the real world, and suddenly they're building out infrastructure and metals and all of the physical assets. At a certain point, it's why people are expecting, particularly PIMCO, we have moved out of secular stagnation officially into a higher growth, higher inflation environment, and a lot of people are expecting a lot of different results from different assets.
PIMCO just published their outlook, and there's lots of headlines coming from it. Dan Iverson making some comments too. I think Dan said recently, someone I have tremendous respect for, we all do, in fixed income. He talked about the creative stage of finance and how we've entered the more creative stage of finance, and I think he's getting up something that you're following closely.
Well, the idea that SpaceX has IG-rated debt because essentially the equity pool is so big that it takes the first loss, that you're essentially at the top tier of the capital structure. It sounds a lot like structured finance, like mortgage-backed securities, like CDOs. The idea that as long as you have a bigger loss pool underneath you, you're safe at a time when there's a lot of big figures being thrown around.
Futures positive this morning by 0.6%. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods on the groundbreaking SpaceX market debut. Nick Owens of Morningstar warning the company is significantly overvalued. On the other side, Matt Kennedy of Renaissance Capital on why the $1.7 trillion valuation is justified. We begin this hour with stocks pushing higher as Wall Street gears up for a historic day of trading. Bloomberg's Ed Ludlow joins us now for more. Ed, what a win for Elon Musk and everyone involved in this company.
Yeah, $135 per share IPO price, but it just needs to go higher, 2.2% to 138, and Elon Musk hits trillionaire's status per Bloomberg Billionaires Index in our calculations. Eyes on Gwynne Shotwell, president and COO, and Brett Johnson, the CFO at the NASDAQ. They're in New York City for this moment. And, you know, I've really enjoyed listening to the debate, the discussion, right, between you and Lisa and through your guests. This idea of, well, does it matter the current finances of SpaceX? One idea that a lot of the market had time to digest from the prospectus is that even though there's no cash flow number or current CapEx number, the connectivity business did hit almost $5 billion of operating income in 2025 and $7.2 billion of adjusted EBITDA. And a lot of people can extrapolate out from that Starlink business, the business of having satellites in constellation for internet, and because it's highly analogous with the proposed orbital data center business. So that final guest that you mentioned, who says the $1.7 trillion valuation is justified, a lot of the math that is being done on the sell side and the buy side today is based on those numbers on Starlink. People believe it, John. How it trades is completely separate and academic, isn't it?
Ed, appreciate it. As I say, looking forward to the programme later. Bloomberg Technology, Ed Ludlow alongside Caroline Hyde. You get paid to hope and dream in the equity market. I think the point you're making, drawing the distinction between credit and equity, is that you don't get paid to hope and dream in the credit market. You just get paid what you're owed, and you hope you do further down the line.
Well, I was speaking with Howard Marks earlier this year, and he made this point. He said ultimately he believes AI is real. He absolutely does think that there are huge technological advancements that will come with it. But how do you want to get the upside to that? Probably through stocks, not necessarily through credit, where you're paid to worry. And if you really want to worry, there's plenty to worry about.
Well, for a moment, it was debt investors funding equity dreams, right? And now it's equity investors funding debt guys getting paid.
Yeah, potentially.
From what we heard a little bit earlier.
Also, debt investors still funding hopes and dreams. So
that too.
Funding everything.
A lot of money being raised. Here's the view on Wall Street this morning. Sarah Hunt of Alpine Saxon Woods writing, a weak open would be a real problem for the AI companies lined up behind SpaceX, waiting for their IPO moment. A strong one keeps the party going. Either way, it might be a volatile summer. Sarah joins us now for more. Sarah, good morning.
Good morning.
It's good to see you. This company waited more than 20 years to float. Why is now a good time to buy it?
Well, I mean, I think that there was an IPO window that we all knew way back in the day. We've had years where there was almost no IPO window at all. You've got equity markets at highs. You've got the technology enthusiasm at its highest level. I think this, if you're going to pick a time, this is not a bad time to do it, right? When else would you? And if you go back and look at how much public company stock has been taken off the market between buybacks and mergers, maybe there's room for all this issuance. Maybe not all in one go, but I think that there's more room than we think there might be.
It's one of those mornings where you can sound smart or make money. That's what it feels like. Is it one of those mornings for you? Do you want to sound smart or make money?
I think you always want to make money, right? In the end, you always want to make money. And I think that it's so hard to game out something like this because it has all of the things, right? It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing. It's not just one thing. There's so many levers to pull. It's hard to figure out exactly where that is, but there's an enormous scarcity factor because this is the one that has all of that. So, this is one of those companies where ultimately, they have some incredibly promising technology. Is it worth what it's being sold for today? I don't know.
Neither do any of us, which is the difficulty right now. How do you even start to value a company like this? It goes to a question that we keep asking, where are we in this capital raising cycle, right? Are we at the beginning stages? Are we at the middle stages? Are we at the later stages as people start to get a little bit more prudent in terms of where they deploy their cash? Do you have a sense of how close we are to maybe people pulling in their purse strings?
Well, I think that one of the big stories for the last couple of years has always been the CapEx can't possibly go higher next year. It can't possibly go higher next year. And every year we're looking at it and it's going higher. And I don't know what the answer is. I do know that the technology, there has to be changes because energy usage, cooling, all of those things are actual real stumbling blocks to getting further and further capacity. So at some point, the technology will change. This is the problem with trying to figure out exactly where you are is because you don't know what's coming down the pike in terms of what's changing, but everybody's racing to get a whole lot of capacity together at one time. And I think that is hard to stop that juggernaut. And if the market's willing to do it, first it was just out of cash flow, then it was cash flow and debt, and now we're going to raise equity too. There's an enthusiasm for it, though, that if you believe that this is another industrial revolution or that this has got this much of a change factor, you're still going to have winners and losers. It's hard to pick who those are, so the enthusiasm is hard to overlook right now.
This morning when I came in, it was a positive story all around. You had potential de-escalation with Iran and the U.S. You had the potential for ongoing open arms in the capital markets. And correlations go to one, right? We see gold prices up, not down. You see Treasury yields down, not up. All around, people are feeling enthusiasm and everything rallies. Do correlations start to worry you when everything feels like one trade?
Well, I think that we've seen this before in the last couple of big drawdowns and also some of the last huge risk-on moments. I think that the old correlation handbook that most of us grew up with has not been acting the normal way as much as we used to think it is. And so this goes down and this goes up. There is much more of an ongoing, like, it's all this or it's all that. It's all good, it's all bad. And I don't know that doesn't get better. It doesn't get any better right now. There is a little bit of a swap sometimes when technology is weak. You do see other things. Energy had been that. Now energy's down because we may get a deal, and we should hope for a deal. We absolutely want that to be done, right? Because that is something that's been overshadowing a lot. So yes, it concerns me that the correlations go there, but we can't control where they're going. We just have to watch.
You brought up Iran. We didn't bring up Iran, just for the record.
Just for the record. It is a big reason why everything is up. Did you see with the first announcement? Did you see the Kospi?
Yes.
Kospi going crazy because there might be a deal.
Just, it wasn't me.
I know,
okay.
I know. It was me. I own it. It actually is important.
I know how much you don't like the story.
I think that we can speak for all of us. It is a very frustrating story.
Let's finish on diversification and the difference between the NASDAQ and the S&P 500. Let's make this really simple. From your perspective for the next 12 months, do you want to be in the NASDAQ that has all these IPOs or the S&P 500 that doesn't? Because that's a decision that will confront a lot of passive investors this morning.
It is a decision that will confront a lot of passive investors. I think because the NDX is willing to take them sooner, you can do it both. You don't have to do an or. And I think that I think it's hard to say, I only want to do this or I only want to do that, given the fact that there is, in fact, a choice here. If none of them were going in there, it would be if they weren't going to any indices, I think it would be different on the passive side, because then you have to rethink that. But because you're given a vehicle to express both views, I think that you can do that to the extent that your risk tolerance is willing to take that hit.
Sarah, it's good to see you. It's great to catch up. Sarah Hunt there of Alpine Saxon Woods on this record-breaking day for Elon Musk and the team over at SpaceX. Equities this morning up by 0.5%. With an update on stories worldwide with your Bloomberg Brief, Isabel Lee has more. Hey, Isabel.
Hi, John. Elon Musk is poised to become the world's first trillionaire when SpaceX begins trading today. That's 13 digits. So his company selling $75 billion of shares in an IPO that will value Musk's stake at around $690 billion. So when combined with his Tesla holdings and other investments in properties, his net worth tops $1 trillion. And teachers in one Louisiana school district will be receiving massive bonuses. The Wall Street Journal reporting that teachers will receive more than $50,000 this year thanks to increased tax revenue linked to a Meta data center. And in sports news, the World Cup is officially underway. Mexico winning the first of 104 matches, the co-host defeating South Africa 2-0, and South Africa beating the Czech Republic 2-1. The United States plays its first game against Paraguay at 9 p.m. tonight. That's your Bloomberg Brief. John?
Isabel, thank you. There's plenty of space for rants over the next month about FIFA and this World Cup.
I think this is space right here.
Some of the empty seats yesterday evening, I've seen the pictures of it. It's such a miss to come out and try and make as much money as you can from wealthy Americans from selling seats to this World Cup without having a long-term strategy about the sport in this country. In fact, I just think it's really bad business of FIFA. And I'd love to speak to them about it because, to me, for me at least, living here, I thought this was a perfect opportunity to grow the sport, to get more people engaged in the game. And then if you do that, guess what happens? You can sell your TV rights for more, right? More people start to play the game, there's more interest, you can leverage that. This at the moment, I hope it changes and I hope it picks up in a massive way. I want this to be very successful in this country, but what a miss. What a miss.
FIFA is the inverse of what we're seeing with SpaceX, which is essentially cash flow incredibly rich, promise poor in terms of just how much it's expanding its total potential revenue pool, versus SpaceX, which is cash poor, but potentially, you know, the sky's the limit, literally.
Compared to 94, where this country really wasn't ready to host the World Cup and didn't have much.
People want it.
Precisely. They wanted it. They wanted to engage.
Oh, yeah.
Then it just felt like FIFA just told you can't afford it.
Well, yeah, and to all the cities.
It's not meant to be a rich person's sport at all.
Well, did you see the stadiums filled in Los Angeles and Mexico City with people in sort of other sites, off-site, just cheering, absolutely tearing the place down? That's the kind of energy that you want inside the stadium. But, you know, FIFA, ka-ching.
Yeah, big time. Short-sighted. Anyway, up next on the programme, the Morning Calls Plus, Nick Owens of Morningstar warning of the risks behind the SpaceX sky-high valuation. From New York City this morning, good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
There's an average multiple of sales to price of about 10. For every buck that you generate in sales, you get about $10 in valuation. These guys at SpaceX are at 99, the highest I've ever seen, a 2,000% premium for Elon Musk. The average retail investor is massively overpaying it. They're totally overvalued, and it's so obvious.
That was a skeptical view. That was from the LiveSwitch founder and chairman, Brian Hamilton, a little bit earlier on this morning. Very, very vocal about what he thinks of this IPO.
He was the way that he put it into just what it would be in terms of an annuity, $80 billion or something guaranteed every single year, gives you a sense, speaking from sort of bond space,
yes,
of why there is some skepticism. And people coming from the equity space who are really enthusiastic are saying, really, the market share is potentially astronomical, literally, and potentially you're seeing the monetization already when it comes to Starlink, when it comes to even XAI to some degree.
That's the hope and dream story.
That's the dream.
Behind the order book, which is astronomical in and of itself for this IPO. Equity futures right now positive by 0.5% on the S&P, on the Nasdaq up by 0.4. That's the price action. Here are your morning calls. First up, Citi upgrading AMD to buy, saying its GPU upside is not fully priced into shares. Your second call from Evercore downgrading Adobe to inline from Outperform, saying investor sentiment is unlikely to turn positive until it makes changes to its C-suite. And finally, Wells Fargo raising its price target on Qualcomm to 230 from 160. Wells keeping an equal weight rating on the shares ahead of Qualcomm's Investor Day. The stock is up by 0.7%. Let's turn back to SpaceX. Nick Owens of Morningstar noting concerns on the outlook for the stock. He writes, we value SpaceX at $63 per share, a 53% discount to the upcoming IPO's offer price. Nick joins us now for more. Nick, welcome to the program. Market cap's at 1.8 trillion. You're at a fraction of that, Nick. What goes into your calculation as you think about what this company's worth?
Thanks for having me. Thanks for asking. That $63 number is a blend of a handful of scenarios, one in which XAI may not work out, but in 57% of our scenarios, we believe that Starship is highly reusable, and we believe that the data centers in space will be competitive and increase, take a meaningful market share. The issue is that in only 7% of the scenarios that we ran do you get kind of this let's say, dominant business outcome in XAI. That actually results in a $1.9 trillion valuation in our model. It's just we won't know for another year or two how reusable is Starship and how commercially competitive are data centers in space.
Nick, difficult question, because I know it's almost impossible to answer, but how much is the Elon Musk factor worth here to this company?
Certainly, as you guys were talking about before, in terms of enthusiasm and appetite for the shares, I think there's a big Elon Musk factor or premium there. I don't have a line item for that in my model, but the way I think about it is in terms of these probabilities of the engineering working out, them being able to do these things, and even being able to make them commercially competitive because they have such a cost advantage in their rocket and satellite business. They could potentially extend that into the data center business. And so I would argue that these probabilities that I was telling you would be much lower for any other company.
Nick, do you get a sense that people are conditioned to the prior experience of recent earnings at other tech companies, which have been astronomical and have been growing at a much faster clip than people had expected, to sort of suspend belief and say, look, this is somebody who knows what they're doing. They are increasing their revenues in certain pockets at very steady clips. Maybe they see something that we don't in terms of the promise, and frankly, they've delivered in other aspects before.
I think, you were talking, I would say Starlink is an example there where they might outpace expectations because adoption is very fast. We have a very robust forecast for Starlink. We don't think that their addressable market is quite as big as what the company claims, but a very strong business, that will drive operating profit and cash flow for the company. In terms of I think folks will be very much looking forward to the Q2 earnings here in July, just to see what those kind of rates of growth are going to look like.
Do you get the sense it's just getting harder to value things right now at a time where there's essentially an industrial revolution underway and a lot of companies are coming to market, are going public after already being private for a much longer period of time?
It's an interesting point. In the case of SpaceX, I would argue the rocket and Starlink business are way more mature than your average IPO or what we think of when we think of an IPO, whereas I would say XAI is perhaps a bit more in startup mode. So you're kind of getting a blended mix of what's normal for an IPO. As people have noted, this company was founded over 20 years ago, and so it's a bit unusual. harder to value. Morningstar does it in a consistent way. We look at the free cash flow to the firm, and I find that very reassuring.
Nick, can I just ask you a basic question? Forgive me, but what is worth more? If this company just decided to focus on, say, AI infrastructure, if it focused on being a neo-cloud company, whatever it was, if it just focused on doing that and got away from the model business, which seems to be really capital intensive too and costs lots of money, and stopped competing with Anthropic and the likes of OpenAI, what's worth more?
I'll be honest with you, the model, the scenario we ran is essentially that this is an infrastructure play. Put another way, whether they're renting their capacity to third parties, as you've heard they are doing with their Colossus data center, or using it themselves and then getting, let's say, subscription or enterprise revenue from the LLM. For the moment, I'm kind of agnostic as to that. It's really just what is the payoff for building out all this infrastructure. And I think of, in the very long term, this is almost like Elon Musk, building the railroads to space. It's beyond data centers, talking about Moon and Mars and so forth. So I thought of it really more as a long-term infrastructure build out, if you will.
Interesting. Nick, appreciate it. Thank you, sir. Really thoughtful conversation. Nick Owens there of Morningstar, going through a range of scenarios on how to value this company.
It's a really interesting point, especially because a lot of the revenues coming from AI are tied to Anthropic's renting of their infrastructure to try to deploy as quickly as they're in demand, versus, say, the XAI AI template that they're building out in terms of models. So if this is an infrastructure play, it's a more cohesive bet in terms of putting data centers in space, in terms of the satellite connectivity, and in terms of the neo-cloud business. That said, that's not what they're promising. They're promising something else, and they're putting a lot of money into the modeling to compete directly with the likes of Anthropic and OpenAI.
We'll get the more constructive view in just a moment. We'll catch up with Matt Kennedy of Renaissance Capital on why the SpaceX valuation isn't just hype. Equity futures this morning, positive by 0.4%, with the open and bell about an hour and 5 minutes away, with your equity market on course for another week of gains, up by 0.25% on the Nasdaq 100, encouraged by this move in crude. Oil lower, Brent down by close to 3%. WTI as well, Brent crude 87, WTI 85. The president telling us we're getting closer and closer and closer to a deal.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The opening bell about 60 minutes away. Equities up here by 0.4%, up on the week through Thursday at the close, adding some weight to the rally, higher by 0.2% on the Nasdaq. The move fading just a touch, going into this record-breaking IPO from SpaceX. We'll spend some more time on that in just a moment. Actually, I want to spend some more time on the bond market, which has really stabilized in the past few sessions. Held down by crude. Yields at the front end of the curve up by just a basis point this morning. 2's around 4.07%. 10's around 4.47, up a single basis point. Of course, this morning is all about a big equity offering. The IPO is still to come from Anthropic, from OpenAI. Next week's all about the Federal Reserve. Kevin Walsh, a man who we really don't know much about in terms of what he stands for, what he believes right now for monetary policy.
If there is some sort of conclusion to the Iran-U.S. fighting, does that give him a bit of a breather in terms of how rapidly they have to at least tighten verbally some of the policy? The expectation is that there will be a dropping in the easing bias, which a lot of people can't believe is still there. At the same time, notable how wide the gap is, the delta between what we just saw from the ECB, which was not only hiking rates for the first time since 2023, but indicating that further hikes are likely. And this morning, it is interesting that even though you are seeing somewhat of a relief sense in the U.S. bond market, it's barely a relief at all. And in the German bond market, you could see an absolute rip-roaring rally as people say, OK, at least this might take the pressure off the ECB to have to do so much. So let's see what Fed Chair Jay Walsh stands for. Jay Walsh, because, you know, Kevin Walsh, excuse me. Jay Powell will be governor.
Jay Walsh works.
I think that's kind of what we're going to be dealing with.
There.
Jay is still there, and he might give a speech as well.
Like
but I'm
hybrid
curious
Federal
to see.
Reserve.
You know, and then we get commentary from them, which I think will be really great.
Yeah, I agree with you. Crude looks like this: 88 on Brent. We're pulling back to 85 on WTI, down by 2 to 3% off the back of the imminent deal. We're told repeatedly is close, very close, I'm told, in the last 24 hours. That would be my conversation, I think, for next week around the Federal Reserve, at least my question. How narrow is the inflation conversation at the institution right now? Is it all about energy and the potential for energy to spill out and become embedded in other prices? Or does it go beyond energy? Are they seeing price pressure elsewhere that they are becoming increasingly concerned about?
The discussion on Wall Street very much is the latter, not the former. It's, yes, energy is definitely an input, but at the same time, people are able to absorb those higher costs, and you're also seeing it from some of the data center build out. So at what point are you looking at just an underlying resilient economy that doesn't require at least no more accommodation and potentially a rate hike?
Got to set expectations for communication as well. So the headline crossed. There will be a news conference, like that was news, right? There will be a news conference next week.
There is a question.
How long will these news conferences be? How many questions will they take? Is he open to having news conferences at every single meeting? Is that something he's rethinking? The speeches, how often will we hear from him? How often would he like other governors on the board to speak? And how much control does he have over regional Fed presidents, which at the moment is not much?
To me, that's a key question also. How much is he going to clamp down on the idea of this being a multitude of voices versus really driving from the top? Right? How far can he go with some of his decisions about changes, given the fact that he's just one person among 12?
That quote, inflation is a choice. Someone in the news conference is going to bring that up. Inflation is a choice. Yeah, precisely. What's your choice?
Yeah,
what's your index?
Yeah, exactly. Is it an index choice or is it a choice when it comes to how far you crack down on it?
That's the story for next week. Let's turn back to our top story for this morning. Counting down to the SpaceX trading debut. Wall Street gearing up for a historic trading day. Yahara joins us now from the NASDAQ for more. Yahara, welcome back to the program. It's a big few hours coming up where you are. What do you see now?
Exactly, John. So just to give you a sense of the anticipation here at the NASDAQ, we've already seen some key SpaceX figures arrive. I just spotted President Gwynne Shotwell downstairs sharing some laughs with CFO Brent Johnson as they chatted with other folks here at the NASDAQ. Elon Musk's mother, May Musk, also just walked in ahead of them. So the anticipation is building here ahead of the first trade. We have heard from the NASDAQ in the last hour that SpaceX will be eligible for trading at 10 a.m. Eastern, but we probably won't see the first trade until hours from then, as underwriters will still be working to match buy and sell orders in that price discovery process. And one of the biggest questions this morning is how much demand is still sitting on the sidelines. As we reported, the deal was more than 4 times oversubscribed. Retail investors alone are said to have placed more than $100 billion worth of orders, but only a fraction of those requests will actually be filled, which means there could be a large pool of investors looking to buy shares once trading begins later today.
Yahara, appreciate it. Thanks for the update. Yahara at the NASDAQ ahead of the pricing of this IPO, the trading of this IPO later this morning. The company's sky-high valuation raising major questions from investors. Matt Kennedy, the senior IPO market strategist at Renaissance Capital, writing, this valuation isn't just pure hype. A fundamental case can be made to justify it. Matt joins us now for more. Matt, welcome to the programme. Been looking forward to this conversation. We've heard from a lot of sceptics already this morning. Let's get to the constructive view. How do you justify this valuation?
Right. Well, it'll be an expensive stock in the near term, but our numbers have it looking pretty decent on 2029, 2030 EV multiples. So, you know, it's going to be a tough ride, a rocky ride to get there, and it can be uncomfortable to value a company so far into the future, especially in this space. But if it hits those numbers, I mean, this stock could even look cheap.
Well, Matt, let's focus on revenue, how much money they're making at the moment, what growth has looked like over the last few years, and the numbers you're thinking about in the forward years, next year, the year after that. How much growth are we going to see in revenue?
Right. I mean, we only saw, 15% revenue growth in the first quarter, but this is not going public off of its most recent quarter. It's going public off of what it can do in the next few years. And we're expecting it to more than triple revenue in the next 2 years. That would give us more confidence in this valuation. And how can it do that? Well, a lot of it's already underway with that Google and Anthropic deal. And then, you know, if they can get Starship underway, if they can continue growing in the connectivity Starlink space, I think they can get there.
Key question, Matt, where exactly is the revenue going to be coming from, and does it matter? Does it matter if it's mostly a NeoCloud story or if it's mostly a Starlink story that does propel the earnings higher?
Most of the revenue is going to come from the AI side, likely. At the same time, Starship V4 is really going to be that keystone to the company's plans, with connectivity drawing the most EBITDA in the near term as well. So on the top line, I think AI, but you really can't discount the other 2 pillars here too.
How much more different is it to try to value some of the companies that are IPOing right now versus, say, 5 years ago?
Yeah, I mean, it used to be easy. You could just look at any software company and then the 10 closest comps. This feels like new territory. Like I said, we're not comfortable. We're not usually going out to 2029, 2030 numbers, but you kind of have to. This feels almost more like a $1 trillion venture investment. And I expect the same will be true of Anthropic and OpenAI.
Matt, what do you do when it comes to total addressable market? The TAM of this company, when you start thinking about going to outer space and there's not much competition, just sounds insane. Some of the numbers I've heard over the last few weeks just sound almost made up, Matt. Where did the numbers come from?
I'll be honest, we always discount the TAM pretty heavily. We see very inflated TAMs in prospectuses. So we kind of take that 20+ trillion TAM, we kind of set it aside and look at what the company's been able to do and where we think it can go. We kind of disregarded that 20 trillion plus enterprise AI. But, you know, I think there's no question AI infrastructure is huge and growing. The potential for the Starlink is already very established and growing very fast.
Matt, can I ask you, we were talking about growth, and clearly the IPO is not priced off the trailing years, obviously. We're talking about the hope of the future. But Matt, I am interested in the growth levels coming into this listing. Why aren't we seeing aggressive growth? And why is it going to change quickly in just the next 2 years?
Yeah, I mean, I think the launch business has really been focused on bringing those satellites into space, helping the connectivity, the Starlink business out. And then on the AI side, that's mostly been plowing money into CapEx, and now it's finally at that inflection point. And, you know, those deals with Google and Anthropic have given us confidence. The fact that Google is also raising billions of dollars to build out its own data centers and other companies, I think they're in the right space. I think a case could be made that, you know, it's a bit risky to build out all of this infrastructure. You know, what happens if there's overcapacity? But for now, you know, pedal to the metal, it looks like the smart play.
Matt, you agree with some of the skeptics. And in one particular point, you said that this looks a lot like a $1 trillion venture capital bet. Do you think it's appropriate that this go into a lot of the indexes and be available widely to retail customers at a time when essentially it has a characteristic more of venture capital than, say, traditional equity?
Well, you know, I mean, you could take a look at Tesla. That took a long time before it got into the S&P 500. There's all sorts of, you know, growth companies, mature companies. So I would say that there's a spectrum of what's appropriate for what goes in an index. And this company kind of feels like a growth company on steroids. So I believe it can justify its $1.75 trillion valuation. I wouldn't say it's, you know, inappropriate to be going into indexes whose, you know, goal is to track the market. If people don't want to own those index funds, they can certainly sell.
Matt Kennedy, appreciate it, Matt. Thank you. That's a choice people will have to make. Matt Kennedy of Renaissance Capital, a growth company on steroids without the major growth just yet. And perhaps that's going to change in the next few years.
You're betting that it will change in the next few years. People keep pointing to the index composition. You were alluding to that with Sarah Hunt earlier, the idea that the NASDAQ is going to be including this and that the S&P isn't, and that it will include the divergence between those two indexes, with the NASDAQ much more levered to the AI bet than, say, the S&P. How much investor education is going to have to go into this, though, too, so that people truly do have a sense of this? Because when you think about the U.S. index, equity indexes, they've gotten further and further away from the underlying economy as time has gone on. And do people really fully understand that?
Well, right now, we're getting closer to the underlying economy because this economy is just AI and CapEx right now, isn't it?
That's a great point. In terms of the strength points, yes. In terms of going to the grocery store, well, maybe. I mean, it depends. Maybe AI is picking my blueberries.
Yeah. Hopefully those blueberries get cheaper for you, Bramo. I know how personal that feels.
It does. Those big blueberries, they're fantastic. But
if they're really big, they're not organic, are they? You know, like those monsters you get sometimes that turn up.
Do you care? Yeah, you care.
Oh, yeah, of course.
No, I'm just like, they're delicious.
Oh,
you
like the bigger ones?
You know, it depends. The really small ones that are like
organic,
I mean, if they don't taste good, they don't taste good.
SpaceX, let's get back on track. Futures fading just a touch. Equities right now up a third of 1%. Let's get you an update on stories worldwide with your Bloomberg brief. Isabel Lee has more. Here's Isabel.
Hi, John. The U.S. and Iran may be nearing a deal to end the war and open the Strait of Hormuz. President Donald Trump saying a deal is imminent and could be signed in the next few days. An Iranian Foreign Ministry spokesperson saying, quote, "We have not reached conclusion on this matter yet." And OpenAI's ChatGPT reaching 1 billion monthly users in May. According to Sensor Tower, the app became the fastest ever to reach the milestone despite growing AI opposition. Other apps like Anthropic's Claude made triple-digit year-over-year gains. And in sports news, the Knicks are heading back to San Antonio as they look to close out their series against the Spurs. They're one win away from their NBA title since 1973, and teams up 3-1 in the finals are 37-1 all-time in league history. Game 5 tips off Saturday night. That's your Bloomberg brief. John?
Isabel, thank you. Thank you for the update. Up next on the programme, setting you up for the day ahead. Plus, we'll catch up with Dan Niles of Niles Investment Management, saying things could get dicey down the road for this big company.
look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing. It's not just one thing. This is one of those companies where ultimately they have some incredibly promising technology. Is it worth what it's being sold for today? I don't know.
Place your bets accordingly. That was Sarah Hunt of Alpine Saxon Woods on the major IPO that's set to start trading a little bit later this morning. Equity futures shaping up as follows. Positive by 0.2%. The rally's fading as we get closer and closer to the cash open. The Nasdaq just about unchanged. Going into the opening bell, what a week we've got lined up for you. A little bit later this morning, this trading debut for SpaceX. Should expect that around 10 a.m., perhaps, possibly, even later. And then, a little bit later, 9 p.m. Eastern Time, Team USA playing its first World Cup match. We'll give you an update on that, no doubt, over the next few weeks. World Cup mania taking over Mexico, America and Canada. Then next week, too, G7 finance ministers and leaders, of course, all getting together. G7 leaders meeting in France. Wednesday, FOMC rate decision, Kevin Walsh news conference, the main event, about a week out.
Yeah, and it sort of sets it up perfectly with the G7 meetings, given the fact that not only potentially could we see some sort of deal signed between the U.S. and Iran, as some people were talking about this morning, but also a lot of the big tech leaders are going to be at that G7 meeting, which highlights sort of the 2 big components that are at play for the new Federal Reserve Chair, Kevin Walsh, coming in and having to figure out exactly what's causing the inflation. Is it the energy side of the picture? Is it the tech build-out kind of the picture? And how do you view monetary policy at a time of incredible technological change?
Regulation conversation about taking stakes in some of these companies. Very different attitudes in Europe compared to, say, the US about what's going to happen here.
I think it was very important for these guys to get on the plane, which is the reason why they're all showing up. You can imagine some of the conversations. I want to know their calendars. Who are they meeting with? Exactly what the tenor of those conversations are. I'm guessing it's more on the regulation side than it is with these leaders than, say, on the buying a stake.
I would suggest also that some of these executives believe they are the masters of the universe as well, and think that that's the group they should be running it.
Right now, the market is treating them
like
as masters
of
the universe, because their total market cap right now exceed by multiples most GDPs on this globe.
Let's talk about the massive success of SpaceX and Elon Musk. What a turnaround in fortunes for this company that's gone through some difficult times at times over the past few years. Bloomberg's Ed Ludlow joins us now for more. Ed, we'll see the first trade a little bit later this morning, but let's spend some time on that. How much work Elon Musk and the team has dedicated to this company to get it to where it is today?
Yeah, in 2002, when it was kind of seeded, I think it was at a $27 million valuation. And, you know, it was very close for quite a long period of time to bankruptcy and failure, and they had just enough cash and gear to get one rocket together and it blew up. And fast forward to present day, the valuation that we're all debating, the trajectory of the valuation in the context of price to sales, however you want to measure it, is not predicated on that rocket at all. It is predicated on a story they've pitched investors, on them becoming an enterprise AI company, like completely different. Really interesting though, like this is such a big moment in time because it's literally the biggest IPO in history on dollar raised and valuation. This isn't the end of the capital markets story for SpaceX, it's just the beginning, right? And so that's such an interesting psychological consideration. They're pitching a business that doesn't yet exist. No one's talking about the success of the current business, which is Starlink, cash flow positive, and basically being a neo cloud where they rent computer capacity to Anthropic and Google. And at the same time, why are they raising $75 billion? John, they need capital. And part of that's to pay down existing debt. NASDAQ is saying quotation 950, eligible for trading at 10 a.m. Eastern. One thing I would note is that's completely standard for tech IPOs on the NASDAQ. This isn't a standard IPO. And so, yeah, buckle up. Interesting few hours.
Certainly not standard, that's for sure. Ed, thank you, buddy, and thanks for the coverage. Dan Niles of Niles Investment Management has this to say. It would not surprise me to see the stock trade well initially. After that, however, I think it gets a lot more dicey. I'm pleased to say that Dan joins us now for more. Dan, welcome back to the programme. Why do you believe this gets dicey from here?
Well, I mean, if you look at it over the first 15 trading days, you've got additions to all the different indexes coming up. The earliest one, you can add it in, is 5 days. The NASDAQ 100, you can add it in to that index in 15 days. And so that's going to force a lot of index buyers in and then closet indexers within the mutual fund community. I think after that, valuation matters. So, I mean, if you can pull up a chart of the ARK Innovation ETF, ARKK, over the last 10 years. If you go back to 2021 and you look at that, it is down 50% from its peak in February of 2021. Tesla over that same time is up about 50%. But if you put it into the S&P 500, you would have doubled your money, including dividends, since that peak in February of 2021. So that shows you the dangers of buying stocks at valuations that are astronomical, because they will get corrected, but it takes some time. And so that's the way I'm looking at the SpaceX IPO. I mean, don't get me wrong. I think Elon Musk is the Thomas Edison of our generation. But at 90 times revenues, which is where the IPO price is, it looks like on Hyperliquid, it's at 180 or so. So that'd be 120 times revenues. This is like buying the ARK Innovation ETF, in my mind, at its peak in February of 2021.
Yeah, Dan, it's the revenue piece of it that I want to spend some time on with you. Clearly, trading revenue, this number is a monster, more than 90 at IPO. And as you indicate, after the rally, it's going to be higher than that. But the hopes and dreams are about the forward years, of course, just by definition, Dan. Dan, the growth numbers coming into this, that's the piece of it that gets my attention. We will pay up for growth stocks if they're generating lots of growth, but you don't see that right now with this company. And Dan, what I've been told this morning is that in the next 2 years, that's going to change really quickly because they can leverage the investments they've made. Dan, what are your thoughts on that?
Well, and that's true, but you're leaving out one important piece, Jonathan, which is they've said they're going to need to spend hundreds of billions of dollars to make that happen, to be able to get to that 28.5 trillion in TAM that they believe is the largest in human history. But look at what's happened with companies we already know very well that are trying to do that. So Google went out and did a capital raise. The stock's down 6% just in the month of May. Amazon also selling the largest corporate bond offering ever in Canada. That stock's down 11% just in the month of May. And go to yesterday, right? Oracle results came in, those were fine. But the CapEx came in a lot higher than what people thought in terms of their guidance. That stock was down 9% yesterday. It's down just 18% just in the month of May. So you already, and then Meta, obviously, since April 29th, when they put out their results, they again cranked up their CapEx relative to expectations. Expenses went up. That stock's down, I think, 15% since they reported results. The S&P's up 4%. So you can make the assumption that once you get out of this first 15 days of trading, when there's forced buying due to these index inclusions, the stock keeps working. But I look at investing as risk versus reward. At 90 times revenues at its IPO price, over 100 based on what it looks like it's trading in some of these other markets, it's just not there. You can buy other companies, to your point, Jonathan, that are growing a lot faster, that you can get at very reasonable valuations that, have positive cash flow.
Just real quick, Dan, I'm curious if this is sort of an indication of how things are going to be valued for OpenAI and Anthropic, whether this sort of indicates the peak in the sense that all these companies want to raise as much money when the window is as wide open as it possibly can be.
Yes, you hit on the exact point, because money right now looks infinite right up until the point it isn't. So is the fact that Google, Amazon, Oracle, Meta are all having pretty rough periods of time as they're raising capital. And these companies actually, on an operating basis, generate lots of cash flow. Don't forget, SpaceX, on a net income basis, is losing a lot of money. They lost more in the first quarter than they did in all of last year, and that's just net income losses. I'm not even layering in CapEx. So to your point, which I think is a really good one, now you've got 3 of the biggest IPOs in history lining up. And is capital infinite? I think based on how things have traded in May off the capital raises of, established, very profitable companies, I think you're kind of figuring out maybe capital isn't infinite.
Dan, appreciate your time and really valid points. Thank you, sir. Dan Niles there of Niles Investment Management. Dan is absolutely right. We've been tracking the same story, the pushback, just the report that Meta might raise equity capital last Friday. Equity sold off. Saw it with Oracle on spending, saw it with other names through the week as well. There's a stress that's starting to emerge. Not broad-based, but signs that you're getting some pushback in capital markets.
We got it at the end of last year when they announced the CapEx plans, and then Meta in particular sold off really dramatically. And then it resurged when people started to look at some of the profitability and how it was coming out. This is a tough story to get your hand around, which is a reason why it's been really wonderful to listen to all these different points of view this morning.
A record-breaking IPO from Elon Musk and a team over at SpaceX. Trading should begin in the next few hours. Equity futures fading just a touch on the S&P 500. From New York City this morning, good morning. Have a wonderful weekend. This was Bloomberg Surveillance.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank it's super important to have trust, and then public companies are trusted more compared to private companies. So
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Well, here we are, 30 minutes until the start of trading, awaiting the debut of SpaceX on the NASDAQ. I'm David Gura.
It's been a while coming, David. I'm Bonnie Quinn. Matt Miller and Danny Berger are off. Bloomberg Open Interest starts right now.
Well, coming up, the countdown is underway. SpaceX trades today after raising $75 billion in what is the largest IPO ever.
Shadow market signaling a blockbuster debut, putting Elon Musk on the brink of becoming the world's first trillionaire.
And hopes for peace are also helping boost sentiment across markets today as the U.S. and Iran edge closer to a deal.
A nice alignment there. The market seems to be primed for some kind of a bounce today. Stocks to watch. Well, we're looking at the AI trade ahead of that SpaceX debut. Shares popped earlier on the prospect of a US-Iran deal, which seemed more likely than ever after the president said yesterday he was going to put off a third round of strikes last night and a deal was close. Well, here are some shares. Alphabet, of course, has a big stake in SpaceX. Alphabet, no doubt, will move on the prospects for SpaceX today.
Our focus, of course, on SpaceX, the company and its prospects, but so many businesses in the broader space industry paying attention to how this goes, looking at sort of what this means for their fortunes going forward, taking a look here at stocks in that broader space industry. A volatile day, I think, like a lot of folks, wondering sort of what's going to happen here as all of this plays out as we wait trading on the NASDAQ. But you see shares mixed in EchoStar, Rocket Lab, and AST Space Mobile. Continuing to watch those throughout the day as you kind of look through that prospectus that SpaceX released, forecasting a radically different future, so much opportunity in space, portending here a new economy, a space economy. We'll see how other companies fit into that going forward. Bonnie?
All right, David. Well, as we've been saying, SpaceX set to make its market debut in the largest IPO in history. It's a landmark moment for both Wall Street and the space industry.
I think this feels like a milestone moment. This was an investment thesis that was unthinkable a decade ago for most investors.
SpaceX is the biggest rising star of all time. They have no net debt. So it's clearly an IG-rated company as we stand today.
I'm actually quite bullish and optimistic for its impact on the industry. I think there's going to be a lot of capital that flows back into other space names as well.
SpaceX is one of the most important infrastructure projects of our time and really a very big cash generator.
What SpaceX is doing is actually integrating not just across its space technologies, but it's creating infrastructure on Earth and in space to basically do a lot of AI compute.
Joining us at the desk now for this hour is Bloomberg Tech co-host Ed Ludlow. He's been reporting on SpaceX and Tesla, of course, for years. Ed, of course it's investment grade. It's going public today. Does it stay investment grade? And how many times does it go back to the market?
I think the significance of the reporting there is that we're very fixated on the biggest IPO in history, and they'll raise $75 billion, and that's astonishing what they'll use the proceeds for, pay down some debt, but capital expenditure, right? It's highly analogous with what we see in the hyperscaler space. And the expectation on that IG rating significance is they'll come back to the markets in some form, right? Equity or debt. This year was about a race to IPO. SpaceX, Anthropic, OpenAI. Actually, the way that lots of investors who have exposure to all three companies, they've got a bit of a headache on their hands, is that it's a race for capital, with Alphabet coming in strong into the equity market and everyone else probably coming quickly to follow suit.
I picked up the prospectus from Rocket Road there in Starbase, Texas, 200-plus pages. I know you've read them all.
I'm so sorry.
I myself didn't read all of them, but I was drawn to this kind of caveat emptor in the document. Our growth strategy may take longer to execute than anticipated.
Right.
You may not realize a return on your investment within the time frame you anticipate, or at all. That clause there is stuck with me.
Yeah, SpaceX management has been clear that the timelines and horizons for the story they're telling, the vision of being an AI company where the total addressable market is $26.5 trillion, it will take time to get there. What's interesting about that is, like, right now, however we trade today, right, it's a moment in time. There's not as much emphasis being put on the, well, what is it that they currently do? And what they currently do is have the Starlink business, which in 25 was profitable in isolation, cash flow positive, although there isn't a cash flow number in the prospectus. And they've become a neocloud. They rent data center capacity to Google, which happens to be one of their biggest investors, and Anthropic, on paper one of their biggest rivals. And you know, what's so interesting is behind closed doors, a lot of these venture and growth mutual funds that are already on the cap table tell me, you know, we actually not paying too much attention to that long distant future business model. We're pretty stoked about the current business and how they've hedged with this data center plan.
Doesn't it remind you of when Amazon suddenly realized it had a cloud business and that's what paid for everything else for a moment in time there?
Yeah, it's highly analogous to that. The cash cow in the interim period will be SpaceX through XAI is very good at building data centers and running them on the best dollar per token basis. And they can't work out how to use all of the capacity themselves to train their own or run their own models. So they're saying, well, someone else can use it in isolation, and we'll make money from that.
And you're going to stick with us, not just for this block, but for the entirety of the hour, as SpaceX makes its market debut today. A huge question is whether markets can absorb another mega cap AI play as concerns continue to grow about AI spending and returns. I want to discuss those market implications now with Bloomberg macro strategist Michael Ball, who joins us here on set in New York as well. Let's pull back here. I mentioned at the top a lot of space industry participants watching this unfold. More broadly than that, there were a lot of gigantic companies poised to go public who are waiting to see how this goes as well.
Yeah, I mean, a couple things. One, the market narrative right now is clearly either Iran. It's clearly this kind of rethinking of the AI trade, winners and losers, where capacity is constrained, where it's not, who has the pricing power, and then obviously the SpaceX. And the SpaceX feeds back into your question here, buybacks versus new issuance. This is the first year where we're seeing that actually look a little flattish. And we don't know yet where Anthropic obviously is going to be and where OpenAI is going to be, so that will add to the pile. But as it stands right now, it's more balanced. So that like tailwind that's been around for several years, and it's always been this passive flow, constantly being kind of leaned into as there's going to be buyers coming in from the corporate side, is no longer as assured.
Why set the price pre-IPO $135? Is there precedent for this?
Well, there is usually some setting of the price, but to your point, why at that level? I think that's probably where they thought they could get the best deal. And again, we'll find out today when it opens how much it goes up. And I get your point because the shadow markets are showing a little bit of a higher premium to that. And that, you know, the murmur among traders is it could fly, given how much it's being subscribed. But I don't really have a great answer for exactly why that level. I think they all got together in a room and decided that was where it should be.
What I jump in and say is, like, you know, our reporting is that unusually, even though the bankers will make a lot of money from this transaction, Elon Musk and the rest of the SpaceX management team had very firm control behind setting 135 early. What's so interesting, right, is that it's way oversubscribed on the institutional side and on the retail side. All you can trade today in the session is whatever was put into the market on the float. Like, how does that work?
Yeah. I mean, again, this is my worry, that there's going to be a spike. You're going to see some beneficiaries with it, especially like the Googles who have a stake in it, especially some of the other tangent plays, especially the neo clouds, because it's showing, again, that's where the capacity constraints are. And we're going to have maybe a gamma squeeze as well, because we have the froth has come out in the last 2 weeks. We've all seen that. We've seen a more volatile tape. We've seen it in the semis. We've seen it in the NASDAQ. That's been especially the area that was overbought and the option markets were showing us. So now we've kind of had a chance to reload. Things aren't as long, so there's a chance now for everyone to pile back in. And for the last 2 or 3 weeks, retail and institutional trading have been in lockstep. And back to Ed's point, they're in lockstep again going into this IPO, which again gives us dry powder that can really ramp things up and make for an interesting show. Then again, of course, how long do we stay at these levels and what's the implications further out for volatility?
But also the size of oversubscription is relative, right? So 4 times oversubscribed is not normally a huge amount oversubscribed. It's just that this is a massive IPO, and so therefore maybe it's a little more than usual. Yeah, it's
big part of it. I think we've never seen anything like it. I've been pushing back on the traders and PMs I'm talking to who are getting experts telling them things. I think we don't really have anything to really look at in the past to gauge this as. And also, again, it is a certified neo-cloud thing we understand, but then there's this dream further out that's obviously Elon's done in other ways with Tesla and stuff as well. So if anyone says they think they know where this is going right now, I would just say, let's wait and see.
Michael, we will be chatting to you throughout the morning. That is Bloomberg macro strategist Michael Ball, and Ed Ludlow is sticking with us. And don't miss a special edition of Bloomberg Tech at 11 a.m. Eastern, then an exclusive conversation with Jim Chanos, who said this is an IPO that's built on hope. That conversation on Bloomberg Money at noon. The US and Iran are edging closer to signing an agreement to reopen the Strait of Hormuz, according to senior officials. The deal could be signed next week during the G7 summit near Geneva. Bloomberg Washington correspondent Tyler Kendall has the details. What changed right before the market closed yesterday, Tyler? It suddenly seemed that the president was a lot more enthusiastic, and then Mayor came out this morning and gave somewhat of support to what the president had said.
Right, Vonnie, we're tracking a few different developments today, but the overarching theme here is that G7 officials tell Bloomberg News that a senior Iranian official last night did indicate that a deal is likely. There seems to be this renewed hope that they are getting towards a diplomatic solution, though our reporting does caution that Iran has not said that it is ready to sign just yet and that any agreement still needs Iran's supreme leader's approval. Now, we've been tracking that the two sides are working towards a memorandum of understanding that would first seek to extend the ceasefire by 60 days. Then we would see a reopening of the Strait of Hormuz prioritized within the first 30 days and the U.S. lift its naval blockade. Once those components are in place, then we could expect those longer-term discussions around what potential curbs to Iran's nuclear program would look like. But we got a flurry of reports out from Iranian state media today about some of the provisions and what is reportedly the 14 points in this agreement that could prove problematic, including that Iran is saying that they will not restore the Strait of Hormuz to pre-war levels, seeming to indicate that they want to retain some sort of grip over the waterway, even if a deal is reached. Keep in mind, about 140 ships used to transit through the strait before the conflict began. But then there were some of these other provisions included, too, including that the U.S. would have to withdraw assets from the region, unfreeze half of Iran's frozen assets, and suspend oil sanctions. At this point, Vonnie, we'll have to see what the U.S. actually agrees to in any sort of final agreement. But the White House at this point is still pointing towards that they are pushing for this deal and that they have conferred with regional allies.
Could happen as soon as Sunday, according to Bloomberg's reporting. A lot to get to before that, including the president's birthday, Flag Day, of course, and that cage match on the south lawn of the White House. Bloomberg's Tyler Kendall from Washington, thank you very much for that update. And let's do a quick check of the markets here as we await trading to begin. In SpaceX, we see S&P futures up here about 1/5%. NASDAQ and NASDAQ is down slightly this morning. Again, a lot of volatility ahead of this, looking at the 10-year coming in some as well. And Brent crude below $90 a barrel. I should say that's significant because we haven't seen it there below that 90 threshold since the first week of the war that we were just talking about, Vonnie.
Well, David, let's get a look at some other movers on our radar. Adobe down after the CFO announced he's leaving the company. In March, the CEO of Adobe said he would resign later this year. AMD shares, though, are popping on a city upgrade to buy. Demand for its GPUs there. And these stocks are all set to join the NASDAQ 100. You have a little bit of everything here. You have the Neo Clouds, CoreWeave and Nebius. You have Astera Labs. And, of course, a space play, Rocket Lab.
Well, coming up here, Elon Musk poised to become the world's first trillionaire. Musk's worth would be more than the GDP of Taiwan. Dig into his prospects here going forward. This is Bloomberg Open Interest.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
That change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Now to high interest, to look at what's making headlines around the world. Some New York City brides are choosing bing bongs over wedding bells as the Knicks NBA Finals run collides with weekend nuptials. Couples who booked venues years ago are adding big screen TVs, score updates, and team decor to keep their guests from watching the game on their phones. Some receptions are becoming full-fledged Knicks watch parties as the team chases its first title since the year 1973. Vanguard has unseated BlackRock as the largest U.S. ETF issuer for the first time in over 20 years. Vanguard now manages about $4.39 trillion in ETF assets, driven by nearly $291 billion in inflows this year and surging demand for VOO, its low-cost S&P 500 fund, which recently topped $1 trillion in assets. And Goldman Sachs President John Waldron says a record-breaking SpaceX IPO has investors racing to fund the future. He spoke exclusively to Bloomberg TV's Francine Lacqua earlier today.
It's a $75 billion IPO, the largest in history. I think it presages the beginning of a pretty sizable wave of IPOs, which we're excited about. I also think it shows you that the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space, which is quite exciting.
Here's a look at the NASDAQ market site right now. Elon Musk poised to become the first trillionaire if SpaceX stock closes above 2% higher today after its IPO. Let's discuss with Bloomberg Businessweek columnist Max Chafkin. He's covered Elon Musk for years. And of course, Ed Ludlow is still with us, host of Bloomberg Tech. Max, let me start with you. I'm tempted to ask, would becoming a trillionaire change Elon Musk in any way, or how would it change him? But in all seriousness, would he be satisfied then? Clearly, pay is important to him. He's made it a serious part of board discussions.
I think that pay is important to him insofar as it's sort of a scoreboard of his achievement. On the as well, like, he has big ambitions here. He's attempting to invest huge sums of money in the political system. There's big plans here with SpaceX. Of course, now the hope would be that the public is going to fund SpaceX plan rather than Elon Musk personally. But he is somebody who has cared about. He may not care about material wealth or his house. That's what he always says. But he is somebody who's been very, very focused on his personal wealth, his pay. We've seen these fights over pay packages for years. He even, in an exchange on X earlier this year, corrected someone, insisted that he was a trillionaire, I guess a little prematurely. So this is, he has been focused on his net worth, even if he says he's not focused on material wealth.
Let me stick with focus, but in a different light here, and that is how he's going to be able to run this company when it goes public, when he has other things kind of drawing his attention. He is the techno king of Tesla. I believe that's the official term. It's in the prospectus that I mentioned earlier. Any concern among these legions of retail investors who are going to be backing him today about his capacity to do this and that simultaneously?
I don't think there's any concern among the legion of retail investors. That's what they're betting on. I think when you talk to institutional investors, maybe there are people who will quietly say that this is a concern, and we saw this risk factor come up with Tesla, that was the justification for paying him this latest huge pay package, that there was a risk that he would take his AI ball and play elsewhere. I think this is why so many people think that Tesla and SpaceX are eventually going to merge, that you have two companies run by the same person, they're both kind of doing the same thing, and you have shareholder bases that have essentially the same thesis, which is Elon Musk is great, we're going to follow him to the moon.
There's a massive distinction between economic ownership and voting power. And Musk is going to come out of this IPO 84% voting power at SpaceX, which, when Max and I over the last 12 months were writing about Elon's world, and particularly the Tesla, the whole pay package point, he would argue, would he not, Max, it's about control. He can only execute the vision that he's outlining if he's not at risk from activist investors and so on.
Yeah, absolutely. And this setup at SpaceX is complete control. I mean, not just the 85% voting control, but also the fact that they've moved it from Delaware to Texas, where the courts are set up in a way that's much more favorable to management. You also have provisions in this IPO around arbitration for shareholder class actions. Basically, no one is going to be able to force Musk to do what he wants. The only thing that can force him is the stock market. Is the fact that if the stock market doesn't like this plan, doesn't believe in the idea of space data centers, which I think is very possible, especially as, depending on what happens with the AI market in general, then I think that could force changes.
So SpaceX is already a conglomerate, right? X was brought into XAI, and now they're all part of SpaceX. Is there a point at which Tesla becomes part of the conglomerate as well? Ed, let me ask you. And in that situation, nobody could complain that he wasn't being able to give time to each company, because essentially he's giving time to their conglomerate.
The idea is out there in the market. We reported prior to the XAI and SpaceX merger that both boards had met and discussed the idea of a SpaceX and Tesla merger anyway, and that there was a large group of SpaceX investors that basically went to Elon and the rest of SpaceX management and were like, this makes much more sense to go with Tesla. In this IPO, yes, retail's massively oversubscribed. There are loads of Tesla shareholders that did not buy shares in the IPO or try to get an allocation because they think that's going to happen anyway. Why bother? You'll get your comp or your reward if the transaction were to happen.
It is also a way to kind of address some of the issues at Tesla. You remember, look at Tesla, and what you have is kind of a troubled car company and as the investors see it, a very promising AI thing. If Tesla is not able to kind of get its car business on the right track pretty quickly, either by, bringing lots more robo-taxis to the market. Right now, they just have a few dozen in a couple of cities that are, operating unsupervised. If they aren't able to sort of find some new gear in terms of automotive sales, this could be a way to say, okay, we don't need to worry about being a car company. Now we're just going to be part of this amazing vertically integrated AI rocket ship.
So watch the proceedings there at the NASDAQ trading floor. I just want to point that out. Yes, the head of the company. You mentioned the boards having talked to one another, and in the minute that we have left here, Ed, I'm curious about the power that this board will have, if any. You've talked about his capacity to pick who's going to be on that board and to relieve them if he wants. Notoriously, Elon Musk's boards don't have much power to push back on what he's doing.
Hopefully everyone else read the prospectus like you did, but basically, his comp for SpaceX is based on restricted shares that he has to hit market cap milestones to get, but also establish a permanent human colony on Mars. Yes, a permanent human colony on Mars in order to unlock his compensation. That's the board's control. They had it written into the doc. That the board of SpaceX think about its composition. Sure.
I do my own research, Ed Ludlow. Thank you very much. You're going to stick with us. Max Chafkin, Bloomberg Businessweek columnist, host of Everybody's Business, with us here on set as well. And coming up, we're going to talk about the space economy with Interstellar Lab founder and CEO Barbara Belvisi. That's coming up on Bloomberg Open Interest on Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Let's go to check the markets ahead of the opening bell. And again, this is a big day for SpaceX, of course. And I believe we see Elon Musk, the founder of SpaceX, on stage addressing an audience in Texas. This is going to be listed about the the NASDAQ here in New York and Texas as well. Fewer than 4 minutes to the opening bell. We begin the trading day with SEBI Shah here in just a minute. But before we get there, just want to note what we're seeing in markets more broadly here. This is a story of hopes and dreams. I think definitely on the SpaceX side, investors buying into what Elon Musk is selling. We shall see how much they do that going forward. The other hopes and dreams have to do with this prospective deal with Iran and the U.S. Bloomberg reporting this morning there's progress on a memo of understanding that could end what we have seen over the last 100 days, conflict in the Middle East. Of course, the Strait of Hormuz being closed. S&P futures up slightly, about 0.33%, as we await the start of trade for SpaceX on the NASDAQ. This is Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm David Gurra, taking a look here at futures just seconds before the market opens today. And we see a lot of green on the screen, not by a huge magnitude here, but so much interest and yay enthusiasm for what SpaceX is going to do in just a few minutes' time. That is begin trading on the NASDAQ. Of course, we've seen a lot of stocks rise in concert with that, particularly the Magnificent Seven stocks, taking a lot of the draft that has been given them by SpaceX going forward here. Looking at the bell ringing today, a disparity, of course. One has to say that. Fifth Third Bank ringing the bell at the New York Stock Exchange. Yay for Fifth Third Bank. But of course, our primary focus is on SpaceX and what's happening at the NASDAQ. Yes, in New York City, down in Times Square, but also in Texas, where Elon Musk is addressing his legions of fans and investors as well ahead again of the start of trade here on Wall Street. Vonnie, over to you, as I know you have some stocks to watch on this Friday morning.
You were talking about the Mag 7, David Ben Emmons talking about the Orbital 7 today, right? And of course, they have overtaken all of the other 7s by a long shot just over the last few weeks alone, with several of them up several hundred% over the last year. These particular stocks, though, are AI related because, of course, the AI trade is back with the SpaceX debut. Shares popping earlier on the prospect of a US-Iran deal as well. Now, the gains have since subsided, except for Alphabet, which of course has a major stake in SpaceX and basically benefits if SpaceX does well. And even if it doesn't, Alphabet just stands to win either way, David.
Yeah, I want to point to some space-linked stocks ahead of that SpaceX debut, ahead of when SpaceX begins to trade. Market liquidity top of mind for investors as they free up capital from mega debuts from SpaceX, OpenAI, and Anthropic. Look, at the top of the show, just about half an hour ago, it was a mixed picture. Now we see a lot of those stocks down. Again, I think there's just a level of, I don't want to call it anxiety, but a moment to wait and see sort of how this kicks off for SpaceX. But as we'll talk about over the course of the next hour and a half, Vonnie, really a lot of companies involved in this industry watching very closely as this debut happens on the NASDAQ.
And as you might imagine, he's actually live streaming this on X right now as well. There's going to be a lot of cross-platform advertising.
Cross-platform, exactly. All right, joining us now is Principal Asset Management Chief Global Strategist Seema Shah. She's here with us, along with Ed Ludlow, of course, the anchor of Bloomberg Tech, who remains with us here on set in New York as well. Seema, let me just start with a broad question just about how you're feeling about all of this. You can talk about SpaceX in specific if you'd like, but clearly there is so much optimism, hope. I said hopes and dreams just a moment ago. How are you thinking about this day in markets?
Yeah, hi. It's look, it's an interesting day. There's as you said, hopes and dreams, I think, is the right way of putting it. And actually, I've never felt more irrelevant as a macro strategist as today with given SpaceX. But overall, I think the broad market sentiment is positive. It has had a very deserved pickup. We've seen the last couple of weeks amongst clients, you have had some pessimism really starting to creep in around the Iran war. So today, very good news on that front. And I think at least takes away some of the fears, even if it doesn't necessarily give the market a very significant boost at this stage.
Just on that point, Seema, it did seem to be a huge U-turn yesterday, just before the market closed, right, that the president came out and said he was calling off what would have been a third night of strikes. Why should we believe that we're any closer to the Strait reopening today than we were yesterday at this time?
No, absolutely. It's a great question. I think that's a question that everyone is asking themselves. I think one thing that we can say, though, is that just looking at the trend of the conversations is that you haven't seen a real escalation in tension. So even as you have a kind of a war of words, something happens, you don't really see an escalation in terms of the actual military actions. So I think that's giving us some confidence. But I think you're absolutely right that in terms of having a lot of confidence in how sustained this news is going to be, is questionable. And it's one of the reasons why you continue to say from investors that they just want to have a big picture view of the economy. And it's certainly helped by the fact that the fundamental picture is still really supportive. So you can be risk on, maybe look away from the Iran war, look away from the headlines, and just stay invested through all of that.
Ed, I could use any number of superlatives to describe this IPO. I know you've had to do that over the course of this week and past weeks as well. But as we look at Elon Musk, they're surrounded by many hundreds of people. I saw a statistic that I think 4,000 SpaceX employees, past and present, are poised to become millionaires here as a result of this IPO. And I'm curious how you think about the ramifications of that going forward. Yes, there are going to be some very rich people who are calling up their brokers and looking for ever more expensive houses in San Francisco and the surrounding area. But what does it mean for the tech industry very broadly and for the space industry as well?
Yeah, I mean, maybe SEMA sells herself short on, there is a macro level impact here. One thing I would say is that SpaceX employees over a number of years have had multiple liquidity opportunities because SpaceX does what's called a tender, offers the opportunity for insiders to sell shares to give them liquidity, but none of them left, they're still there. The thesis that's presented to me by the most loyal investors of SpaceX is that those millionaires don't sort of go to the beach for the rest of their lives. They don't ditch SpaceX when the lockup ends. They become venture capitalists or founders themselves. That story already exists in Southern California in particular, where around Hawthorne there is a great ripple effect and an ecosystem of startups literally born out of SpaceX. But yeah, like the macro level effect as well is like, if you could just do this for me, just ask SEMA about it. The point is like, this is the biggest IPO in history. It's just the beginning of SpaceX tapping the capital markets in every guise, and not just SpaceX, everyone.
Yeah, I just want to mention that space-related stocks have taken a turn lower now, and you see the likes of Redwire and Lunar and SATS and so on down 4% and 5% apiece. Now, they did gain quite substantially yesterday, but if you look at Hyperliquid, we're also seeing that premium for SpaceX shares just come off a little bit. So we will be obviously monitoring the situation. It's going to be a volatile day, we know that. Seema, can I come back to you and ask you generally about IPOs? Do you tend to have clients enthusiastic about IPOs, or do you always want to wait until they're included in indexes and until maybe 6 months down the road when more capital raises or lockups have expired?
Look, I think it's a very, very mixed picture. I mean, with this one specifically, you can imagine that the clients are very, very split on how they feel about it. You've got some which are real believers and are willing to look away from some of the balance sheet numbers, which are concerning, and then you've got others who are really focused on that balance sheet and really don't want to have a look into it. I think the one general positive point, though, that we're getting from everyone is that this is really good news to see this wave of IPOs back into the market, and that just gives a lot of confidence once again to the public market, which I think to some extent had been waning in previous years.
Can I ask you lastly, just to kind of dovetail this with the inflation story, of course, a really big one over the course of this week, aside from the SpaceX story here, but getting that underwhelming read of inflation from the U.S. government, looking at what the ECB did earlier this week, raising rates, sort of help us understand the broader economic moment, the kind of cauldron in which this is happening.
Look, I think this is a really, really strong moment. There's a lot of volatility and there's a lot of risks. And as you said, specifically, the one thing that everyone's focused on from a macro side is about inflation and how central banks are going to be responding. We feel fairly confident, but again, so much of it really comes back down to the Strait. When is it going to reopen? How much oil price is going to come down? And that's key. But the basic macro picture, with really driven by the AI capex wave, which is, we can't look away from that for any moment, as well as resilient consumer spending, is I think one of the things that keep investors in the market beyond the IPOs, beyond even the AI tech trade. It's a growth picture, and not just in the US, but of course in Asia too.
Ed, let me ask you, there will be an incentive for this to succeed today. I'm sure bankers will try and do what they can to make that happen. And of course, we've had massive institutional bids and so on. But what would be considered a fail?
Gosh, I mean, the dynamics of whatever hours of trading are left when trading does start are driven by lots of factors. The oversubscription on both the institutional retail side will be very severe. People will be desperate to get in on the IPO and face a decision if the shares that are available are those ones that are in the float. Like, if you're going to sell and buy at a certain point, buy and then sell at a certain point, that's up to you. I think the main takeaway from it is, they had preset a story out. Everyone has had time to digest the story. And however trading happens today, it's probably not reflective of whatever the roadshow entailed, right? it's a future where there are data centers in space, and SpaceX is an enterprise AI company. That hasn't changed since I went to bed last night and woke up this morning.
No, it has not. Our thanks to both of you. That is Principals Seema Shah joining us there, and of course Ed Ludlow, host of Bloomberg Tech. Let's get a check on the stock market right now, because we are seeing some of those gains continue and some of them just come off the boil a little bit. So we have 337 stocks higher in the S&P 500, just more than 100 of them lower. Some positive sentiment in this market for sure. It's not just about the SpaceX IPO. In fact, you could argue that it's more about geopolitical just de-escalation. We don't have an agreement yet. There's the G7 next week. It looks like there's an effort to have some kind of memorandum of understanding signed there. Though, again, there are 14 points on the Tehran proposal that was sent out by MER, the state agency, and it's not clear that some of them won't be red lines for President Trump. So we'll see what happens over the weekend. But of course, this market has its eyes firmly on the SpaceX IPO. And if you take a look, the AI trade is pretty much back. We have the likes of AMD and NVIDIA leading things here, gains of 1% plus apiece. The memory chip makers, after that call yesterday, continued to gain, having gained spectacularly in yesterday's trade. I think SanDisk was up more than 15% yesterday. Alphabet is higher, although if you notice, it is actually erasing some of those gains. And the interesting thing about it is that some stocks related to space and the space trade are seeing massive declines right now. So Redwire, for example, is down almost 10%. And we have Lunar Labs, SATS, and so on. Several of those companies are lower. Perhaps it's money being taken off the table so it can go into the SpaceX IPO when it does actually start trading. Perhaps it's a sell the news event. Perhaps it's just that the space trade is now fully priced, according to people. But we'll see how that progresses throughout the day. So if you look at the sectors in the S&P 500, a little bit like yesterday, you have energy, one of the laggards, this as oil declines on deal hopes, and then interest rate sensitive sectors like financials, real estate, utilities and materials all gaining. Not a huge amount of actual news underpinning this, just a broad sentiment, I would say, today, David.
Yes, broad sentiment, I think, is the overarching story of the trade today. Vani, thank you very much. And coming up, we head to the NASDAQ, where SpaceX investors and executives are celebrating on this historic day. That's coming up next on Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It is time now for our top calls. Some of the analyst action in focus this morning. First up, Barclays cutting travellers to a sell, saying profits are getting harder to find as pricing shows and margins are pressured. Next up, we have Adobe here. It's getting hit with multiple downgrades after the departure of its CFO. Stifel, Evercore ISI, Wolfe Research, all citing leadership uncertainty and a clouded growth outlook as reasons for caution. That stock down 8.5% now. And finally, Citi is upgrading AMD to buy, saying the company is becoming a stronger AI chip player and could win more business from Meta. David.
Bonnie, thank you very much. Let's get back to SpaceX on this Friday. The listing is a major win for the NASDAQ with more than $350 billion worth of total demand from investors. For more on that, let's head to the NASDAQ. With Bloomberg's Yahaira Anand joins us now. Set the scene for us, if you would. We've been kind of going back between Texas and New York, looking at the goings on there. We saw Elon Musk is in Texas. What is happening at Times Square, and what's the latest that we know of sort of when we might see this begin to trade?
Exactly. So while Elon Musk is at Starbase in Texas, there is plenty of celebration here at the NASDAQ. I am still seeing President Gwynne Shotwell behind me, along with CFO Brent Johnson, celebrating along with Adina Friedman. And outside, I can tell you, even from here at the booth in the NASDAQ, I look outside and there are huge crowds forming of people wanting to get a slice, wanting to get a glimpse of history unfolding, David. And I will say what we know from the NASDAQ is that SpaceX will be eligible for trading at 10 a.m. Eastern, though we will see if we get a first trade soon after then.
14 minutes from now, Bonnie.
Yeah, absolutely. Yeah. Yahaira, who is down at the NASDAQ and who's hanging out? Any SpaceX staffers? Apparently there are going to be a lot of parties tonight because one way or another, many of them are going to be quite rich.
Exactly. Many investors are going to make boatloads of money, and that is why it's all celebration here at the NASDAQ. And I will also say that even outside, this speaks to Elon Musk's legions of fans. There's a huge crowd outside. And, you know, what's also remarkable is just the amount of demand surrounding this offering. As we've been reporting, $350 billion in order. Retail investors reportedly placed more than $100 billion, while the deal itself was multiple times subscribed. That means a lot of investors who wanted shares may not get as many as they hoped, leaving traders watching closely to see whether that unmet demand then shows up in the market once trading begins. And once it does, I'll be right here.
Yes, you will. Yahaira, thank you so much. That is Bloomberg's Yahaira Anand down at the NASDAQ. Stay with us for final thoughts, because we are going to get some now from Bloomberg Tech co-host Ed Ludlow. Ed, as we get closer and closer to the first print, right, are we getting any more information about who is buying? We know institutional buyers put in orders for massive amounts, but that may not have been because they wanted massive amounts, right?
Everything that's happened to this point is exactly as was foretold and expected. So, like, a large amount of the institutional allocation went to long-only asset managers. We knew that would be the case. Our reporting was, why did they set $135 price prior to a roadshow and keep it? Because Musk and SpaceX management wanted to remove the leverage of the institutional market, where a range allows them to come in and say, look what I can do. Look at my economic power in this point. The retail point that Yahaira just made super interesting, because management at SpaceX believe that the retail investor understands their story so much better than Wall Street does. Wall Street, I know you're watching, sorry, that's the state of play. And it's highly analogous with Tesla. They believe that the retail investor would hold the shares for the long term, right? Just as Tesla retail shareholders have done. 20% might be lower than people maybe thought. There was reports of 30%. That hasn't happened in the end. How they play the open market, very interesting.
You stared down the barrel and talked to Wall Street directly. Talked to Sand Hill Road as well. Andreessen Horowitz, Sequoia, Founders Fund. All of these folks stand to make a lot of money here as well. How are they thinking about this day and what it means for VC investment going forward?
You know, for the LPs of those venture firms, funds, they'll be delighted. In Andreessen Horowitz's case, this will be the biggest return in the company's history. It's actually the second most capital they've deployed. They put more into Databricks. Founders Fund is going to come up with like 50 billion stake. What's interesting is those venture firms, you assume that when they are excluded from lockup restrictions, that they sell, they liquidate. Doesn't necessarily work like that. Like, they'll have a thesis of where they think the true value of the company should be, and whether the public equity matches that value, they'll find out like everyone else.
And thank you very much.
Sure.
Ed Ludlow,
Thank
co-anchor of Bloomberg Tech, of course, following this very closely when that trading begins. I know he'll join us again to get us up to speed on what's happening on the NASDAQ. And coming up here, leveraged ETFs are on the horizon for retail investors getting risky with SpaceX. We're going to dig into that next on Bloomberg Open Interest.
One ignition. And liftoff. Go SpaceX.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We have SpaceX shares indicated to open 29% above the IPO price of $135 in their trading debut. We're expecting them to start trading, in fact, in just under 8 minutes. NASDAQ has indicated that they would be available for trading at 10 a.m. Eastern. A little unusual for IPOs, which typically take a few hours for the markets to get made and for the first trade to happen. That usually happens in the 12 o'clock or 1 o'clock hour. But that's what we're seeing right now, that SpaceX shares are indicated to open 29% above their IPO price of $135. I do want to mention, though, that President Trump has been making comments and that this is also impacting market sentiment. He posted on Truth Social that the attack, apparently a drone attack on an Indian caller ship in the Strait of Hormuz last night, was unacceptable. He said that Iran would need to get its act together, and this is causing oil to spike, with Brent very close to $90 once again. We have yields at their highs of the day, the two-year yield at 409. The VIX is trading back above 19, and stocks are at their lows of the session. The S&P 500 reversing those gains, down about 0.25% now. A wave of leveraged ETFs tied to SpaceX are set to launch shortly after today's IPO. Let's discuss with Bloomberg Intelligence ETF analyst James Seyffert. More of these bullish and bearish, double and triple leveraged ETFs, James. How come they're getting to market so quickly after the IPO?
Yeah, I mean, we actually had an example with the Cerberus IPO where, as you were just talking about, that actually started trading in that 12 to 1 o'clock hour. And we had ETFs launch the next day with the market that were 2x long. So basically, this is just a race for these issuers to get out as quickly as possible because being first matters, right? And these things are big business. These things tend to charge more than a 1% management fee. When you compare that to a typical S&P 500 type ETF charging 0.03%, like you're talking a lot of money that can be made on these assets. So these are big business. There's at least 14 different issuers that have filed for these things, and there's about a dozen specifically that are 2x long or 2x short that are likely going to launch on Monday.
As we look at more than 20 of these being filed for, I wonder sort of how emblematic that is of what we're seeing in ETFs broadly. Of course, there's such wide enthusiasm for them, wide adoption of them. As we kind of focus on the uniqueness of the SpaceX story, the uniqueness of the SpaceX IPO, how unique is this, the way that it's playing out in ETFs?
Yeah, so I would say the ETF industry is a huge tent, right? Like most of the money is still going to those cheap beta, passive, or long-term buy and hold type ETFs. These ETFs are what we would refer to as trading tools. They're virtually power tools for investors to use, so you got to know what you're doing when you use them. And it's a vibrant part of the ETF ecosystem, and it's growing quickly. So our expectation is like this is going to be the standard going forward for these big IPOs, whether it's OpenAI or Anthropic next. And it's not unheard of. If you look at Tesla, there are over 20 single stock specific Tesla related ETFs, whether that's covered call to generate income or these leveraged products that are doing 2x long or 2x down. We even have some 3x filings. Our personal view is these things aren't going to launch. The SEC will not allow them to launch, but it hasn't stopped issuers from trying.
Briefly, James, do all of these at some point go to zero?
It's certainly possible they could go to zero or near zero. You got to remember these things are very path dependent because of the way that they're set up to operate. They go up, they give you a return on a daily basis, and then they reset every day. So they are very risky. I wouldn't say they're necessarily going to go completely to zero, but they can go move a lot if the underlying stock moves a lot.
James, thank you very much. Rockets go up and down, as we know there. So maybe to these ETFs as well. Bloomberg Intelligence ETF analyst James C. for joining us here on this Friday. And tune in to ETF IQ on Mondays at 12 p.m. New York time. Coming up in the next hour, Joanne Shu on the latest University of Michigan consumer sentiment read, and Katie Kaminsky on market volatility. And we're going to talk about the space economy more broadly with Interstellar Labs CEO Barbara Bell-Bucy. A lot of companies, aside from SpaceX, watching the beginning of trading in SpaceX today, wondering what it might mean for them, for their companies going forward. As we continue to wait for SpaceX to begin to trade on the NASDAQ, you see their NASDAQ on Times Square. This is Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Preston. Shares of SpaceX now for sale on the NASDAQ.
The company's controversial chief executive, Elon Musk, watched the ringing of the opening bell at the NASDAQ exchange from SpaceX headquarters in South Texas, saying he originally didn't give the company much of a chance.
I told people this. I said, look, we're probably going to fail, but, we should give it a try, because if there's not a new company that enters space, we will never be a truly spacefaring civilization.
In its stock market debut, SpaceX was offering 555 million shares at $135 apiece. Jim Ryan, ABC News.
The IPO raising about $75 billion, putting Musk on track to become the first trillionaire ever. Wall Street rebounding Thursday after President Trump said a deal with Iran was imminent. He is still saying that today, even though Iran has not confirmed anything. The legal fight over the Kennedy Center isn't over as the Trump administration appeals the ruling ordering his name be removed by the end of the day. Here's ABC national correspondent Stephen Portnoy.
The 11th hour filing urges a federal judge to set aside his own decision as the case proceeds on appeal. The Justice Department says taking Donald Trump's name off the Kennedy Center now would harm its fundraising efforts, be wasteful for the institution, and confuse the public should the administration ultimately prevail in court. Judge Christopher Cooper ruled last month that Congress named the center for John F. Kennedy, and only Congress can change it. But the administration now argues the president's hand-picked board members should be able to add a secondary name.
They're putting the finishing touches on the massive arena that's being built on the White House lawn. 4,000 spectators expected to watch the arena on Sunday, President Trump's 80th birthday. Expect tight sports security this weekend. We've got the NBA Finals, the Stanley Cup Final, the World Cup, and that UFC fight all happening. Long night of violent storms in the Midwest. Today it's all about the Northeast and all about the wind, which could be bad. You're listening to ABC News. A Florida man is suing several law enforcement agencies, alleging their use of AI facial recognition led to his wrongful arrest. Robert Dillon was accused of trying to lure a young child into a restaurant in Jacksonville Beach, Florida, 300 miles from where he lives in Lee County, Florida.
It's horrible that this AI is put in the hands of people that aren't qualified to use it and can ruin people's lives the way that they ruin mine.
A surveillance photo submitted to an AI tool came back with a 93% match to Dylan. It was not him, though. A new warning from police to parents about a growing trend of criminals recruiting teenagers online to carry out violent crimes, including bombings and abductions, even murder.
Annalie Berg's 16-year-old son Rio was a victim.
Still hard to believe.
In 2025, he was on his way home when a hooded stranger came up from behind, pulled a gun, and opened fire, killing young Rio, who was not the intended target. Police say the gunman was no professional assassin, but a fellow teen, recruited for the job online by a gang.
The kids do the dirty work for them, and then they just throw them away.
The 16-year-old hitman in this case was immediately caught, convicted, and sent to prison. So it's 2 young lives wasted. Police say this online recruitment trend is spreading and should be a wake-up call for parents.
ABC senior investigative correspondent Aaron Katursky. Pope Francis in the Canary Islands speaking to migrant aid organizations, saying human smugglers will face the wrath of God. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, streaming live at Bloomberg.com, as well as Scarlett Fu. It's Paul Sweeney. It is a Bloomberg Intelligence program. A lot going on. Anne-Marie Hordern is down in Houston. She's at the Bloomberg Energy Security Executive Briefing, so she's going to be chatting with some pretty important people down there in the world of energy.
Especially as the president says that there might be some kind of peace deal announced this weekend. So that would have huge implications for the price of oil and all those energy companies.
Yeah, we'll check in with Chris Wright, Energy Secretary, and Anne-Marie, and then at 11 o'clock hour, Mike Wirth, the CEO of Chevron. So a lot of cool energy discussion coming up here with oil off a little bit here, right around $86 a barrel, WTI crude here. Yahara Anand, she is Bloomberg TV reporter. She is at the NASDAQ, and she'll give us the latest reporting on the SpaceX IPO. Pricing right at the 135 number, indicating higher. We'll get the latest reporting there. Joanne Shu, University of Michigan Surveys Consumer Director. We did get the UMich data. We'll break that down. Ross Hamilton, Chief Operating Officer at Space Network. He'll give us some thoughts on the SpaceX IPO. So a lot coming up in the next couple of hours. Let's kick it off with the Bloomberg Business Flash with Matt Piper.
Hey there, this Bloomberg Business Flash is brought to you by IBKR, trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Well, welcome to SpaceX Day. Today's trading will be a critical test for the $1.8 trillion rocket, satellite, and AI company and Elon Musk, its founder. The trading will determine whether Musk becomes the world's first trillionaire and will also affect the prospects for initial public offerings from SpaceX's AI rivals, Anthropic and OpenAI. We have that moving the markets this morning, as well as this deal, no deal, that could reopen the Strait of Hormuz, potentially around next week's G7 meeting. Let's see how the markets are reacting. The S&P right now is up 0.2%. The Dow is up 0.3 or 190 points. The Nasdaq right now is down ever so slightly by about 15 points. The Bloomberg Dollar Spot Index is flat at 1206.71. The 2-year yield is up 3 basis points. The 10-year up 3 as well. Oil, Brent at $89 a barrel. WTI at $86 a barrel. So what are you buying when you actually buy into SpaceX? Here's Stephen Alf with Federated.
Data centers in space are not that far off. I mean, the biggest problem they've got to solve is the water, the cooling problem. But they've got ideas of how to do that. The cost of data centers is enormous right now, the energy flow, et cetera. If you can eliminate that, you change everything. So that's just one application, but could be pretty significant here.
And a question now. Are you getting enough vitamin C? That is the question. It's a key to strong brain in older age. A study of older adults in Japan found that lower blood vitamin C levels were linked to less brain tissue and weaker structural network patterns. Vitamin C was linked to all 3 clusters of the brain's default mode network, a system tied to memory, self-awareness, and cognitive function. So use those drops, Scarlett and Paul, if you do not already.
I eat so many oranges, eat so many grapefruit. I think I'm good on vitamin C. Vitamin D, different story.
Okay. Very good.
Well, for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that is a Bloomberg Business Flash. Paul and Scarlett.
All right, Matt Piper, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. We've got, as Matt was just reporting, a little bit of, we got red and green on the screen. Let's put it that way. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg News' Matt Griffin. Matt, what are you looking at today?
Well, of course, Paul, there's one stock that we're all thinking about, but it isn't trading yet. So another name I can offer you instead is Adobe, elsewhere in the tech complex. This stock down about 7.5% after the creative software company said its chief financial officer would depart on Monday. It's the second leadership departure at the company since the CEO announced his resignation earlier this year, so that their CFO, Dan Dern, is heading to Marvell, the chip maker, to take the same job. And, Adobe gave good results and a good outlook. However, at the same time, investors want to see what their strategy is for the age of AI. Stock's been beaten up this year, and what Evercore says is there's just going to be an overhang here until there's new leadership and until they articulate a clear strategy. So now that stock down about 42% this year. That's ticker ADBE.
Sounds good. What else?
I've been looking at homebuilder Lennar. That stock down almost 3% after they forecast deliveries for the third quarter that missed estimates. It's the same story that's been going on with homebuilders for a while. Mortgage rates have climbed during the war in Iran. Consumers are under pressure. They don't want to make big purchases like homes. So that stock, ticker LEN, also extending a decline, down about 10% this year now.
All right, how about Adobe?
The third one we could look at.
CoreWeave. Okay, we did Adobe.
All good. CoreWeave, ticker CRWV. That is a stock you will be seeing more of because it is joining the NASDAQ 100 index prior to the open on June 22nd. Stock up about 3%. This inclusion in a major index like that brings in a lot of passive buying. It can lift a stock. We saw jumps earlier in Nebius, Astera Labs, Teradyne. Those are also names that are joining. One that isn't rallying is Rocket Lab. They're also joining the index. However, space stocks are plunging in advance of the SpaceX trading debut today. It's SpaceX's competitors or peers, I should say.
Okay, I guess that could be a trade there. Matt Griffin, thanks so much. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Right now, let's head down to Houston, Texas. U.S. Energy Secretary Chris Wright speaking with Bloomberg Television anchor Anne-Marie Hordern at the Bloomberg Energy Security Executive Briefing. Let's take a listen right now.
Blowing off nuclear bombs right now, let's just forget about it and move on. But he wasn't willing to do that. He said, we have to solve that problem. I'm not going to hand my successor a nuclear-armed Iran. And so there's dialogue back. Of course, they for 47 years, they are wedded to becoming nuclear-armed and for whatever crazy reason to export their Islamic revolution and change the whole world. Everyone converted or dead. It's an ideology that doesn't work well with other nations, with other people, and of course disastrous for the 90 million Iranians that live under that regime. So that's sort of the broader backdrop.
I guess it's just hard to understand is this a real inflection point, only because the president has said about 40 times since this conflict started that we were close to a peace deal, and then a peace deal never happened.
Iran says things that they'll agree to things that work for us, and then they don't. And of course, look, the regime is fragmented. There's different power sources there, so it's a complex situation. And he's a negotiator too, right? So you've got to understand the communications share information. They also share messaging. But the one piece of leverage, the only piece of meaningful leverage Iran has had, has been to interrupt the flows of energy flowing out of the Persian Gulf. right? We had 20 million barrels a day, round numbers, flowing out before the conflict started through the East-West pipeline and the UAE pipeline. Close to 5 million barrels of that has been diverted. We've got increased production. It was pretty easy to do a few other places. I think in round numbers, you had maybe a 14 million barrel a day flow gap, which is a big flow gap of oil going out of the Gulf at the start of this conflict, or early on in this conflict. We have a military effort that we've not talked a lot about that started more recently to get cargoes out. You know, because President Trump said at the beginning, they're not going to have a nuclear weapon, and we'll restore energy flows in the United States with or without Iran. He always prefers the diplomatic arm, and he works tirelessly on that. But we also have the most powerful military in the world. We've destroyed most, but not all of their military capabilities, and we're just going to restore flows ourselves. And flows today approaching half of the gap, and they're rising. So ultimately, we will restore flows with or without them.
So 7 million barrels a day are getting out right now?
That's a rough estimate, a rough average of where we are right now, and it's rising.
So what kind, is this oil? Is it products? Fertilizer?
Mix of the two.
And it's being done with the U.S. military?
Correct.
So are ships turning off their transponders, or is the military escorting them? Is it by air? Is it by sea?
It's hard to transport crude by air.
Well, I mean protective.
But yes,
What does it look
the military protection is there. It's actually going remarkably well. And of course, this is just a U.S. innovation, U.S. military power solving a problem. And we'll continue to solve that problem. So think of that impact that has on the dynamics. If I'm in Iran, and of course, they're not concerned about Iranian people, right? They're concerned about their regime and themselves personally. So they have a little bit of a narrower focus on what they care about. But they've thought they have this great leverage over the United States of America. Of course, it isn't really leverage over us. It's leverage over the world economy. But they're losing that leverage right now. They are rapidly and will continue to lose that leverage. So you would think that their urgency to do a deal is rising, and it is rising. They realize, you know, the jig is going to be up before too long. What can they get?
How much Iranian crude is getting out right now?
Zero.
No Iranian crude is able to escape?
No.
So if this deal were to happen, would the United States let Iranian crude go through the Strait of Hormuz?
Well, it depends on the deal. But of course, that is a give we would certainly be willing to do. Absolutely. You know, if Iran gets rid of their nuclear program, achieves what we want us to do, yeah, their crude would be allowed to flow again. Absolutely.
So that would be lifting of sanctions, basically, on Iranian oil.
Their crude was flowing before, you know, during sanctions. Unfortunately, same thing in Venezuela. You know, the world puts sanctions on, and then the world doesn't enforce the sanctions because it's hard to enforce sanctions. But if you really believe in the sanctions, you need to enforce them. So you could see partial lifting of sanctions on Iran would likely be on the give side for the United States.
According to Iranian press, the deal says within 30 days, the strait would open, the blockade would be lifted. Is that your understanding? And if it is true, what does it look like then in 30 days if we're already getting 7 million barrels through? How much higher could you see the flow rate?
I mean, the flow rates would return to whatever's commercially, you know, makes sense there. So, but, you know, you're clearly going to see after this conflict people to say Iran can never play that card again. You'll probably see some new pipeline infrastructure built. You'll certainly see continued innovations in military technology from the United States to defang more easily and more quickly Iran's ability to interrupt the flows as they've done there. But yeah, certainly after an agreement is reached, you'll see free flow of traffic of all products out of the Gulf or whatever. You'll see that either way. If there is no deal with Iran, eventually we would restore that militarily full flow as well.
Prices have been relatively depressed given the intensity of the conflict. I believe we're down 20% on Brent since April. Prices this morning were in the 80s. What is the driving force behind this?
It's amazing the difference in attitude and positioning of a president. President Trump came into office and said, I want lower energy prices. I want more energy production. I want to embrace American allies around the world. And the Persian Gulf energy producers. I should never call it Persian Gulf, the Arabian Gulf. I slipped up there. But the Biden administration, scorned them, said we're going to end the hydrocarbon industry, just that rhetoric, that chilling rhetoric, that shunning of our allies. When Russia invaded Ukraine, there was almost no interruption of flow of Russian crude. There was natural gas via pipeline into Europe, but there was not a meaningful reduction of Russian oil or oil product exports. And we had gasoline prices $1 a gallon higher then than we have today with this large interruption of flows. I think that's President Trump's leadership in saying we care about energizing the world and we're going to do whatever it takes to supply the world. Obviously we released, not just in the United States, but around the world, stocks from strategic petroleum reserves. We've had 2 extensions of the Jones Act waiver to allow crude supply from the Gulf Coast, where it's coming from here region.
Will you do another extension? Actually, that's an audience question.
We'll do whatever it takes to keep energy prices as low as possible for the American people. California has chosen to impose on their people wildly high gasoline, diesel, and electricity prices. Just crazy. And so a lot of people would say, well, we shouldn't care. That's a blue state. We're here for 340 million Americans in every state across the country. So the Jones Act waiver has been enormously helpful for California and the West Coast, the Northeast coast of the United States as well. So it's allowing the free flow of that traffic. We turned back on a platform producing 50,000 barrels a day offshore California. Wells are already there. Infrastructure is already there. It grew California oil production by 20%. That's a big deal. That's a meaningful amount of flows, and it sends a message that this administration is going to help the flow of energy around the world. People are surprised that oil prices throughout all this have not gone to the extreme levels many expected.
Isn't also because China is cutting some of their imports? Was there a conversation between the Chinese and the White House about this?
Yeah, there's a lot of conversations between the White House and the Chinese, and I won't talk about that. But you saw at the start of the conflict, China was they actually stepped up their purchases of crude oil, and as you see now, they're in a very different position where they've stopped building their SPR, they've turned down some refineries. China has been a meaningful part of the balancing force in this crisis.
There was a recent Washington Post article, actually it was yesterday, about oil executives telling the White House and warning them that potentially prices are going to go higher soon. Are we living on inventories? Where do you see the inventories right now? How low are we?
It's different in different places. It's different. Oil inventories in the last few weeks in Asia are rising. And so in the United States, we have stepped in to fill this void. We've seen incredible response from American oil and gas companies, not just raising production, but raising refinery throughput to a significant scale. In fact, if you look at the May data, the United States was by far the world's largest exporter of crude oil, 5.4 million barrels a day. Russia, a little over 4 million. Saudi Arabia, a little under 4 million. But United States producers have stepped up, and from our reserves and from other stores, to try to supply not just America, but the world. But we've also had the benefit of, average gasoline prices in the U.S. a little over $4 a gallon. It's a little under $10 a gallon in Europe and in Asia. So we have not been completely isolated from the impacts of this, but we have been much more isolated than everyone else. That's leaning in and being pro-energy. That's Trump administration energy policy.
Has there been an ask or pressure from the White House on the industry to produce more?
Pressure is the wrong word, but of course we dialogue with industry across all sectors in this economy. We're not, there pursuing some crazy agenda, as unfortunately the Biden administration was. We're there to engage with American businesses and help them grow their businesses. Whether they're building artificial intelligence factories or new manufacturing plants or oil and gas or coal or electricity of any kinds. We want to see America thrive. We want to see energy production increase. We want to see prices to consumers go down. We want to see competitiveness to do business in the United States grow. Higher wages, lower costs.
But there is a concern that potentially if we're running low on inventories and say we don't get a peace deal this weekend and we're back to potentially strikes or this lingers, the president in a recent interview said it could be closed until September. Then what happens if we get higher gasoline prices in America, closer to $5 a gallon?
Look, we've done everything we can since the day it started to both fix the existential problem. A nuclear-armed Iran becomes a much larger threat to energy supplies, to peace, to commerce. That people just don't appreciate how critical that issue is. So to solve that fundamental problem, it's coming at disruptions. It's coming at some costs. I think the Trump administration has managed them fabulously well. I think we'll continue to do that. We may use different levers going forward, but we will do everything we can to get through, to achieve the fundamental objective that we will not fail on.
So what kind of levers? There were rumors months ago about an export ban. I know you said that's not happening. That will never happen?
No export bans. No export bans. A couple of reasons. Number one, we produce more than we consume. So what are we going to do? Shut in our wells and reduce our production down? Number two is a large part of the Trump administration diplomacy is to make America an energy superpower, which means to be a reliable supplier to our friends and allies abroad of oil, of natural gas, of coal, of next-generation nuclear power plants, of fusion energy technology. We want to develop energy resources in this country to benefit Americans and to benefit our trade balance abroad and support our allies so they don't have to depend upon unstable, hostile suppliers.
Regimes. There was a recent Reuters poll that showed 80% of Americans say the current gas prices are straining their household budget. Is the administration still pushing Congress to look at a gas tax holiday, especially over the summer?
Trade-offs in all of these issues, but the overriding objective is lower energy costs for Americans across the board.
So is that a yes? I mean, is it still one of the tools in the toolbox?
It's possible. It's possible.
Do you think Congress has the votes? You'd probably have to do it before the midterms.
Yeah, look, my bigger effort right now in Congress is permitting reform. You know, we want to leave behind as much permanent change as we can. So we won't go back to the energy foolishness we suffered under the Biden administration and it began under the Obama administration. We just got to stop this mindset that somehow making energy expensive in the United States and exporting our industries is somehow going to save the world from climate change. I've been looking at data and studying climate change for 20 years. It's just amazing how that issue, a real issue, but sort of a slow-moving, actually not that big deal of a problem, has just become so politically dominant among the left in the United States and, of course, across the board in Europe. I think we are moving that tide back. We just got to get back to focusing on human beings.
It is shifting. You hear a lot of Democrats now, especially ahead of the midterms, especially ahead of 2028, saying we should focus energy more about using an all-of-energy approach because they want to talk about affordability, less so about climate change. When it comes, though, to policies that the United States could do, besides the Jones Waiver Act, anything else that you think could be pretty short-term on the horizon for this summer?
Things we're talking about, but not we look through ideas and decide if they're viable, and we'll come out and engage in that. But of course, it is a constant dialogue with energy producers here. How can we be helpful? Like EPA, we changed the regulations for blending for gasoline this summer. That's going to meaningfully increase America's ability to produce gasoline with our existing refinery capacity. That's going to be helpful.
There's also the drawdown the SPR. Do you have plans to refill it?
Yeah, there's another, I would say, stark contrast. The previous administration sold 200 million barrels of oil without an interruption of flow around the world, trying to push down prices for a midterm election. We've not sold a single barrel of oil. Every barrel of oil we have released has been a trade. It's been an exchange for a barrel coming back. And the exchanges we completed so far, this is not the current ones that are going on right now. I don't have the data on them. But to date, every barrel we've released we've gotten 1.28 barrels coming back. So that's 35 to 40 million barrels of additional crude that'll be in the SPR at no cost to American taxpayers.
Where do you think the SPR will be at the end of Trump's term?
Much fuller than it was before we arrived. I would like it to be completely full. That's what it's there for.
Is there a price level that you would want to go out and fill it up more?
If there was, I certainly wouldn't share it. But also, it's not as simple as that. You know, you've got to get money from Congress to fill the SPR, and that's very challenging. There's not a great political constituency that wants to spend money today, you know, to prepare us for a problem way down the road, which is exactly why no previous president would take Iran head on. Like in the short term, it's disruptive. Fixing long-term problems, that's tough to do in politics. That's a unique thing about President Trump. He has the courage to take on this Iranian issue where all the news is short-term. He's terrible, Iran's winning and all that. It's all wrong. It's all nonsense. We are living with higher energy prices. He takes all the negative, but people don't, certainly in the media in general, don't think about these long-term issues. He's engaging in a long-term strategic issue that's going to better not just the Middle East, but the world for generations to come. And he's taken whatever the heat comes, you know, through higher prices. But I think he's managed that quite well. So the impacts are real, but again, less impact on prices than just the foolish policies and rhetoric of the Biden administration.
Do you think the psychology has changed? It used to be that OPEC, Saudi Arabia, now the UAE has left, was the swing producer, the central bank of oil. Why wouldn't it be the United States?
Well, we produce far, far more than Saudi Arabia. In fact, you know, the way people report 100 million to 105 million barrels of demand, that's liquid fuels. Crude oil is the biggest component of that, but it's just one piece of that. If you look at total liquid fuels, the United States is 24 million barrels a day of production in a world of about 105, 106 million of demand. So, yeah, we are the big dog in energy production. But it's all by businesses here. We don't decide at a government level our production levels, so we never play a role as a short-term swing producer. We do lean in as we are right now, but I think Saudi Arabia's role in the oil markets likely will continue as it has. They have been willing, and with a few partners, but mostly Saudi Arabia, they have played a sort of central bank role of oil. I think the net impact of that overall has been positive.
But do you think their hand has been weakened with the Emiratis leaving the group?
Sure. Less oil will be controlled in that OPEC fashion. UAE is a major oil producer, super successful economy in that country, and they're investing and growing their productive capacity. Kuwait is leaning in and growing their productive capacity. People are just getting out of this silly mindset. Like the goal was to hit peak demand for oil, right? And then we're all, that 7 billion people that don't live like us, sorry about them. You know, it's just crazy how far off a human-focused and a math-focused dialogue we're in. I'm thrilled that the world is swinging back to common sense. It's thinking long-term. We need massively more oil in the world, massively more natural gas, massively more energy to continue to grow our economy, to reindustrialize our industry, and to lift everyone's standard of living up around the world.
An audience question, also something I'm curious to get your take on, is American investment regarding Venezuela. I was there in Caracas. You were the first secretary to go to Venezuela since the capturing of Nicolas Maduro. What is the status now? When was the last time you spoke to Delcy Rodriguez? Do you expect more American companies to go produce there?
Lots of American companies going down there, a lot of business. We are working, my team, and including myself, is in regular communication with Delcy. 25 years going the wrong direction. Venezuela is another case. Amazing how low it's sunk. 8 million people leaving, millions leaving Venezuela to go to poorer countries. So, is it Norway today? It's not Norway yet. But the pivot, the change in the improvement in the conditions in Venezuela is going quite well right now. A lot of work to be done there. But oil exports out of Venezuela have more than doubled since January 2nd of this year. So that's also helpful. And of course, when most of the American refineries were built in the 60s and 70s, Venezuela was the largest exporter of oil in the world. Third largest producer, biggest oil exporter. So a lot of our refineries were built to handle those lower cost, high viscosity crudes. So it's great news to see that production growing. I think you will see tremendous growth in Venezuelan production in the coming years.
Another question from the audience is about the surge in power demand for data centers. Why is the Trump administration not embracing all sources of power, including renewables?
Well, embrace, it depends how you view the word embrace. The wind subsidies went on for 34 years.
President Trump doesn't like windmills.
No, he doesn't like windmills. But he doesn't, like a lot of people don't like windmills. You know, the public pushback across the heartland of America and certainly in the coastline of America against wind power has been enormous. And the other thing, put in context, wind power, think of how much money has been spent on that. It's 1.5% of global energy. And everywhere it's got deep penetration, you know, Germany, Denmark, United Kingdom, most expensive electricity prices in the world. Does President Trump want to have the most expensive electricity prices in the world? Absolutely not. Absolutely not. And the people look at this stuff wrong. They think of electricity like gasoline or oil, where you can store it and sort of use it, because it doesn't work that way. So we look at the data. Oh, my gosh, if you add up wind and solar last year, you know, they were 16 or 17% of electricity. They're meaningful for American electrons. Why don't we get more of those electrons on the grid? That's not the way to think about electricity. Electricity is all about what's the most efficient way to deliver at peak demand time. When we had that cold winter storm Fern that came down the end of January, probably the greatest test we've seen of the East Coast electricity grid. At peak demand time on January 27th in New England in the evening, 2% of New England's electricity came from wind, solar, and batteries combined. 3% of New England electricity came from burning trash and wood, right? If you're there in the middle of the day when we don't really need you, all you're doing is saying some other producing source, typically it's a natural gas power plant, has to turn down. You know, you're not adding to the capacity of the grid unless you're reliably there at peak demand time. And as Democrats have pushed a little bit more heating to electrification, which is a horribly bad idea, it's a guaranteed way to make heating much more expensive. And we can't put nearly as much energy through our electricity grid as we can through our natural gas pipeline network. But in any case, those policies are happening. So peak demand times are more and more going to the winter. You know, think of in New England and New York State. Solar is irrelevant in the winter. And when you get a large cold front that comes in, it's a high pressure air mass that just sits there. Well, wind goes away too. So all that stuff you built, all those associated transmission lines, they don't add anything to the productive capacity of the grid. They produce electricity some of the time, but that's not what matters. You have to be there at peak demand time. If we're going to put on new AI data centers and reshore manufacturing, we have to increase our capacity to reliably supply at peak demand time. We want to do that as economically efficiently and as quickly as we can. We're doing everything we can to get nuclear going. That's coming. We had reactors already go critical. But in the short term, in the next few years, it's going to be natural gas. It's going to be expansion of existing capacity. We're restarting 3 large nuclear power plants. We're uprating a number of power plants. We're changing some foolish regulations. The only reason we didn't have to close the schools in Florida during that cold front is we said all that massive amount of backup generators, turn them on. Don't wait till the lights go out and we have a blackout and then turn them on just for your store. Turn them on, and that's added capacity to the grid. So we're having to do some creative things so that we can enable reshoring of manufacturing here, meet this rising demand for AI, and ultimately just change the way decisions are made at FERC and hopefully ultimately across state utility commissions. We changed mandate from affordable, reliable electricity for Americans and American industry, and we just got off track, and the country just went crazy as Europe did, thinking somehow tweaking the American electricity grid was going to change global emissions. Just a colossal mistake.
This is a more sophisticated answer than the president saying the windmills are not good for the birds, so I appreciate that. Just my final question, because I think I was the first reporter to ask you if you were going to go to Venezuela, and you said yes, and then you went. Would you be the first secretary to maybe, I don't know, go to Oman and see vessels come through, or even maybe go to Iran at some point?
It's funny, early on in this crisis, the president, who has an underappreciated great sense of humor, we were at dinner, I don't remember where we were, and he said, "Have you told Liz you're going to Iran yet?"
Really?
He did say that. He did say that. So, who knows? Again, the goal is to drive progress. The goal is to drive improvement. If we get a reasonable resolution and we're implementing something, it's certainly a possibility.
Maybe I can come on that trip with you. Secretary Wright, thank you so much
Fantastic.
for joining us.
Thank you.
All right, that was Bloomberg Anne-Marie Hordern. They're speaking at the Bloomberg Energy Security Executive Briefing in Houston with Christopher White, Energy Secretary, about all things energy and energy policy from this administration going forward. And again, this administration leaning all in on some of the fossil fuels, and that's critical here for this transition to AI. I think what we've all learned is that electricity is critical for these data centers. All right, let's get a little bit of a reset here. We can do that with Matt Piper. Get a Bloomberg Business Flash, Matt.
Hey, from the Bloomberg Interactive Broker Studio, I'm Matt Piper. SpaceX is ready for liftoff on Wall Street after raising $75 billion in the world's biggest ever IPO. Launch conditions are favorable. Let's see how Wall Street is reacting. The S&P down and NASDAQ all up right now. The S&P up 0.3%. The Dow up 0.5% or 264 points. The NASDAQ up 0.1%. Oil and gas prices are down on hopes that the U.S. and Iran are close to a peace deal to end a war that has roiled energy markets. It's not the first time markets have reacted with optimism to the prospect of an end to this conflict, only for hopes to be dashed by a failure to reach an agreement. Brent right now at $89 a barrel, WTI at $86. As for stocks we're watching, Adobe shares are down after the software maker said CFO Dan Durn would be departing the company next Monday. That news comes after the CEO announced he would resign earlier this year. Adobe right now down nearly 7%. Any DoorDashers here? DoorDash has introduced an in-app artificial intelligence chatbot to help you make restaurant and grocery orders, Charlotte. And recommendations.
The fees kill me.
Yeah, the fees. Tell me about it. They're like $5-6 every order. Recommendations are based on past purchase behavior as well as social media reviews and blog posts. It's called Ask DoorDash, so the kids will probably be using it whether you like it or not. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and Scarlett.
It's all about reducing that friction so that it makes it easy for you to just press the button and buy it.
Yeah, no questions asked.
All right, Matt, thanks so much. Appreciate it. Matt Piper, again here at Bloomberg Business Flash here. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube here. Red headline crossing the Bloomberg Terminal. SpaceX, this is according to SpaceX, SpaceX is indicated to open at $168.75. Remember that the IPO priced at $135, so we'll stay on top of that. I got my Bloomberg quote up for SpaceX, so we'll know what's going on there. Christina Hooper joins us here. She's a chief global market strategist for the Man Group. Christina, this SpaceX IPO certainly in front and center for this marketplace here. Just put it in context before. You've been doing this a long time. You've seen a lot of big deals come along, a lot of market-defining IPOs. How do you view the SpaceX IPO?
I think this is absolutely a market-defining IPO. Paul, it is so unique in that it is a conglomerate IPO, which I think is pretty extraordinary. There are so many different facets to it. And of course, it has perhaps the most wonderful way to enter capital markets in that it is headed for index territory. And so that creates, built-in quite significant demand. So I think a very unusual one, but part of several different IPOs coming to market that are part of what I think is an incredibly important industrial revolution that we're experiencing. So this is a period where there's a lot of excitement about technology and innovation, and this is helping to define that.
Absolutely. We're going to see how this sets the tone for Anthropic and OpenAI's IPOs, and it's going to be this banner year of mega tech IPOs. Christina, I have to admit that I'm kind of tired and exhausted of the SpaceX hype machine. I kind of just want to get past this first day of trading and move forward, right? Get to 6 months in, 1 year later. What will matter in 6 months' time or 1 year's time when it comes to a company like SpaceX, which is full of promise, full of ambition, full of superlatives, but at the end of the day, this is not a free cash flow positive story either, and it's not making money.
Well, this is not just SpaceX. This is a lot of technology companies that have very stretched valuations. And so much will be dictated by the monetary policy environment, the overarching capacity for investors to tolerate high valuations if we're to see yields go up on the long end. We know that historically, higher yields have exerted downward pressure on equities, particularly long duration assets like tech stocks. And so it is something to keep in the back of our minds. There is a lot of exuberance now. Some might argue there's a bit of irrational exuberance in here. And we just have to recognize that the macro environment may dictate the fortunes of these stocks come 6 months, 12 months from now, especially if we have a Fed that is more aggressive in tightening than is expected.
So, Christine, if we can step back from the SpaceX deal, what's kind of your broader market call here when you think about global allocations?
So let me start by saying geopolitics doesn't matter to markets until it's all that matters to markets. And I think we're in the stage right now where it really doesn't matter. And for the most part, markets are naively optimistic. If we hear that we're close to a deal between the U.S. and Iran, markets believe it and move up. And I think there is a willful ignoring of some of the great risks that the economy, the global economy, and the U.S. economy are facing right now, in terms of the potential for significantly higher energy prices, gas prices in particular, that are going to be very problematic for consumers. We've heard oil execs warn about that very recently. And it's not just oil and natural gas. We have to worry about a number of other commodities that are impacted by the conflict in the Middle East, including helium. I think not enough attention is being given to this, but about a third of the global supply of helium comes from Qatar. And we've seen facilities hit in Iran strikes in mid-March. So even if the Strait of Hormuz were to open up tomorrow, we would not be back to anytime soon. It would take probably more than a year to rebuild. We would not be back to capacity on helium. And that is critical and not substitutable in the semiconductor manufacturing process. All of this is to say that I think there's some very real vulnerabilities as we look at assets across the globe. And what I would say is it's very important to be diversified in this environment. And it's also important to be thinking about those downside risks, having exposure to areas like European equities that don't have much exposure to tech.
All right, good stuff. Christina Hooper, Chief Global Market Strategist from Man Group, joining us from Connecticut. Thank you so much. Great speaking with you, and have a fantastic weekend. We go back to SpaceX. I know I just said that I'm a little tired of waiting for this to begin trading, but we are still waiting. And the NASDAQ has told us about a half hour ago that it anticipates the IPO to open for trading shortly. That is yet to happen. So we're going to check in right now with Yahira Anand. She is our Bloomberg Television reporter, joining us right now from the NASDAQ. Yahira, tell us a little bit more about what the anticipation is like there at the NASDAQ, and the pricing of the IPO and how it's likely to open.
Hi, Scarlett. Well, there was a lot of fanfare this morning. The president of SpaceX was here, along with Adena Friedman of the NASDAQ and the CFO of SpaceX, while Elon Musk was over in Texas. But they were enthusiastic here. They had Rocket Man playing in the background. I will say things have quieted down. There are still crowds outside, but there is still major anticipation of this across Wall Street. And we've gotten several indications throughout the morning of what this will open at. The latest points to an opening of $168.75 a share, down from earlier indications near 175, but at 168.75 cents, that's still roughly 25% above the IPO price, and would give SpaceX a valuation of $2.2 trillion. That would make it more valuable than the likes of Meta, Saudi Aramco, and even Tesla itself. As I said, we are still waiting for the first trade. I will say I'm seeing some movement in the background, so maybe it could happen soon.
So it's interesting here. We know IPO market's really heating up, and it's really heating up between the New York Stock Exchange and NASDAQ for some of these listings. What are the folks at NASDAQ saying? Because this will be the biggest IPO of all time. That's quite a feather in the cap for NASDAQ.
Exactly, and it's the first one to come out of the gate, out of the three big ones that we've been anticipating: SpaceX, OpenAI, and Anthropic. And what NASDAQ has really been doing is aggressively courting these mega IPOs. They want to get them here. And earlier this year, NASDAQ, we know, did change its rules to create a fast track path for the path into the NASDAQ 100, allowing a newly public company like SpaceX to join the index potentially in 15 days. So we could see those passive flows in that time frame. And it is something that will impact the markets for weeks to come, not just today, but obviously all the enthusiasm is today since it is launch day.
Okay, so Yahaira, how are people talking about the lockup period expiration? Because you've got the fact that there's not a big float in this IPO, but this listing is going to make a lot of people a lot of money once they can get out of the stock.
Exactly, and I will say that is why there was so much excitement here at the NASDAQ, because you had all these investors standing behind the president, Gwynne Shotwell, and the CFO. And these are the people who have been with SpaceX from the start, when it was, it's still an unprofitable company, but when it was a tiny company with a big vision and a big leader, and a big leader. So there was a lot of excitement because of that. We know these folks are going to make a lot of money. I'm not saying that Peter Thiel was here, but we know that his fund could make tens of billions of dollars. So that is where the enthusiasm is coming from.
Right.
All that liquidity will now flow back to venture capital, back to the private market. So it's an exciting day for those who bet on Elon Musk at the start.
All right, Yahaira, thank you so much. We really appreciate it. Yahaira Anand, she is a TV reporter for Bloomberg News. She is at the NASDAQ here, where we await the opening of this IPO. Again, $135 was the IPO price, indicating higher. Listen.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube as well. SpaceX still waiting for that to open, but let's continue to talk about space. Why not? Ross Hamilton, Chief Operating Officer for Space Network, joins us here in our studio. Ross, one of the things that I think got investors' attention on this roadshow as I try to think about the opportunities for SpaceX and for the industry is the company and Elon identifying a $29 trillion total addressable market. Do we have any idea where that number really comes from?
Well, thanks for having me on again. It's a huge number. It really is. I don't know if AM could really add up the numbers. I'm not quite sure exactly where that comes from, but I think the thesis is what SpaceX is eventually going to become. It really wants to be the infrastructure that's running all industry, all markets. So if you think about, the internet in the 90s, they're really trying to create the backbone for AI infrastructure, compute infrastructure for this century. So what they're looking to do is put a lot of AI infrastructure in place, lots of chips, lots of robotics, not just for their own use for SpaceX and not just for Tesla, but they're looking to do that for all industries. So if you have a long-term view on AI, chips, and infrastructure and compute, then the argument is that all industries would benefit from that.
Of course, SpaceX has become a government contractor. It's done a lot of the work that NASA used to do. So one of the addressable markets is the U.S. government, and that's a big customer. How can we quantify just how big of an opportunity that would be going forward?
So I think it is pretty big. I mean, if you think about the relationship with NASA as well, NASA's focus is shifting to more exploration, but from a government standpoint, it's definitely be more on the kind of national defense, Golden Dome type strategy. As long as the US particularly wants to be the dominant force and has recognized through Space Force that much of the military will be guided through satellites and that technology, I think it's it's basically our prime for the US government.
So how do you guys think about, how does this relate to your company and kind of what you guys are doing?
Yeah, so we're really focused on the private sector. So we're helping space tech companies who are not yet public commercialize, so raise capital, find customers, focus on revenue. And the thing that's really important there is with what this spin out from SpaceX, going to do their own thing, it's drawing attention from private equity and venture capital into the market. That's going to draw a lot of capital in. So from our standpoint, it's going to increase this focus on the opportunity. But our argument is, though, that it has to be on the basis that there's real customers for those space technologies. And our thesis is that aside from governments, and NASA who are doing space exploration, that's actually in non-space industries. So financial markets and global logistics, agriculture, pharmaceutical, that's the market there. And that remains an opportunity for a lot of these innovative companies. I think SpaceX is more of an infrastructure play for those other markets.
It's an infrastructure play for now. It could also become an electric vehicle company soon as well, or that'll be kind of brought into its orbit, because there's a lot of talk about how Elon Musk might combine SpaceX with Tesla. Yep. That just becomes another kind of company then, and not really comparable to what you do.
Yes. I think there's a couple of things there. From SpaceX and Tesla relationship, one of the ideas originally that he wanted to get into EVs is ultimately he wants to be able to have vehicles up in Mars. For that, you need electric vehicles and power. So that's part of his broad, interplanetary, species strategy there, right? But when it comes back to, what's back on Earth, it really is about building infrastructure and providing things that are used or created for space, but used back down on Earth. And I think there's enough of an alternate market to SpaceX to allow those things to happen. So an example would be, the International Space Station is coming down in a couple of years, and there's going to be new commercial space stations going up, which is going to allow drug research and other types of research and in-orbit manufacturing to happen. That is going to be core in other parts of the infrastructure that the SpaceX will not serve.
How's the capital raising out there other than SpaceX for companies that want to do space-based businesses?
It's actually been very healthy over the last number of years. I mean, you could argue it's been quite healthy over the last 15 years, but the last couple of years, there's definitely been an inflow of private capital. It's not for things that are like rockets and hardware and satellites. It's traditionally not been a venture model,
right?
But I think they're starting to realize that this is a play towards more venture-like businesses that can run on that infrastructure.
You talked about how this will create a liquidity event, this IPO.
Yep.
It's going to make a lot of people rich. We talk a lot about the SpaceX current employees and former employees. If they do become very wealthy and decide to step away and stop working, they may go off and start their own company as well.
Yep.
This creates this large ecosystem. Do you have any sense of timing around how this plays out?
That's a hard one because I'm sure there's going to be a lot of lockups in there and a lot of people looking to fulfill the SpaceX mission. But I think certainly over the next couple of years, you're going to see a lot of that activity happening.
Absolutely. All right, Ross, thanks for joining us. Ross Hamilton, Chief Operating Officer of Space Network. Red headline crossing the terminal. That is moving the markets. Iran's Arachi says U.S.-Iran MOU, quote, has never been closer. We've got the S&P lifting higher on that. We've got oil trading lower, so we'll keep an eye on that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. Thank you, Ross.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Matt Piper. We've got a lot to cover today. Of course, we're waiting for the opening trade of SpaceX. The ticker is SPCX. That has not yet begun, but as you know, it IPO'd yesterday at $135 and it's indicated to open at $162. So that would be a substantial increase. We will, of course, update you when that happens. We're also going to check in at the Bloomberg Energy Security Executive Briefing. Anne-Marie Hordern is there, and she will be speaking with the CEO of Chevron. Later on, we've got Munis in focus, and we're going to check in with Aaron Hudson of our Muni bond team to talk a little bit about the AI funding boom reaching the Muni market as well. Seema Shah, Vice President of Research and Insights at Sensor Tower, will weigh in on the SpaceX IPO. Hopefully, the shares will begin trading soon, and we can get you up to date on that. And, of course, we're going to check in with Anurag Rana on some other big tech news, including Adobe's CFO departing, while the company is also searching for a new CEO. So lots of personnel changes there at that company. First, let's head over to Matt Piper with a Bloomberg Business Flash. Matt.
Hey there, thanks. SpaceX's historic IPO is shaping up to be a major test of whether the AI-driven U.S. stock rally is nearing its peak or still has room to run. So far, the evidence points to the latter, especially with OpenAI and Anthropic not far behind. Well, it helps that a U.S.-Iran possible truce has restored a more constructive backdrop for markets just before Elon Musk's big moment. To the big board we go. Everything is up. The S&P up 0.6% or 43 points. The Dow is up above 1%. 520 points. The Nasdaq is up 0.3%. The Bloomberg Dollar Spot Index down fractionally at 1206.41. The 2-year yield is up about 1 basis point. The 10-year yield is up 1 point as well. Oil prices are at their lowest since the early days of the Iran war on hopes of this peace deal. Brent down $89 a barrel. WTI at $84. Back to SpaceX, of course. This question: will OpenAI and Anthropic have a similar type of welcoming to the public world? Justice Parmar is with Fortuna Investments.
I think it's going to be an interesting, experiment of sorts. Never been done before. You want to be out early. I think Elon's done a great job of really pushing his team and his crew to get this stock out early because you're cleaning a lot of money out of the market. And so as the IPOs continue to stack on, you start to inherently develop risk because if one of them starts to trade underwater, it's going to have a follow-over effect on the one preceding that one.
Well, have you questioned just how rich a trillionaire is? Over a 100-year lifetime, guys, it would equal spending $27,000 a day. That's a lot on DoorDash or something like that.
Oh boy.
As for Elon Musk, with the money, he could fund 68 U.S. election cycles or buy every car maker in Europe, Japan, and the U.S. It's a lot of money.
Yep.
For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Matt, thanks so much. Appreciate that. Matt Piper. Stocks definitely turning higher, as Matt was reporting on the back of that Iranian news, saying that a deal is pretty darn close. Let's see where some individual stocks are on the move today. We can do that. We are joined by Bloomberg's Avalon Purnell. She's an equity reporter for Bloomberg News. Avalon, what are you looking at today?
We have to start off with Adobe. That's currently falling about 6.7% now to hit its lowest intraday level since 2018. That's ticker ADBE. And that's after the company announced a departure of its CFO just months after the CEO also announced plans to step aside. The news also comes as Adobe reported a second quarter beat, but gave a full year forecast that fell a little short of expectations. And as you can imagine, the update led to a slew of downgrades and price target cuts as Wall Street analysts really questioned the path forward amid this transition. Evercore writing that the sentiment is unlikely to turn positive until a new management team is in place.
Oh boy, so we could be waiting for a while there. Okay, next up.
Lennar, that's ticker LEN, currently dipping about 3.7%. That's after the home builders delivery forecast for the third quarter fell short of expectations. Management again calling out to continuing pressure from high interest rates and geopolitical uncertainty, which is obviously spurring some customers to hold back on purchases. Truist also writing that while the results were fairly disappointing, it was somewhat encouraging that the results did not include a margin breakdown. Also worth noting that their peer, KB Home, called out to similar concerns last quarter, and they will be reporting June 23rd.
I mean, interest rates higher. The 30-year mortgage, that can't be helping. 6.5% for 30-year mortgage?
Exactly.
All right, so there you go. I'm not refinancing the mortgage on the Jersey Shore compound yet. Give us one more here.
Medline, MDLN, currently slipping about 2.3%. That's after the medical supplier suffered another setback from a fire at a distribution facility. Leerink expecting some short-term financial impact since, at a minimum, this is going to be taking a distribution facility offline. But that's not the only hardship that Medline has faced recently. Just last week, the FDA sent them a warning letter for several contamination incidents at a manufacturing facility. And now that company's stock is down about 12% since its debut as last year's biggest IPO.
Oh, I like the way that you ended that. It comes full circle, right? I was just going to say this was a big IPO when it came out. And that's a reminder that, at least in the first year, a lot of the IPOs don't pan out the way you expect.
Yep. That's a big risk as we look to float, a gajillion dollars worth of SpaceX here. Avalon Purnell, thanks so much. We appreciate that. Avalon is a equities reporter for Bloomberg News. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute auto reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen here. I'm looking at my SpaceX quote here. I'm using the BQ function, the Bloomberg quote. That gives you tons of information, including where this thing is indicated pre-market. I ain't got nothing here. So
I know, it says IPO positioning window started.
Yes, exactly. So there was some reporting I saw on a Bloomberg News that 162 would be the initial indication or the latest indication here. Let's go to George Ferguson here. He's been tasked to lead the research efforts here involving lots of the analysts at Bloomberg Intelligence because this is a technology play. It's an AI play. It's a rocket ship play. You got to have some experts. And fortunately, Bloomberg does for all of those businesses. George, what do you think the buyer of a SpaceX, what do you think the buyer of a SpaceX share, what is he or she thinking here when they place that order?
Yeah, I mean, I honestly think most of them are believers in Elon Musk, believers in his vision of the future and his ability to get things done, because I think you got to be a big believer to buy in it at these valuations. So that's why I think you saw so much of the IPO get shunted into the retail side of the world, and because I think that's where you'll see a lot of support and buy into that vision.
It feels like the SpaceX IPO is a real beast. I mean, you look at the superlatives surrounding it. It's the biggest IPO ever. It'll be the first company to move people to Mars. It's going to mint the world's first trillionaire. I almost said billionaire, and I had to correct myself.
Yeah, I know. We have to.
and this is kind of the point, right, George? I mean, this is the Elon Musk formula. Create an entirely new category and then, claim leadership and set the standard and, make everyone follow in your footsteps. If that's the case, how does someone analyze a company like this? Because whatever you do, he's going to come back with, well, it's never been done before, so you can't, compare it to anything.
Yeah, I mean, that's why it's extremely hard. But I think when you look at it, I think we do understand pretty well the launch business as it stands today. We understand the connectivity business, the satellite business pretty well. And I think the big variable here again is that AI business, and it's a variable out there for a number of other companies. But look, I think launch, we saw some 76% of the launches were primarily for Starlink. So when we think about the demand for launch in the future, look, I think there'll be more constellations that go up. But I don't think there's going to be more than 5 or 6 LEO constellations in the next couple decades, and they're the ones that use a lot of satellites. They're the sort of 10,000 plus kind of constellations. And I think of those 5 or 6, I think you're going to see 2 US are kind of, Starlink, and they're probably Amazon LEO. I think Europe might want one of their own. I'm sure the Chinese want a couple of their own. Maybe India gets in this game. I don't think anybody else's constellation is going to get launched on SpaceX launches, right? So I think it's going to be, even I think Amazon LEO is going to be launched largely on Blue Origin rockets as they get that going. So I think we're kind of looking at space kind of a flattish, maybe a slow growth kind of business as they do government work and things like that. And the connectivity business, that's all about, that's data, broadband data, that's direct to cell communications. We kind of understand that too. We have terrestrial providers. If you're in a big population center, they're going to do it better than SpaceX is going to do, given latency of going to a satellite, problems of being in buildings. But they're very important areas of the world that need that connectivity to a satellite to stay on the, on the web and connected. And that will get better over time. But I think that's, maybe it's we're seeing sort of 20-ish% growth in the last couple of years, but some of the metrics are coming down on the amount each subscriber spends. It's decently profitable. It's not wildly profitable. So to me, everything shifts to AI, right? It's a big bet on data centers, putting them into the sky, putting them into orbit, where you probably be able to do it cheaper, cool it cheaper, power it easier, and then we'll stream data up to satellites, and Grok will help us figure out what to do in the future. And that's kind of to me the big vision.
Yeah, I'm looking at just kind of where the revenue comes from, George, just on a trailing 12-month basis. Round numbers, 11 billion from the connectivity business, 4 billion from the space business, and then at the bottom is AI at 3 billion of revenue. But when you think about a company that's going to be valued at least 95 times revenue, it seems like the buyer today is saying, I'm putting my money on this AI thing because I think that's going to be something just astronomical. I guess it's the AI play that kind of gets you to where you need to go for if you're a long-term investor.
Yeah, I think if you look at some of the recent deals cut with Anthropic, right? So what that's $1.25 billion a month. I guess as long as they keep signing that agreement, you're going to see that AI revenue jump up pretty dramatically here over the next year and years, right? So I think when we look at sort of what we think is going to be at the end of 2026, we think it's going to be a 14 billion connectivity business and a 14 billion rev AI business. And I think one of the interesting things we saw was, right, is SpaceX built Colossus 1 and Colossus 2, the two big data centers down Memphis, Tennessee area. They did it in existing buildings so they could get it up and running very quickly. It's sort of in typical Elon Musk way. He's looking to drive down the cost quickly. It's just, that's smart for any business person. Put a lot of capacity online. Now he has the opportunity to sell some of that to Anthropic. I think Google's in there too. So you're going to see that AI, revenue line drive up, but they spend a lot of money to keep that going, right? I think they're going to consume even more than the revenue they bring in. And there's like $4, $5, $6 billion deficits in that operating profit for that business. So you've got to find a way to power all that investment you need. This IPO is about, we're going to invest a lot of that money into data centers, and we'll invest some of it into Starship because we think long-term it's going to be easier to make those data centers in space. It'll be cheaper. And so that's where a lot of this money goes. That's the bet.
Okay, so there's a lot of need for capital, and we know that's the case, and this IPO gets them there. I guess the big question is how many more times they'll tap the public markets, whether it's for equity or for debt. George, thank you so much. George Ferguson, our senior aerospace analyst here at Bloomberg Intelligence. We're going to head over now, back over to Houston, because our Anne-Marie Hordern, Bloomberg Television anchor, is sitting down right now with the CEO of Chevron, Mike Wirth. Let's listen in.
It seemed kind of crazy that you were even headquartered there at one point?
Well, I don't think in the beginning it made a lot of sense. I mean, we made the first commercial discovery in California in Pico Canyon in 1879, and we built our first refinery there in Northern California. Second refinery was built. The refinery is called El Segundo. It was the second refinery. There's now a city that's named after our refinery. So the state grew up around us more than us going to the state, and so we were part of the state's history. And for an awful long time, California was a big producer. It was one of the biggest producers in the world at one point, and we're an integral part of the economic story in California. Things have evolved, obviously, but it made sense for a long time. It doesn't make sense today.
Okay, so we're going to start with more so the news of the day and what's going on in Washington. I know you've been keeping up with the headlines for the president. Secretary Wright said 7 million barrels a day are getting out of the Strait of Hormuz, which would be a pretty big deal. How do you view the market dynamics right now? What actually is coming out of the Gulf?
Yeah, our view would be it's probably not quite that much. There are ships that have been transiting out, typically with transponders off, typically at night, and with some support from the U.S. military, and that has helped ease fundamentals in physical markets, and so we've seen price action that has been a little bit, I think, different than people expected. But what has been true through it all, and we can talk about it a little bit more if you'd like, is the market's been pretty incredible in terms of how it's adjusted, both on the supply and the demand side, to buy time and kind of address the risks that exist.
What is the driving force behind that? Because most people thought we'd be higher than $150 a barrel.
Yeah. Well, early on, you saw, the paper markets trade on expectations and narratives. And early on, there was a lot of fear that prices were going to go that high. So you saw paper markets really take off. Physical markets followed. And then things have reversed. As the narrative has been, we're closer to the end than the beginning. There's a peace deal that's just around the corner. And physical markets obviously have had to deal with the realities of supply constraints. Early on, demand was strong, and in fact, you saw people buy further out, particularly Asian refiners that typically might buy a couple months in advance, covered themselves further. And so you actually had demand pulled forward at the same time as supply was shut off. And so that's where you saw differentials get very wide. But subsequently, you've got supply from SPRs, you've had supply from ships on the water that were sanctioned and were then allowed to unload. You've seen commercial inventories drawn down. You're seeing turnarounds and maintenance activities deferred in facilities that allow supply to keep flowing. Some movements now through the Strait. So there's been a supply response, as you would expect, and there's been a demand response. China had been buying a lot of oil for their SPR. That has come down. You've seen certain measures, primarily in Asian economies, to reduce energy intensity of their activities. You've seen some substitution into coal and other things that have taken some pressure off of markets. And so both supply and demand have responded, and I think the market has bought time. Now, the reality is inventories are a lot lower today, other than in China, where there still are very healthy inventories. Where whether you look at products or you look at crude oil, we've moved from comfortable inventories under normal times to what would be, soon to be uncomfortable. And I think that's the real question: is how much longer can these measures kind of ameliorate the risk? And at some point, they may not be able to.
How much longer does Chevron think? Is it a July,
Yeah,
August story? Or?
It's probably in that time frame. And that's a little later than I would have said if you asked me 4 or 6 weeks ago. And so particularly the reduced buying out of China is something that we didn't anticipate at the degree that we've seen now. And so I think that, along with now the fact that we are seeing some of these flows out through the Strait, probably have pushed that timeline out a little bit more. So I heard your earlier comment about the president's remarks about Labor Day, or kind of towards the end of the summer. The market may be able to kind of hold things together out into that time frame, but not forever.
How confident could an executive be that we are close to an agreement if the president has said it dozens of times since the conflict began at the end of February?
Yeah, I mean, I think the evidence would say you shouldn't fully believe that until you see the agreement signed and you see the actions begin to come into effect. Iran has a long history of being a kind of a patient and immovable negotiating force, and so this has been hard to call. And markets are hard to predict, wars are hard to predict. I think negotiations with adversaries like that or counterparties like that are also hard to predict. And so, and the market seems to be somewhat discounting these things. I mean, you mentioned yesterday, I think you used the term